Hello, my dear students. Hope you're having a great day of preparation, self motivation. So, I know you want to complete the subject very quickly by using the marathon. So, you are in the right place. So, first, let me introduce myself. I am CMA Bhavya. I will be dealing paper 13 corporate and economic laws. So, first 5 minutes, I will help you understand what are the concepts that I will be discussing in this particular marathon and what will be delivered in this marathon. So, first and the foremost thing, our subject is divided into two main categories, corporate laws and economic laws. So, in this particular marathon video, these are the concepts that I will be covering in each of the part. So, corporate laws, module 1 is of course the Companies Act 2013. In that, mainly the important concepts, which are the accounts of companies, board of directors, board meetings, investments and loans, and operation and mismanagement. These concepts I will be discussing the revision by using my handwritten notes, and then I will be giving you the important questions that you have to revise using my Q&A companion. That those are nothing but my books. Okay, and also I will also be having a quick revision of the insolvency and bankruptcy code 2016. Now moving on to the next part, which is the economic laws, I will be discussing the SEBI, FEMA, MSME, cybersecurity, and PMLA. Again, here all these concepts I will be delivering a concept revision of the above modules using my handwritten notes. After which, I will be giving you the list of questions that you have to revise topic wise. So, this revision simultaneously, after you watch the marathon video, revise it simultaneously, complete the revision, and then move on to the next concept. So, now, ma'am, what about the remaining concepts? If we want to revise, where will we find the videos for that? So, you can find the videos in our YouTube channel. If you are unable to find the individual videos, go to the playlist in our channel, and you can find Law Marathon playlist, which is created by me, and all the marathon videos, quick revision videos will be available in that playlist. So, persons who are watching immediately as it is uploaded, please wait. Videos for the other remaining concepts will be uploaded in the next 3 to 4 days. You don't need to worry about that. And so, what about MCQs? MCQs will be covered in a separate video, which is called as the bullet MCQs. A PDF will also be provided in that particular video also. So, now moving on to the most important information. Is it applicable for December 2025? Yes, I tried my best to cover all the amendments which are applicable from December 2025 onwards. So if you are watching this marathon, any attempt after December 2025, no worries, watch this simultaneously, finish off the amendment videos, you're good to go. Okay, so now moving on to the books. So where will you find the books? If you want physical copies, you can go to BCCA app. You can purchase all my 3 books: concept book, question and answer companion, and my handwritten notes called as the capsule. So if you want any PDF, a separate course will be created in the BCCA app by the name Soft Copy Access, and you can access that using the BCCA app. That's all. So any more queries, you can please mention in the comment section box below. If we are available immediately, we will answer and reply to your comment. And last, my sincere request, if you find the marathon useful, of course, you know the drill. So, the first unit, accounts of companies. So, from an examination point of view, it carries a very significant amount of marks, and for sure a question will be asked from this particular concept. And I will show you the weightage analysis. Accounts of companies, June 2023 to June 2025, only in the recent attempt there were no marks from the descriptive point of view from the accounts of companies. In all the attempts, there was at least one single 7-mark question from this particular unit. So, no more bragging about the weightage, we have to learn the concept. Okay, so accounts of companies, it has sections from 128 to 138. So it will start with the basics of what the accounts of company is, where the books have to be kept, and what is the order the books have to be kept, where the place of maintenance, and who has the right to inspect related to the financial statements as well. Then we'll move on to the important sections: accounting standards, board's report, director responsibility statement, CSR, internal audit. Shall we start? Yes. Okay. So we are starting off with section 128. So this is related to books of accounts. So everyone has the handwritten notes? Yes. So make sure you have a pencil or a pen while you are listening to the concept. Okay. So because there may be slightly very minute changes in my book that you can do while you are listening to the classes. Okay, clear? Yes. Now, first and the foremost thing, books of accounts. What does this books of accounts mean? All the records which are maintained by the company for receipts and expenditure, as well as for recording sales and purchases, for assets and liabilities, and also the items of cost. So when we are referring to books of accounts, we are referring to all the records which are maintained for these transactions. Are we clear, everyone? Yes. Now 128 subsection 1. Every company which is registered under the Companies Act 2013 or any previous company law, it should maintain what? Books of accounts, books and papers, as well as financial statements for every financial year. Clear, everyone? Yes. So what that book should communicate? True and fair view of the state of affairs of the company. It should correctly portray what's happening in the company. And what are the features? Accrual basis, and it should be according to the double entry system of accounting. Clear? So these are the features. And where you have to keep the books originally? At the registered office. Clear, everyone? Now you should also keep the books of accounts related to branch office or branch offices, and you should be in a position to explain any transactions affected both at branch office as well as the registered office. That is, any transactions between the registered office and the branch office. For that also you have to maintain records. We are done with section 128 subsection 1. So very quickly a revision: every company shall prepare books of accounts, books and papers, financial statements. Now for every financial year, what are the three features? True and fair view of the state of affairs of the company, kept on accrual basis, and follow the double entry system of accounting. Where do you maintain these books? Kept at the registered office. Clear? Including branch office and offices, and if any, explain the transaction which affected both the registered office as well as the branch office. Clear? Now this section will be complied with branch office if this particular section is complied. That is, it is deemed to comply with 128 subsection 1 if this is followed. What is that? So let's say the place where the books are maintained at the registered office. Okay. Now, can you maintain books at any other place? Answer is yes. Who will decide? Board of directors. You have to communicate to the ROC. What you have to communicate? The full address of the other place as well as the board's decision. Within how many days? Within 7 days of that decision. Are we clear with this? Yes. Now, moving on to the most important question which was asked 2 times. Electronic form of maintaining books of accounts. Now, can companies maintain books in the electronic form? Answer is yes. So company may keep the books of accounts and other relevant papers in the electronic mode. What is the manner to be prescribed? This is important. Manner to be followed for maintaining the books of accounts in the electronic form. The first feature: even if they are maintained in electronic form, it should be remain accessible in India all the times. Clear, everyone? So it should remain accessible in India at all the times for subsequent reference. This is the first feature. Now comes the second feature. In what format you have to maintain them? In original format. However they are prepared in the original format, you have to store it in the electronic form. And format which presents the accurate form. Either the original format or a format which will correctly or accurately prescribe the accounts which are maintained. Now it should be complete and unaltered. Clear, everyone? Yes. Now information of the branch office also, whatever you receive from branch office to the registered office, it should also be maintained in unaltered format and in the original format. Clear, everyone? Now whatever the information that you are displaying in the electronic form, it should be in legible form. What is a legible form? Clearly anyone should be able to understand the accounts. That is legible form. Clear? Now moving on to the last few features. Whatever the system that you are using, that may be a cloud or that may be a service provider, it should have the system of storage,
retrieval, if you want, you can take back the accounts, and then display and print out. These features should be there for the system that you are selecting for maintaining the books of accounts. What are the features? Storage, retrieval, display, print out. Clear? So whatever the system is there, it should be who has to consider it is appropriate? Audit committee or the board of directors. They will select. Clear? Now, can you dispose of the books in the electronic form? Answer is no, unless it is permitted by law. It is permitted by law that you can dispose of the books after 8 years. Clear? So after that, if you want, you can dispose of. Now moving on to the backup. So sometimes we will use cloud address, or we will use Google Drive, or whatever the Amazon Web Services. The center or the servers will be located somewhere outside India. Yes or no? But you have to maintain backup in servers physically located in India, that too on a daily basis. So you will back up your WhatsApp chats on a daily basis now. Yes or no? So that is what here also the account should be backed up in the physical servers located in India on a daily basis. So this is the concept related to, or you can say a manner to be followed for maintaining the books of accounts in the electronic form. Shall we revise quickly? It should remain accessible in India and to be retained in original form, or else a form which will depict accurately the information. It should be complete and unaltered, and whatever the information which is received from branch, it should also be unaltered and in original format. Information should be displayed in which form? Legible form. Which system? It should have the system of the system should have features of storage, retrieval, display, printout. Who will approve that? Audit committee or board of directors. Can you dispose it? Answer is yes, only if it is permitted by law. Clear? Where will you maintain the backup? Backup of all the books and papers shall be kept in servers physically located in India on a daily basis. And what you have to intimate to the registrar, whatever service you are using for maintaining the books of accounts in the electronic form, that service provider name, IP address and location. To whom you have to communicate? To the registrar, and also the cloud address where you are maintaining the books of accounts. That's all. We are done with the electronic form. Now, when you are referring to the branch office, there is a branch office, it may be located in India or outside India. So, originally the books of accounts of the branch, where can you maintain? With the branch itself. Clear? So, proper books of accounts of the branch shall be kept in the branch office. But if you observe 128 subsection 1, you should, that 128 subsection 1 says that every company should maintain the books of branch office as well. Now, when will we deem that the particular provision is satisfied? If summarized returns are periodically sent by the branch to the registered office. So, very simple. Even if 128 subsection 1 says that books of accounts of the branch should also be maintained by the company, it's okay. What will you do? Books of accounts originally should be kept in the branch, but summarized returns should be sent to the registered office periodically. Clear? Or else, if the books are maintained some other place which is approved by the board, there you have to send. That's all. Are we clear with this, everyone? Yes? Now, who will have the right to inspect the books of accounts? Board of directors. Clear? So, books of accounts and papers maintained within India, it shall be open for inspection. Where? In the registered office or some other place which is decided by the board. Just give me 1 minute. Open the door, no? Call that person. It's louder. It's my voice. Is it too loud that is disturbing to you? If I don't say that, you will sleep with this climate. There's a problem. Speakers will catch my voice, but it's okay. Somewhere, even if there's no mic, you will listen to me. Okay, fine. So shall we continue? So where are speakers actually? It's somewhere, no? Somewhere, but you can listen from everywhere. Okay, fine. So books of accounts are inspected by whom? The directors. Any director can inspect the books of accounts. Clear? During what time? During business hours. Now, business hours are actually subjective to the office workings time. Clear? It's not like specifically it is 9 to 6. Whatever the hours the company's registered office will be open, that will be the business hours. Are we clear? And moving on to, if the books of accounts are kept outside India, then who will have the right to inspect? Of course, the director will have the right to inspect. But in this case, director should satisfy few conditions. What are the conditions? First and the foremost thing, if any books of accounts are maintained outside India, then from that place summarized returns should be sent to the registered office in quarterly intervals. Summarized returns. Clear? So summarized returns of the books of accounts maintained outside India shall be sent to the registered office in quarterly intervals. Now these summarized returns will be kept open for inspection by whom? By the directors. But directors are not satisfied with the summarized return. They need some more information. Fine. Now what the directors can do? They can serve a request to the company that I need accounts of these transactions from this point of time to this point of time. He will sort and he will request to the company. Now company should send that specific records within 15 days of the request. That is the condition. Are we clear? Understood, everyone? Now, if books of accounts are maintained outside India, can the directors inspect? Answer is yes. What are the conditions? First, summarized returns of that books of accounts maintained outside India shall be sent in quarterly intervals. Where? To the registered office or any other place. And any other financial information is required by the directors, then what is the remedy? He shall furnish a written request and sort what details he need and for what period he need the details. He should only sort. That is nothing but he will sort and he will be like, I need these details. Clear, everyone? And then what should be the action of the company? Within 15 days of the receipt of the request, produce the financial information. Are we clear? Now, who will have the right to inspect the books of accounts of subsidiary of that company? Person authorized by the board. Not all the board of directors. A person authorized by the board will only have the right to inspect the books of subsidiary company. Are we clear with this? Now, while you are going for inspection, the officers or the employees of the company should provide reasonable assistance. That is non-negotiable. Clear, everyone? Yes, I think we are almost done with 128. So, now comes 128. Period of maintenance. What is the minimum number of years the books should be maintained? 8 years. So books of accounts as well as the evidence like vouchers. So papers shall be maintained by every company in a proper order. That is the original format for a minimum of 8 financial year from such preceding. The preceding financial year account should be maintained for another 8 years. Are we clear? Now, if let's say company is in existence only for 5 to 6 years, then how long the books have to be kept? That longer period, the time of existence. Clear? Now, if central government orders an investigation, then the book should be kept for a longer period. That's all. Clear? Now, generally, which persons or who are the persons responsible for complying with this section? It may be a managing director or else a whole-time director in charge of finance or else a chief financial officer or any other person charged by the board. So, if these persons are responsible, then if some section or some subsection is contravened, who will be liable for paying the fine? Only these persons. Are we clear? So what is the minimum penalty? 50,000, maximum 5 lakhs. Anyways, we will ignore this because we can't remember. This is the first penalty. You will be like, oh yes, I can, but no. Okay, so we are done with section 128. Moving on to 129, financial statements. What all are included under financial statements? Balance sheet, profit and loss statement for non-profit organization, income and expenditure account, cash flow statement and statements of changes in equity. And for all these, we need notes to accounts, that is explanatory note. Clear, everyone? Now, financial statements specifically for these classes of companies: one person company, small company and dormant company. It may not prepare cash flow statement. Which class of companies need not prepare cash flow statement? One person company, small company, dormant company. Are we clear? Now, what does section 129 say? Financial statements. There only we have seen under 128. It should be kept at the registered office. Yes or no? Clear? For every financial year you have to prepare. What are the features specifically? It should portray true and fair view of the state of affairs of the company, and it should comply with accounting standards, and it should be in which form? Schedule 3. Are we clear? 3 features of the financial statements: true and fair view, accounting standards, and Schedule 3. Now, moving on to non-applicability of section 129 for specific classes of companies, different classes of companies governed under special acts. For them, Schedule 3 format may not be applicable. So what are those classes of companies? Insurance company, banking company, company engaged in generation and supply of electricity, and any other classes of companies for which different form of financial statement is specified under their governing act. This is non-applicability of section 129 subsection 1. Clear, everyone? Now, why are you preparing financial statements? To communicate the financial affairs to the shareholders. That is why all the financial statements will be laid before the members at every annual general meeting. Clear? So, every annual general meeting, board of directors shall submit the financial statements for such financial year. Clear, everyone? Now, which class of companies should prepare consolidated financial statement? If a company has one or more subsidiaries or associate companies, then it shall, in addition to the original financial statements, it should prepare consolidated financial statements of what? The company, the subsidiary, the associate, as well as the joint venture. Now, in the same form and manner, that is nothing but Schedule 3 format, and accounting standards should also be complied. Are we clear? Now, wherever you are submitting the financial statements in the annual general meeting, you should also attach consolidated financial statements. Now, one more thing that you have to attach is the salient features of the separate financial statements of the subsidiary. We don't have separate financial statements of the subsidiary, but you have to give the salient features to the members. So, the company shall attach with the financial statement salient features of the financial statements of subsidiary or subsidiaries in the form AOC 1. Why? Because we are holding company. Are we clear? Why are we sending the separate audited financial statements of subsidiary? Subsidiary members will receive that. But here, since we have that subsidiary, no need to send the whole financial statements, just a statement of salient features. In which form? AOC 1. Clear? CFS shall be prepared as per Schedule 3 and accounting standards. What have we studied till now under 129? Financial statements, meaning we have studied, and the next thing is it should be true and fair view, follow accounting standards as per Schedule 3. What are the exceptions? Insurance company, banking company, company engaged in supply of electricity, as well as any company which has a form specified under their governing act. Every annual general meeting, who has to submit the financial statements? Board of directors. Clear, everyone? Now, which company should prepare CFS? Company which has subsidiaries or associates. Clear? Now, moving on to deviations. Of course, you have to follow the accounting standards while you are preparing the financial statements. But in any circumstances, if you are not following any accounting standards, that is nothing but you are deviating from the accounting standards. What is the remedy available? If the financial statements of the company do not comply with the accounting standards, then it should disclose in its financial statements, that is notes to account, what is the deviation, which accounting standard I am not following. Second, reasons of that deviations. And the third one, any financial effects in the financial statements due to that deviation. What 3 things that you have to specify? Deviation, reason, financial effect. Clear? And then moving on to the exception. In few specific cases, central government can exempt any classes of companies for not following the whole 128 or any subsection of 128. For few public sectors like defense, and for people who are involved in military, so there will be few exceptions which will be granted by central government. Clear? So, central government on its own or application exempt any company for comply with this section or rules thereunder. Clear, everyone? Now, here also, who is responsible for complying 128? Either a managing director, whole-time director in charge of finance, CFO, or any other person charged by the board. Now, if there is any contravention, any subsection is not satisfied, if these persons are present, then they will be liable for imprisonment or else the fine. Now, if these persons are not present in the company, then who will be liable? All the directors. What is the penalty? Imprisonment may extend up to 1 year, or else fine a minimum of 50,000 and maximum of 5 lakhs, or with both. Clear everyone? Now moving on to 129 subsection A. Now generally what happens is, if it is a listed company, periodically we will send the financial position of the company to SEBI or else the stock exchanges, yes or no? But if it is unlisted company but it's a very large a very large organization, so we can't judge the financial performance every year. You have to judge it periodically, yes or no? Now for that case, central government may specify classes of unlisted company that has to prepare periodical financial results. For that you can conduct either audit or you can conduct a limited review. What is limited review? Audit is extensively providing a reasonable assurance. But when it comes to limited review, of course they will verify, but it will not provide a high level of assurance. It will provide a lower level of assurance than audit. So central government may require few unlisted companies to prepare financial results on periodical basis. Now for that you have to obtain the approval of board, and you have to conduct audit or limited review, and you have to file a copy with the registrar within 30 days of completion of that period. That may be quarterly, or that may be monthly, or that may be half yearly. Who will provide that? Central government. We are done with 129 subsection A. Now comes the most important and confused. I'm telling you, even if I specify today, you still ask me the doubt. Okay? So listen carefully and clear your doubts. Who will prescribe accounting standards? Central government. For companies to follow the accounting standards for preparation of financial statements, who will prescribe? Central government. If there is an MCQ, it will be asked. Not if there is an MCQ. Who will prescribe accounting standards? Central government. Are we clear? Yes. So now who will recommend to central government? ICAI, Institute of Chartered Accountants of India. Now they will verify. Who will verify and who will recommend that? Finally, NFRA, in consultation with and after examination of the recommendations given by NFRA. So ultimately NFRA will give the recommendations. It will be examined by the ICAI, and ICAI will recommend to whom? Central government. So one line, central government prescribes accounting standards. Are we clear with this? Yes. The same provision will be applicable, will come in your audit also, which I will not be discussing in the marathon, but here that is applicable for auditing standards also. Auditing standards will also be prescribed by central government, recommended by ICAI, after in consultation and after examination of the recommendations given by NFRA. What is the full form of NFRA? National Financial Reporting Authority. Because it will be asked in the MCQ, I am revising. Clear? Now we will move on to the important section 134. Why is it important? Is because from a case study point of view, an MCQ case study can be asked. Are we clear? So they will give you a list of directors which are present, who can sign the financial statements, who can sign the board's report. Clear? So first subsection of 134 is, who will sign the financial statements? Financial statements will be prepared and then it will be approved by the board of directors. After that, it shall be signed by whom? First person, chairperson, authorized by the board. He has to sign for sure. Who has to sign? Chairperson, authorized by the board. If chairperson is there but not authorized, or else chairperson is not there, then who has to sign? Two directors, out of which one shall be a managing director. Other than this person, who else must sign? CEO, CFO, CS. So that is why I have used and. All the four should sign. Are they signing board's report or are they signing financial statements? Financial statements. Since it is board's report, you will think that this provision is applicable for board's report. Separate section is there. Clear? Yes? So who has to sign the financial statements? Chairperson, authorized by the board. If he is not available, two directors, out of which one has to be managing director, and then CEO, CFO, CS. In case of one person company, there will be only one director. Not will be, there might be only one director. Then who will sign? That one director. Clear? Now, after you sign the financial statements, it will be sent for audit. For what? To bring out the audit report. So the audit report will also be attached to the financial statements. So now, signed copy of financial statements and consolidated financial statements along with what? Notes to accounts, auditor's report and board's report, that will be issued, circulated and published. While you're calling someone for the member for the annual general meeting, what all you will submit to them? Financial statements, consolidated financial statements, notes to accounts, auditor's report, board's report. Clear everyone? Now comes board's report. It's a specific report which will contain the details of what obligations have been fulfilled by the board for that particular financial year. That's all. How many meetings are conducted, what kind of 188 transactions you have approved, any frauds which are identified by the auditor, what is your explanation. All these contents will be applicable or will be contained where? In the board's report. So they can directly ask a direct question, just a deviation from the concept. So you might be wondering that from the Companies Act, mostly a practical question will be asked. But ICMAI is playing a game with you. It will ask mostly a direct question. If a direct question is asked, you have to put in more efforts to search for sentences. Yes or no? Practical question, what we'll do? We'll write the case study once again. You will get half page. Okay? But in case of direct question, you don't have that option. Yes or no? So that is why be prepared with the direct questions. What is the direct question till now? What you have discussed? Electronic form of maintaining the books of accounts. All those features you have to write down. Clear? Yes? Now, here one more direct question. There is a scope. What are the contents of board's report? Are we clear? Yes? And one more question. What are the contents of director's responsibility statement? That we will yet to discuss. Okay, shall we start? Yes? Now, board's report shall be attached with the other statements and laid before in the annual general meeting. That is what we have been seeing. So, first, very simple, web address of the annual return. So, annual return will have all the details of the company. Annually it will be prepared. What are the products? What are the lines of business? Who are the directors? All the contents will be present in the annual return. Clear? So, here you don't need to add annual return in the board's report. What should you specify in the board's report? Just the web address. Whatever the website annual return is uploaded, the web address link will be provided where? In the board's report. What is the second content? Number of board meetings. How many board meetings you have conducted in that particular financial year. And then comes director's responsibility statement. So before we get into the further content, we will see what is included in the director's responsibility statement. First, what does the statement name contain? Responsibility. So have the shareholders given the responsibility to manage this large organization to the board of directors? Answer is yes. That is why they have some basic responsibility while they are preparing financial statements or while they are running the business. What are those responsibilities? And they are giving a statement that yes, we have complied with that responsibility. Clear? The first one, you have to prepare the annual accounts as per the accounting standards. So you are giving a statement that I have prepared annual accounts as per the applicable accounting standards. Second, yes, I have selected and consistently followed the accounting policies, whatever it is for the preparation of the books of accounts. And the second, directors have taken proper and sufficient care for maintaining the records for the protection of assets. For safeguarding the assets, you maintain proper records of the assets. That is your responsibility. And then comes, I have prepared the annual accounts on going concern basis and maintain proper system for compliance of applicable laws. I have followed with the applicable laws. When it's a listed company, I have also laid down and followed internal financial controls. So quick revision, important words only. What does the director's responsibility statement contain? Follow accounting standards, accounting policies, safeguarding of the assets, going concern basis, complied with the applicable laws, and listed company have followed the internal financial controls. Are we clear? This is the content which has to be declared in the director's responsibility statement. Where will the statement contain? in the board's report. So the first content of the board's report is the web address of the annual statement, second, number of board meetings, third, director's responsibility statement. Now comes the fourth. If during the audit process, if the auditor finds any frauds and those frauds fall under the category of less than 1 crore and they are reportable not to the central government but to the board of directors, for that details you have to mention in the board's report. So details of fraud reported by auditor but not those reported to the central government. Are we clear? So other than those reportable to the central government. Now in case company falls under section 178, that is NRC committee, nomination remuneration committee, then board report should contain the NRC policy. What policy you are following for the appointment, remuneration and other matters of the directors. That policy contents should be mentioned in the board's report. And declaration of independence. Independent director, whoever they are appointed, they will give a declaration that we are independent from the company. We show independence in our judgment. So that statement of independence should be contained in the board's report. And then comes particulars of loans, guarantees under section 186. That is what we will study under investment and loans. Okay. And then state of company's affairs. The financial states of the company's affairs. Two other things. Amount which is transferred to reserves. Amount paid by way of dividend. Shall we revise all the contents once again till now? Yes. Now, quickly pay attention. Even if you listen, some content will be stored in your brain. Clear? Instead of searching. Okay. So, web address of the annual return. Second is number of board meetings. Third, director's responsibility statement. Fourth, details of fraud reported by auditor other than those reportable to central government. Now, fifth one, if I have to be very quick, NRC policy. Next, sixth one, statement of on declaration given by independent director. Seventh, particulars of loans, guarantees under section 186. If you don't remember 186, loans and guarantees given by the company. You can write down that. Clear? And then the eighth one, state of company's affairs. And the next two, it's easy. Amount carried to reserves and amount paid via dividend. Amount recommended to be paid by way of dividend. Clear? And then comes the most popular section 188. What is it? Related party transaction. So what are the particulars of contracts and arrangements with related parties? And then comes the last few explanations. If auditor gives any qualification, that is nothing but an adverse remark or a disclaimer in its report, you have to give explanation as a board of directors. So explanations for every qualification, adverse remark or disclaimer made in company auditor, that is in the financial audit, as well as secretarial audit given by the CS. Both the cases, if there is any qualification, you have to give explanation where in the board's report. And then details about CSR policy. Who are part of CSR committee and what is part of CSR policy. And then comes, these two classes of companies should perform an annual performance evaluation of the individual director, board of director, as well as the committees. You will have a performance evaluation, yes or no, while you are writing mock test. Performance evaluation. Likewise, are directors fulfilling their obligations? Are they working for the benefit of the company? Their performance will be evaluated, yes or no? That evaluation report should be contained in the board's report. Not all the companies, only listed company and public company with a paid up share capital more than or equal to 25 crores. Only these two class of companies shall include what? Formal annual evaluation of performance of board of directors, the whole board, committees and individual directors. These are the contents. There are more contents in the board's report, but still from an examination point of view, if you remember these, more than enough. If they ask in the examination for 7 marks contents of the board's report, don't just write 7. Write at least 10. Okay? Clear? Okay, chalo. Now, board's report for one person company. Is it required to contain all these details we have studied till now? No. It's just a report which will contain explanation and comments by the board on qualification, adverse remark, disclaimer made by the auditor in its audit report. That's all. If this statement is there, that statement is only called as board's report in one person company. Clear everyone? Now we are done with the director's responsibility statement. Now comes signing of board's report. Who will sign the board's report? Again it is similar, that is why you will be confused. What is it? Shall be signed by chairperson authorized by the board. He is not available, then at least 2 directors, out of which one has to be managing director, or else if there is only one director, then that one director will sign. CEO, CFO, CS not required here. Yes, understood? Their signature is required for financial statements. Are we clear with this, everyone? Yes, we are done with section 134. If you recall, we have completed 128 books of accounts, 129 financial statements, and 129A periodical financial results of listed or unlisted company? Unlisted company. And we have seen 133. What is it? Accounting standards. Who will prescribe? Central government. And 134, what are the contents we have seen? Signing of financial statements, board's report, signing of board's report, director's responsibility statement. Now, we will move on to the most popular section, corporate social responsibility, section number 135. So, corporate social responsibility, it's simple. As a company, you will be utilizing the resources of the society. That may be labor or that may be natural resources, yes or no? Now, if you are well and versed with your financial position, it's time to give back to the society. That is what is social responsibility. Clear, everyone? Now, which class of companies should form CSR committee and should formulate a CSR policy? First, every company having a net worth, how much? More than or equal to 500 crores, or else turnover more than or equal to rupees 1000 crores, or else net profit more than or equal to 5 crores. These values when? During the immediately preceding financial year. What they have to comply? Constitute CSR committee. That is, they have to form CSR committee and they have to formulate CSR policy. What does CSR policy contain? What activities we will perform under CSR? What is the amount of expenditure? Who will monitor that? That will be contained in the CSR policy. Are we clear? Once again, we'll revise the values. Every company with a net worth more than or equal to 500 crores, or turnover more than or equal to 1000 crores, or net profit more than or equal to 5 crores. Clear? Now, who will be included in the CSR committee? At least 3 or more directors. How many independent directors should be there? At least 1 independent director. So, CSR committee should consist 3 or more directors, out of which at least 1 should be independent director. Clear, everyone? Now, where will you add the details of constitution of CSR committee or the CSR policy? Before itself we have seen under 134, where? In the board's report. So if you can't recall any other board's report, what will you write down? Details of CSR policy, number 1. Next, details of CSR committee. Okay, so now, what is the responsibility of CSR committee? Number 1, formulate and recommend to the board CSR policy. What does CSR policy indicate? What activities we will perform for the upbringing of the society. So, which shall indicate the activities taken by the company, specified under which schedule? Schedule 7. If I ask you a question, Schedule 7 will have the list of activities which are considered as CSR. So, should we consider that only these activities are CSR? So, should we strictly interpret Schedule 7 or else liberally interpret Schedule 7? Liberally. So, CSR is simple. Do something to the society. For that, we are giving you some examples that are there in the Schedule 7. That doesn't mean you have to perform only these activities. Anything for the benefit of the society or the environment. Are we clear? So, if they will ask an MCQ, that is why I am telling you. Schedule 7 items, are they strictly interpreted or liberally interpreted? Liberally. Are we clear? No worries. Everything will be revised in your bullet MCQs. Okay? No problem. So, first responsibility we have seen. Whose responsibility are we talking about? CSR committee. So, first responsibility, formulate and recommend to the board what? CSR policy, which will contain shall indicate the activities to be undertaken by the company as specified under schedule 7. Second, what will they recommend? Amount of expenditure. So we are building a school, or we are doing something for the environment restoration, then how much expenditure will you incur? That should be recommended by the CSR committee. And monitor the CSR policy. 3 responsibility: formulate the policy, recommend the amount, and monitor the CSR policy. Clear? Now, ultimately, who will approve the CSR policy? Board. Recommended by whom? CSR committee. So, board of the company, after recommendations are made, approve the CSR policy and disclose it in its board's report. That's why I told you details of CSR policy will be included in the board's report and place it on the company's website. Company should boast about itself. No, we are doing this much in society. That is why it will be placed in the website. Clear? And even if CSR committee has the primary responsibility to monitor, even the board should also ensure that activities are undertaken. Are we clear? Yes. And now comes the important section, important provision under this section. How much amount? Minimum 2% of what? Average net profits of the preceding immediately preceding 3 financial years. Since it's handwritten notes, I have told last 3 financial years. What is the actual provision? Immediately preceding 3 financial years. Calculate the total average, total net profit, and do the average. In that average, into 2%. Are we clear? Yes, you will divide it by 3. You will divide by 3 and you will write that amount. No, that amount into 2%. Are we clear? Yes. So revise this. Read the sentence with me. Spend at least 2% of the average net profits of the immediately preceding 3 financial years. Now these average net profits are calculated as per section 198. Now, while you are spending the minimum expenditure, you have to give preference to local areas. That may be towards environment or the society. Company shall give preference to local area or areas around it to spend such amount. Till now, CSR, are you clear? Yes. Which company should form CSR committee? What are the duties of CSR committee? And then what are the duties of board after CSR recommends the policy? Clear? Now comes the question, when that 2% amount is not spent, there can be 2 cases. That amount is related to ongoing project. So you said that we will start building a school to provide free education to the differently abled persons. Wonderful. Now, sometimes that school construction may be completed within 1 year. Sometimes it may take 2 years. Yes or no? So, you have allocated some amount. That amount you were not able to spend in that year because you did not complete the project. It is related to ongoing project. Then what will you do with that amount? Simple. If it is related to ongoing project, then you will create a separate account. What is that account called? Unspent CSR account. Are we clear? You will create a separate account in a schedule bank, unspent CSR account, and you will transfer that unspent amount within how many days? Within 30 days from the end of the financial year. Are we clear? Now that amount which is there in the unspent CSR amount, within how many years you have to utilize? Within 3 financial years. Are we clear? After the end of 3rd financial year, if there is any amount which is left out in that unspent CSR account, then what you will do? Transfer to a fund specified under schedule 7. Fund, not account. Fund specified under schedule 7. Are we clear, everyone? So, if I have to go a little slow, if that unspent amount is related to ongoing project, then transfer to which account? Unspent CSR account. Clear? Within how many days? Within a period of 30 days from the end of the financial year. And within how many years we have to use it? Shall be used for the purpose of ongoing project during the next 3 years. If failed, transfer the fund which is remaining in to the schedule 7. So within how many days? 30 days after the end of 3rd financial year. Now comes the second scenario. The project is completed, but still there is an amount which is left out. Then what you can do? Transfer to the fund specified under schedule 7. Within how many months? 6 months from the end of the financial year. So if they want to ask an extensive type of case study from CSR, they will be questioning this unspent amount, related to the unspent amount. Are we clear? Yes. So one more thing, if the company fails to spend such amount, in the board's report you have to specify the reason of not spending that particular amount. You can specify the reason that project is completed, or else project is ongoing, or whatever the reason is, you have to specify in the board's report. With this we have completed CSR. 3 more sections are there in the accounts of company. Okay, chalo. 136, this is important from an MCQ point of view. So to whom you have to send the copies of financial statements? Every member, trustee of debenture holder, on whom the security will be created, trustee of debenture holder, and every other person entitled to by the company. Are we clear? So you, what all you have to send? Financial statements, consolidated financial statements, auditor's report, or any other annexures, that is notes to accounts, board's report, all these you have to send. Clear? So whatever you are laying in the annual general meeting, that has to be sent to whom? Once again we'll revise: every member, every trustee of debenture holder, any other person who is entitled of the company. Clear? Now within how many days you have to send? Shall be sent not less than 21 days before the annual general meeting. That means there should be a clear 21 days gap between the day of sending and the day of annual general meeting. Clear 21 days gap. Are we clear, everyone? So we'll revise the sentence once again. Shall be sent not less than 21 days before the general meeting. But can you send, it's like a shorter notice. Can you send like less than 21 days before the general meeting? Answer is yes. If shareholders holding 95% of the voting agree. Are we clear? So may be sent in less than 21 days when shareholders with 95% voting agree. Are we clear with this, everyone? Yes, in section 8 companies, every case where there is 21 days, we are referring to 14 days. In what class of companies? Section 8 company. Are we clear with this, everyone? Yes or no? Now, while you're sending the copies of the financial statements, of course, you will not be sending the, in few cases, you might not be sending the full record. So, company will allow every member or trustee of debenture holders to inspect the audited financial statements where at the registered office during the business hours. Are we clear till now? Till now, what we have seen under 136? Audited financial statements, consolidated financial statements, auditor's report, or any other annexures to be sent to member, trustee of debenture holder, or any other person entitled to of the company. Within how many days? May be sent not less than 21 days before the general meeting. Are we clear, everyone? Can it be sent less than 21 days? Yes, if shareholders with 95% voting agree. Are we clear? Now, yes, section 8, we are referring to 14 days. Now, moving on to listed companies. Above provisions will be complied. We will assume that listed company has complied with above provisions when, if copies are not sent but they are made available in the registered office for inspection. So, copies of all the documents are made available at the registered office for inspection during working hours. That too, how many days they have to be open for inspection? 21 working days. Are we clear? Now, moving on to the next. You have to send one thing. What is that specific statement? Statement containing key features or salient features of all the documents. That is nothing but highlights of all the documents you are actually making available for inspection. Listed company, there will be lakhs of shareholders. It is not possible for you to send the separate audited financial statements to every person. So that is why, what is the remedy available under 136? Make them available for inspection at the registered office for 21 days and send a statement containing the salient features of all the statements. Statement should also be sent not less than 21 days before the general meeting. Are we clear with this, everyone? Yes or no? And for few classes of companies can send the financial statements in the electronic mode. What are the class of companies? All the listed companies and public company with net worth more than 1 crore and turnover more than 10 crores. Both should be satisfied. What are the two class of companies? All listed companies and all public companies with a net worth more than 1 crore and turnover more than 10 crores. Now, what is the remedy available for them? May send. It is not mandatory. If they want, they can. Clear? Send the financial statements where? In the electronic mode. To whom? To all the shareholders who hold the shares in the dematerialized form. Yes or no? You open a trading app, you have to create what? Demat account. Yes? So, and then shareholders are not holding in dematerialized form, but they have the email address registered with the company. So, shareholders not holding shares in the dematerialized form plus written consent given for receiving through electronic mode. So, then for them you can send the copies of the financial statements in the electronic mode, and for all the other cases you have to dispatch the physical copies. Are we clear with this? Yes or no? Now, this is again not that important from an examination point of view, but still I will discuss. So, listed company shall place financial statements, CFS and all the other documents where? On its website. Clear everyone? Now, if listed company has subsidiary or subsidiaries, then it should also place separate audited financial statements of the subsidiary in its website. Clear everyone? And provide a copy of SFS to the shareholder who asks for it. You are placing it on the website, but separately if a shareholder asks for the copy of separate audited financial statements, then you will send that to the person who asks for it. Are we clear? Now, if there is a subsidiary which is incorporated outside India, that is a foreign subsidiary, and as per the laws of that country, if that subsidiary company has to get it financial statements audited, then you will place the audited financial statements. But let's say foreign subsidiary, as per the laws of that country, it is not required to get its accounts audited. Then what you will place it on the website? Unaudited financial statements. If they are in some other language, then you will translate it in the English version. Make sure it remains in the original format. That's all. Not important from an examination point of view. You can revise it quickly. But 136, that 21 days, to whom you have to send 95% voting, that is important from an examination point of view. Now moving on to section 137. Within how many days you have to file the financial statements to the registrar? Within 30 days of the annual general meeting. So you are conducting annual general meeting and you are sending the financial statements to each and every member and laying the financial statements in the annual general meeting. Yes or no? You will adopt them. You will have discussions. You will have meetings on that. After you are done with adopting the financial statements, you have to file that to the registrar within 30 days of the AGM. Clear? Let's say in that AGM you have not discussed. You have not adopted. Still there are matters to be discussed. Then what will happen? The meeting will be adjourned. Are we clear? Now, if the meeting is adjourned, within how many days you have to file it with the ROC? Within 30 days of the original meeting only. But ROC will take them as provisional records. You cannot wait for the meeting to be conducted. You have to file that to the ROC. ROC will take that as provisional records. Are we clear? Now, after the adjourned general meeting will be conducted, that adjourned general meeting, within the next 30 days, you will file the final copy of the financial statements. Are we clear, everyone? Follow along carefully. So, annual general meeting, case 1, it is held. Wonderful. Now, copy of financial statements, CFS, that is consolidated financial statements, and other documents to be presented. Let's say, first case, they are adopted. Presented, discussions completed, adopted. Now, filed within registrar within 30 days of the date of AGM. Unadopted. In the AGM it is unadopted, or else adjourned meeting is conducted. Then filed with the registrar within 30 days of the original AGM. So takes them as provisional records. Are we clear? Now further, it has been adopted, discussions are completed in the adjourned meeting, then further adopted in the adjourned meeting, then filed with the registrar within 30 days of the adjourned meeting. Are we clear, everyone? Understood? So originally you are filing them as provisional records. You have to give them final version. No, that is why you will file them within 30 days of the adjourned AGM. Now comes the case where AGM is not held. For sure every company should hold annual general meeting. It is non-negotiable. But in few cases, in extreme cases, you might not conduct annual general meeting. Then what you have to do? of course you have to file the unadopted financial statements with the ROC. Now within how many, what date? 30 days. The last date on which AGM should have been held. Last date will be there, yes or no, as per the Companies Act. From that last date, within the next 30 days, you have to file it with the ROC. And you should also file a statement of not conducting the reasons for not conducting the annual general meeting. That's all. So, copy of financial statements, consolidated financial statements and other documents to be presented, plus statement of facts and reasons for not holding AGM. File with the ROC within 30 days from the last date the AGM should have been held. Are we clear with this? This also, I think a case study might be asked or else an MCQ will be asked. Are we clear, everyone? Yes, in case of one person company, there is no case of annual general meeting because there is only one member. Okay, then within how many days he will file it with the ROC? Within 180 days from the closure of financial year. Are we clear? So in case of OPC, financial statements adopted by its one member plus the other documents to be filed with the ROC within 180 days from the closure of financial year. Are we clear, everyone? Yes, and company shall also file with the registrar other documents, that is accounts of subsidiary or subsidiaries incorporated outside India. If it is a subsidiary which is in India, of course that subsidiary will also submit to the ROC. We need the record of subsidiary which is incorporated outside India, because for that company it is not obligated to send to the ROC as per Companies Act 2013. So that is why company shall also file with the registrar other documents of the accounts of the subsidiary incorporated outside India and no place of business in India. And as per the laws of that country, if it is not required to be audited, then unaudited accounts will be filed. Are we clear? Yes or no? Simple. If it is an Indian subsidiary will submit to the ROC. No. If it is a foreign subsidiary, that is the case when this holding company should take action and submit to the ROC. That's all. We are done with section 137. Now moving on to section 138, the last section of this particular unit, internal audit. Are we clear? So who can be appointed as an internal auditor? Individual, partnership firm, or else even a body corporate. Even a company can act as an internal auditor of the other company. But can it act as a statutory auditor? No. So, following class of companies are required to appoint the internal auditor. First comes every listed company. Second category, every public company with a paid up share capital more than or equal to 50 crores. Turnover more than or equal to 200 crores. Outstanding loans and borrowings, specifically from whom? Banks and PFI, public financial institutions, exceeding 100 crores. Not more than or equal to, exceeding 100 crores. And the last obligation, outstanding deposits more than or equal to 25 crores. And comes private company. Same. You should eliminate paid up share capital and outstanding deposits. Are we clear? Yes? Shall we revise once again? Which class of companies have to appoint internal auditor? Every listed company. Every public company with a paid up share capital more than or equal to, turnover more than or equal to 200 crores. Outstanding loans and borrowings from banks and PFI exceeding. And then outstanding deposits exceeding, no, more than or equal to 25 crores. Private company only two limits, turnover more than or equal to 200 crores and outstanding loans and borrowings from banks and PFI exceeding 100 crores. Clear? Who can be appointed as internal auditor? Chartered accountant or cost accountant or any other professional decided by the board. Clear in practice or not? And is it an obligation that he should not be an employee? May or may not be an employee. Are we clear with this, everyone? So with this we have completed accounts of company. I'll quickly move to the Q&A companion and I will give you the list of important questions that you have to revise quickly. If you have Q&A companion, you can tick or else write down in any other paper. Okay, make sure that paper does not vanish. Again you will ask me, ma'am, you are telling in class, but give us list again. I will. Okay, but you should write now. So page number 24. Still you feel the sound is high? Yes. It's okay. You will listen to music through your AirPods. You will go to your parties. Enjoy the music here. Okay, so question number 2, 3, and this 4 is actually from an MCQ point of view. 2, 3, 4, 6, 8, 12 and 14. 2, 3, 4, 6, 8, 12, 14. Okay? Yes? That's all. So revise them from conceptually. And just to give you a heads up, all the practical questions in my Q&A companion, I will give you a proper format for that. Green will indicate the provision, actual provision of the law. Okay, now red will indicate the important words or values that you have to underline in the examination. Ma'am, what is the use of underlining? So there will be an evaluator who has like 100 copies to verify. Yes? Now will he have the time to read every single line? I will give you 5 papers. Will you read every single line? Answer is no. So that is why what that person will do, if he finds something which is highlighted or something which is underlined, he will go directly there. He will verify whether the value is correct and you will be accounted with the marks. Yes, that is why I am telling you underlining is very, very important. I have seen some formats of certified copies. I don't know what is the purpose of giving a border. They will write like a poem in between. They will leave 4 finger space here, they will leave 4 finger space here. Like a poem or some shairi, they will write in the middle. Like why? They have given a line, no, from to start. Clear? Yes, and one small heads up, again you will ask, ma'am, presentation tips. I will be giving presentation tips as the class goes on. Every question should be started with a new paper. Ma'am, we only wrote 2 lines in the previous paper. Okay, this is not your property. Okay, so start with a new paper. Clear? Where will you write question number? No, I will not show certified copy. It's confidential. I think I've seen it somewhere. Just give me 1 minute. Yes. Okay. So do not write 3A. Start. So where is 3A? That evaluator should search. That is why every question number should be written clearly on the top. Okay. So I will not be giving you more details also. You will not follow. You are in final stage. But at least, okay? At least do this. Okay? That's all. So I think we are successfully done with the unit accounts of companies completed. So shall we move on to boards of directors or you need break? Oh, sure. Yes. The next unit that we are starting is board of directors. Here we are specifically learning the provisions related to the appointment, qualifications, vacation, removal, resignation of directors. We are not expanding our scope here, just we are sticking to the basics from the day the director enters and then exits to the office. That's all. Okay. So Now, here we are referring to section 149, referring to the range of section 149 to 169. Don't worry, we don't have all the sections. We do have like very few sections are eliminated, but the sections that I will not be discussing in this particular class is 154 to 159. All the provisions are related to director identification number. So I have not even included that in the capsule. That is my handwritten notes. So if you want to revise, you can refer to the concept book. Extensively, it will be covered there. Okay. So from an MCQ point of view, if they want to question a very hard MCQ, then they might ask from 154 to 159. Okay. So if you are preparing for group 3 and if you have time and if you are counting on law, that means we need 70 to survive. That then you have to revise. Okay, so how many are aiming for exemption in law and 40 in the other? Like you will have your own imagination, no? That I will get 40 in law, I will get 70 in SFM, I will get 80 in SEM. Yes or no? So likewise, how many are counting that you will get 70 in law? No one? 60? It's possible. Try chestara? Okay. Huh? 55 to 60, you will get easily. So never imagine that if you are able to score. So you will watch my bullet MCQ video and kya hua? So you will watch my bullet MCQ video and you will be like, okay, I got 12 MCQs correct out of 15. So don't imagine that you will get 60. Nope. Why? Because I have seen many people, they were able to score 26 in MCQs, but they only got 38 or 37 whole. Okay, so you have to rely mostly on descriptive to pass, at least pass. Okay, so it's not like MCQs are done. So descriptive also, you have to make sure that whatever the questions that you have, I mean that you know perfectly, select those 2-3 questions. Starting you have to make them like a brilliant presentation in the first 3 papers only. You have to give that evaluator perception that you are a topper, even if you are not. Okay, so let's start. This is section 149 to 169 related to board of directors. So we will go a little more faster. Why? Because you are all experienced and about to be a CMA. Yes or no? Okay. So I think you have been learning this from your CMA inter directors. Yes or no? That is why we'll go a little fast. Okay, so starting off with section 149, very basics. Every company should have directors. Directors should be individuals. A company can act as a shareholder in another company, but a company cannot act as a director of the other company. That means only natural persons, individuals can act as directors. Are we clear, everyone? So 149 says that every company shall have board of directors consisting individuals. Now, how many minimum number of directors for each class of companies? Public company, minimum 3. Private company, minimum 2. 1-person company, minimum 1 director. For all the class of companies, maximum number of directors are 15. Now, can you increase the number to more than 15? Answer is yes. What is the requirement? You need to pass a special resolution. Now, for 2 class of companies, government company and section 8 company, the maximum limit of 15 is not applicable. Special resolution is also not applicable. Are we clear, everyone? Which class of companies? Section 8 companies and government company. Now, the following class of companies shall appoint at least 1 woman director. Women empowerment, reservations in the companies also. At least 1 woman director. For which class of companies? Every listed company and every public company. 2 limits: paid up share capital more than or equal to rupees 100 crores, and moving on to turnover more than or equal to rupees 300 crores. If any one limit satisfies, they have to appoint how many women director? At least 1 woman director. Are we clear, everyone? Now, every company, irrespective of the classes, every company registered on the Companies Act 2013, it should have at least 1 resident director. Now, how will you qualify him as a resident? The stay in India in the current financial year should be more than or equal to 182 days. So, every company shall have at least 1 resident director who stays in India for a total period of more than or equal to 182 days. Quick revision, women director, what is the amount of turnover? Okay. Huh? Turnover 300 crores. Okay. Now, if there is any vacancy in the position of women director or independent director, who will fill up the vacancy? The board of directors. Within what time? The next board meeting, the immediately next board meeting, or else 3 months from the date of vacancy, whichever is later. Are we clear with this, everyone? Now moving on to the most important section from an examination point of view and MCQ. Which classes of companies must appoint how many independent director? Category number 1, every listed company. How many independent directors? At least 1/3 of the total number of directors should be independent directors. Now moving on to the other public companies, paid up PUSC, what is it? Will you write PUSC in your exam? Absolutely no. Thank you. Okay, so paid up share capital more than or equal to rupees 10 crores. Now remember, the same limits are applicable for the formation of audit committee also. Okay, no need to remember two limits, all are same. Okay, so public companies with a paid up share capital more than or equal to rupees 10 crores or turnover more than or equal to rupees 100 crores. And comes the last limit, aggregate outstanding loans, debentures, deposits together exceeding 50 crores. Are we clear? Then how many independent directors? At least 2 independent directors. What is the meaning of independent directors and relevance of independent directors? So independent directors are qualified based on their relation with the company. So they should not have any financial interest in the company. They should not be promoter. They should not be related to the promoter. They should not have any relation to the directors. So pecuniary relationship like a financial interest, commercial relation, there are n number of qualifications for to be an independent director. Why? Independent director acts as a watchdog. Any decision taken, any expansion or a new loan which is taken, or you are considering to expand into a new type of business, whatever it is, independent director will verify whether it is beneficial for the company, whether it is in the interest of all the stakeholders. Is it harmful for the employees? Is it harmful for the minority shareholders? Every single aspect will be verified, and then he will pass a judgment. That is why independent director plays a very important role. And to achieve corporate governance, the most important feature in the company is to have independent directors. Are we clear, everyone? Yes, corporate governance is nothing but a process of managing the company where it is for the benefit of all the stakeholders. So majority shareholders, if they take a decision, majority shareholders will only be board of directors. Yes or no? Why will I give up the position of director if I have invested money? Basic. Yes or no? So that is why they will take a decision for their own benefit. So who will stand in between here? Independent director. Are we clear? Understood the concept of independent director, everyone? Now, how many independent directors are to be present in a listed public company? At least 1/3 of the total number of directors. Other class of companies, at least 2 directors. What are the other class of companies? Is it public company or a private company? Public company. Paid up share capital more than or equal to? Turnover more than or equal to? Aggregate outstanding loans, debentures and deposits more than 50 crores. Are we clear? Now, the composition of audit committees, at least 3 directors, majority should be independent director. In that case, if majority is more than 2, let's say 5 are there, what is majority? 3, no? For that case, you don't need, you should satisfy the case of 3 independent directors, not 2 independent directors. Are we clear? That means due to the composition of audit committee, if it requires higher number of independent director, that higher number is applicable. Are we clear with this, everyone? Yes. Now moving on to section 152. First directors. By default, who will be considered as first directors? Subscribers to the memorandum. But first, you have to check whether there is any provision, laid down in the articles of association. If articles is silent, then by default, the subscribers to the memorandum during incorporation, they will be considered as the first directors. Are we clear, everyone? Now, subsequently, all the directors will be appointed by the company in general meeting. So appointment of directors, first director, if there is no provision in the articles, then subscribers to the memorandum shall be deemed to be the first directors. In case of one person company, that one member will only be shall be deemed to be the first director. Moving on to subsequent director, every director shall be appointed by the company in general meeting. Are we clear with this? Everyone following along? Most of the concepts related to MCQs are done. Resident director, women director, independent director. Yes? Thank you. Now moving on to the requirements. If you want to be appointed as a director, the first and the foremost requirement is you should have director identification number. In shortcut, it is DIN. Are we clear? So requirements for the appointment: number 1, you should possess director identification number. Second, you should give a declaration that I am not disqualified. Which section contains qualifications? 164. Clear? We will read that later on, no worries. So 3 requirements: DIN, not qualified, consent. Have you studied in your Indian Contract Act? For every contract you need the consent. Yes or no? Here also, to be appointed as a director, you need the willingness of the director. That is nothing but consent. Now, in which form the director will file the consent to the company? DIR 2. The same consent declaration DIN related to the appointment of the director to be filed by the company to ROC in which form? DIR 12. Are we clear? Yes. So DIN, declaration, consent. These are the requirements. Now consent will be furnished by the director to the company in DIR 2. Now consent as well as the DIN and declaration will be filed with the registrar by the company in which form? DIR 12, along with the prescribed fees. Are we clear, everyone? Now, you are an individual who do not possess director identification number, but you want to become a director in a company. So what is the remedy available? You have to apply with the central government. You have 2 forms, DIR 3 and INC 32. DIR 3, you want to be appointed as a director in an existing company. You want to be appointed as a director in an existing company. Then which form? DIR 3. Are we clear? Now, for a newly incorporated company, 3 directors maximum can apply for director identification number using SPICE Plus form. The number for SPICE Plus form is INC 32. Are we clear? SPICE Plus form is an integrated web form containing various services. One of the services, application for director identification number. Maximum how many directors can apply for DIN using INC 32? 3. Are we clear? Understood? So that is why for existing companies the form is DIR 3. For newly incorporated company, maximum 3 directors. Which form number? INC 32. Are we clear with this? Yes or no? So requirement here is every individual who has an intention to become or to be appointed as a director, they shall make an application electronically to the central government. If it is during incorporation, form INC 32, and for an existing company in the form DIR 3. What all documents will you attach? Your photograph, proof of identity, that is your Aadhaar card or else PAN card, or proof of address, the same documents. Clear? So photograph, proof of identity, proof of address, board resolution, specimen signature duly verified. That means you will upload using your digital signature certificate. Yes. So signed and submitted electronically using DSC, and it should be digitally verified by any professional like a CS or a managing director of the company, or else the director of the company, or CEO or CFO. Are we clear with this? How will they verify? Through their DSC. Are we clear? So if you want to file a director identification number, this is the procedure. First you need to have DSC. Okay. So with this we have completed the appointment procedures. So from 154 to 159 you will have the allotment of DIN by the central government. It should be done within 1 month. Changes to the specimen signatures, we have attached few documents. No, any changes in the documents, surrender of the DIN, cancellation of the DIN, so and in which situation it will be deactivated, all the provisions related to DIN will be specified from 154 to 159. Everything is specified in my concept book. Just sit for 20 minutes, revise it. you will have an idea, because DIR 3A, 3B, 3C, DIR 6, these form numbers will be there in that content. May be important from an MCQ point of view, maybe. Okay, shall we move on? Everyone feeling sleepy? Okay. Now, coming to the next provision, rotation of directors. So even if the directors have the power to manage the affairs of the company, ultimately the company belongs to the shareholders, yes or no? That is why shareholders should have the power to decide who will be part of management. That is why there is a concept of rotation. So even if I appoint you initially through a general meeting, I will decide whether you have to be reappointed or not. That is why there is a concept of rotation. Simple. Few set of directors, like the few number as per this 152 subsection 6, these many number of directors will retire every AGM. They will retire. If they retire, what happens? Power will be in the hands of shareholders to decide whether to let them continue in the position or to replace them. Are we clear? So ultimately, is the power to appoint the directors in the hands of shareholders? Answer is yes. To ensure that there is a concept of rotation of directors. Are we clear? So, how many directors are considered as rotational directors? 2/3 of the total number of directors are considered as rotational directors. The remaining are non-rotational directors. That means their appointment or their tenure will be decided by the person who appoints them. They will not be liable to retire. Are we clear with this? Now, while you are, just give me one moment. Yes. 1 minute. Yes, shall we continue? So we have understood the concept of rotational directors. So how many directors are considered as rotational directors? 2/3, at least 2/3. Now, can articles specify that all the directors are rotational directors? Answer is yes. Yes. So that is why, unless otherwise prescribed in the articles, or unless the articles provide otherwise, articles provide that all the directors are retiring directors or all the directors are rotation directors, for every director the concept of rotation will be applicable. Are we clear? Now, while you are calculating 2/3, while you're calculating 2/3 in the total, you should not include these classes of directors in that total. That means for these class of directors, the concept of rotation is not applicable. They are not liable to retire by rotation. They will have fixed tenures. Are we clear? So, what are those directors? Independent director, small shareholders director, nominee director, director appointed by central government. Are we clear? Understood everyone? Yes. So for these classes of, directors, for them, rotation is not applicable. So independent director, small shareholders director, nominee director, director appointed by government. Clear? Now, while you are calculating at least 2/3, will you round it off to the next number or nearest number? Next number. If it is 2.3, the number will be 3. If it is 2.9, the number will be 3. That is next number. So 0.3, 0.1 will be considered as a 1. Are we clear everyone? Now, moving on to the next case. Does this mean that all the 2/3 directors will retire at every AGM? In AGM, no other matter can be discussed if every director retires. So that is why what they are specifying, out of the rotational directors, 1/3 must retire at every AGM. So this 1/3 will you calculate out of total or out of rotational? X is total. X into 2/3 will be rotational. In that, calculate 1/3. Are we clear? So while you are calculating 1/3, you will round it off to nearest number. So if it is 2.3, 2. 2.5, 3. Basic decimals. Okay. So shall we continue? So at every AGM, how many directors must retire? 1/3. Only 1/3 shall retire at every AGM. It is rounded off to nearest number. Now, ma'am, this 1/3 includes any specific category? Answer is no. 1/3 will include the directors who have been in that office the longest. If there are 10 directors, out of the 10 directors, 2 directors are actually in the position for more than 2 years. Others are like 1 year, 6 months. Then who will retire? That persons who are in the office for more than 2 years. So, directors who have been longest in the office, they will retire. So, there is no specific category. Are we clear? So, directors who are in the office for the longest, they will retire. So, let's say the number of retiring directors, that out we calculated 1/3. 1/3 was equal to 1. Now, but there are 2 directors whose stay in the office is equal to 1 year. That is only longest. Only one person has to retire. Then who will decide? They will decide by mutual agreement, or else they are not deciding, they are fighting. By lot, you will pick one name. That person will retire. Are we clear, everyone? Understood? Yes or no? So you will be like, ma'am, who will retire at every AGM? The directors who are in the position for the longest. If 2 or more directors are appointed on the same day, then decided by mutual agreement or by lot. Ma'am, let's say these 5 persons, assume 1/3 is equal to 5. 5 must retire at that AGM. But unfortunately, AGM is not held. Will they continue to stay in their positions? Answer is no. They have to vacate their offices. On the last date, the AGM should have been held, irrespective of AGM held or not. So, if AGM is not held, retiring director shall vacate the office on the due date on which AGM should have been held. On this point, they will ask a question in the case study. Are we clear? Irrespective of AGM held or not, you must retire. We are done with the rotational concept. Are we clear? So all in all, if article specifies all directors, then all directors will be rotational, or else 2/3 of the total number of directors. Who will not be part of total number of directors? Independent director, small shareholders director, nominee director, director appointed by government. Understand? But every AGM, who will retire? 1/3 of the rotational directors. 1/3 will be rounded off to nearest. 2/3 will be rounded off to next. So, now moving on to if there is a concept of rotation, there is a concept of vacation. Yes or no? Vacation means that you're dreaming of? No. Position is vacant. Okay, so that vacant position, whatever is there, due to retirement. Now, it can be filled in the following scenarios. Case 1, you can decide not to fill the vacancy. Why? Minimum is 3. I have 10 directors. Only 2 are retired. So that means how many left out? 8 are there. My minimum requirement is only 3 if it's public case, public company. Yes or no? So if I am satisfying minimum number of directors, I can decide expressly not to fill the vacancy. That can be the first solution. Yes or no? Now, second solution, appoint the same person. Appoint the retiring director. Next, appoint any other person. Any other person, that means under section 160, we will see who is the other person. Okay. Now, 160 is like right to stand for directorship other than retiring director. So, by default, if there is a retiring director, there is a position, by default, whose name will be proposed? Retiring director's name will be proposed. But 160 will give the right for other persons to participate in the directorship. So, as per 160, you can appoint that person, or else deemed appointment of the retiring director. By default, who will be reappointed? Retiring director. We will see the case of deemed reappointment as well. No worries. Are we clear? Now, first, AGM is held. Annual general meeting is held. In that, retirement is completed. Whoever is falling under that 1/3 category, they have been retired. So, AGM held, retirement completed. Now, in that AGM, vacancy is not filled. They did not decide that they will reappoint the retiring director, or else they did not decide that the vacancy will not be filled. So, in that case, what happens? The meeting will be adjourned. When will it be adjourned? same day, same time, same place in the next week. If it is a national holiday, then succeeding day. Are we clear with this? Now in the adjourned meeting also, same case, vacancy is not filled, or they have expressly decided, they have not expressly decided not to fill the vacancy, so the decision is pending. Then what happens? In the adjourned meeting, by default, who will be deemed to be reappointed? Retiring director. So what will be the date of reappointment? Date of adjourned meeting. Are we clear with this? So simple, the retirement is completed in the annual general meeting, but in the annual general meeting vacancy is not filled, or else they expressly not decided not to fill the vacancy. Then the meeting will be adjourned in the same day, same time, same place in the next week. If it is a national holiday, then succeeding day. In the adjourned meeting also, the case is vacancy is not filled, expressly not decided not to fill the vacancy. Then by default, the retiring director will be deemed to be reappointed on the date of adjourned meeting. Are we clear with this, everyone? Yes. So that's all. So the retiring director shall be deemed to have been reappointed at the adjourned meeting. Exceptions when the deemed reappointment cannot take place. Case number 1. Previous meeting, whatever is there, that may be the original meeting or the adjourned meeting, his name was proposed and he lost. That means the resolution was not passed. That is, an ordinary resolution was not passed in favorable to him. He lost the meeting. Then can he be deemed to be reappointed? Answer is no. Clear? Second, he is disqualified under 164. And the third, he is not giving consent for reappointment, expressing his unwillingness. And then comes, for appointment of that particular director, as per Companies Act 2013, in any provision, a special or ordinary resolution is required. For example, if you want to appoint a director as a managing director or a whole-time director or a manager exceeding the age of 70, you need to pass a special resolution, or else an ordinary resolution with the approval of central government. So what is the law saying? To appoint this person, you need to pass a special resolution. So for those kind of category of persons, can they be deemed to be reappointed? Answer is no. Are we clear, everyone? Understood? Yes or no? So what are the exceptions till now we have studied? Expresses unwillingness, disqualified in the resolution for the appointment of such director, is lost in the previous meeting. Special or ordinary resolution is required for such appointment, and section 162 is applicable. What is section 162? A single resolution for the appointment of 2 or more directors. For that case, first of all, to pass that resolution, you need the consent of all the members that we will pass single resolution for the appointment of 2 or more directors. You don't need to remember that. Remember section 162. Are we clear, everyone? Is 162 part of our syllabus? No. It's not like I'm not discussing because of marathon. It is not there in ICMAI study material only. Are we clear, everyone? Yes. So these are the 5 exceptions where deemed reappointment is not possible. And my iPad is not charging. If I move this again, please stop. Okay, we'll complete 160. Yes. So as specified earlier, the position of the retiring director can be filled in one case. The person under 160 can be appointed, that is other than retiring director. Now 160 gives a right for the other persons other than retiring director to stand for directorship. Who are the persons and what is the procedure? So who can apply to be in the position of directors? Any person individually. If you want, you are a CMA and you have experience, you have done, if you want, you can participate in that company, in the annual general meeting, and apply that you will be appointed as a director. So person applying, or else member is proposing. One of the member of the company is proposing that Mr. X is to be appointed as a director, or else it is proposed by nomination remuneration committee or board of directors. Are we clear with this? So what are the 3 cases in the other persons? Who can be the other persons other than retiring director? Person applying, member proposing, and then proposed by NRC or board of directors. Are we clear? Now let's see the procedure to be followed. Case 1. When a person is applying or else a member is proposing. Are we clear? So you tell me, lakhs of members will be there, yes or no? And if you know that one company's position is vacant, why will you not try? Yes or no, ma'am? We will not get, ma'am. Some people will even try, yes or no? Now, so in that case, that is why what happens is, in order to avoid frivolous applications, that is applications which are not serious from from a company point of view, then that is why what they have specified, 1 lakh deposit. To apply, you have to pay 1 lakh. Will you get a refund of that 1 lakh? Answer is yes, if you are appointed. Or else if you get more than 25% of the valid votes. So only if you are serious, then only you can apply. And for you, if 1 lakh doesn't matter, then you can. Okay, so shall we start? Now, so requirement of written notice. So if person is applying or member is proposing, both the cases, person applying or member proposing has to give a notice in writing to the company. Within how many days? At least 14 days before the annual general meeting. Are we clear, everyone? Yes. Now, what will you specify in the notice? The candidature, that is nothing but like a resume. Who is the candidate, what is his details, what is his experience, so his DIN and everything will be specified. His intention and person's candidature. If person is applying, his candidature he will specify. But if person is proposing, candidature will be specified. His intention to propose this person should also be specified in the notice. Where will you submit that notice? At the registered office of the company. So first requirement, if who is applying? Person applying or member proposing. Are we clear? So, now this notice should be accompanied with what? At least, not at least, that is minimum right now. What is the deposit amount? Rupees 1 lakh. Clear? So, deposit need not be paid if it is a proposal to be appointed in the position of independent director, or else NRC is proposing, or else BOD is proposing. Are we clear, everyone? Yes. When will you get the refund of deposits? If and only if you are appointed as a director, or else gets more than 25% of the valid votes. Are we clear, everyone? Yes or no? Now, what happens is NRC and board of directors, directly they can file, because they are part of the company only, no. Directly they will file their intention with the members. So for them, they don't need to satisfy this procedure. Clear, everyone? Yes or no? So what will be the action by the company after they receive the notice from the person applying or member proposing or NRC or BOD? They will inform to the members at least 7 days before the general meeting. Are we clear? By serving individual notices and by placing it on the website. This is the procedure for standing for directorship other than retiring director. Are we clear? One basic differentiation is, person applying, member proposing, deposit is required, and 14 days before you have to serve the notice to the company. But if it's NRC and BOD proposing, directly the company will serve the notice to the members and no need to file the deposit. Clear? Yes or no? Okay, so we are done successfully with 152, 160, 149, 153. So we have to figure out the issue of charging this and that not being disconnected. What is the time? Yes, let's continue. Moving on to section 151, appointment of small shareholder director. क्या हुआ? हाँ? Request. Okay. In extreme cases, we will get inspiration, that you will sit under street light and study. Okay. So please adjust. Okay. So shall we continue? 151. So here we are understanding what is the procedure for the appointment of SSD, small shareholders director. Now, what is the purpose of appointing another director for representing small shareholders? In the word itself, they are small shareholders. Who will consider their opinion? You need a representative, yes or no? That is what. So, he acts as a representative to small shareholders director and to look after the interest of small shareholders. So, in my book, SSH, small shareholders. SSD, small shareholders director. Can you use this in the exam? No. Thank you. So when will you consider that particular shareholder as small shareholder director? If he is holding shares worth nominal value not more than 20,000 rupees. Shall we revise the sentence once again? Yes, means a shareholder holding shares of a nominal value of not more than rupees 20,000. If I am holding shares of face value 20,000, am I considered as a small shareholder? Yes, sir. Not more than equal to 20,000. Yes, you will qualify to be a small shareholder. Clear? Not SSD qualification. Small shareholder qualification. Are we clear? Now, there can be two cases, two possible chances of appointment of SSD if proposed by SSH. That means if small shareholders are proposing by serving a notice to the company, or on suo motu basis. That means company can by itself appoint a small shareholder director. Now, this is for listed company. Again, is it mandatory that listed company shall have one SSD? No. Listed company may, 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 possibly, if you want you can, or else no. So it is not mandatory. A listed company may have one director elected by small shareholders. Are we clear? Now if you are going with the possible case of election, notice given by SSD, when will you consider that notice? If at least 1,000 small shareholders are serving the notice, or else at least 1/10 of the total number of small shareholders. Not 1/10 of the total number of shareholders, 1/10 of the total number of small shareholders, whichever is lower. This is the actual valid limit for serving the notice. If they satisfy this, then only we will consider it as a valid notice, and then we will take an action. Are we clear, everyone? Now while serving the notice, within how many days you have to serve the notice? Within 14 days before the meeting. Clear, everyone? Now what will you mention in the notice? First, who are proposing? Small shareholders are proposing. So proposing small shareholders name, address, shares held, as well as proposed SSD, the director you are proposing, his name, address and shares held. Are we clear? As well as, since it's a concept of director, you should also accompany that with the director identification number, declaration that he is not disqualified, and his consent. Are we clear with this, everyone? Yes or no? How many small shareholders can serve a valid notice? At least 1,000 small shareholders, or at least 1/10 of the total small shareholders. How many days before the meeting? Clear, everyone? Now, since small shareholder director is acting for the interest of small shareholders independently with the judgment of the majority shareholders, he should also be qualified to be an independent director. Are we clear? Understood? So it's not an option, it's mandatory. SSD should be qualified to be appointed as a independent director. So additional requirements are: shall meet the eligibility of independent directors and shall give a declaration of independence. Now moving on to the tenure. We have seen this somewhere. While calculating 2/3 of the total number of directors, in total number of directors, what you will not include? Small shareholders director. So that is why, are they liable to retire? Not liable for rotation. So what is the maximum tenure? Shall not exceed 3 consecutive years. So maximum tenure is 3 consecutive years. And can that SSD after 3 years, can he be reappointed? Yes, after cooling period. What is the cooling period? 3 years from the date he ceases to hold the office. So tenure is maximum 3 consecutive years, and after that cooling period is 3 years, and then can he be reappointed? Answer is yes. Clear, everyone? Now, when SSD will vacate the office? Disqualified under section 164, or else his office becomes vacant due to the section 167. 167 is nothing but in which situations the office of the director will become vacant. One of the situation is disqualification only. Okay. Now moving on to the last case, fails to meet the criteria of independence. So as an SSD, your qualification should be independent director. If you are not qualified to be an independent director, even if you are qualified to be a normal director, you can't act as SSD. With this, we have completed section 151. Shall we recall the sections that we have studied till now? Yes or no? Okay, open up the first page of this particular unit. 149. Have we done with this? Yes or no? Minimum number of directors, maximum number of directors, women director, independent director, resident director. Resident director, how many days? Equal to, more than or equal to 182 days. Previous year or current financial year? During the financial year. So we are done with 149, we are done with 151, we are done with 154. Appointment. Subsequent directors will be appointed in the general meeting. First directors, if no provision is there in the articles, by default who will be appointed? Subscribers to the memorandum. In 152, two more provisions we have seen. Rotational directors, yes, rotation directors, as well as the filling up of the vacancy of retiring directors. Are we clear? Now moving on to 153 to 159, DIN provisions we have not seen. 153 we have seen. What two form numbers? Existing company, DIR 3. Newly incorporated company, INC 32. Are we clear? Yes, Spice plus form. 160 is done. Right of persons other than retiring director to stand for directorship. Three cases: person applying, member proposing, proposed by NRC and BOD. When the deposit is not required, NRC and BOD. Now we are left with the last sections. These are small sections only. 161 we will see about additional director, alternate director, nominee director, as well as casual vacancy concept. This is under 161. And then disqualifications, vacation of the office, resignation, removal. Shall we continue? Are you ready? Yes. Okay. So till now whatever you studied, keep that aside. Not outside, aside. Okay. Yes. So 161, subsection 1 is additional director, subsection 2 is alternate director, subsection 3 is nominee director, and subsection 4 is casual vacancy. Of course, you can't remember subsections. If you remember sections, I will be very proud of you. Try. Okay. So 3 directors: additional, alternate, nominee. So first and the foremost cases, who can appoint? First, check articles. If articles gives the power to the board of directors, then board of directors can appoint additional director or alternate director or nominee director. So appointment is in the hands of only if power is given by articles. So subject to the articles of the company, the board of directors will have the power to appoint the above. Are we clear? Now let's see what is the purpose. Why will you appoint an additional director? Any urgent situation or a project that has come up. For that you need an expert director. For that case you can add in an additional director into the board of directors. So to meet the urgent requirements or any professional needs. Next, moving on to alternate director. Why? To act as an alternative for a director who is leaving India for not less than 3 months. He's leaving for 3 months or more than 3 months. Not less than 3 months. That means he's leaving for 3 months or else more than 3 months. Then appoint alternate director. Not less than. So to act as an alternate for a director during his absence for a period not less than 3 months. If it is less than 3 months, you should not appoint alternate director. Are we clear, my dear students? Okay. I know you will be confused with this less than, not less than, but that is how the provision is. So we will be very clear, more than or equal to 3 months. Okay. So moving on to nominee director. If a financial institution or a bank or a central government or a state government, some department which is having an agreement with the company, if they want, they can nominate a person, but appointment will be done by board of directors. If the power is conferred by the articles. Are we clear with this, everyone? Yes or no? Alternate director, when the director is leaving India for not less than 3 months, that means more than or equal to 3 months, then you need to appoint. Not need to, you can. It is not requirement, you may. Who will decide that? The person who is leaving India or board of directors? Board of directors will decide. Are we clear? Yes. Now let's move on to the conditions. What is the tenure of the additional director? So not tenure, sorry, we will move on to the tenure later on. Moving on to conditions. So one person is not eligible, a person is not eligible to act as an additional director if in the previously conducted meeting, if he failed to get appointed, lost the meeting. Are we clear? So person who failed to get appointed previously cannot be appointed as additional director. So previous meeting he lost the previous appointment, he lost the meeting, so he was not able to be appointed. Right now, can he be appointed as additional director? Answer is no. Now alternate director, if you are trying to search for an alternate for an independent director, that alternate director should also be qualified to be an independent director. Are we clear, everyone? Now an alternate director, two conditions are there. He should not hold alternate directorship in the same company for other directors. So let's say there are two directors who left India for more than 3 months or equal to 3 months. For Mr. A, Mr. C is acting as an alternate. Other person was also going out of India. Now can Mr. C act as an alternate director for the other director also? Answer is no. Now case 2. There are 3 directors, A, B, C. Mr. A has left India. In place of Mr. A, who is acting as an alternate director? Mr. P. Now, Mr. B is also leaving outside India. Now, I will ask you a question. Can Mr. C, who is a director in the company, can act as an alternate director? No. So, alternate director, he should not hold any alternate directorship in the company or directorship in the company. Ma'am, he's an alternate director in company X. He's also an alternate director for some other director in company Y. Is it possible? Answer is yes. Are we clear? Understood this case? So, the conditions are alternate director for independent director should also be qualified to act as an independent director. He should not hold any alternate directorship in the company. Are we clear, everyone? Now, moving on to nominee director conditions. Nomination is done by the institute or government, but the appointment is done by the board of directors. This one we are clear about. Now, moving on to tenure. Till how long additional director can hold the office? Up to the date of the next AGM. That's all. If AGM is not held, last date on which the AGM should have been held, he has to vacate the office, irrespective of AGM held or not. So, can hold the office up to the date of next AGM, or else the last date AGM should have been held, whichever is earlier. Are we clear? Now, what will be the term of alternate director? Term of original director. Are we clear? Or else, as and when the original director returns to India. Are we clear with this? Now, let's say original director was applicable under section 152 subsection 6. That means rotation is applicable and he has retired. Retirement is completed and there is a case of deemed reappointment. Now, will the deemed reappointment be applicable for original director or alternate director? Original director. That's all. So, any deemed reappointment procedures will be applicable to original, not the alternate director. And the tenure for the nominee director will be decided by the board. That is why nominee director, retirement, we will not count them as a total number of director for rotational directors. Are we clear till now? Yes or no? Now moving on to 161 subsection 4. Casual vacancy. In which scenario casual vacancy can take place? Death of the director, disqualification, resignation, removal. Are we clear, everyone? Now, you have to fill the vacancy as per the provisions of the articles of the association, and generally it is filled by the board of directors. Are we clear? Then, when? In the next board meeting, and shall be subsequently approved by the members in the next general meeting. Are we clear, everyone? So, casual vacancy subject to the articles of association will be filled by the board. in the next board meeting, and it will be subsequently approved by the members in the next annual general meeting. Are we clear? Now, when this person who is acting as a filling of casual vacancy shall hold the office up to the date of the original director's tenure. If original director continues, his remaining tenure is 1 year. What will be the tenure of the person who is filling up the casual vacancy? That 1 year. So, shall hold the office up to the date held by the person if there was no casual vacancy. Are we clear? Everyone understood the case of additional, alternate, nominee, casual vacancy? Yes or no? Yes. Now moving on to section 164, disqualification of directors. Feeling tired? Feeling sleepy? Even if so, you have to listen. Because how many days are left? Don't start counting, you will feel scared. Okay? So, disqualification of director. Okay? So, everyone please smile once. Okay, thank you. So, who are the persons who shall not be eligible to be appointed? The first case, he is unsound mind. Who has to declare that he's gone mad? Competent court, not his wife or friends. Okay, so unsound mind. And the second, undischarged insolvent. He applied as an insolvent. Was he discharged from his debts? Answer is no. That is why he will be called as an undischarged insolvent. He is disqualified. Next, applied to be adjudicated as insolvent, and application is pending. You applied for the NCLT or you applied for the DRT. NCLT will not apply for sure. DRT, because individual. Are we clear, everyone? Yes, understood. So 3 disqualifications: unsound mind, undischarged insolvent, applied to be adjudicated as insolvent, and the application is pending. Now moving on to the second category, that is convicted by court for any offense, and that offense includes an imprisonment of less than 6 months. Are you eligible? Yes. If it is more than or equal to 6 months and 5 years has elapsed from the expiry of the imprisonment, disqualified. Elapsed then qualified, not elapsed then disqualified. Clear? And if it is more than or equal to 7 years, he is never qualified. Are we clear, everyone? Yes. Less than 6 months, eligible. More than 6 months and 5 years has not elapsed, disqualified. 5 years has elapsed, qualified. And moving on to imprisonment period more than or equal to 7 years, not eligible. Are we clear with this? And there has been an order passed by the court or tribunal disqualifying him, then he is disqualified. And he has not paid the call money, that is unpaid call money for the shares, that too for a period of 6 months. The due amount is due for 6 months, then he is disqualified. And the last few is convicted for an offense under 188, related party transactions, and that too within when during the last preceding 5 years. But previously 10 years ago, if he is convicted, he is eligible. But during the last 5 years, if he is convicted, then he is not eligible. And he has no director identification number and not complied with section 165. So 165 is related to maximum number of directorship. Maximum how many companies? 20 companies at a time. This 20 companies includes directorship as well as alternate directorship. Are we clear? We don't have that in the syllabus. You don't need to worry about that. Only the exception, disqualification is there. That's all. Are we clear with this? Shall we revise quickly? Unsound mind, undischarged insolvent, applied to be adjudicated as insolvent, and the application is pending. Convicted for more than 6 months and 5 years has not been elapsed. Convicted for more than or equal to 7 years. Not disqualified, disqualified. Clear? And order has been passed by court or tribunal which is disqualifying him, and call money on shares is due for 6 months. And convicted for the offense under section 188 during the last preceding 5 years, and no director identification number and not complied with section 165. Please excuse my writing. Moving on to section 164 subsection 2. This is disqualification due to the actions of company as a whole, not individual. The qualifications that we have seen till now is because he is insolvent or he is gone mad. That is the case. But here, due to the actions of company. Are we clear? So case 1. Company has not filed financial statements or annual return for a continuous period of 3 years. Are we clear? So that is the first case. Second, fail to repay deposits or interest, or redeem debentures or interest, or pay the dividend, and the failure continues for a period of 1 year or more. In these two cases, all the board of directors are disqualified. Are we clear? Shall we look into the cases, everyone? So, once again, the first, not file financial statements or annual returns for a period of 3 consecutive years, or fail to repay deposits accepted or interest on them, or redeem debentures or pay interest on them, or pay the dividend declared, and failure continues for 1 year or more. Are we clear? Now, here we are seeing that the failure is for 1 year or more and not filing for 3 years or more. Then will it be fair for disqualifying a director who has just entered the company? That is why, if you are part of such kind of company and you are appointed just 6 months ago, then you will not incur any disqualification. So, director shall not incur disqualification for a period of 6 months from the appointment. After 6 months, if there is a case of these two scenarios, then he will be disqualified. Are we clear with this? Now, moving on to the disqualification. Till how many years he will be disqualified? For 5 years. So, he shall not be eligible to be reappointed as a director of the same company, or else appointed in any company for a period of 5 years from the date of default. Are we clear, everyone? Yes. Now, it's not applicable to government company. 164 subsection 2 is not applicable to government company. The individual disqualifications are applicable for government company as well. Now we have seen the list of disqualifications. Now private company, if it wants, it can add additional disqualifications. So we are done with section 164. Now moving on to 167. So 3 more sections are there, 167, 168 and 169. With this we will be done with the board of directors. Please be patient with moving to one section to the other section. Keep that aside. Listen with a fresh mind. Not possible, but do try. Okay, so shall we continue? 167. This explains the scenario when the position of the director will become vacant and he has to leave the office immediately. First case, basic, incurs disqualification. Incurs disqualification under section 164. Now, moving on to the next. He absents himself from all the board meeting for the last 12 months. He is intimating or without intimation, with or without seeking leave, he is absent. He absents himself from all the board meetings during a period of the last 12 months. He has to vacate the office immediately. Next, contravene section 184. We will see that in the unit 6, that is board of directors. Okay, so contravene section 184, that's nothing but interested director, disclosure of interest by the in a contract or arrangement. So contravenes that section, he has to vacate. He is removed. Under 169, we will see he is removed. He has to vacate the office. He fails to disclose his interest. That is, initially he fails to disclose that I am interested in this contract, or else I am interested in this arrangement. He fails to disclose that. In that case also he has to vacate the office. And he is convicted by the court of any offense with an imprisonment 6 months or more. Less than 6 months, he is eligible. 6 months or more, that is what we are seeing over here. 6 months or more, he has to vacate the office. When he will be able to qualify again? After 5 years has elapsed from the date of expiry of the imprisonment. Are we clear, everyone? Yes. Next, disqualified by the order of court or tribunal. If you pay attention, this is actually part of 164. Yes or no? 164, did we see one qualification? Order passed by the court or tribunal. Yes or no? And he is appointed. So imagine this situation. A person is appointed as a director in a holding company because he was a manager in a subsidiary company. Understanding? Because he is a manager in a subsidiary company, to represent the subsidiary company, he is appointed as a director in the holding company. Now comes a scenario, he is no longer the manager of subsidiary company. Can he continue as a director of holding company? Answer is no. He has to vacate the office. So now understand the question. Now understand this sentence. He is appointed by virtue of holding any office in holding, subsidiary or associate, now ceases to hold such office. Now he is no longer in that office. Because of that office position only we gave the director position. No. That's what. Are we clear with this? Yes or no? Now comes the last one. If director incurs disqualification under 164 subsection 2, what is that? Due to the actions of company, he must vacate the office of all the companies except defaulting company. Why? He is only responsible of the default, no. He has to stand accountable. After the procedure is completed, then he will vacate the office. So that is why he must vacate immediately in all the companies except the defaulting company. Are we clear with this? This is due to 164 subsection 1 or subsection 2, due to the actions of company. Subsection 2. Are we clear? Everyone, shall we revise once again? You have to. With me. Okay? So, the first one, disqualification under 164. Second, absence himself in all the board meetings during a period of 12 months with or without seeking leave. Next, contravene section 184. Fails to disclose interest under section 184. He is removed. He is convicted by a court for any offence involving imprisonment 6 months or more and disqualified by the order of court or tribunal. He is appointed by virtue of holding any office in subsidiary, holding and associate. Now ceases to hold the office. And the last one, if the director is disqualified under section 164 subsection 2, he must vacate the offices of all the companies except the defaulting company. Moving on to section 168, resignation of office by the director. There is no case that you have to resign in this point of time. It's your liberty, right to freedom. Okay, so director may resign from his office by giving a notice in writing to the company. Are we clear? So if you are trying to resign from the office, the first thing that you have to do is give an intimation to the company. Clear everyone? So company, when it receives the notice of resignation, within 30 days it has to file the notice of resignation with the ROC. In which form? DIR 12. Did we come across this form number previously? When? Yes. Who will file? To whom? Very good. So the company within 30 days of receipt of notice of resignation intimate the ROC in the form DIR 12. Whether it is appointment or resignation, the form is DIR 12. Who is intimating to whom? Company to ROC, and place the same on the website and communicate the same to the members in the next AGM. So you have to file it with the ROC, place it on the website, communicate to the members in the next AGM. And what is the obligation for the director? Actually, it is amended. Previously, he must file DIR 11 with the ROC with reasons. But right now, it is not required. If he give intimation to the company, it is enough. Are we clear? So director may forward, may, not mandatory, may, optional. So forward the copy of resignation with reasons to the registrar. So if he is trying to do that within how many days? Within 30 days from the date of resignation. In which form? DIR 11. So DIR 11, is it mandatory or optional? Optional. If he is filing that within 30 days from the date of resignation. So what will be the effective date of resignation? date on which you are serving the notice of resignation, or else date you have specified in the notice of resignation, whichever is later. Yes or no? So today I will serve the notice that after 3 months I will resign. What will be the date of resignation? After 3 months. Clear? Now the last section, 169, removal of director. I will ask you a straightforward question. What is required, ordinary resolution or special resolution? Ordinary. Ordinary. To remove a director, ordinary resolution is enough. But one more requirement, special notice is required. Special notice is required. But when you are trying to actually take a decision in the meeting, ordinary resolution is enough. Are we clear? Now, there is a case when the director is appointed by tribunal under 242. We will come across 242 under prevention of oppression and mismanagement. No worries. So in that case, if we file to the tribunal that we are facing oppression and mismanagement, one of the remedy which the tribunal do is to remove a director or appoint a director. If he is appointed by tribunal, will the company have the right to remove him? No. So by shareholders under section 169, shareholders can remove through what? By ordinary resolution. And in one scenario, special resolution is required. What scenario? Independent director appointed for second term. To remove that person, you need special resolution. Otherwise, ordinary resolution is enough. Now, there is another case, proportional representation. So, directors will be actually appointed like an election procedure. Proportional representation, single casting vote or else cumulative voting will be counted. So, separate procedure, keep that aside. Under 163, directors are appointed under 163 through proportional representation. Can they be removed? Answer is no. Are we clear? Yes. So, by ordinary resolution, you can remove all the director except director appointed by tribunal or else appointed under section 163. That is through proportional representation. Next, who else can remove directors? Tribunal. Tribunal can remove director. Tribunal can appoint director. If it appoints, you cannot remove. Company cannot remove. Normal procedures. Keep all this aside. What is required to remove director? Ordinary resolution. In which case special resolution is required? To remove an independent director appointed for second term. All the cases before removing, you need to give them a reasonable opportunity of being heard. Are we clear? Yes. Now, one requirement before removing is the requirement of special notice. So, if members want to remove that person, before the meeting is there, for removal or to appoint a person in place of the removing director, you need a special notice. How many members can validly serve a special notice? Members holding not less than, that is a minimum of 1% of total voting power, or else members holding shares on which at least how much is paid up? 50,000. 5 lakhs. There is a comma beside 5. Okay? 5 lakhs. Clear, everyone? So, is it a requirement for you to remember this? Nope. What will you remember? Special notice is required, that's all. Okay, so special notice is required for proposal of removal of the director, and notice to be served early, not earlier than 3 months. You need to remove directors in December. You are serving in January only. Waste. 3 months or else 14 days. Are we clear? To be served not earlier than 3 months, but at least 14 days before the general meeting. Are we clear with this, everyone? Yes. And on receipt of special notice, what the company will do? That special notice copy will be sent to the director, and he should be part of the meeting, because we have to give a reasonable opportunity of being heard. Are we clear? Now, vacancy, if you want to fill, it can be filled by the members in the same general meeting, or you can decide not to fill the vacancy. Are we clear, everyone? Yes. So, whoever is in the position of the removal director, he will serve for the remaining tenure of the original director. Are we clear, everyone? So, the director who is filling the vacancy of that of the director who is removed, he shall stay in the office for the remaining tenure. Now, can he claim compensation because he is being removed unexpectedly? If there is no valid reason, can he claim compensation? or damages? Answer is yes. So director removed under this section will have the right for compensation or damages payable as per the terms of the appointment of such director. You will have your obligations law to pay EMIs, to take your girlfriend to the vacation. Suddenly if they remove, you need compensation. Okay. So with this, successfully we have completed board of directors. 1 hour 10 minutes. Not bad. Okay. So क्या करेंगे अब? Question and answers. So first question, important question is question 3. Open your Q&A companion because I want to make a few small change in the question 3. Page number 46. Okay. Read the question by yourself, but one small change, that means don't read the suggested answer. Read my interpretation. Ma'am, if we write interpretation, we will get wrong, we will not get marks. No. This was asked in December 2024. This was the suggested answer. But to make correction, he was very intelligent and he asked the question once again in June 2025. They made the relevant corrections. Okay? No problem, you can follow my interpretation because I was a little more detailed, that's all. Are we clear, everyone? Yes? So, now, one small change that I want to make is, if let's say, question number 3. Okay. If let's say, there is a nominee director. Nominee director is a woman. Will you consider that nominee director, the person who is a woman, as a woman director to satisfy that at least one? Yes. Straight away, prima facie, what we will assume is that nominee director is appointed by the board, no. Generally, all the directors are appointed by the shareholders, no. So, we will consider or not, but it is clarified. We will consider that nominee director who is a woman as a women director also to fulfill the condition. Are we clear? But you have to write that women director is appointed as per the requirement of Rule 3 of the Company's Appointment and Qualification of Director Rules 2014, or else as per the required rule. Okay? Yes? Now, that's all. So simple over here. A director nominated by the bank will be classified as a nominee director under section 163. Now, if the nominee director is a woman, she can be considered as a mandatory women director required. She can be considered. So, take away this, strike off this sentence, and you can write down that if she is appointed as per the relevant rules and sections. Are we clear? Or else we will see if, yeah, you can write. Okay. You can write down like this. He or she will be classified as a nominee director, yes, if she will be considered to fulfill the requirement of Rule 3 of the Company's Appointment and Qualifications of Rules 2014. So, she will be considered as a women director. Are we clear, everyone? Yes? Understood? That's the small correction that you have to make. So, moving on to next question. One question I have already specified. What is it? Question 3. Question 5. This is related to filling up of the vacancy of the retiring director. So till now 2 questions are specified, 3 and 5. Okay. 11. 14. 2. Because there is a scope of asking direct questions, that is why I have added additional questions also for the revision. Okay. Additional question 2, 4. If you want to read about additional director, read Question 3 also. Okay. So 2, 4. Additional question 2. Additional question 4, 6. Okay, clear? Yes? That's all. So we have completed 2 units of the Companies Act. Okay, everyone. So for now you will not get any doubts. Read the question and answers. You will clear whatever the doubt is. If you get it in the middle of the night, post it in the Telegram channel. Okay. Yes. Okay. So just I need your suggestion. So the next class, should I take PMLA or board meetings? We'll do one thing. We'll complete both. Okay. Why? Because why I want to go to PMLA is it'll be like a fun deviation from Companies Act. Okay. So it'll be done in just 45 minutes. My regular class only completed in 1 hour 15 minutes. Concepts. Okay. So it'll just take 45 minutes if you stay with me all the session paying attention. Okay. So likewise we will see what will be done. So either we'll complete one of the chapters of Companies Act, one of the units of Companies Act, and we'll complete PMLA for today. So first day we'll take it a little light. Tomorrow we can start, we can add 2 more units if we want. Okay? Yes. Now here we are discussing the highest weightage unit of the Companies Act 2013, that is board meetings and procedures. So in this particular unit, the most important sections will be every section actually. So 173 is related to the number of board meetings, 174 quorum of board meeting, 175 passing resolution by circulation, and 177 audit committee, 179 powers of board, 180 restrictions of the powers of board, 184 communication or disclosure of interest by the director, 188 related party transactions, 182 political contributions. All are important from an examination point of view. Somewhere or the other in the past attempt or the old syllabus, they have tested all these sections. So you can't even ignore one single section. Even if you are preparing the day before the examination, this unit you have to revise all the sections. Are we clear? Yes, keep that in mind. Okay. Now, let's get started with the basics. 173, 174 and 175. How many meetings to be conducted? What is the quorum? And can you pass a resolution by circulation? So, first and the foremost case, of course, board of directors play a very significant role in the operation of the organization. So that is why they have to conduct meetings so that they can discuss and take decisions for the company. Yes or no? So that is why the particular Companies Act 2013 makes it mandatory for the board of directors to follow section 173 and conduct the relevant number of board meetings. Comes the first case, when you have to conduct the first board meeting within 30 days of the incorporation. Are we clear? And then comes subsequently in every calendar year a minimum of 4 board meetings to be held. Gap should not be more than 120 days. A minimum of how many meetings? 4 meetings in every calendar year. The Companies Act says every year. Year in Companies Act by default we assume it as calendar year. Are we clear? Until and unless it is specifically mentioned financial year, we assume it as a calendar year. Are we clear with this? No worries. Even if you think that I am assuming, it is clarified in the secretarial standards. No problem. Okay. So why I think in my opinion, secretarial standards also play a very important role in this particular unit, but for the sake of marathon, I'm not discussing secretarial standards, only SS1. SS1 is for meeting procedures. Why? Because in meeting procedures, company secretary play a very important role. Sending the notices, taking due care of conducting the board meetings, as well as preparing the minutes of meetings. All these responsibilities primarily lie in the hands of company secretary. So since company secretary are registered under ICSI should also establish few standards while you are complying with the board meeting procedure. So that is why additional provisions are there in the secretarial standard 1 for board meeting specifically. Are we clear? Understood? Now, not following secretarial standard, will it violate Companies Act 2013? Will it violate Companies Act 2013? No. As while you are conducting board meetings, you have to properly follow Companies Act. But following secretarial standard is a good secretarial practice. Are we clear? If you don't follow, will it lead to some contravention of that section? Answer is no. One of the questions that they will test, but I'm not going to discuss in the concept, I'm just giving you a heads up. So preparing and sending agenda. What is an agenda? The main highlights of what concepts you will be discussing in the meetings. Yes or no? That is agenda. As per the Companies Act 2013, there is no requirement to send agenda while you are calling them for the board meeting. But as per Secretarial Standard 1, it is required. If, let's say, company secretary fails to send agenda to the director, does it violate any section of the Companies Act? No. It is just a good secretarial practice that you have to follow. But if you do not follow, that does not lead to any contravention. So this will be tested in your questions. I will not be discussing in the concept. Are we clear, everyone? Yes. So calendar year is clarified under SS1. So let's revise this once again. The first board meeting to be conducted within 30 days of the incorporation. And subsequently, every calendar year, minimum how many board meetings? Minimum 4 board meetings. And maximum gap which is allowed between 2 consecutive meetings is 120 days. Can it exceed 120 days? Answer is no. Now moving on to the exemptions for 1-person company, small company and dormant company. If you conduct 1 board meeting for each half of the calendar year, that is enough. Not required to conduct 4 board meetings. Are we clear? But here the minimum gap is 90 days. Why? Because only 2 meetings, no. Consequently, you can't hold with a gap of 90 days. Why? Because you can't be able to discuss the other important meetings across the year. So that is why the minimum gap is 90 days. There the maximum gap is 120 days. So gap cannot exceed 120. Here gap should exceed 90 or equal to 90. Are we clear? So what are these exceptions? Which class of companies? 1-person company, small company, dormant company. What are the subsequent number of meetings? Conduct 1 board meeting for each half of the calendar year. And minimum gap requirement is 90 days. Are we clear? So 1-person company having 1 director, he can't talk to himself in the mirror. It will not be considered as board meeting. So that is why not required to conduct even 1 board meeting. Are we clear? Now moving on to the participation. So generally in meetings or even the classes also, how can you participate? In person that you are doing right now, or else video conferencing, or else audio visual means. Are we clear? So 3 modes of participation in board meeting: in person, video conferencing, audio visual means. What is audio visual means? Every participant is able to see each other and hear each other. So one of the audio visual means is video conferencing. Are we clear? It is not 2 different aspects. One of the audio visual means is video conferencing. But in the law, they have used 2 different words. The meaning is same. Are we clear, everyone? Yes. Now, the section 173 prescribes that if you are conducting meeting through audio visual means, it should be capable of recording and recognizing who are participating, who are raising a concern, who are defending the statement, who are participating in voting. So it should be able to record and recognize the participation of directors, and recording and storing the proceedings of meetings with the date and time. That feature should be available for that audio visual means. Are we clear, everyone? Once again, we'll repeat the sentence here. Capable of recording and recognizing the participation of directors, and recording and storing the proceedings for meetings with the date and time. Are we clear, everyone? Now, previously, there is a rule or there is a provision that central government will specify that few matters cannot be discussed through video conferencing or audiovisual means. Specifically, approval of financial statements, mergers, amalgamations. So all these important aspects, they can't be dealt through video conferencing. But right now it is omitted. It is omitted. So any matter, if you want, even if it's the approval of financial statements, you can conduct using video conferencing or audiovisual means. Are we clear, everyone? Yes. So here lies only the sentence as prescribed. Nothing is prescribed right now. It is omitted. Are we clear? So central government may specify matters not to be dealt through video conferencing or audiovisual means as may be prescribed. Nothing is prescribed right now. Are we clear? Now, this is also not important from an examination point of view. If in that case, if specified matter can only be dealt using a physical mode, that is in person, then if quorum is present in person, then the others can attend through video conferencing. But right now it is not applicable because any matter can be discussed using electronic mode. Are we clear? Now, moving on to the procedural aspects. So, first and the foremost thing, this is rule. These are rules which you have to follow while you are conducting a meeting using video conferencing or audio visual means. So procedural aspects relating to board meetings held through video conferencing or audio visual means. What does it say? It should make proper arrangements to avoid failure of video or audio. So if you're watching my class online, like a live, so will you be frustrated if constantly the video is buffering or constantly my voice is cutting down? Answer is yes. So that is why every company has a primary responsibility to ensure and make arrangements that there is no failure of video or audio. Are we clear? Next comes the responsibility of two main persons, chairperson of the company or chairperson of the board and the company secretary. Are we clear? So mainly these board meetings and procedures, notice, all these primary responsibility will be in the hands of chairperson and company secretary. Are we clear? So chairperson and company secretary shall take due and reasonable care for what are the aspects? First, safeguard integrity and ensure security. So you have to generate proper access keys for each and every director who wants to participate in the meeting, so that you can ensure that only that particular director is entering into the meeting, because you are going to discuss confidential matters. So who has to ensure that? Everyone, company secretary and chairperson of the meeting. Clear? So they should take due and reasonable care for first, safeguard integrity and ensure security. Ensure availability of proper equipment for effective participation and communication. Whatever the equipment is related to a software or a hardware device, whatever the equipment is, you have to arrange it properly. And next, record. So for future reference, to know that who has participated in what mode and who has proposed what kind of aspect, to record proceedings and prepare the minutes of meeting. Clear? And then comes to store the recordings securely. That responsibility also will be in the hands of chairperson and company secretary. And to ensure only the concerned director has access to attend the meeting. In few softwares and also in Zoom also, there will be a concept of waiting room. So you will have an access, you will have a code, you will enter directly into the waiting room. Only the host can allow you inside the meeting. Yes or no? So that is how you ensure that only the concerned director is attending the meeting. And to ensure the participants are at all the time able to hear and see other participants during the board meeting. So these are the procedural aspects and responsibilities which has to be ensured by the chairperson and the company secretary. Are we clear? So first comes quick revision. Integrity, availability of proper equipment, recording proceedings, preparing the minutes, store the recordings, only the concerned director is attending, able to hear and see other participants during the board meeting. Are we clear with this, everyone? Yes, primary obligation is to make arrangements to avoid any failure of audio or video. Now comes 173 subsection 3 related to notice. So if you are conducting a board meeting, it is your obligation to give a notice to each and every director and call them to the meeting. Even if they specify that I am not going to come to the meeting, but still you have to send. And just a quick question. In case of alternative director, will you send it to alternative director or the original director who left India? Both. There is no provision or rule to clarify that, so you will send to both the directors. Are we clear, everyone? Yes, every director you have to send a notice of meeting. Understanding? So, notice of board meeting to be sent to all directors. Within how many days? At least 7 days before the board meeting. That too, in what way? In writing to their registered address. In what mode? Hand delivery, post, or electronic means. So, you will send the notice to all the directors at least 7 days before the board meeting, in writing to their registered addresses by hand delivery, or by post, or by electronic means. Can you call the meeting with a shorter notice? Answer is yes. In that meeting which is called with a shorter notice, you ensure at least one independent director participates. If let's say he did not participate, then what you will do? You will pass a draft resolution and you will circulate to all the directors, and while you are circulating for their approval, at least one independent director should ratify. That is, give approval. Are we clear? If there is no independent director, this provision will not be applicable. Are we clear? So, shorter notice, less than 7 days, you can conduct to transact urgent business. Then in that meetings, at least one independent director shall be present. In absence, decision shall be circulated and finalized only on ratification by at least one independent director, if any. Are we clear? So, till now we have learned how many meetings to be conducted, what are the different modes of participation of the meeting, and provisions related to sending the notice of meeting. Are we clear, everyone? Yes, till now paying attention or having a nice nap? Wonderful. Okay. Next comes section 174, quorum of board meeting. So you all know what is the meaning of quorum. What is it? Minimum number of members to participate in the meeting. Clear? So minimum number of directors who must attend the board meeting, then only it will be counted as validly convened meeting. Then only it will be counted as. For that minimum 4 meetings are there, no. I am really sorry. You have to stop me. Okay. So then only it will be counted for the minimum 4 requirement or minimum 2 requirement. Are we clear? Yes. Last benches, are you able to hear? Even now? Hello? Okay. People watching in YouTube, please bear with me. Okay. First in the student. Anyone sleeping? They will not. Okay. Okay, shallow. Quorum, meaning we have understood. Now, quorum for the board meetings. Most repeated MCQ from this particular unit. What is the quorum? In general case, 1/3 of the total strength, or 2 directors, whichever is higher. Are we clear? Repeat once again, 1/3 of the total strength or 2 directors, whichever is higher. Clear? Now, when it comes to Section 8 companies, the quorum is different. What is it? 8 members or 25% of total strength, whichever is lower. But it cannot be less than 2. One person can't be. There is no meeting there. Okay. So, Section 8 companies, what is the quorum? 8 members or 25% of the total strength, whichever is lower, shall not be less than 2. Are we clear? So, quorum should be present throughout the meeting. Not just say hi and just go out. No. You have to sit throughout the meeting. Are we clear? So, articles can prescribe higher quorum. 2 times articles is repeated. You can just strike it off. So, articles can prescribe higher quorum. This is as per the Companies Act. If you want, in the articles, you can prescribe that the total number of directors are quorum. Or else 2/3 is quorum. Clear? So, articles can prescribe higher quorum but cannot prescribe less than the above limits. Are we clear? So, whatever the fraction is, it has to be rounded off as 1. Clear, everyone? Yes. Will you count the persons who are participating in electronic mode for the part of quorum? Yes. So, participation through electronic mode be counted as quorum. Next, pay attention, everyone. Interested director. We will understand the meaning of interested director later on while we are discussing section 184. But for now, what is the meaning of interested director? So there is a meeting which is conducted, board meeting. Now here the company is entering into a proposal, let's say franchising or giving their trademark as a license, or else any contract, loan, agreement, sale, leasing, whatever it is. They are entering into a contract or arrangement with a party or a firm or a board of directors or a body corporate. In that body corporate, in that firm or in that organization, one of the director is having shareholding or directorship or partnership. That means is he interested in that? Is he interested in the contract or not? Yes. Why? Because if company enters in the contract, the firm will be benefited. Ultimately, the director is also getting the benefit. So, he will give, can he give his independent judgment related to the contract? Answer is no. So, that is why in that cases, for that meeting and for that matter, that contract or arrangement, he is considered as interested director. Now, for public companies specifically, if at any point of time in a meeting for a discussion, that discussion may be related to a contract or arrangement. At that point of time, if the number of interested directors is more than or equal to 2/3 of the total strength, more than or equal to 2/3 of the total strength, then what will be your quorum? The remaining number of non-interested directors. Make sure it is not less than 2. Are we clear, everyone? Yes. Why? Because interested directors will not have the right to participate. They can attend, but they can't participate in discussion. They can't vote. Are we clear, everyone? Yes or no? In detail, interested director meaning we will discuss under 184. But for now, I hope you understood. Yes or no? So, at any time, the number of interested directors is more than or equal to 2/3 of the total strength. The quorum will be number of non-interested directors who are present at the meeting. Must not be less than 2. Are we clear, everyone? Yes. If let's say board meeting is held but there is no quorum, can you consider it as a valid meeting? So what will happen? It will be automatically adjourned to the same day, same place, same time in the next week. And if that day is a national holiday, then succeeding day. Are we clear? Now, just a small clarification from my students. While you're calculating the number of days, gap, 120 days or 90 days, will you count from the original day, original meeting date, or else adjourned meeting date? Original. Never consider the date of adjourned meeting. Are we clear? Original meeting. Now coming to case 1, original meeting is conducted, no quorum. It will be adjourned, yes or no? Adjourned meeting, validly quorum is there, conducted. Then that means successfully one meeting is completed. What will be the date of that meeting? Date of original meeting. Are we clear? Now case 2, original meeting is conducted, no quorum. It has been adjourned. Adjourned meeting also no quorum. Then will you count this as a meeting first of all? No. Are we clear? Understood, everyone? Yes. Now, every matter, every point that I discuss in this class will be important for you to solve a question. Are we clear? Even if I am telling these points related to agenda, I said that at the first. Here I told you related to the counting of the days. Yes or no? So keep that in mind or note that down. Are we clear? Yes. Shall we continue? Now we are moving to the section 175. Passing a resolution by circulation. So there is no concept of meeting here. What happens? One of the director will draft a resolution. So I want to enter into a law. I want to borrow money. This is the contract that I want to enter. So he will draft a resolution. The resolution will be sent to the registered address of all the directors. They will send their proposals, yes or no, whatever it is, they will send back to the company. That is how you will pass a resolution by circulation. So majority of the directors to whom it is circulated, they must give approval. That means the resolution is passed. If majority does not give approval, then the resolution is not considered to be passed. Are we clear? Understood the concept? So let's see the words. Please repeat it with me. There is nothing more to explain here. The resolution draft shall be circulated to all the directors at their address registered with the company by hand delivery, by post, by courier, by electronic means. In order for the resolution to be passed, majority of directors must approve. So what happened is majority of the directors approving, keep it aside, but at least 1/3 of the directors, they have requested the chairperson that for discussion of these meetings, it is not circulation. For discussion of this matters, not circulation, we need a meeting. Then what is the obligation of chairperson? He has to conduct a meeting. No longer the resolution will be passed by circulation. For that, you need to put up a meeting. Are we clear? This is important from a MCQ point of view. So if at least how many? 1/3 of the total number of directors required that the resolution shall be passed in board meeting, not by circulation, then chairperson shall put up a board meeting. Are we clear with this, everyone? Yes or no? Now, resolution which is passed by circulation will be noted and will be part of the minutes of the next board meeting. Because there is no board meeting, no, but it should be part of minutes. So that is why it will be part of the next board meeting minutes. And the resolution draft shall be circulated not more than 7 days for the directors to give response. So how many clear days will be there in between to give a response? 7 days. Are we clear with this? We are done with 173, 174 and 175. Any queries? Can I move on to the next concept? Everyone? Yes? What is 173? Number of board meetings. Frequency of board meetings. 174. Very good. 175. Passing a resolution by circulation. Thank you. 133. Wow. Accounting standards is only right. Yes, accounting standards. Very good. Okay, let's continue. Section 179. Powers of Board of Directors. To be clear, who are acting on behalf of the company? Board of Directors. So every power company can execute, directors can execute. So simple. What are the powers of the board in general? Powers of the company. Are we clear? So, board of directors shall be entitled to exercise all the powers and to do all the acts which the company is authorized to do. Where the company's powers will be specified? Memorandum of Association, object clause. Yes or no? If you violate the object clause, that is doctrine of coronavirus, huh? It's virus. Okay? Now, what all documents can actually put restrictions for the powers? Articles, memorandum, Companies Act 2013 and also the regulations made in the general meeting. Resolutions which are passed in the general meeting, articles of association, memorandum of association and Companies Act 2013, all these documents and all these provisions can add restrictions to the powers of the board. Are we clear with this? Yes or no? So, generalized statement, please repeat it with me. Board of directors shall be entitled to exercise all the powers and to do all the acts which the company is authorized to do. But the powers shall be subjected to the provisions of AOA, MOA and regulations made in general meeting. And board cannot perform the activities which the company is not authorized to do. Are we clear? That is the opposite of this sentence. Understood, everyone? Yes or no? Now let's say initially there is no provision related to loans, guarantee and security limit in the articles. Clear? So what happened is one of the directors, he made an investment in some securities or mutual fund, or he did some venture capital investment, and there is a huge loss which is incurred because of the action of the director. Now, to be clear, previously, were there any restrictions in the articles that a director should not make investment? No, it was allowed. Yes or no? But what happened is due to poor judgment, he suffered loss. Company has suffered loss. Now, board members want to stay alert and they want to impose regulations. Okay, fine. Now, can they invalidate the original investment which was already made? Can they consider the investment which was made because of which the loss has come as invalid? Answer is no, because previously when there were no regulation, the act was exercised. Yes or no? So that is why simple, any regulation passed in the general meeting cannot invalidate any act done by the board prior to such regulation. If you want afterwards, you put regulations. To be careful. Are we clear, everyone? Understood the concept? Now let's move on to the list of the powers of the board. All the powers that I will be discussing right now can be exercised only by passing a resolution in the board meeting. Understood? Paying attention? Yes. Okay. So powers of board can be exercised by passing a resolution in a duly convened board meeting. Duly convened board meeting means you should have quorum. Okay. So chalo. First one. Will you revise it with me? Yes, because these are basics. To make calls on the shareholders in respect of unpaid shares. Make calls. Simple. Next, authorize buyback of securities. So there is an MCQ. Can board of directors buy back security? By regulation, by circulation, or by only board meeting? By only board meeting, not by circulation. Why? Because all the powers which are listed under 179 can be exercised only by passing a resolution in board meeting. Please pay attention. These minute details you will forget. Clear? Yes, the first one to make calls on the shareholders in respect of unpaid shares. Second, to authorize buyback. Third, to issue securities including debentures, whether in India or outside India. And then comes 4, 5, 6. Pay attention. Borrow monies. Monies means nothing but they use that term. Money means money. That's all. Okay. To invest the funds of the company and to grant loans. You're borrowing money, you're granting loans, you're giving guarantee, you're providing security, and you're investing funds. Now, all these powers are generally the powers of the board. But board of directors, they can pass a resolution in board meeting and they can delegate the power to any committee of directors. They can delegate the power to any committee of directors or else to a managing director or else to a manager or a principal officer of the particular company, or else if the powers are related to a branch, then the power can be delegated to principal officer of branch. Are we clear? What are the three powers that can be delegated by passing a resolution? Borrow monies, invest the funds of the company, grant loans, and give guarantee. Are we clear? Now let's move on to the other powers of the board of directors. To approve financial statements and board's report. To diversify the business, to approve amalgamation, merger, or reconstruction. To take over another company or acquire substantial stake or controlling interest in another company, and to make any other matter as may be prescribed. What are the three other powers which are prescribed under the rule? Appoint and remove KMP. Full form? Yes. To make political contributions and to appoint internal auditors and secretarial auditors. Are we clear? Shall we revise once again? First is to make calls on shareholders. Second, buyback of security. Third, issue of securities including debentures. Only in India? Outside India as well. What are the three powers that can be delegated? Borrow money, invest funds, grant loan, or give guarantee. And the other powers of the board? Approve financial statements and board's report, diversify the business, approve amalgamation, merger, or reconstruction, to take over another company or acquire a substantial stake in another company. What are prescribed in the rules? Appoint and remove KMP, make political contributions, appoint two different auditors. What are those? Who are those? Internal auditors, secretarial. By mistake also don't write statutory auditors. It's a blunder. They will be appointed in general meeting. Are we clear? Yes, we are done with the list of powers of the board under section 179. Are we clear? Yes. Now, even if they specify in the Companies Act that these are the powers, if they want, members can put restrictions in the articles. Are we clear? So nothing mentioned in the above shall affect the right of company in general meeting to restrict and impose conditions on the exercise of the powers of the board. My dear students, are we clear till now? Yes. 173 board meetings, 174 quorum, 175 passing a resolution by circulation, 179 powers of the board. Now if powers are there, we should also learn restrictions. Yes. So 180 restrictions on the powers of the board. Only 4 restrictions are there, you don't need to worry about. Okay, clear? So chalo. So these restrictions are not applicable to private company. Prima facie, they will trick you in the exam. In the example, in the question starting itself, they will say private limited. Are the restrictions applicable? No. Okay. I don't think they will go that deep, but stay alert. Clear? Yes. So now these are the 4 restrictions which can be executed only by passing a special resolution in the general meeting. Are we clear? Yes, only by passing a special resolution in the general meeting. Now first comes to sell, lease or dispose whole of the undertaking or substantially the whole of the undertaking. What is an undertaking? Unit of business or a plant, let's say there is a manufacturing unit or a steel plant or a software service department or a mobile app department. So each and every unit or a division will be considered as an undertaking. But if you talk financial terms, when will you consider a unit or a division of business as undertaking? If the investment in the undertaking is more than 20% of the net worth of the company. Case 1, more than 20%, no worries, you don't need to write down, open your concept book, it will be there. Okay, so first is investment in that unit is more than 20% of net worth, or else that unit or division is generating 20% or more of the total income. That will be considered as undertaking. Then what is substantially whole of the undertaking? In that undertaking, if you are selling 20% or more, that is substantially whole. Are we clear? Do you want me to open the capsule? No? Yes, ma'am. I'll clarify what happens. Just 3 minutes will be wasted, that's all. Yes. क्या हुआ? Okay. What's happening? Breaker. No. Okay, chalo. So, undertaking means a unit of business in which the investment of the company exceeds 20% of the net worth of the preceding financial year, or else undertaking which generates 20% or more of the total income of the company during the previous financial year. This is the meaning of what? Undertaking. Clear? Now, when will you consider that you are selling substantially whole of undertaking? If you are selling at least 20 or more, 20% or more of the value of the undertaking. Are we clear, everyone? Yes, most probably they will give you the meaning, they will give you the word, they will use the word undertaking. You have to assume that it is considered as undertaking, or else in extreme cases they will test you. What 2 values you have to check? Net worth, it should be equal to or more than 20% of net worth. What? Investment in that unit of business. Clear? Next, how much income it should generate? At least 20% of the total income. That is nothing but gross income. Clear, everyone? Yes, substantially whole is nothing but at least 20% of the value of undertaking. Now, if you are selling or giving it as a lease or disposing the whole of the undertaking or substantially the whole of the undertaking, then you have to pass a special resolution. Understood? Yes. Moving on to second restriction. To invest in other than trust securities. What are trust securities? Government backed securities like government bonds, treasury bills, this post office instruments will be there. Yes or no? All these are what? They are secured. Very rarely, I mean in extreme cases, they will not make us loss. Yes or no? So these are secured instruments. That is why they are called trust securities. So if you have some money which is very important or very sensitive, will you invest in trust securities or will you invest in some equity funds, mutual funds and do venture capital investment? Answer is no. You will invest in trust securities. Yes or no? But here, if company receives compensation like a purchase consideration from merger or amalgamation, and that money, if it is investing in trust securities, no need to pass special resolution. But if that compensation you are investing in other than trust securities, like risky investments, like equity funds, or else you are investing in some mutual funds, or else venture capital investments and some risky instruments, then you need to pass a special resolution. Are we clear? Yes. So to invest otherwise in trust securities, what you are investing here? Any money, or specifically what money I am referring to? Amount of compensation received as a result of merger or amalgamation. So if you are investing in other than trust securities, then you have to pass a special resolution. Now comes the most important restriction, because this is the only case you will get to calculate numbers in law. Okay, so to borrow money, please remember 186 will also have limits. 186 is giving loans. 180 restriction is borrowing money. Are we clear? So now if company wants to borrow money, the money already borrowed and the money you're proposing to be borrowed, the aggregate amount, if it is exceeding paid up share capital plus free reserves plus securities premium, it should not include temporary loans. Don't include temporary loans. If it is exceeding that value, then you have to pass a special resolution. Are we clear? Of course, this is not applicable to banking company, because banking company main principal business is only borrowing money and granting loans. Yes or no? So that is why. Are we clear with this? Third restriction, please read it with me. To borrow money where the money to be borrowed or already borrowed aggregate exceeds paid up share capital, free reserves plus securities premium. By mistake also don't write PUSC plus FR plus SP. Paid up share capital plus free reserves plus securities premium. What you should not include? Temporary loans. And it is which class of company is exempted? Banking company. And the last restriction is to remit or give time for repayment from any due from the director. Director has to repay money. So you said that, okay, you have rendered too many services, don't repay. So you are remitting the payment, or else you're giving extra time for repayment. Can you do that? Yes, by passing a special resolution. So only 4 restrictions. One is related to undertaking, second is related to investment of the compensation received from merger or amalgamation in other than trust securities, third, borrowing in excess of paid up share capital, free reserves, securities premium, and the last is to remit or give time for repayment for any due from director. Are we clear? Understood everyone? Yes. And comes section 177, audit committee. So do you remember I mentioned audit committee somewhere? Very good. So all the limits that we have studied in the independent director will be applicable for audit committee. So tell me quickly, every listed company, every public company with a paid up share capital rupees 10 crores or more, turnover rupees 100 crores or more, outstanding loans, debentures, deposits exceeding rupees 50 crores. Are we clear? So who all should be part of, like, what are the minimum number of directors in the audit committee? Minimum 3. Majority, independent director, minimum, oh, majority means you're thinking maximum. Okay, sorry. Minimum 3 directors, out of which majority should be independent director. Are we clear with this? Yes. So chairperson of the audit committee and majority of the members of the audit committee should be in a position to read and understand the financial statements. Why? Because they play that major role in the company. Yes. Okay, chalo. So shall we move on? This is the responsibility of audit committee. So first, recommend what? Related to appointment, remuneration and terms of appointment of the auditor. But in case of government company, the appointment will be decided by Comptroller and Auditor General of India. So only remuneration is recommended. Only remuneration is recommended. Appointment is done by Comptroller and Auditor General of India. Don't write CAG. You can in your notes but not in the exam. Okay, clear? So audit committee first responsibility is related to auditors only. Second responsibility also related to auditors. Review and monitor the auditors' independence and effectiveness of the audit process. So shall we revise first two once again? Because you are about to sleep? No ma'am. Okay, I know. The recommendation for appointment, remuneration, terms of appointment of the auditor. Exception, in case of government company, only what will be recommended? Remuneration. And the second, review and monitor the auditor's independence and effectiveness of the audit process. So you will review whether the particular auditor is actually using his independence, professional skepticism, and the audit process is being carried out effectively as per the plan or not. That has to be verified by the audit committee. Clear, everyone? Next, examination of two records. What are those? Financial statements and auditor's report. And then approval or subsequent modification of related party transaction, section 188. So in related party transaction, there is a separate case where all the related party transactions need the approval of the audit committee. We will look into that later on. But for now, remember that under audit committee responsibility, for sure you have to write one point related to 188. Remember? Yes or no? So 3 points are already related to auditor. First is appointment, remuneration and terms of appointment. Second is review the performance and audit process. And the third is examination of auditor's report and financial statements. And then the fourth one, approval and subsequent modifications of the transactions entered with the related parties. And also comes the financial matters like intercorporate loans and investment, valuation of undertakings or assets of the company, and evaluation of internal financial controls, monitoring the end use of funds which are raised by public issue, public offer. Are we clear? Yes, these are the responsibilities of audit committee. Direct question can come. Yes, I think if I'm not wrong, in June 2025 they have asked a direct question, responsibilities of audit committee. Direct question. So how stressful situation ICMAI will put you in during the examination is, previously it was 2A, 2B, 3A, 3B will be Companies Act. And then later on they will add they will introduce one economic law or one like IBC, corporate governance, in the later on questions. In the June 2025 attempt, for every question they asked one company law, one economic law, one company law, one IBC, one company law, corporate governance. So ma'am, will the same repeat? No, I can't do data analysis. Okay, so I have to train an AI model to predict the answers, but I can't. Okay, so shall we revise quickly? Yes, so there is no use of me shouting again. Okay, so we'll revise once again. You will revise. Okay, you can read, no? I mean my handwriting. Ha, chalo. Okay, recommendation for appointment, remuneration, terms of appointment of the auditor. Skip exception. Move on to the next one. Review, monitor the auditor's independence and effectiveness of the audit process. Examination of financial statements and auditor's report. Approval or subsequent modification of transactions with related parties. Next, scrutiny of intercorporate loans and investment. Next, valuation of undertakings and assets of company, and evaluation of internal financial controls and risk management systems. And the last one, monitoring the end use of funds raised by public offer. Now moving on to the rights of audit committee. So audit committee, I mean role of auditor, whatever it is, rights also you can call it as that. So what happens is audit committee will have the right to call the auditor. So call for the comments on what? Scope of audit, or else internal control systems, or else review of the financial statements, express his opinion on the financial statements. Clear? So simple, audit committee is empowered to call for the comments of the auditor. So for what audit committee can seek comments on? Internal control system. Do you think it is effective? Do you think there are any scope of material misstatements? Clear? And scope of audit, what is the range that you cover? And review of financial statements before submission to the board, his review. Are we clear? Now moving on to the next is any matters if they want to discuss, audit committee can discuss with the internal auditors, statutory auditors and management of the company. That power they have. Are we clear? So instead of taking it as a role of auditor, it may not be an appropriate heading. It is a powers of audit committee. Are we clear, everyone? Yes, I'm going a little faster because it's not important from an examination point of view. If audit committee is conducting a meeting, that meeting is related to audit report. Now auditor can participate, KMP can participate, management can participate. Will they have the right to vote? No. Why? Because they are not the members of audit committee. Are we clear? Yes. So when the audit committee considers the audit report, auditors of the company and KMP have the right to be heard but do not have the right to vote. Are we clear? So in what happens is, we have seen in the first case, recommendation of the appointment, remuneration and terms of appointment. If recommendation is given by the audit committee to the board, board may accept the recommendation, may not accept the recommendation. Yes or no? If it is not accepting the recommendation, it should mention in the board's report why you have not accepted the recommendation of the audit committee. So the board's report shall constitute the composition of audit committee and also shall specify if any recommendation of the audit committee is not accepted. So while you are writing the contents of board, you have one more content. What is it? Composition of audit committee. 4 have already been done. Composition of CSR committee, constitution, form, details about CSR policy, composition of the audit committee and related to recommendations not accepted by the not accepted by the board. Are we clear, everyone? Now moving on to subsection of 177, visual mechanism. This is actually a forum or else a platform which is given for the employees or else the other officers of the company to report any genuine frauds directly to the audit committee or the person authorized. So it's not like whistleblower policy. This is related to visual mechanism. Okay, so aims to provide a channel to the directors and employees to report genuine concern about unethical behavior, actual or suspected fraud or violation of any code or policy. It may prima facie look like whistleblower policy. Yes, you can consider it, but we are not referring to whistleblower policy here under SEBI. Here we are referring to visual mechanism. Are we clear, everyone? So what is the purpose of visual mechanism? A channel so that directors, employees, if they face any unethical behavior or suspicious fraud, they can report to the visual mechanism. Who will oversee visual mechanism? Who will have the power to oversee and receive the complaints related to the frauds? If there is an audit committee will act as a overseer of the visual mechanism. If there is no audit committee, a person authorized by the board. So here visual mechanism should ensure that directors, employees will have an opportunity to report directly to the chairperson of the audit committee or directly to the person authorized by the board. Are we clear? So that's all. Now which companies should form a visual mechanism? It's not a committee, it is a policy. Are we clear? Yes, don't write visual mechanism committee. There's no such committee here. Who will oversee visual mechanism? Audit committee only. Or else audit committee is not there, then any person authorized by the board. Are we clear? So, which companies should form visual mechanism? Every listed company, every company which accepts deposits from the public and every company with borrowings from banks and PFI exceeding 50 crores. Are we clear? Who will oversee? Audit committee. If company has audit committee, then audit committee will oversee the visual mechanism. Are we clear? Now moving on to companies without audit committee, director shall be nominated to look over. So here you're giving an opportunity to directly report to whom? To the chairperson of the audit committee or the person authorized. Now, if you misutilize this opportunity and constantly you will file some frivolous complaints. What are those? The water filter is not working, or else this person constantly is stalking me on Instagram. So these frivolous repeated nonsense complaints, if you do, audit committee or that vigil mechanism will have the power to reprimand also, that is suspend. Are we clear? Yes. So we are left out with 3 more sections, 182, 184 and 188. Do you want me to give a quick break or do you want me to continue? Thank you. Yes, section 182. There is a recent Supreme Court order related to section 182. So, will I be clarifying you related to the amendment? Answer is no. Why? Because it is not clarified. So, what happened is, previously, can a company make political contribution? Answer is yes. Contribution to political parties for their own publications as well as election. Okay, clear? Now, previously there was a limit that if you are making a political contribution, you can make a political contribution of 7.5% of the average net profits of the preceding 3 financial years. Clear? But what happened is, they removed that proviso, they removed that condition through Finance Act 2017. They removed that. But later on, some association related to Supreme Court, they came up and they can say, how can you offer unlimited contribution to political parties? This will compromise some of the fundamental rights or else some of the basic rules. So that is why what happened is, through that rule, they actually removed that omission. They removed that omission. But is it clearly mentioned that this is right now applicable or not? We are not clear. So it is better that for future political contributions that a company make right now, it is better to follow that 7.5%. So it's not clarified in the ICMAI study material. Okay, so I will do some more research, and with the proof I will come up if there is any change. But for now, this is the content which is there in the ICMAI study material. Read this. Clear? Yes? So no worries, I will not be going anywhere. So you can stay updated in my... Yes. It's not promotion, it's for your benefit. Instagram, I don't have. Currently, I'm not going to lie to you. For the past 5 months, deactivated. And my life has been peaceful. Try it. Huh? Difficult. I have 0 social circle. That is how I stay peaceful in my life. No panchaytis. Okay, so chalo. Now moving on to section 182, political contributions. If you actually consider the Finance Act 2017 omission, then any company that is not a government company and it is not in existence less than 3 years. So, which companies cannot make political contribution? Government company in existence less than 3 years. Why, ma'am? They will form companies just to make political contribution. Okay, to avoid that, you have to form a company. It should be in existence for at least 3 years. Then you can make political contribution. Are we clear? Yes. Now, moving on to definition of political party, section 29A of the Representation of the People Act 1951. That is a definition of political. Their definition of political party is there. Okay, clear? Now, exemptions, government company and company in existence less than 3 financial years. Now, is there a limit as per the omission of the Finance Act 2017? No limit. Clear? If the limit we consider, what is the limit? 7.5% of the average net profits of the preceding 3 financial years. Are we clear? Maximum 7.5%. Now, moving on to the next. So, you can make political contribution by passing a resolution in the board meeting. That is what we have seen, powers of board. To be executed by passing a board resolution. Yes or no? One of the power is to make political contribution. So you can make political contribution by passing a resolution in the board meeting. And you have to disclose in the profit and loss statement how much political contribution you are making, so that you are transparently disclosing to the shareholders that this is the money that we are giving to the political party. Are we clear? Yes. So we are done with section 182. Now moving on to 184. Disclosure of interest by directors. When directors are being appointed, at the appointment time only they have to disclose that in this company I am a shareholder, in this firm I am a partner, in this particular company I am a member, in this particular company I am a director. So initially at the time of appointment only you have to disclose all the interest. Are we clear? Why? So that we can understand in which decision you will be biased and in which decision you will be independent. Clear, everyone? Understood? So 184, the starting provision is related to general disclosure. So every director shall disclose his interest in company, body, corporate, firms, association of individual. What can be the nature of interest? Shareholding, directorship, or any other capacity. When can you make the disclosure? When you should make the disclosure? First board meeting that he participates after his appointment, there he has to disclose. Next, first board meeting of every financial year. And whenever there is so your shareholding percentage has changed, or you have become a director in a new company, so there is a change in your interest, yes or no? So the immediate board meeting after such change, in that board meeting you have to disclose the interest. So once again, 3 time periods when you have to disclose your interest. General, not only specific contract. General disclosure this is. Are we clear? Now what is the time periods? First board meeting in which he participates, first board meeting of every financial year. Whenever there is a change in already made disclosure, the first board meeting after such change. Are we clear? Yes, you will disclose by giving a notice in writing. This is general disclosure, not specifically for a contract or arrangement. Now, moving on to the definition of interested director. The definition that I said we will be discussed on a 184, that is related to 174, quorum. Clear? So, let's see. When a director is directly or indirectly interested in a contract or arrangement, or else it is a proposed contract to be entered, or else a proposed arrangement. Now, when a contract is entered into or to be entered into with whom? First, body corporate. Okay. When will we consider it as an interested director? If the director himself or with association with another director of the same company holds more than 2% of the shareholding in that body corporate. More than 2% of the shareholding in that body corporate, then he will be considered as interested director and is a promoter, director, manager, or CEO of that body corporate. Then he will be considered as a interested director. And then comes the contract or arrangement is entered with firm or entity in which he is a partner, owner, or member. Only 2 cases. In these 2 cases, he will be considered as what? Interested director. In these 2 cases, can he participate in the board meeting? He can attend, but he can't participate. Attend. Can he participate in discussions? No. Will he have the right to vote? Answer is no. Are we clear with this, everyone? Yes. Once again, when will you consider it as an interest? In a body corporate, himself or together with the association of other director holds more than 2% of the shareholding, or he is a promoter, director, manager, or CEO of that body corporate, or is a partner, owner, or member of a firm or entity. Are we clear with this? This is the meaning of interested director. Are we clear? Yes. What will be the consequences of non-disclosure? He is attending the meeting. He knows that he is interested, but he is not disclosing. What will be the consequences? The contract will be voidable at the option of the company. Company can decide to make it void or valid. Clear? And the penalty will be rupees 1 lakh. We have completed section 184. Now comes the last section. Take a deep breath. We are about to finish. 188. Are you ready? Yes. I can see some faces smiling. Are you excited that I'm going to leave you? You're not? Do you think I'll believe that? Okay, so let's get started. Section 188, related party transactions. Are we clear? So first we will understand who is related party. I'm not giving you the whole list here. Are we clear? Understood? So the first person who is related to the company, of course, director. He's in the company only, no? Relation is there, no? Director or relative of the director. KMP or relative of the KMP. Firm in which director, director relative, or KMP, KMP relative is a partner. That firm will also become a related party. And private company in which director, director relative, KMP, KMP relative is a member or director, then that private company will also become a related party. I will clarify you once again. Red checks. Hello. Okay. Next, who else is a related party? Holding company, subsidiary company, associate company, subsidiary of holding company. So if you want me to explain once again, so first person is director. Second, director's relative. Next, KMP is related party. KMP's relative is also related party. Now, director, relative, KMP. If they are partner of a firm, that firm will also be a related party. Director of the company, director's relative, or KMP or KMP's relative. In a private company, if they are member or director, in another private company, they are a member or director, that private company will also be a related party. Are we clear? Thank you. Now, relative, just give a reading, you will only understand. So, next, moving on to examples of related party transactions. Transaction between company and related parties. So what can be the cases here? Sale or purchase of materials, goods, or availing services, or rendering services, or leasing of property, or else underwriting of securities, whatever the case is, any transactions between company and the related parties are considered as related party transactions. I know you're feeling bored and you just want to relax, but please be active. Okay? Yes or no? Stay stiff. Okay. So, we have case number 1. Related party transactions for which no approval is required. First of all, why there is a separate section for related parties? Tax evasion, diversion of income, yes, hiding the funds, yes, and under invoicing, over invoicing, whatever the financial frauds are there, you can easily do it with your related party. That is why they have more stricter regulations related to related party transactions. Clear, everyone? So they will keep a close eye on related party transactions. Shall we look into the different kinds of transactions here? Yes? Okay. So related party transactions can be initiated in a company only if prescribed procedures and approvals are complied. So you can't just enter into a related party transaction just like that, like a director or else a manager or an accountant can't. He has to check the procedure, he has to check whether the approvals are obtained, then only he can initiate. Are we clear? Understood? So if you observe, if you recall, there will be a violation if past 5 years, if there is any related party transaction violation. Yes or no? So that is why you have to be very careful. Now case 1. These are the types of related party transactions for which no approval is required. What are these transactions? Ordinary course of business. Company ordinarily will purchase goods, sell goods, avail services, render services. Then ordinary course of business if it is initiating. And arm's length basis. What is arm's length basis? The price that you offer to a party if he was not a related party. Are we clear? So you go to a shopkeeper, random shopkeeper, you don't have any relation with them, uncle, auntie or something. Okay, so you will go to him, and if you ask, will you offer 50% discount on this product, you will like, go out. Yes or no? So, but if it is a related party, close relative, if they ask, maybe they can give 40% discount. Yes or no? So that 40% discount is at arm's length basis. No. Why? Because there is a relation, because of that the price is affected. Are we clear? So, if because of you being a related party with the company, if there is no effect on the price, if you offered a price which you would have offered if there was no relation, that is called arm's length basis. So, for a transaction which is on the ordinary course of business and at an arm's length basis, you don't need any approval. Are we clear? Kya hua? Some scenario you remembered? Okay. So case 1, related party transaction for which no approval is required. What are the two features? Entered by the company in ordinary course of business and at an arm's length basis. Now comes the second case, for which consent of board by passing a resolution in board meeting is required. What are those? So, not an arm's length basis. Special price is offered. It is not on arm's length basis, and it will not fall under third category. What is third category? Special transactions for which ordinary resolution in the general meeting is required to be passed. Are we clear? So, if a transaction is not falling under this category for which resolution is required, and it is not on arm's length basis, then what happens? It requires a resolution of board meeting. Are we clear? Understood everyone? Yes or no? Category 1, no approval. Category 2, approval of board of directors by passing a resolution at board meeting. What are the two features of this category? Not on arm's length basis and does not require the approval of shareholders. Now moving on to related party transactions requiring the approval of ordinary resolution. If you have my old concept book, there will be special resolution, but there is an amendment. It is now ordinary resolution. If you have my new concept book, that is version 4 on the top, you don't need to change. I did update it. Okay. So, let's see the types of transactions for which ordinary resolution is required. Hello. I've seen you, like there's no one in front of you to stop the view. Okay, so nature of transaction. So the first here it is related to materials. Are we clear? Sorry, property. Selling, disposing, buying of property directly or through an agent. Since it is property like related to assets of the company, that is why the percentage will be calculated on net worth. Are we clear? So if the value is 10% or more of the net worth, then only ordinary resolution is required, or else board resolution. That too if it is not an arm's length. If it is arm's length, ma'am, if it's arm's length basis, it is satisfying this condition, then does it require the approval of shareholders? No. Okay. So no, if it is arm's length basis, whatever the value is, no approval is required. Are we clear? Yes. So first, let's see the first nature of transaction: selling, disposing, buying any property directly or through an agent, 10% or more of the net worth. Sorry. Okay. Next comes the 3 other transactions directly linked to turnover. Why? Because they are operating transactions. Okay. So sale, purchase or supply of goods or material, again directly or through agent, and leasing of property. And here we have seen the goods. Now we are looking into services, availing or rendering services directly or through an agent. So here all the 3 cases, not aggregately, separately, 10% or more of the turnover. If they exceed, then special resolution, ordinary resolution. Now the next, you are appointing a related party in an office or a place of profit. Maybe a manager or an employer or director, whatever it is, place of profit which receives salary, which receives perquisites, sorry. Are we clear? So, appointment of related party to any office or place of profit in the, either in the company you're giving them the position, or else in the subsidiary, or else in the associate. And you're paying them more than 2.5 lakhs per month. Are we clear? Then for that also you need to take the approval of shareholders in the general meeting. Next, remuneration for underwriting. Who is an underwriter here? Related party transaction is an underwriter for your securities. And the commission that you pay is exceeding 1% of the net worth. Then you need to pass an ordinary resolution. A quick revision: selling, disposing, buying of property directly or through an agent. What is the value? Net worth. Now related to goods, services, leasing, what is the value? 10% or more of turnover. Appointment of related party in the place of profit in the company or subsidiary or associate with a remuneration exceeding 2.5 lakhs per month. Remuneration for underwriting the subscription of any securities. What is the value? Not 1% or more, exceeding 1% of net worth. Are we clear? Yes. Now, if in that general meeting one of the member is related party, will he have the right to vote? So, a member who is a related party shall not vote on the resolution that is approving the above related party transactions. Are we clear, everyone? Yes. Now, moving on to the exception for case 3. That is, for this case, ordinary resolution need not be passed. What is the case over here? Transaction between holding company and its wholly owned subsidiary company whose accounts are consolidated and placed at the general meeting. If that is the case, then it is not required to pass any ordinary resolution. Are we clear? Now, moving on to Rule 6A. Here comes a generalized statement related to the audit committee. All related party transactions must be approved by audit committee. Are we clear? So, here Rule 6A says that all related party transactions require audit committee approval. So, you tell me, if we have a related party who is offering us goods, who is offering us services, and who is offering us like a place of, who is staying in the place of profit, we will choose a related party or some other outside person? Of course, a related party, yes or no? So, on a daily basis, company will face n number of related parties. Yes or no? Related party transactions. Yes or no? So, if you say audit committee has a responsibility to approve each and every related party transaction, then what will the audit committee's responsibility will be? Only approving transactions. Can it perform other responsibilities? Can it perform other duties? Answer is absolutely no. So that is why audit committee has a opportunity to give omnibus approval. What is omnibus approval? Standing approval. That means for 1 year, these are the related parties. This is the nature of transaction. This is the maximum amount. This is the aggregate maximum amount. All the details you will give, and this approval will be valid for all the related party transaction for 1 year. What happens here? Repeatedly, you don't need to give any approvals. Are we clear with this? Understood the option of omnibus approval, everyone? Yes or no? Now, let's look into this. So here Rule 6A says that all related party transactions require the audit committee approval. Now, in order to avoid repeated approvals for everyday related party transactions, what audit committee can do? It can give omnibus approval, also known as standing approval, can be given by audit committee. Are we clear with this? Understood the concepts of standing approval? It will be valid for 1 year. Till 1 year, if you follow these conditions, you can enter into any related party transaction. If it is exceeding the value, then come, I will give you a separate approval. That is what the audit committee specifies. But before audit committee gives an omnibus approval, it should take the approval of board of directors. Are we clear? So audit committee, only after obtaining the approval of board of directors, it can give the omnibus approval. Are we clear with this? Understood everyone? Yes or no? Now while you are actually giving the details of the audit committee, details of the omnibus approval about the transactions, first you have to set a criteria. So these are the checks, I mean like checkbox you will set no, so that you can understand what transactions I can give approval, what are the repeated transactions, what can be the maximum amount. So first audit committee will do what? It will set a criteria, so that this all I will verify, then I will give an omnibus approval. Are we clear? So what kind of criteria it can set? It will include maximum value of transactions in aggregate. It will estimate what can be the maximum value of the transactions in aggregate. It will check this, and it will check what can be the maximum value per the transactions. It will also verify how frequently they have to disclose to the audit committee, and it will verify the scope of review. So when will I have the opportunity to review the related party transactions? And the last, transactions which will not be subject to omnibus approval. That means it will also verify what are the special transactions for which standing approval is not applicable. So these are the criteria that will be included. Are we clear? This is not the omnibus approval. This is the criteria that will be verified by whom? Audit committee, before it gives final approval. Are we clear everyone? Yes. Before you want to give an approval, will you verify what can be the maximum value in aggregate per transaction, disclosures to be made, when can I review, what transactions are not subject to omnibus approval? Will you verify or not? That is what it is. Are we clear? Next comes audit committee will give an omnibus approval based on the repetitive nature and interest of the company. Will company actually involve in these transactions? Yes. Is it repeatedly involved? Yes. Then I will give omnibus approval. Are we clear? Based on that, it will give the omnibus approval. Now, finally, what does the omnibus approval contain? What details it will contain? So, only if these details are there, then only you can enter into the RP, related party transaction. Without these details, you can't. Are we clear? So look into this. Name of the related parties with which you can enter. That will be mentioned. Second, nature. What kind of transaction? Is a sale transaction, services, or supply of goods, or leasing, or underwriting? Nature will be specified. And duration of the transactions. The contract duration will be mentioned. Maximum amount. Next, indicative base price. If you want to calculate the price of a contract or an arrangement, indicative base price or formula for a variation of the price, formula for discount. Are we clear? And any other information. All these details will be mentioned in the actual omnibus approval. Let's give a revision. What are the details that will be mentioned in the actual omnibus approval? Name of the related party, nature and duration of the transactions, maximum amount, indicative base price or formula for variation of price, any other information. Are we clear? Now, let's say audit committee was not able to give these details. Are we clear? Give these details. But can it give an omnibus approval for the transaction for which these details are not available? Answer is yes. Maximum 1 crore. The transaction amount can be maximum 1 crore. So, if a related party transaction cannot be foreseen, you were not able to predict. Are we clear? And the above details are not available, then the audit committee may grant omnibus approval. It can give omnibus approval, but subject to a value not exceeding 1 crore. Up to rupees 1 crore, you can enter into a related party transaction under omnibus approval, even if these details are not available. What will be the validity of the omnibus approval? 1 financial year. With this, we have completed all the sections of board meetings. My voice also completed. So just to give a final revision of section 188, case 1, all the transactions, arm's length basis, ordinary course of business, no approval. Case 2, not on arm's length basis, does not require the approval of shareholders. It requires the resolution of the board of directors in a meeting. Next, Third case, ordinary resolution needs to be passed. Property 10% or more of the net worth. Goods, materials, services, leasing 10% or more of the turnover. Place of profit, monthly remuneration exceeding 2.5 lakhs. Underwriting commission exceeding 1% of the net worth. Are we clear? Now, exception for the case 3. Transaction between holding company and wholly owned subsidiary company only if it has prepared CFS and submitted. Are we clear? Then comes case 4. Rule 6A says that all related party transactions require audit committee approval. What is one of the way audit committee can give approval? Omnibus approval. Validity, financial year or calendar year? Clear? Yes. Before making omnibus approval, what is required? Board approval is required. Based on what it will give an omnibus approval? Repeated transactions and repetitive nature and the interest of company. If details are not available, up to how much value you can give omnibus approval? 1 crore. Any more queries? Yes or no? 184, disclosure of interest by directors. General disclosure, 3 moments you will give a general disclosure. First board meeting, he attends first board meeting of every financial year and first board meeting after any such change. Interested director in a body corporate holds more than 2% of the shareholding or is a promoter or director or manager or CEO, and a firm in which he is a partner, owner, member. That is the meaning of definition of interested director. Are we clear? Now, any more queries? Section 177 is clear. Which company should form audit committee? Yes. Responsibility of audit committee. We have seen powers of the audit committee. Specifically in board's report related to audit committee, what you will include in the contents? Composition of audit committee and recommendations of the audit committee not approved, not accepted by the board of directors. Yes or no? Paying attention? I am revising it for your sake only. Okay? Yes. And then 173, 174, 175 is completed related to board meetings. 177 audit committee, 179 powers of the board. You remember all the powers should be executed only by passing a resolution in the board meeting. And then 184 restrictions we have seen. 4 restrictions you still can exercise by passing a special resolution. Are we clear? That's all. We are done with board meetings. Okay. Quickly, I'll give you the list of important questions so that you can revise. Okay. So, question, page number 63. Question 2. Question 5. Twelve, 2, 5, 12, 15, 16, 18, 20, 23. First question also please revise. Okay, you will understand how to calculate the days. And that political party, if I get a clarity by tonight, tomorrow I will discuss once again. Okay, because since it's a Supreme Court judgment, most probably they may ask you in the December 2025 attempt. Okay, if it is clarified, I'll tell you, or else we will see. We'll wait for the proper clarification. Okay, it's not like after your exam I'll intimate. No worries. Okay. And for sure you solve question number 18 properly. Okay. One time just give a reading of this also. Question 7, because you will understand how to treat a good secretarial practice. Okay. So give me a list once again. What all I specified to you? Wait. 1, 2, 7, 12, 15, 18. Okay. Yes. Thank you. So just to provide you a clarity related to the limit of political contribution, that is the maximum amount of political contribution a company can make in any financial year is maximum is 7.5% of the average net profits of the preceding 3 financial years. Clear with this? Yes. So you can just strike this sentence down. So there is no concept of unlimited political contribution anymore. Okay. So this was actually this was the original provision before 2017. Finance Act 2017 has omitted this, but later on through a Supreme Court judgment it was struck down. That means the omission is struck down. So right now this particular limit will be applicable. Clear with this? Now again to clarify, is it applicable for December 2025? Yes. The judgment was passed February 2024. Okay? Thank you. Yes, now we'll start with the next unit of Companies Act, investments and loan. In this unit, there are 2 major categories of section. The first part is related to the investments and loans. That is section 185, loans to director, 186, loans and investment by the company, and 187, investments held in its own name. So after we finish this, we will move on to acceptance of deposits. In the acceptance of deposits, we will see the procedure for acceptance of deposits from members, which companies can accept deposits from public, and what is the punishment if you fail to pay the deposits. That's all. So if you are a student of CA background, you don't need to learn what all the types of deposits, what are considered as deposits or not. That content is not required from ICMAI point of view. Are we clear? It's going to be easy. Pay attention. We can finish it off as early as possible. Okay. So let's start with section 185, loans to directors. So 185 subsection 1 specifically restricts that loans cannot be granted to directors. So let's see the details over here. A company is not permitted to, case 1, advance any loan, or else a loan which is represented by book debt. What do you mean by represented by book debt? It is categorized as receivables. Clear? And then, or give a guarantee or provide any security. So company is not permitted to do what? A loan, guarantee, security. To whom? To the director of the company, or else director of holding company, or a partner or relative of any director, and a firm in which such director is a relative or partner. Are we clear? So straight away 185 subsection 1 specifies that company can't give loan, guarantee, security to company's director, holding company's director, and partner or relative of the director, or a firm in which the partner or the director or relative is a partner. Are we clear with this? Now, moving on to subsection 2, which will relax these restrictions. That means company is permitted to advance a loan, guarantee, security to a person in whom the director is interested. Once again, a person in whom the director is interested. Who are those persons? It may be a private company in which the director is a member, or else the body corporate in which director is able to control. We will look into that in detail. So I'm just giving you a meaning of that. Are we clear? So read the sentence with me quickly. A company is permitted to advance any loan, including a loan represented by book debt, or give a guarantee or provide any security. So to whom? Not to the director. Director, it is restricted only in case of a person in whom the director of the company is interested in. And that too, it can happen subject to two conditions. The first one is to pass special resolution, and the second one, the person who is receiving the loan, they should use it for their principal business activities. So here, if we are referring to principal business activities, by default we will assume that the persons are private company or a body corporate. Are we clear with this? Understood? So yes, company can extend loan guarantee security to a person in whom the director is interested, subject to the conditions. What are those conditions? Pass a special resolution. Second, loans are utilized by the borrowing company for principal business activities. Now let's see what is the meaning of the person in whom the director is interested. First person, a private company. Now when will it be qualified as a person? Here, private company in which the director of the lending company is a member or director. Are we clear? So private company is a borrowing company. Now the lending company's director should either be a member or director of private company. Then it will be qualified as a person in whom the director is interested in. Are we clear with the first one? Now moving on to second, a body corporate in wherein the director individually himself or together with other directors holds how much of the voting percentage? A minimum of 25%. Are we clear? So in the borrowing company, lending company's director individually or else in association with the other director holds not less than 25% of the voting power. Then that body corporate will be a person in whom the director is interested in. Can the body corporate receive loan from the lending company? Yes or no? Yes. Next, a body corporate where the board of directors of that body corporate or a managing director or a manager should act as per the directions of directors of lending company. Are we clear? So first talks about a private company only, in which the director is a member or director. Second, body corporate in which the director holds not less than 25% of the voting power. A body corporate, the board of directors, managing director or manager is acting as per whose direction? Directors of lending company. And this will be qualified as any person in whom the director is interested in. For these three categories of persons, a company can lend a loan, provide a security or guarantee. Are we clear with this? Now, moving on to the exceptional cases where the prior restrictions are not applicable and there is no requirement to pass any special resolution. So, 185 subsection 1 and 185 subsection 2 is not applicable in these cases. What are the cases here? First, loan is given specifically to two types of individuals, that is a managing director or whole-time director of the company. Company is providing a loan to whom? To the managing director or the whole-time director only if it is part of the conditions, as part of the conditions or services extended to all the employees. For all the employees, company is giving a benefit of loan. Are we clear? So even managing director and whole-time director are considered as an employee, and for them you are providing loan. That is an exceptional case. Why are you looking into him? Where is he going? How active your brain is. Okay, shall we proceed? Okay, your eyes should be on the screen. Okay. Okay. So where any loan is given to managing director or whole-time director. Now, as part of what? As part of conditions of service extended by the company to all its employees. Or else, to any scheme approved by the members by passing a special resolution. So they have approved a scheme that since managing director and whole time director or other key managerial persons have extended services to the company, so we should approve a scheme by passing a special resolution to grant a loan to them. So that is permitted. Are we clear? Only for a managing director and whole time director. We are not referring to all the directors. Are we clear with this? This is the first exception. Next comes the second exception here. Company in the ordinary course of business. Company in the ordinary course of business, that is its principal business is only what? Extending, providing loan, guarantee or providing security. So that is actually permitted. Are we clear with this? Understood? But the case is, you should not give any special interest rate. You should charge an interest rate for the loan as charged by a rate, that is RBI bank rate, as per the RBI bank rate. Are we clear? So let's read the sentence here. Yes. Give me an opportunity. So, where a company in the ordinary course of business provides loans, gives guarantee or provides security for due repayment of any loan, and mandately you have to comply with this condition in respect of such loan where the interest charge is at a rate not less than the rate declared by RBI. Are we clear? So no special importance. If you are giving a loan, then it is okay. It should be as per the rate charged by the RBI. It cannot be less than that. It can be more than that. Clear? So two conditions we have seen, two exceptions we have seen. First is loans to managing director, whole time director, as part of services extended to all the employees or as pursuant to any scheme approved by passing a special resolution. And second, you can grant loan wherein the company's ordinary business is to provide loan, guarantee, security for the due repayment of any loan, and the interest charged cannot be less than the interest charged by RBI. Clear? Now comes to exceptional cases. Loan made by holding company to wholly owned subsidiary company. It is permitted. And the next, guarantee or security provided by holding company to wholly owned subsidiary company. Both the cases are exceptions, but the condition here is the wholly owned subsidiary company must utilize the loan for principal business activities. Are we clear with this? Now, once again, read the sentences with me. Any loan is made by a holding company to its wholly owned subsidiary company, or any guarantee or security provided with respect to any loan made to its wholly owned subsidiary company by any company, bank or PFI. So, that subsidiary is receiving a loan from a third party. For that, you are providing a guarantee or a security that is permitted. Clear? So in case of the third case and fourth case, the loan provided to the wholly owned subsidiary company must be utilized for its principal business. So first comes restriction, second comes relaxation of restriction, third comes exceptional cases. 4 exceptional cases. The last two are very simple, holding to wholly owned subsidiary. The first one is related to managing director and whole time director. Second, ordinary course of business. Are we clear with the exceptions, everyone? Yes or no? Now moving on to section 186. Here we are referring to the first subsection, investment subsidiary layers. So if a company is making an investment in an investment company, will it create a layer? Answer is yes. Company A is investing in a company B, which is an investment company. It creates a first layer. Company B, which is an investment company, is investing in company C, which is also an investment company. It creates a second layer. It is permitted by law. If a third layer is created, that is restricted. Are we clear? So look into this once again. A company may make investment in not more than 2 layers of investment companies. Are we clear? Understood here? So there can be 2 layers of investment subsidiaries. Are we clear with this? Now moving on to the meaning of investment company. Any one condition can be satisfied. What is that? Principal business of that investment company should be acquisition of shares, debentures or other securities. So that is why it's called an investment company. So what is its main business? To invest in securities, so that like trading in securities for to make any profit. Clear? So when will it be considered as an investment company? If investment made by investment company in the shares and other security is more than or equal to 50% of the total assets. So the total assets that company is holding is more than or equal to 50% is in the form of shares or else debentures or else other securities. That means its main business is acquisition of shares, debentures or other securities. Or else from an income point of view, the income which is generated from shares or other securities amounts to more than or equal to 50% of the gross income, then it will be classified as a investment company. Are we clear with this? Now moving on to exceptions. That means in these two cases the two layers condition is not applicable. So in which case, let's say an Indian company is acquiring or has a subsidiary which is a company incorporated outside India. Now as per the laws of that country, it is allowed to have more than two layers of investment subsidiaries. So is it permitted to have that company incorporated outside India as our subsidiary? Answer is yes. So company can acquire. Here there is no condition that the incorporated company can be an investment company or may not be an investment company. We are just referring to Indian company is acquiring what? A company incorporated outside India. This company can have as many investment subsidiary companies as possible if it is allowed as per the law of that country. Are we clear, everyone? Yes. Now moving on to second exception. So let's say one of the Indian company has a subsidiary. So it is not an investment subsidiary, it is a subsidiary. Clear? Now that subsidiary, as per any scheme of RBI or else some infrastructure projects or else if it is required by any act, it needs to acquire an investment subsidiary or more than one investment subsidiary. Now since it is required by law, it is permitted. Are we clear? So a subsidiary company can have any investment subsidiary for the purpose of meeting the requirement under any law or rule. These are the two exceptions. So the first rule says that company can make investment in not more than two layers of investment companies. Investment company, you will check the total asset value and the gross income. Are we clear? What are the exceptions here? So company can acquire a company which is incorporated outside India, and that company can have more than two layers of investment subsidiary if it is allowed as per the laws of that country. Second comes, our company's subsidiary can have investment subsidiary if it is required for the purpose of meeting a requirement of law or rule. Are we clear? We are done with the initial 186. Understood, everyone? Yes or no? I'm not getting into details. Even you don't go into the details. Otherwise, you can't understand the upcoming concepts. Are we clear? Yes? Now, moving on to the second part of section 186. So here we are referring to the limits of granting loans, guarantee, security or making investments. So, no company shall directly or indirectly, first, loan to any person or body corporate. Second, give a guarantee or provide security. Acquire securities of any body corporate by way of subscription or purchase. Now, it is permitted up to what values? 60% of paid up share capital, free reserves and securities premium, or else 100% of free reserves and securities premium, whichever is higher. Calculate these values. Whichever is higher will be the maximum amount you can grant as loan, guarantee, security and make investment by way of acquisition of securities. Are we clear? But if this is exceeding, if it is more than 60% or if it is more than 100%, then you have to pass a special resolution. Are we clear? So, very simple. Company can grant loan, provide guarantee, provide security, make investment, that is through acquisition of securities of another body corporate, up to what limit? 60% of paid up share capital, free reserves, securities premium, or else 100% of free reserves plus securities premium. What will be the actual limit? Whichever is higher. Are we clear? Till then you can accept, but if it is exceeding that limits, you have to pass a special resolution. Are we clear with this? Understood the concept here? Without prior approval of members by means of special resolution. So if you follow the sentence from starting, no company shall exceeding this value without prior approval of members by passing a special resolution. This is a whole sentence. Are we clear with this? Understood everyone? Yes or no? Am I going a little fast? Okay, fine. Now, the next case. Company shall disclose to the members in the financial statements what are the loans, guarantees, security provided by the company and the investment made. Of course, you have to mention the details in the financial statement. So, company shall disclose to its members in the financial statement what details, full particulars of loans which are given, investments which are made, and guarantee given and security given, and also mention for what purpose you have given the loans. Are we clear? Understood? Now, here comes a condition which is very important. Any loan that you're granting or giving a guarantee or providing a security, it should be initiated only if it has a board resolution, that too with a unanimous approval of all the directors present at the meeting. Not even majority. All the directors which are present at the meeting must approve for that loan, guarantee or security. So here that is first condition. Keeping special resolution and all that aside, for any loan, investment, guarantee, what is required? Unanimous board approval. So any investment, guarantee or security shall be made by passing a board resolution with unanimous approval of all the directors present at the meeting. Not all the directors of the company. All the directors present at the meeting. And in one case, generally it needs the prior approval of public financial institution, but it does not need the approval of public financial institution when, if no default is committed for payment to public financial institution. No default you have committed and it is as per that limits. What is that limit? Less than 60% or less than 100%, whichever is higher. If it is below the limits and there is no default made to the PFI, then you don't need to get the approval of PFI. The only thing that you need is the unanimous board approval. Are we clear with this? I will give you an overview once again, no worries. And what can be the interest rate that you charge for a loan that you are giving? It cannot be lower than the prevailing yield rate of any government security to the closest tenure. So let's say government security, for any security for a 2-year period, it is giving us around 8% of the interest rate. Are we clear? So if company is giving a loan for 2-year period, what can be the minimum interest which has to be charged? 8%. Are we clear? So, to take what will you consider as a base to charge interest for the loans given by the company? The yield of government security. Yield means how much return it is generating. Yes or no? You've heard the SFM class, no? Okay, so this is the condition. Based on this, a question was also asked in the June 2025 paper. Yield to find out whatever is it. If period is 4 years, there 4 years interest rate is not there. What will you check? Whether 4.5 is there or 3.9 is there, whatever the closest tenure is available, that will be your base interest rate. Are we clear with this? So once again read the sentence with me. No loan shall be given with an interest rate lower than the rate prevailing yield of government security with the closest tenure. Are we clear? Understood? Now, moving on to the next is, so if a company which is in default of, here we are referring to loans and guarantees and security, but if company made a default in repayment of deposit, first of all, whatever the money that you've taken, you're not giving back. How can you grant a new loan? So that is what the condition here. So a company which is in default in repayment of deposits or interest on the deposits shall not give any loan, guarantee or provide any security. Are we clear? If default is cleared, you can provide loan, guarantee, security. And the next, it should maintain a separate register containing all the particulars of loans, guarantee, security. First of all, we have seen that you have to disclose in the financial statements. Other than that, you have to maintain a separate register. So every company shall maintain a register. What will it contain? Particulars of loans, guarantee, security provided by the company. Where will you keep the register? Registered office. Now, will it be open for inspection? Answer is yes. And extracts can be taken. Copies also can be taken by any member only if they pay the prescribed fees. That's all. Now, till now we have completed the main part of section 186. So 186 subsection 1, quick revision, everyone pay attention. It says that maximum how many layers of investment company? 2. Exception is company incorporated outside India, permitted as per the laws of that country. Second, subsidiary, if it is required by any law or rule, it can have investment subsidiary. We are done with the first part. Second, what is the limit of loan, guarantee, security, acquisition of securities of the other body corporate? 60% of paid up share capital, free reserves, securities premium, or 100% of free reserves plus securities premium, whichever is higher. If this limit is exceeding, you need to pass a special resolution. Other than this, what approval is required for any investment loan guarantee? A resolution to be passed in the board meeting with unanimous approval of all the directors present at the meeting. Clear? And where will you communicate? How will you communicate to the members related to loans, guarantee, security? Disclosing in the financial statements, and also the recipient for what purpose he will utilize the loan. That detail should also be mentioned. And then we have seen interest charge, it cannot be less than the prevailing yield of government security closest to the tenure. And you have to maintain a register. Are we clear? Register should be kept at the registered office. It is open for inspection, but if you need extracts or copies, you need to pay the prescribed fees. Now, non-applicability. So you can't put restriction for companies whose principal business is only investment, or principal business is only loans, guarantee and security. So that is why these sections of 186, except investment subsidiary, layers is applicable for all the companies, except that all the details that we have seen, loans, guarantee, security, those are not applicable for these class of companies. What are those? Loans, guarantee, security provided by banking company, insurance company or financial institutions in the ordinary course of business. For them, all the subsections are not applicable except layers of investment. That provision is applicable. Clear? And investment made by any investment company because it is principal business, and NBFC, and the company whose principal business is acquisition of security. These are the non-applicability sections. Are we clear, everyone? Understood? So we are done with section 186. So 185 specifically talks about loans to directors. 186 first talks about the investment layers. For every company it is applicable, no exceptions. But when it comes to other provisions, loans, guarantees, security, limits, values, as well as the interest rate, these are not applicable for banking company, insurance company, and any financial institution whose principal business and in the ordinary course of business, and also NBFC and investment company or any company whose principal business is acquisition of securities. Are we clear with this? Now moving on to section 187. Any investment made in any security or asset by the company whose name it should be registered in the name of company. Who should hold that? Company should hold that particular asset or security. So that is what the section 187 subsection 1 specifies. So all investments made or held by the company in any property, security or other assets shall be made and held in its own name. The person who is paying and the person in whom it is being registered, it should be the company. Are we clear? So that is why company is a separate legal entity. Yes or no? Now comes proviso. So what is that? Company, if let's say a holding company has wholly owned subsidiary company, that means who is the true owner? Holding company. How many shareholders? Only one member is there, no? But private company, for private company minimum number of members are 2. For public company 7, yes or no? To meet that requirement, a company can recruit or appoint nominees and can transfer the shares to the nominees. Are we clear? But beneficial owner will be ultimately the holding company. So, company may hold the shares in its subsidiary in the name of any nominee or nominees to ensure the minimum requirement of members is met. Are we clear with this? Now, moving on to exceptions. Case number 1. So, you are depositing your shares with the bank so that bank will time to time receive dividend. That is allowed. Clear? Or interest. Now, second one, you are depositing your securities with the depository in dematerialized form like NSDL. NSDL will be the actual owner. Who will be the beneficial owner? The shareholder will be the beneficial owner. That is permitted. And comes the second case. To facilitate transfer, you can deposit with a banker of the company to facilitate easy transfer of securities. And then, if you are taking a loan, for that loan, you are providing your securities like shares as security. You will provide some asset as security, no? That asset is securities. Securities means debentures, shares. Are we clear? So that you are providing as security. That means you have to register in that person who is lending, no? That is also permitted. So let's give a quick revision. I've given you a very simple meaning of everything. So company is permitted to deposit its securities with bank. For what purpose? Collection of dividend and interest. Second, company is permitted to deposit with or transfer to or hold in the name of its banker for easy facilitation of transfer. Clear? And company is permitted to deposit or transfer any shares or securities by way of security for repayment of loan. You will give your building or else a house as a security. Here what you are giving? Securities as security. Clear? Next, a company is permitted to hold the investments in the name of depository. So when the company holds such investment as beneficial owner. Are we clear? 4 exceptional cases. First is dividend or interest receiving, and the second one is related to facilitation of transfer. Third is for the purpose of repayment of loan, and the fourth one is in the name of depository as a beneficial owner. Clear, everyone? So all the investments should be held in its own name, but these 4 are exceptions. Clear? Now moving on to the last provision of 187. Any investment which is made by the company but not held in its own name, for that separate register you have to maintain and mention the particulars of what investments are not held in its own name. Are we clear? So you're giving a separate detail. So when investment is made in shares or securities of the company but not held in the name of company, such particulars shall be maintained in a register and shall be open for inspection by any member or debenture holder without charge in business hours. Are we clear till now? So 185, 186 and 187, these 3 are very important sections. Specifically 2 times in the past, continuously maybe 2 times in the past, they have asked what are the investments which can be held in the own name and what are the exceptions for 7 marks, direct question. So it may not repeat in December because 2 times it's already repeated, but still they can ask a case study. So we are done with these 3 sections. I know these are a little more intense sections than your simple board of directors, but you have to be habituated. You are at final level. Are we clear? Any more queries? Revise it once again. You will have doubts. Okay. So now shall we move on to acceptance of deposits? Okay. First of all, what is the meaning of deposit? Simple, receipt of money. Company is receiving money. Yes or no? It is not in the form of debenture. It is not in the form of loan. It is receiving a deposit, a receipt of money. Clear? So when will it be classified as deposit? If it is accepted as per section 73 from the members and as per section 76 from the public, it will be qualified as a deposit. So simple meaning of deposit, read it with me, includes any receipt of money by way of deposit or a loan or any other form by the company. Now, who is a depositor? In case of a private company, only a member can be considered as a depositor. In case of public company, a member can be a depositor, or any other general public can also be considered as a depositor. So, any member of public or private company who has deposited money with the company, he is considered as depositor. Or any person, member or not, who has deposited money with the public company. Are we clear? So that person will be classified as a depositor. Now, shall we move on to section 73? Yes? Sleepy? Okay. So simple. Section 73 will primarily look like prohibition on acceptance of deposits from public. Only subsection 1 is only subsection 1 has one single sentence for that, but actually section 76 will clarify which public companies can accept deposits, what is the procedure. Are we clear? So let me give you a clarity once again. 73 heading is what? Prohibition on acceptance of deposits from public. Clear? But actually where the provisions will be there, that which public company can accept deposits? 76. Clear? In 73, primarily in subsection 1 there will be one sentence, that's all. Subsection 2 will clarify related to the procedure for accepting the deposits from members, not from the public. Okay, so let's see the first line that will say that will communicate us about the public. So no company shall invite, accept, renew deposits from public except in the manner prescribed under this chapter. Chapter 5, acceptance of deposits. Simple. That is the only relevant sentence related to acceptance of deposits from public in 73. What does it say? If you want to accept deposits from public, simple, follow the procedure in this chapter. That's all. Now, exceptions to this: banking company, NBFC and any company specified by central government, these sections or the provisions of this chapter will not be applicable. Clear? The specific governing acts will deal with that. Understood? What are the exceptions for the acceptance of deposits from the public? Banking company, NBFC or any company specified by central government. Now, what are the conditions for accepting deposits from members? From members. First, pass an ordinary resolution in the general meeting. Second, you have to issue a circular. Of course, you will issue a circular that we are inviting the members to deposit money. We are accepting deposits from members. In that circular, what are the details mentioned in that circular? First, financial position of the company. Second, credit rating of the company. Third, total number of depositors till now. If there are till now company has not accepted deposit, for the first time it is issuing circular, these particulars are not required. But if it is issuing a circular for the another time, then it has to contain till now how many depositors are there and how much amount is due towards the deposits. Are we clear? So before you issue circular, first 30 days before the date of issuance of circular, you have to file the circular with whom? To the ROC. So filing the circular with the ROC with the statement 30 days before issuance of circular. So till now, under 73, what we have seen: no company shall accept, renew or invite deposits from public except in the manner prescribed in this chapter. Keep that aside. Now, what are the exceptions for that? Banking, NBFC, any other specified company by CG. Clear? Now, moving on to the procedure for acceptance of deposits from members. First condition is passing a resolution in general meeting. Special or ordinary? Ordinary is enough. Next, you have to issue a circular. What are the details in that circular? Financial position, credit rating, number of depositors, amount due towards the deposits. Clear? Now, before you issue the circular, what you have to do? Before 30 days, you have to file it with the ROC. Clear, everyone? Now, one more important reserve that you have to create: deposit repayment reserve, DRR. So for what purpose you will utilize this reserve? Only for repayment of deposits. Now here, how much of deposit repayment reserve you will create? Simple. Minimum 20% of the maturing deposits during the following financial year. Not this financial year that you are creating, following financial year. So what are the maturing deposits? Out of that, minimum 20% you will create as deposit repayment reserve. So are we clear? So creation of deposit repayment reserve by depositing not less than 20% of the total maturing deposits during the following financial year. So it will be maintained in a separate bank account. What is the time limit that you have to create DRR every year? On or before 30th April. On or before 30th April. Are we clear with this? That's all. Now, moving on to the maintenance of deposit repayment reserve. At any point of time, the deposit repayment reserve cannot fall below 20% of deposits maturing during the financial year. Are we clear? Understood, everyone? So, while creating DRR every year, you have to make sure by 30th April, how much amount is there in your DRR? 20% of the maturing deposits during the following financial year. But at any time, the DRR cannot fall below 20% of maturing deposits during that financial year. Are we clear? Yes? So, shall be used only for the purpose of repayment of deposits. Now, moving on to the next requirement is a certifying that the company has not committed a default. So, if you are trying to accept deposits, first you have to give a certification that company till now has not committed any default. So, certifying that the company has not committed in default in repayment of deposits or interest. And if committed a default, what it has to be done? Make good the default, and how many years should be elapsed? 5 years. Simple. Are we clear? So you have to give a certificate that the company has not failed to, company has not committed default in repayment of deposits or interest. If the company has committed a default, it should make good the default, and the next thing is 5 years should be elapsed after making it good. Clear? Now, providing security is optional. But if you are providing a security for the deposits accepted from the members, you have to create a charge on the assets. Are we clear? So if you have decided that those are unsecured deposits, in every circular you have to mention that it is an unsecured deposit. Are we clear with this? So providing security for and creation of such charge on the company's asset for repayment of deposit or interest. That's all. So are we clear? So what is the procedure? Resolution, circular, to be filed with the ROC, creation of DRR, provision of security. After that, done. Provision of security, is it optional or mandatory? Optional. But you have to mention what? If you are not creating a security, that it is an unsecured deposit. Are we clear with this? How much DRR? Maturing during following financial year. Thank you. Now, of course, it is the obligation that every deposit which is accepted by the company should be repaid, and the interest should also be repaid. Of course, the basic obligation. You take money from someone, you have to pay them back. Yes or no? So, every deposit accepted by the company shall be repaid with interest as per the terms and conditions. And if company fails to repay the deposit, what is the remedy available for the depositor who has to receive the money? Can go file an application to the tribunal. Then tribunal will give an order to the company. Are we clear? So if the company fails to repay any deposits or interest, the depositor may apply with the tribunal for an order directing the company to pay the sum due or any loss or damages as the result of non-payment. We are done with section 73. The first conditions are completed. There are 2 more sets of conditions. Yeah. Too much content, no? It's not an easy chapter. That is why questions are being asked from this. I hope you realize that. So, we are done with the procedural aspects, completed. Now, we will move on to 2 other set of conditions. The first is tenure, second is amount. Tenure. So, can company accept deposits with a maturity period less than 3 months? No. Equal to 3 months? Yes. Equal to 6 months? Yes. No. General statement is less than 6 months it cannot accept. So minimum maturity period should be 6 months. Maximum maturity period should be 36 months. But if it satisfies 2 limits, it can two conditions. It can accept deposits with a maturity period less than 6 months. What, ma'am? First of all, first condition is the maturity period cannot be less than 3 months. Yes, it can be less than 6 months, but it cannot be less than 3 months. Second, maximum amount of deposits accepted for a tenure less than 6 months but more than 3 months should be 10% of paid up share capital plus free reserves plus securities premium. Maximum is 10%. It cannot exceed 10%. Are we clear? So, what is the general maturity period which is allowed? 6 months to 36 months. Can you accept deposits exceeding 36 months of maturity period? No. Less than 3 months? No. 3 months to 6 months? Up to 10% of paid up share capital plus free reserves plus securities premium. Now comes the maximum amount. Now generally if it is any other company which is not accepting deposits from the public, from members, it can accept maximum how much amount of deposits? 35% of paid up share capital, free reserves plus securities premium. That is a maximum. It cannot exceed 35%. Clear? Now we will look into a new name, eligible company. Just a disclaimer to you now only before I start 76. Only eligible company can accept deposits from public. Only. Not even just a public company can accept deposits from public. Only eligible company can accept deposits from public. Clear? So what is an eligible company? First condition, it should be a public limited company. Second, net worth should be more than or equal to 100 crores or turnover should be more than or equal to 500 crores. Are we clear? And it should pass a special resolution in the general meeting that we are now accepting deposits from the public. 3 conditions, simple. Public company, the limits should be satisfied, and the third one is special resolution to be passed. Are we clear? Now, if there is an eligible company which is accepting deposits from the public, from public how much it can accept maximum? 25% of paid up share capital plus free reserves plus securities premium. From members, how much it can accept maximum? 10% of paid up share capital plus free reserves plus securities premium. With this, we have completed the conditions under section 73. Are we clear? So 3 different sets of conditions. First is procedure. Simple. So just an overview, what does the procedure contain? Resolution, circular. Circular contains financial position, credit rating, number of depositors, amount due towards deposit. Clear? Now, within how many days you will file with the ROC? 30 days. Before or after circular? Before issuance of circular. You have to create DRR. You have revised the amounts clearly, no problem. Yes, and the next one is related to creation of security. It is optional. If you are creating, you have to create a charge on company's asset. Charge. It's nothing but a security only. Clear? That's all. Moving on to tenure, less than 3 months, not allowed. 3 months to 6 months, 10% maximum. Next, 6 months to 3 months, 6 months to 36 months allowed. More than 36 months not allowed. And generally not an eligible company, how much amount it can accept from members? 35%. Maximum is 35%. If it is an eligible company, from members, public, 25%. That's all. Now I'm not revising 74, not important from an examination point of view. Now section 75, damages for fraud. So if a company fails to repay deposits or interest and it is proved that why you have not repaid the interest or deposit, due to a fraudulent intent. Fraudulent intent. Intention is not, it's not that you don't have a good financial position, that is why you're defaulting. Your intention is to defraud. Clear? So, if the company fails to repay the deposit or interest and it is proved that the deposits have been accepted to defraud the depositors, then it will be punishable under 447. I'm telling you, this is one section that you have to remember. If there is a fraud, any section, any person has committed a fraud in the company, then that person will be liable, or else the punishment will be declared as per section 447. Everywhere. So you remember this one section is more than enough for writing penalties, most penalties. If the penalty involves commission of fraud, then he will be punishable under 447. Here also, if the intention to accept deposits is to defraud the depositors, then he will be punishable under section 447. And of course, shall be personally liable to pay any damages incurred by the depositors. Are we clear? That's all with the 75. Now 76 is again simple. Acceptance of deposits from public. Which companies can accept deposits from the public? Company having a net worth more than or equal to 100 crores or turnover more than or equal to 500 crores. And of course, what is the requirement? Special resolution to be passed. It should be a public company. Yes or no? So now such company shall have to obtain what? Credit rating. So if you are accepting deposits from the public, all the rules which are there, circular, DRR, that is actually important. That is mandatory. Other than that, for sure you have to obtain the credit rating. Clear? That too from a recognized credit rating agency. And it should be informed to the public. And mandatorily for deposits accepted from the public, you have to create security. From public you have to. Clear? So within 30 days of the receipt of secured deposit, the company shall create a charge on its asset for an amount not less than the value of the deposit. That means if the deposit amount is 5 lakh, you have to create a charge on the asset which is 5 lakhs or more than 5 lakhs, but not less than 5 lakhs. Yes or no? I have granted a loan worth 1 crore and he's giving me some security car of just 50 lakhs. Then will I accept it? Answer is no. Are we clear? So that's all with section 76. Which company can accept deposits from the public? Only eligible company. How much maximum? 25%. Yes? Understood? Now, within how many days you have to create charge on the assets? 30 days of receiving the secured deposits. That's all. The last, section 76A. What happens if you contravene 73? That is acceptance of deposits from the prohibition on acceptance of deposits from the public and the procedure from acceptance of deposits from members. That section if you are contravening. Or else 76, acceptance of deposits from public. If these two sections are not followed, the punishment will be levied as per 76A. So this is just a normal punishment. I am not going into the detail. So company, in addition to repayment of deposit, it will be punishable with a fine a minimum of 1 crore or twice the amount of deposits, whichever is lower. Are we clear? And the next one, maximum is 10 crores. It's not mentioned here. Okay, it's fine. Now, the person who is actually committing a default, he will be punishable with an imprisonment. Maximum period 7 years and fine minimum 25 lakhs, maximum 2 crores. Are we clear? If it is fraud, 447. If I am not wrong, there is a maximum penalty. Yes, no? Yes. Punishment for the company, minimum is 1 crore or twice the amount of deposits, whichever is lower. Maximum will be 10 crores. Clear? So if just write it down. Clear? Yes? That's all. We have completed investments and loans. So if you just have a quick recall of the section numbers, open the first page, it will be easy for you to revise. 185 loans to directors, 186 loans and investment by the company, 187 investments of the company to be held in its own name, 73 prohibition on acceptance of deposits from public. So simple, no company can invite, accept, renew deposits from public until it follows the provisions under this chapter. Clear? Now 75 damages for fraud, 76 acceptance of deposits from public by certain companies, and 76A punishment for contravention of 73 or 76. Are we clear? I'm telling you, at least this chapter, if you are actually counting on revision and counting on preparing this for the main examination, revise it by the end of the day. Once again. Are we clear? Otherwise, there is a high scope that you will forget. Concept also you will forget. Clear? Of course, you will forget the content, but concept also you will. So that is why I'm telling you. It's a human brain, my dear. I'm not telling you are not potential or something. Again, you will be offended. Okay? So, that's all. We will have a quick view of what questions are the important from an examination point of view. Page number, someone has already specified, 89. Question number 2, 3, 4, 5. 2, 3, 4, 5. Okay? If possible, revise the June 2025 question also. Okay? That's all. Okay? So, we are done with unit number 8, investments and loan. Yes. Now we are moving on to unit 11, that is the last unit of the Companies Act 2013, prevention of oppression and mismanagement. We only have 5 sections, 241 to 245. All are very simple to understand. There are only 2 limits that you have to keep, that you have to learn, and most probably even the questions are also similar to each other. So if you perfectly and conceptually understand one of the questions, you can easily solve the others. So shall we get started? Yes. Now, before we get started with section 241, I want to discuss one case law. I have not discussed case law till now in the Companies Act 2013, but this case law is very important and it is proved its importance in the June 2025 attempt. In June 2025 attempt, we never expected they will ask a case law, but they have asked a case law. Okay. So first let's understand this case study. So this case study title is Foss versus Harbottle. Now here what happened is 2 of the shareholders in a Victory Park company, what they did is they sued the directors for misappropriation of the assets. So they have filed a case against the directors in a court. Are we clear? Who filed the case? Shareholders. Now what happened is the court has not accepted the particular case and it has established 2 principles. What is that principle? The first one, proper plaintiff principle. What is a proper plaintiff principle? Plaintiff is the person who is a petitioner, the person who initiates the cases. Yes or no? Now, in all the cases related to a company, always the plaintiff should be a company. So if you believe that the directors are actually involved in the misappropriation of the assets, then who has to file a case in the court? Company. Are we clear? So either by conducting a general meeting or else by a board meeting, company should file a suit, not individual shareholders. Are we clear? So this principle was established by Foss versus Harbottle case. And the next principle which was established is majority rule principle. If a decision, if a contract, if an arrangement or if a resolution is passed with majority approval, minority shareholders should abide by that. You have no other option because India runs on a democratic process as the way even companies run on a democratic process. So if majority approve, that will be taken into consideration. So these 2 principles were actually established by which case law? Foss versus Harbottle. Once again, I want to repeat, in all the cases related to a company or a director or a fraud, who has to file a suit in the court of law? Company. Company should be the proper plaintiff. And the second, if a decision is agreed by the majority, what is the remedy available for the minority shareholders? They must agree with that decision. Are we clear? This was established by Foss versus Harbottle. Clear? So just I will direct you towards the notes. So case law, two shareholders, Foss and Turton, they filed a petition in the court of law that the company name is Victory Park Company, sued the company's directors and promoters. The reason is for misappropriation of the assets and improper act. What did the court do? The court ruled against the shareholders and established two main principles. What are the two main principles? Proper plaintiff principle and majority rule principle. Who can be the proper plaintiff? The person who filed the suit. Always a company. And what do you mean by majority rule principle? Democratic process of making a decision. So if a decision is agreed by majority, no action can be brought by the minority shareholders. Are we clear? But if this kind of major principles are set, of course exceptions should be also given. So what is the exception over here? First and the foremost thing, this will not give a liberty for the company to perform any act which is ultra vires. Still you have to comply with the object clause of memorandum of association. You can't do activities which is against or which is not under the power of the memorandum of association. And the second one, if some resolution or a decision needs to get special majority, like a special resolution, but you are taking the decision with an ordinary resolution, that is an exception. In that case, shareholders can sue individually. Are we clear? And the third case, minority oppression. Fourth case, fraud on minority. These two cases are actually the main topic of the unit. Are we clear? So these two exceptions are actually what we are going to study from 241 to 245. So the two principles are proper plaintiff principle, majority rule principle. What are the exceptions here? Acts which are illegal or ultra vires. Second, acts which require special majority but are approved with simple majority. Third, minority oppression. Fourth, frauds on minority. In these four exceptional cases, what happens is the proper plaintiff principle and majority rule principle will not be applicable. Even individual shareholders can file a suit against the director or a promoter or the company. Are we clear, everyone? Understood? So this was actually asked in the June 2025. Have you understood the case law? You have to write down pin to pin about the case law if they ask you, including the name of the company and the shareholder's name. Are we clear? Understood? So that may not be easy to remember, so at least you remember the principal names and the exceptions. So this unit, prevention of oppression and mismanagement, is based on these exceptions: minority oppression and fraud minority. Are we clear? So let's get started. Section 241. Before we get started, I will give you an example. I will give you the meaning of oppression and mismanagement. So what do you mean by minority oppression? So oppression is nothing but depriving someone from their basic necessities. So what does minority shareholder, this is a general meaning, basic necessities means you will say, ma'am, water, food, do you refer this? No. Here minority shareholders are not getting the importance they have to receive. They are not able to participate in the decision making. They are not receiving the information they are required to receive. And what happens is the directors are receiving excessive salary so that the profit will be less and there is no profit or earnings left to pay to the minority shareholders. Frauds on minority and using the company's fund for their personal purpose. Using the company's funds to make investment in related parties or related firms or related companies, or investing in high risky funds. So all these activities are nothing but minority oppression and frauds on minority and mismanagement. Are we clear? Once again, I will not be explaining all these examples. From now I will use the word oppression and mismanagement. That's all. So I will give you a quick glance of the examples once again. Directors taking excessive remuneration so that no profit is left out for the minority shareholders. Exclusion of minority from the decision making. Refusal to provide information. Minority is asking what is the purpose of this investment, to whom you have released these funds. They're asking information but you're not providing. That is minority oppression. And investing large portions of funds in high risk projects. This is mismanagement, financial mismanagement. And personal use of companies' assets without authorization. Who is using it? Majority shareholders or the directors. And fraudulent transactions, over invoicing, under invoicing, engaging in fraudulent related party transactions. All these are the activities of minority oppression and frauds on minority. The big, if I have to conclude, oppression and mismanagement. Are we clear with this? Understood? So you want to take a screenshot? You can. I will move aside. For online students. Okay, done. Yes. Now we will start with section 241. I think we should have a personal group. Yes, no? Mr. Class Representative, arrange. Okay, so shall we resume the session? Okay, section 241. So if members face the case of oppression or mismanagement in the company, what is the remedy available for them? They can file an application to the tribunal seeking what? Relief from oppression and mismanagement. That is section 241. Application to tribunal for relief of oppression and mismanagement. So who can file an application to the tribunal? Case 1, members. So members of the company, if and only if they satisfy the limit under 244. What is 244? It will specify which who are the members who have the right to file an application under 241. Like 100 members, 1/10, so that limit will be specified where? 244. Are we clear? So we will see that later on also. So two authorities, two members have the authorities here, members of the company and central government. Clear? So application to the tribunal can be initiated by the members of the company or by the central government. Members who have the right, section 244. What are the complaints? For what you can file an application? Oppression and mismanagement. What is the meaning of oppression? For sure you have to write the exact words in the examination. Shall we revise it quickly? So, oppression. Affairs of the company are prejudicial. What is the meaning of prejudicial? Harmful, disadvantageous. Clear? So, prejudicial to the interests of A, public, B, members, C, company. So public, company, any member. So once again, affairs of the company are prejudicial to the interest of public or company or oppressive to any member. That is the meaning of oppression. The same meaning. This affairs are affected due to what? Change in the management. That is called mismanagement. Are we clear? So simple. Material change has taken place in the management or control of the company, because of which the affairs of the company are prejudicial to the interest of public, company or members. Are we clear, everyone? Generally the affairs are prejudicial, oppressive. Due to change in management and due to the change in control of management, that is called mismanagement. Are we clear? So that's all. The one word that you have to keep it in mind is prejudicial to the interests. Members, public, company. That's all. For these two cases, you can file an application to the tribunal. Who can file? Members having right under section 244 and central government. When central government can file an application? If central government believes that these four cases are existing in the company. What are the four cases? First, person involved in the management is guilty of fraud, misfeasance, misconduct. Then central government can file an application to tribunal. I will revise once again. I'm just discussing the concepts. No worries. And company is not following sound business practices. What are sound sound business practices. Why do you make business? Why do you operate business? To make profits, yes or no, for the good of the company. But if you are misutilizing the funds for wrongful investments and you are selling the products below the cost, you are investing in high risky projects, what are these? These are not sound business practices. Are we clear? Next, company's management is causing serious injury or damage to the trade or industry, that is safety hazards. So it is not following proper safety protocols. It may lead to any blast, or it may lead to any serious injury to the industry. And the next one, it is involving itself in cartel formation, that is against the competitive principles. So all these are what examples of causing harm to the industry or trade. Are we clear? So if that is involved, and the last case, business is being conducted to defraud its creditors or members. So 4 possible cases. If central government believes any of the cases existing in the company, then what central government can do? It can file an application to tribunal. Are we clear? So central government may make an application to the tribunal if, read it with me, any person in management is guilty of fraud, misfeasance, persistent negligence, and defaulted in carrying out his obligations, or else no sound business practices, or company management is causing serious harm, serious injury or damage for the interest of trade, and the next, business is being conducted to defraud its creditors or members. Are we clear? So if central government believes these 4 cases exist, then it can file an application to initiate, the relief of oppression and mismanagement. Now we will see who are the members having the right to file an application to tribunal. Are we clear? So first comes company having a share capital. Now the first subcategory is members. The second is issued share capital, not paid up share capital. You have to pay very keen focus on this. Why? Because till now whatever the limits we have seen are paid up share capital. Only this case, oppression and mismanagement, issued share capital will be appearing. In sometimes what happened in question, both issued share capital and paid up share capital will be given. You will be confused as to which has to be taken. So you have to consider what? Issued share capital. So let's see the limit here. How many members can apply? More than or equal to 100 members, or more than or equal to 1/10 of the total number of members, whichever number is lower. That is a minimum requirement. Or if you consider from an issued share capital point of view, how much amount should be held by the shareholders? Minimum 1/10 of the issued share capital. And if company is not having a share capital, minimum 1/5 of the total number of members can file an application to the tribunal. But let's say there is a genuine case of oppression or mismanagement, but you are not able to pool up 100 members, or you don't have 1/10 of the issued share capital, or 1/5 of the total number of members, then what you can do is file an application to the tribunal. If tribunal believes that it's a genuine case and there is an actual possible case of oppression or mismanagement in the company, then tribunal may waive all the requirements. May waive. That means even if you do not satisfy, I will still accept your application. But is it the option of tribunal? Are we clear? So tribunal may waive all the above requirements to enable the members to apply. May, not mandatory. It may, based on the situation. Are we clear, everyone? Understood? Once again, a quick revision. Having a share capital, how many members? Minimum 100 members, or minimum 1/10 of the total number of members, whichever is lower. And issued share capital percentage, minimum 1/10. Company not having a share capital, minimum 1/5 of the total number of members. So if let's say one person can file an application if he has the consent of all the other persons. Are we clear? So any person entitled to make an application above, then any person on behalf of the others may make an application by obtaining the consent of the rest in writing. Are we clear? So their consent you obtain in writing, you apply yourself. That is possible. Are we clear? Now we are done with section 241 and we are done with section 244. Now if application is filed with the tribunal, of course tribunal will take an action. Yes or no? What can be the possible orders? What are the powers of tribunal to respond towards the relief of oppression or mismanagement? That is 242. If you recall, somewhere in our class, we have come across 242. Yes or no? Will you please help me revise that? Removal of director if appointed by tribunal under section 242. Yes or no? You can't remove with an ordinary resolution. That is what 242. Why will tribunal appoint and why will tribunal remove? Based on an application received for relief of oppression or mismanagement. Do you recall? Thank you. Okay, so what are the powers of the tribunal? If application is made under 241, tribunal is satisfied that yes, actually there is a case of oppression or mismanagement, then what it can do? It can order, number one, impose additional regulations, additional strict regulations, that these matters need special resolution or these matters need 90% approval. So additional regulations for the conduct of affairs can be imposed. By whom? By the tribunal. Second comes purchase of shares of the members who are actually involved in the misfeasance or persistent negligence. That particular tribunal can order buyback. So purchase of shares of the members, and consequently it can also order reduction of share capital. So what all the orders till now we have seen? First is regulation of conduct of affairs of the company in future. Next, purchase of shares of the members. Next, consequent reduction of share capital that you do in internal reconstruction. Yes or no? Like that. And restriction or transfer or allotment of security. So it is nothing but freezing of securities. To actually understand who are the persons involved, what will you do? You will restrict the transfer or allotment of securities. And the next, if any contracts are entered with the third party, that contracts can be terminated. If tribunal is of the opinion that that contract is for the person who entered into the contract is guilty of fraud, then that particular contracts can be terminated or set aside or modified. You can modify the terms and conditions. That means if it is a special price, you can decrease the price. That modification can also be ordered by tribunal. Next, termination or setting aside or modification of a contract between company and the directors. Are we clear? So first is termination, setting aside, modification of any agreement between company and managerial person or any director. Because he is involved in that, we can terminate, we can suspend, or we can reduce the rank. Next, terminate, setting aside, modification of any agreement between the company and third party. Now, moving on to the next. Tribunal has the right to remove any managing director, manager, or any other director. If someone has received any undue gains, then that can be recovered. So, recovery of undue gains made by managerial personnel. If tribunal believes it can appoint additional director, that is why we specified. If appointed by tribunal cannot be removed, and most probably he will be an independent director. And the next, imposition of costs. That is nothing but if tribunal has incurred any cost for inquiry, then who will recover, who will pay back that particular cost? The person who is guilty of that misconduct or misfeasance. Are we clear? That imposition of cost can also be ordered by tribunal. So what are the orders? First will be your regulations. Second, purchase of shares. Third, reduction of capital. And next, restriction on transfer or allotment of security. Now, two contracts. First is a agreement between company and managerial personnel or director. Next, company and third party. Both these agreements can be terminated, set aside, or modified. And next, removal of MD, manager, director, and appointment of additional director. Removal is there and appointment is also there. And recovery of any undue gains which are gained by the managerial personnel. Are we clear? Understood? That's all. Now, whatever the order, it's not like all the orders will be given. Based on the situation, whatever order is appropriate, it will be ordered by the tribunal. Order of tribunal will be received by the company. Now, company should file this order of tribunal with the ROC within 30 days. That's all. Are we clear? So, certified copy of the order of tribunal is to be filed with the ROC within how many days? 30 days from the date of receipt of the order. Are we clear? Understood everyone? So, let's say if a tribunal order is changing or altering an articles of association and memorandum of association. Are we clear? Now, subsequently, can the company make amendments for these resolutions or for these modifications? Answer is no. So, if a tribunal orders any alteration of MOA or AOA, further alteration by the company cannot be done which is inconsistent with that order. Order is specifying stricter regulations. What you are doing, you are trying to relax those restrictions. Is it possible? No. You want to make, you can change, you can alter articles of association or memorandum of association, but it should not be against the order of tribunal. Are we clear? So, with this we have completed 241, 242 and 244. 244 will give which members have the right to apply. 241, in two cases you can apply to tribunal, oppression and mismanagement. Who can apply? Members having right under 244 and central government. Central government believes someone is guilty of fraud, no sound business practices, causing injury to the interest of trade or defrauding the creditors or members, it can file an application to tribunal. Clear? What can be the actions of tribunal? Impose regulations, purchase shares and reduction of capital, termination of contracts between company and managerial personnel or any director, termination of contract between company and third party. Next, restrictions on transfer and allotment of security and removal of any MD, manager or director, appointment of additional director, recovery of undue gains. Are we clear? These can be the orders of tribunal. Tribunal has given an order, certified copy has to be filed with the ROC within 30 days of receipt of the order. That's all. Now moving on to section 243. So due to section 242, if there is any contract or if there is any agreement which has been terminated, set aside or modified, what can be the repercussions? So when an order to set aside or modify an agreement is made by the tribunal, case 1, can that third party claim any damages? So such person cannot claim any damages or compensation for loss of office. So the person who is losing the office, can he claim for compensation for the loss of office? Answer is no. Clear? Next. Now, can that managing director, manager or director be appointed in the same company? Reappointed in the same company? Answer is no. For a period of 5 years, he cannot be appointed in the same company. So, no MD, manager, director whose agreement is set aside shall not act as MD, manager or director for a period of 5 years. Can he act that? Yes. File an application to central government, give an opportunity for the central government to respond on that and then give their response to the tribunal. Tribunal will give approval, then only you can act as MD, manager or director. Are we clear? Yes. So when can you act? Even if the 5 years have not expired, if you want to act as a MD, manager or the director of the company, then you can do it with the approval of tribunal. But before that you have to apply to CG. Central government, it will not give approval. It will give its own opinion on that. That opinion will be considered and that approval will be given by tribunal. Are we clear? That's all. Now, the last section of 245. Last section of this unit, 245. Class action suit. So, I will give you a brief differentiation between 241 and 245. Please pay attention. So, 241 will give a right to members only, are we clear, to file an application for oppression or mismanagement. Yes or no? Now, here under 241, are members specifically asking for what remedy they want? Are they asking any specific remedy? Answer is no. What they are telling, this is the situation, please relieve us from the oppression and mismanagement. Appropriate order will be issued by whom? Tribunal. Yes or no? But here, under class action suit, not only members but also depositors also can file a class action suit with the tribunal seeking a specific remedy. What can be the specific remedy? Please ask the it's not like that. So ask the majority shareholder not act on the resolution, or else should not execute this ultra vires transaction, or else cannot perform this contract or arrangement. Specifically, you will ask for the remedy. That is the difference between 241 and class action suit 245. Are we clear? Shall we get into the discussion? Yes. Why is it called class action suit? Class of members, class of depositors. A group of members will be filing an application who are facing the same issue in the company. Are we clear, everyone? Yes. Now let's get started. First of all, who can apply or who can file a class action suit? First, company having a share capital. Members, how many members? More than or equal to 100 members, or there it is 1/10. Here it is 5% of the total number of members, whichever is lower. Or else, if you check the issued share capital, for listed company a minimum of 2%, for an unlisted company a minimum of 5%, and company not having a share capital, both the same. 241, 244 is same, 245 is also same. What is it? 1/5 of the total number of members. Are we clear? Now moving on to the number of depositors who can apply. Here also the number of depositors is minimum 100 or 5% of the total number of depositors, whichever is lower. And depositors to whom company owes at least how much? 5% of the total deposits. Are we clear? Shall we revise once again? Once again. So members, how many? Minimum 100 members or 5% of the total number of members. Next, whichever is lower. Issued share capital for listed company minimum. Unlisted company minimum 5%. Now when it comes to company not having a share capital, 1/5 of the total number of members. Depositors, how many can apply? 100 depositors or minimum 1/5 of the total number of depositors. And the next is depositors to whom company owes how much? Minimum 5% of the total number of, total amount of deposits. Are we clear? So, class action suit is filed by any person or group of persons representing the persons affected by an act. Simple. With the tribunal, where will you apply? With the tribunal. Seeking following one or more orders. You will specifically seek what order you need. So, what can be the specific remedies? First, restraining order. So, some of the people will have restraining order. Do you know what's a restraining order? Restrain means stop. So, it may be not that, people in India, it's not that popular, but in US or in some other countries where people with high net worth, people who have a lot of influence, and like celebrities, what they will have is, if let's say celebrities has any threat from a person, what they will go to the court, and they will get a restraining order that that person should not be anywhere near 10 meters around me. So that is a restraining order. Yes, of course you will have restraining orders. So here it is not restraining orders for person stopping or stalking. Here it is restraining order, restraining or stopping the company from responding or taking action on a particular resolution or a decision. Are we clear? So what remedy can you seek from the tribunal? First, restraining the company from committing an act which is ultra vires MOA or AOA. So let's say company's object clause says that company is in the manufacturing, but company is investing in cryptocurrency speculation. Is it ultra vires? Answer is yes. So that is why what this class action suit can specify, restrain the company from making that speculative cryptocurrency investment. Are we clear? Because it is ultra vires MOA or AOA. So first restrainment is from committing an act which is ultra vires the MOA or AOA. Second, from committing a breach of any provision. You are not following an internal management rule in AOA. AOA says that to approve a loan worth this much amount, you have to pass a special resolution, but you're not passing a special resolution. Can you restrain? Answer is yes. So, from committing a breach of any provision of MOA or AOA. Next, restrain the company or the directors from acting on a resolution. So they have passed a resolution. Let's say in the same example I'm taking, they have to pass a special resolution, but they have passed an ordinary resolution and they are executing that loan. So you can restrain the company or director from taking action on that resolution. Clear? And from doing any act which is contrary to any act or law. Act means here verb, here provision. Are we clear? So next, from contrary and restraining the company from action contrary to any resolution. So acting on the resolution which is not beneficial to the company, or acting against the resolution. Any restrainment can be sought. Are we clear, everyone? So first, what all you can restrain the company from? Not you are restraining, but you are asking the tribunal to. So what is it? First, committing an ultra vires act. Second, committing violation of any provision of MOA or AOA. Acting on a resolution. Acting contrary to any act or rule. Act or law. And acting against any resolution. Are we clear? Now, once again, one more remedy that can be sought is to declare a resolution as void. So if it is not beneficial for the company, any investment, loan or a resolution, decision, appointment of a related party in the place of office, if it is not beneficial for the company, you can ask the tribunal to declare the resolution as void. Clear? And the next, you can seek what? Claiming damages. From whom? From company and directors, if they perform fraudulent or wrongful acts, or else auditors or experts where due to their misleading statements I have suffered loss. There is a possible chance of misstatement, not possible chance, there is a misstatement in the company, but auditor has given a clean report. Is this a misleading statement for the investor? Answer is yes. So that can be the case where you can claim compensation or damages from the auditors or experts. Are we clear? So you can seek a remedy to claim damages or compensation from company and directors for fraudulent or wrongful acts, and from auditors and experts for misleading statements or reports. Are we clear? To seek any other remedy from the tribunal. Any other specific remedy if you have, you can seek from the tribunal. Are we clear with this? First is restraining. Second, declaration of a resolution as void. Third is to claim damages or compensation. And the last one, any other remedy from the tribunal. That's all. Now, if application is admitted, who is accepting the application? Of course, tribunal. Are we clear? Now, what is the procedure? Immediately as soon as the tribunal accepts and admits the application, public announcement will be made. Are we clear? So public notice is served to all the members or depositors of that class that we are executing action against this particular resolution or a decision or an act. Next, if two groups of persons are coming, are we clear? But for the same cause, they want same restrainment, but two groups are coming. So what you can do, you can consolidate those class action suit. And the next, two class action suits for the same cause is not permitted. You can't permit. So that is why what you can do, you can consolidate. So consolidation of all the suits to a single application, and two class action suit for the same cause is not allowed. If you want to, if two groups wants to file, what you will do? Combinedly you will file one class action suit. And the last case, whatever the cost you are incurring, whoever the members who are incurring the cost to file the class action suit, then they can recover from the person who is guilty of fraud. Are we clear? So, costs incurred for class action suit shall be borne by the company or any other person responsible for such oppressive act. Are we clear, everyone? Yes. And the last one, that specific remedy, whatever is sought, the tribunal will give that order. That order is binding on whom? No, what do you mean by binding? Who all should follow that? Company, members, depositors, auditors, and any other person associated with the company. That's all. And the last is penalty. What is a penalty? Failure to comply. The order is there. Order has been issued by tribunal, but you're not following the order. What will be the penalty? For company, the fine is minimum 5 lakhs, maximum 25 lakhs. Officer in default, imprisonment may extend to 3 years, and penalty, that is fine, a minimum of 25,000 to maximum 1 lakh. So just a quick revision of 245. We have seen how many number of members can file an application. Instead of using the phrase like me filing an application, what you have to use? Filing a class action suit. Who can file? 100 members, minimum 100 members, or minimum 5% of total number of members, whichever is lower. And issued share capital in case of listed company a minimum of 2%. In case of unlisted company a minimum of 5%. Company not having a share capital a minimum of 1/5 of the total number of members. Depositors, minimum 100 depositors or 5% of total number of depositors, whichever is lower. Or else company owes at least 5% of total number of deposits, to whom that particular depositors can file a class action suit. Clear? Remedies we have seen: restrainment, declaration of resolution as void, claiming damages or compensation, and the last one, any other remedy available. Clear? That's all. So tribunal will admit the application and public notice will be served to all the members and the depositors. Consolidation of all the class action suits into a single application. 2 class action suits for a single cause cannot be accepted. Are we clear? So who will bear the cost of the class action suit? Initially company, and company can recover from the person who is actually responsible for the oppressive act. Whatever the order of tribunal is, it's binding on members, company, depositors, auditors, or any other person associated with the company. That's all. Penalty, one time revision is only more. Okay, so that's all. We are done with prevention of oppression and mismanagement. Wow, record breaking speed, 40 minutes. Not bad. Have I gone very fast? That means you didn't understand? Give me an answer, no? You need some more revision. Huh? Yes. It's there. That is what happens if I speak in a low voice. Okay. So yes. Okay. Which question is important that you have to revise is question 4. 4, 5, 6, 9. 4, 5, 6, 9. 9th question, last question lo application బదులు class action suit అని రాయండి, because ఆ question అయితే class action suit గురించే. Sorry my dear students, I misspoke in Telugu. So instead of application, please write class action suit. Okay, so question 9 is class action suit, and 4, 5, 6 is related to 241 only. Okay, chalo, we are done with unit 11. Yes, now let's start with the revision of module 2, insolvency and bankruptcy code 2016. So I request all the students to please pay attention and listen to the class. Okay, so here I am only going to discuss corporate insolvency resolution process. I will not be discussing personal insolvency. Okay, so if we have to correctly prescribe the flow of the information here, first I will discuss the introduction to IBC, that is nothing but the applicability, purpose of the code, and then I will move on to the corporate insolvency resolution process. Who can initiate, who cannot initiate, and what is the process, who all will be involved, adjudicating authorities, appointment of IRP, appointment of RP, constitution of COC, all these contents will be discussed in the corporate insolvency resolution process. After which we will move on to the end, which is nothing but the liquidation. Everyone please pay attention. Okay, clear? So first let's start with understanding the meaning of the words insolvency and bankruptcy. What is the meaning of insolvency? It is a financial state where that person is unable to pay off the debts with the available assets. That is the position of insolvency. Clear? Now, if you are not treating the insolvency and it is left unresolved, then it will lead to liquidation in case of corporates and LLPs, and it will lead to bankruptcy in case of individuals and firms. Are we clear? So this is the meaning of the word insolvency and bankruptcy. Now, moving on to the next important question, purpose of the code. What is the purpose of bringing the separate code for insolvency situation here? So here IBC 2016 is consolidating various laws related to insolvency of different types of individuals. For example, for Companies Act there are winding up provisions, and there are Sick Industries Companies Act, as well as other provisions related to Debt Recovery Tribunal and Recovery of Debts Acts. All these acts for different individuals, different insolvency situations are consolidated and brought under one shelter, which is the Insolvency and Bankruptcy Code 2016. So that is why the purpose of IBC, the first purpose is to consolidate and amend the laws of reorganization and insolvency resolution of. Here we are not only referring to companies, all the corporate entities like companies as well as the LLPs, partnership firms, proprietorship firms, individuals, all fall under the purview of IBC 2016. So let's revise this. The first purpose of the code is to consolidate and amend the laws related to reorganization and insolvency resolution of corporate persons, individuals, as well as partnership firms. That too, they have fixed a time period. Previously, any case related to insolvency used to take years to solve, because many claims used to be submitted and many cases used to be submitted by the creditors. So right now, to avoid that situation, specifically the purpose is to maximize the value. If the resolution process is quick, what happens is company will be able to regain its asset value. So maximization of the asset value and promote entrepreneurship. What do you mean by promoting entrepreneurship? Even if companies incorporate, start a business, if they face a financial situation like insolvency, there is IBC 2016 to resolve it quickly. Will that give an assurance for the companies to incorporate? Answer is yes. So that is why it is promoting entrepreneurship. For that case, they have fixed a time period to complete the resolution process. So this whole thing is once again we'll revise it, to consolidate and amend the laws of reorganization, insolvency resolution of corporate persons, individuals, partnership firms in a time bound manner for maximization of asset value, promoting entrepreneurship, availability of credit. If the situation is resolved, then what happens? New credit will be available. Are we clear? Next, moving on to the second purpose, balance the interest of stakeholders. How? After the situation is in liquidation, after the liquidation, what happens is the importance is given in a way that first the workmen dues have to be paid, then you have to pay the secure debt, then you have to pay the dues towards the employees, then any secure or any other left out secure debts, then you have to pay the government dues, then preference shareholders, then equity shareholders. Now here you are balancing the interest of the stakeholders. That is also achieved by the Insolvency and Bankruptcy Code 2016. So that is a distribution of assets that we will be dealing at the end. Okay, so balance of interest among all stakeholders, including change in the alteration of order of priority of payments of government dues. Are we clear? So I'll give you a quick revision. So first payment you have to make towards the corporate insolvency resolution cost or liquidation cost. That has to be cleared. After that, you will pay to the workmen. Are we clear? And then you will pay to the secured creditors. After that, you will pay to the employees, any left out dues of secured creditors, and then to the government authorities, any dues related to the income tax and all, any statutory obligations. And then you will move on to the unsecured creditors, to the preference shareholders, and to the equity shareholders. Are we clear? This is the flow. Here we will achieve the balance of interest of the stakeholders. And the last is to establish a regulatory authority to oversee insolvency professional agencies, insolvency professionals, and information utility. What is the regulatory authority? Insolvency and Bankruptcy Board of India. So this regulatory body will oversee what authorities? It will oversee insolvency professional agencies. What is the role of insolvency professional agencies? They will enroll the insolvency professionals. Who are insolvency professionals? Who will actually implement the code and resolve the situation of insolvency. So if there is a CIRP initiated in a company, who will come into the picture to resolve? Insolvency professional. Are we clear? Which agencies will recruit and register this insolvency professional? Insolvency professional agencies. In India, there are 3 insolvency professional agencies. Agencies by ICAI, ICMAI, ICSI. Are we clear? These are the 3 insolvency professional agencies. Now these agencies will recruit whom? Insolvency professionals. Are we clear, everyone? So these insolvency professional agencies, insolvency professionals, will be overseen and regulated by whom? IBBI. Are we clear? Yes. Now comes another pillar, the last, information utility. What is information utility? Information utility is also an institute which maintains a database and electronic information of all the lenders, facts, previous cases of CIRP, information related to insolvency, corporates, and all that information is stored where? With this institute. That institute is called information utility. Are we clear with this? Now, just a quick glance of the purpose of code: to consolidate and amend the laws related to reorganization and insolvency resolution of corporate persons, individuals, partnership firms in a time-bound manner to achieve what? Maximization of asset value, promote entrepreneurship, and availability of credit. What is the second purpose? Balance of interest among all stakeholders, including change in the alteration order of priority of payment of government dues, and to establish Insolvency and Bankruptcy Board of India. From now on, whenever I refer to board, I am referring to IBBI. Clear? Now comes another question which was asked in June 2018, December 2018, as well as June 2023. So let's see. What is the question? Applicability of the code. So what all types of persons insolvency cases will be dealt under the IBC 2016? First comes persons incorporated under the Companies Act 2013 or any previous company law. Second, persons incorporated or governed under any special act. Third, LLPs. Are we clear? Next, partnership firms. Next, proprietorship firms. Next, personal guarantors to corporate debtors. So a person, individual is acting as a surety for a debt. To whom? To the corporate entity. Clear? Corporate entity has taken a debt from a third party. Who is standing as a guarantee for that? An individual. That person is called personal guarantor to corporate debtor. For that person's insolvency also, you can deal under IBC 2016 and as well as individuals and other body corporates as notified by central government. Very important from an examination point of view. As you can see, it has already been asked 3 times. So that is why we'll revise once again. Persons incorporated under the Companies Act 2013 or any previous company law. Keep that in mind. Okay. Second, persons incorporated under Special Act, LLP, individuals, partnership firms, proprietorship firms, personal guarantors to corporate debtors, and the last, other body corporates as notified by central government. Now, this code is not applicable to a whole segment. What is that? Financial service providers. Examples: banks, financial institutions, mutual funds, insurance company, asset reconstruction company. For all these financial service providers, IBC 2016 is not applicable, except for non-banking financial company, including housing finance company. You don't need to be at that detail, just write down non-banking financial company with an asset size more than or equal to 500 crores. For this NBFC, IBC 2016 is applicable. Clear everyone? Yes? Understood? Okay. Now moving on to the 5 pillars. That is the foundation of the code. First and the foremost pillar is the adjudicating authority. The judicial authorities which act as a persons receiving the applications of insolvency for corporate entities and for LLPs. What's the adjudicating authority? NCLT. Clear? And moving on to the persons, partnership firms as well as individuals. The adjudicating authority is Debt Recovery Tribunal. So if you wonder, it may not be here, but it is here. After IBC, for corporates, the NCLT, National Company Law Tribunal, is acting as adjudicating authority. And for individuals and firms, it is Debt Recovery Tribunal. MCQ will be asked. Okay, so for individuals it is Debt Recovery Tribunal, and Appellate Tribunal for both the cases, not that important, but just to clarify, National Company Law Appellate Tribunal and Debt Recovery Appellate Tribunal. That's all. Clear? Now, five pillars I've told you. The first pillar is adjudicating authority, which acts as a judicial authority to solve the cases and ultimately admit whether it is approved or whether it is liquidated. Who will give the final order? Adjudicating authority. And then comes the second pillar, which is Insolvency and Bankruptcy Board of India, to oversee and regulate what all authorities? Insolvency professional agencies, information utility, and insolvency professionals. IPs are registered under IBBI only. But who will recruit and where they will be enrolled? Insolvency professional agencies. And where all the data will be stored? Information utility. Are we clear with this? Till now we have studied 2 important questions: purpose of the code, applicability of the code. Now moving on to corporate insolvency resolution process. Before that, we learned 3 important words: corporate debtor, financial creditor, operational creditor. Who is a corporate debtor? Any corporate entity which owes a debt to a person. That means it is liable to make payment to a creditor. That company will be called as a corporate debtor. We are not only referring to company, we are also referring to LLP. Keep that in mind. Okay, clear? Now, who is a financial creditor? A person to whom corporate debtor should pay financial debt. Are we clear? These deposit holders, debenture holders, as well as the persons who have lent money to the company in the form of loan, all these persons will be categorized as what? Financial creditors. And next term is operational creditor. The person to whom corporate debtor owes operational debt, that is payment towards goods, services, employee payments, government dues. All these dues are considered as operational debt. And if you are liable to pay an operational debt to a party, that person will be called as a operational creditor. Are we clear with this? 3 terminologies: corporate debtor, financial creditor, and operational creditor. So provides financial assistance to the corporate debtor, provides goods and services on credit to the corporate debtor. So to corporate debtor who owes a debt to any person. Here corporate debtor means a corporate person, that may be an LLP or a company or any other body corporate. Now, what is CIRP? Don't say corporate insolvency resolution process. Okay, so simple. A corporate debtor commits a default. Default is nothing but default in repayment of financial debt or operational debt. And if the default amount is a minimum of rupees 1 crore, previously it was 1 lakh, central government has the power to increase it to 1 crore. It utilized the power and it has increased the default amount to rupees 1 crore. So right now, if you want to initiate, that is start a CIRP process, how much should be the minimum amount of default? Rupees 1 crore. Are we clear? So the initial stage of CIRP is to commit a default. Who has to commit default? Corporate debtor. Are we clear? So simple, if that corporate debtor commits a default of rupees 1 crore, then who can initiate CIRP? Who can file an application that this person is insolvent, he is not paying, he is not making the payment, please resolve this issue? Who can file that application here? Financial creditor or operational creditor or the company or LLP itself, that is a corporate debtor itself also can file an application. And quick question, where he will file an application? Adjudicating authority. Yes, you are right to mention NCLT, but first, any question that you write down specifically under IBC, first start using the word adjudicating authority. Then after that, mention that since it's a corporate person, the adjudicating authority is NCLT, full form. After that, start using NCLT. Are we clear? Understood. First, you have to use the word adjudicating authority. So, another scope of question, a small question, June 2019 and December 2021. The question is, who can initiate CIRP? That means who can file an application to the adjudicating authority? Who can file? Three persons, financial creditor, corporate debtor and operational creditor. Are we clear with this? Now comes the next question. Persons not entitled to initiate CIRP. So they cannot file an application for initiating CIRP. What's the question? Who are the persons not entitled to initiate insolvency resolution process under IBC 2016? 2 times it was asked. Let's see. First category. Already that person is going under CIRP. Are we clear? Can that company who is going under CIRP apply for CIRP again? Answer is no. Next, corporate debtor that has completed CIRP. When? During the preceding 12 months from the date of making the application. The last 12 months itself CIRP is completed. Then that person will not have the right to file CIRP. Next, a corporate debtor, the company or the financial creditor, already 12 months back a resolution plan is approved. Did they follow that plan? Answer is no. They violated the terms. So both the corporate debtor and the financial creditor cannot initiate CIRP. And then comes the last, a corporate debtor in whom already liquidation order is issued. Are we clear, everyone? Now, simple. Here you can assume that these parties can never initiate CIRP. That is not the case. They can't initiate CIRP on that corporate debtor itself. Can they file for the initiation of CIRP against some other corporate debtor? Yes. Because in that position, this corporate debtor may be in a position of financial creditor or operational creditor. Are we clear? So on itself they can't file CIRP. On other body corporate or on other corporate debtor they can file CIRP. Are we clear? Understood? Yes. So if as a corporate debtor I am undergoing CIRP, I can't file CIRP. Second, CIRP is completed when? Preceding last 12 months from the date of making application, or else CIRP is completed at the same time resolution plan is approved. I violated the terms and conditions of resolution plan approved 12 months before the date of making application. Both the corporate debtor or the financial creditor will be ineligible. And the last, corporate debtor on which already the liquidation order has been issued. 4 different categories of persons who cannot initiate CIRP. Are we clear? So 1, 2 and 3 and 4. 4 questions. Applicability of the code, purpose of the code, who can initiate CIRP, who cannot initiate CIRP. Are we clear, everyone? Yes. Now comes 3 more questions. We already have seen who can initiate CIRP: financial creditor, operational creditor, corporate debtor. So 3 different processes we'll see. So first, CIRP initiated by financial creditor. The first and the foremost requirement is committing a default. Yes. Okay. So first, if default is committed of rupees 1 crore, then the financial creditor itself alone or jointly with others, they can file an application for initiation of CIRP with the adjudicating authority. So when a default has occurred by the corporate debtor, a financial creditor either by itself or jointly with other financial creditors may file an application for initiating CIRP before adjudicating authority. And it may not be that important from an examination point of view, but since you will have that doubt, so that's why I will clarify. Yes. Now, so you might wonder, so there is a limit? No. Minimum 100 financial creditors or 10% of the total number of financial creditors. Only these people can validly file an application. You're wrong. This condition will be applicable only if the financial debt is in the form of securities or deposits. Clear? General case, a person has lent a loan to the company not in the form of securities, not in the form of deposit. He alone, if the default amount is 1 crore, he can alone file an application. Are we clear? But if the financial debt is in the form of securities or deposits, then an application for initiation shall be filed only by jointly by minimum, that is not less than 100 of such creditors in that class, that in specific class of securities or specific class of deposits, or else not less than, that is a minimum of 10% of total number of such creditors in the same class, whichever is less. Clear? Generally alone or by itself or jointly with other financial creditors, they can file an application before adjudicating authority. Are we clear with this? Yes or no? Okay. Next, second step. If you are filing an application, you need to mention few details in the application. What are the details? Enclosures in the application. The first, application shall be submitted to the NCLT as well as to the registered office of the corporate debtor. Keeping that aside, what are the contents of the application? Record of default, and also you have to give an evidence of default. Clear? And the next is to propose. Financial creditor, when he is filing an application of CIRP, for sure he has to propose the name of resolution professional to be appointed as interim resolution professional. IRP from now on refers to interim resolution professional. It's not insolvency resolution professional. It is interim resolution professional. Are we clear? That name will be recommended by while filing the application by the financial creditors. And the last, any other information as may be specified by the board. What board I'm referring to? IBBI. Are we clear? Yes. So what are the contents of the application? Record of default, which is recorded either if information utility has the proof, then you will give a record of that, or else such other record or evidence of the default as may be specified. And the name of the resolution professional proposed to act as interim resolution professional, and any other information as may be specified. IRP is interim resolution professional. Are we clear now? No worries. What is the meaning of interim resolution professional and resolution professional? I will discuss. Okay, no hurry. And the next, after you file the application to the NCLT will have 14 days to verify whether the default has actually been committed or not. How many days? 14 days. NCLT shall determine the existence of default within 14 days from the date of making the date of filing the application. So after that, what can be the order of NCLT? Two possible cases: admission of the application or rejection of the application. So let's say case 1, when NCLT can admit the application, default actually has occurred. Yes, there is a proof that the corporate debtor has committed a default. Next, application is complete. All the details have mentioned. And the next, whomever you are proposing as interim resolution professional, against him, there are no proceedings. There are no disciplinary proceedings pending against him. Are we clear? Since he is involved in the process of insolvency resolution, what happens is they have few codes to follow while resolving. So if they violate the code, that is nothing but they will face disciplinary actions. If it is pending, then that person can't be recommended. So when the NCLT will admit the application, default occurred, application complete, and no disciplinary proceedings are pending against the proposed RP. Resolution professional. Clear? Then NCLT will admit the application. And complete opposite to that, default has not occurred, application is incomplete, you have not enclosed the full details, and the last case, disciplinary proceedings are pending against the proposed RP, then it will reject. For sure, it is not fair to directly reject. It will give opportunity to rectify for 7 days. So before rejection, NCLT shall give a notice to the financial creditor to rectify the defect within 7 days of receipt of notice. Clear? So after that, if the NCLT admits the application, the date of admission will be equal to the date of commencement of CIRP. So what's the date of commencement? Starting CIRP, date of admission of application, not date of filing application to to the NCLT. Are we clear? Date of admission of application. Clear? Now moving on to second set of process, that is initiated by operational creditor. He can't directly file an application to CIRP if default occurs. There is a step here. What is that? Serve a demand notice to the corporate debtor. What do you mean by demand notice? Paisa de do. Demanding payment. Okay. So, serving a demand notice to the corporate debtor. Are we clear? So, operational creditor should serve a demand notice to the corporate debtor demanding payment in respect of default. Are we clear with this? Understood? Now, how many days will be available for the corporate debtor to respond? 10 days. What can be the response within 10 days? Either that corporate debtor can fulfill the payment, or else the corporate debtor should communicate that there is a dispute which is existing, due to which I have failed the payment of debt. Are we clear? So either communicate the existence of existence of dispute due to which you are not making the payment, or else at least make the payment. Any two things should be done within 10 days, or else this will give a chance for the operational creditor to file an application to adjudicating authority. Clear? So within 10 days of receipt of notice shall acknowledge the existence of dispute, or else make the payment of unpaid operational debt. Now comes step 2, that is nothing but if no reply is received from corporate debtor within 10 days, then what action can operational creditor take? Operational creditor can file an application to National Company Law Tribunal, that is the adjudicating authority. Are we clear? Yes, that is the differentiating step between financial creditor and operational creditor. Now, moving on to details that you have to include in the application. First, you have to communicate that a demand notice is served to the corporate debtor demanding the payment, and you have to give a copy of affidavit that no payment is received and no communication of existence of default is received. And the last, name recommend. This is optional for operational creditor, not mandatory. For financial creditor, mandatory, they have to propose. But in case of operational creditor, it is recommended. May propose IRP, or else what will happen? Adjudicating authority, after it admits the application, it will communicate to the IBBI that this person has filed the application. Now we are seeking you to recommend a person as interim resolution professional. IBBI will respond with the interim resolution professional within 10 days. Are we clear? So operational creditor has no obligation to recommend the person as IRP. Adjudicating authority will take care of that. Are we clear with this? Understood everyone? Now moving on to, of course this is again the same step. NCLT within how many days it will verify the existence of default? 14 days. Are we clear? After that, two orders, admission of the application or rejection. When it will admit, case 1, application is complete. Next, there is no payment of unpaid operational debt. Payment is not fulfilled. Next, whatever the invoice or notice is there, that is nothing but demand notice. Payment has been delivered. Yes, you successfully delivered to the corporate debtor. Next, no disciplinary proceedings are pending against the proposed IRP, if any, if proposed. Are we clear? If not proposed, this will not be applicable. If these three are satisfied, then NCLT will admit the application. Are we clear with this? Understood? Simple. Application complete, no payment is made, demand notice is served, and also no existence of default is communicated. It is not communicated, that's why I am admitting the application. If it's communicated, you can't file an application only, first of all. Yes or no? Okay. Next, if application is incomplete and payment is completed, that there has been payment of the unpaid operational debt and creditor has not delivered the invoice or notice of payment, that is demand notice is not served to the corporate debtor, because that is important. The first step is not successfully satisfied and any disciplinary proceedings are pending against, they are pending against the proposed RP. So in this case, the application will be rejected, but before that, NCLT shall give a notice to rectify the defects within 7 days from the date of notice. Are we clear? And the date of admission of application will be the date of commencement of CIRP. Are we clear? The only differentiation is demand notice. Okay. Now moving on to third person who can initiate is corporate debtor itself. Yes or no? Now, so here corporate debtor, in order to file an application, first it has to commit a default. So corporate debtor has committed a default. Then corporate applicant, company itself can't think and file an application. No. Who will file? In the name of company, or else member or partner. Partner, why? I am referring to LLP also. Okay, clear? And person with managerial powers or person having control of financial affairs. Any person, even one of the directors, if they want, they can represent, and in the name of company they can file an application to NCLT. But the requirement is to pass special resolution before you file. It's not like every director can go and file an application. Okay, so simple. Corporate debtor has committed a default, then corporate applicant will file an application for initiation of CIRP. Who can be corporate applicant? Corporate debtor, or else a member or partner, or else person with managerial powers, or person having the control of financial affairs. Are we clear with this? Yes. Now, enclosures in the application. If corporate debtor is filing an application for CIRP, the first thing, information related to books of accounts should be included. It's books of accounts and such other documents relating to such period which will give an evidence of the default committed. That books of accounts must be included in the application. Next, the proposed RP, and then important special resolution. Are we clear? So special resolution has to be passed. So special resolution passed by the shareholders of the corporate debtor. If it is a LLP, then at least 3/4 of the total number of partners must approve filing an application with the CIRP. Are we clear, everyone? Yes, simple. 3 requirements. Books of accounts should be served. Second, special resolution approving filing the application with the adjudicating authority, or else approval of at least 3/4 of the total number of partners. Clear with this? And the last is to propose the name of interim resolution professional, as the case may be, approving filing the application. These 2 cases. Understood, everyone? Yes. The step 3 is again common. NCLT shall determine the existence of default within 14 days from the date of filing the application. And when NCLT will admit the application, only two things here, very simple. Application is complete, no pending proceedings are against the proposed RP. And if application is incomplete and pending proceedings are against RP, reject the application. But before rejection, 7 days will be given to rectify the defects. And the last, on the date of admission of the application, it will result in commencement of CIRP. Clear till now? Yes or no? So initial step of CIRP is completed. What is it? Commencement. We are still in commencement only. Okay? Yes? So quick recall. We have studied till now purpose of code, applicability of code, 5 pillars. Who are the 5 pillars? Adjudicating authority, Insolvency and Bankruptcy Board of India, Insolvency Professional Agencies, Information Utility, Insolvency Professionals. Clear with this? And then, who can initiate CIRP? Financial creditor, operational creditor, corporate debtor. Who cannot initiate CIRP? Corporate debtor undergoing CIRP. Corporate debtor for which CIRP has completed 12 months before the date of making the application. Now, corporate debtor or financial creditor who has violated the terms of a resolution plan approved 12 months from the date of making application, and corporate debtor on whom the liquidation order has been passed. Clear with this? Yes. And we have seen 3 different processes for 3 different persons. Financial creditor, operational creditor. Operational creditor, one thing that you have to remember is demand notice. Clear? That's all. And you have one thing that you have to remember for corporate debtor application, special resolution in case of company and 3/4 of the partners must approve in case of LLP. Clear? Yes. Now on the date of admission of the application by the adjudicating authority, it officially begins the corporate insolvency resolution process. Now after admission of the application, NCLT will order 3 things: moratorium, public announcement for submission of claims, and the last one is to appoint interim resolution professional. Okay, now even if I clarify you this meaning in the next 5 minutes, but still you will ask me. That is why, please, I need your 100% attention for the next 5 minutes. After that, if you want, you sleep. Okay? So, because if you don't understand this, even if you wake up in the middle of the conversation, you'll be confused. Okay? So, simple. Difference between interim resolution professional and resolution professional. Now, if actually a corporate insolvency resolution process is commenced, whose opinion we have to consider? Management or creditors? Because they are the person who will face any issues. If payment is not made, they are the person who will really suffer. Yes or no? That is why initially application will be filed either by financial creditor or corporate debtor, whoever it is. So okay, you propose interim resolution professional, but who will ultimately decide who will be the resolution professional? Creditors. Why? If any resolution plan is coming up, that should be approved by whom? Committee of creditors. That means creditor should approve it. Why? Because our debt, you have to pay to us. Only if we approve with the resolution plan, then you have to proceed with that. So that is why, since creditors play a significant role in the insolvency process, is it fair that they have no participation to appoint resolution professional? It's not. So that is why, till committee of creditors is formed, who will play that intermediate role of resolution professional? Interim resolution professional. Finally, who will decide? Committee of creditors. In the first meeting only, they will decide whether they want this IRP to act as the final professional, or else they need some other person. That is the difference between interim resolution professional and resolution professional. Here, resolution professional is being appointed by whom? COC, Committee of Creditors, because ultimately who will be affected due to a insolvency? Creditors will be affected. That is why they should have the option to choose who will carry out the process of insolvency, or sorry, resolution of insolvency. That is why, that's the difference between IRP and RP. Are we clear with this? So till COC is constituted, who will form the Committee of Creditors? IRP only. Clear? Interim resolution professional, he will get the names of all the financial creditors, he will form that group will decide whether this person will continue as RP or we need a new person to be appointed as RP. Clear everyone? Yes? Now let's continue. So on the date of admission of the application, 3 things will be ordered by the NCLT. First, moratorium. What is moratorium? Temporary suspension of all legal actions against the company. That means if moratorium period is declared, no fresh suit can be filed against the company, or any pending suit cannot be proceeded, or else court has already given order, or court has already given an order. Can you execute that order during the moratorium period? No. So let's say company has borrowed a loan from a bank, and bank, since the company is not paying any repayment of the loan, so bank wants to enforce its security. What do you mean by that? Bank wants to take over the company, or bank wants to sell any assets. Can bank initiate that enforcement of security during moratorium period? No. Any legal action against the company is suspended. Are we clear? So you has faced any default from the company, what you will do? Submit a claim. Company has to pay me this much amount. Submit a claim to the IRP. That is why public announcement is made. Are we clear? So the meaning of moratorium, a period during which all suits and legal proceedings against the corporate debtor are suspended. Why? To carry out CIRP smoothly. So instead of wasting our energy to execute all the deeds or suits or proceedings, we are focused on one case. What is that? CIRP. That is the purpose of IBC. Quicker resolutions. Are we clear everyone? Yes? So moratorium, I hope you have understood, temporary suspension of all the suits and legal proceedings against the corporate debtor, and before that it will appoint interim resolution professional and then make a public announcement. So why public announcement is made? If some other creditors who face the same issue, they will come and submit their claim. Are we clear? If claim is submitted, then only resolution professional will understand you are a financial creditor. Then he will add your name to the committee of creditors. Are we clear with this? So this is the first step after commencement of the CIRP, executed by the adjudicating authority. Moratorium, public announcement for submission of the claims, and appoint interim resolution professional. Clear? Yes. So when will the moratorium period end? After completion of CIRP. Understood? That's all. Just give me 1 minute. Till now, any more doubts? Am I going a little fast? Shall we continue? Yes. So NCLT, after it receives the application, after it admits the application, we said that it will appoint interim resolution professional. So for appointing interim resolution professional, NCLT can do what? Appoint the same recommended person as interim resolution professional only if no disciplinary proceedings are pending against the IRP. Clear? So resolution professional who is recommended by financial creditor, operational creditor and corporate debtor shall be appointed as interim resolution by NCLT on the commencement of CIRP, provided no pending disciplinary proceedings are against the IRP. Clear with this? Yes. Now in the same case, operational creditor, it is optional. Not mandatory to propose IRP, yes or no? If no name is proposed, then what happens? Adjudicating authority will submit a request to IBBI to recommend a person as IRP. So IBBI within 10 days it will confirm and check the background of the interim resolution professional and will recommend to the adjudicating authority. Adjudicating authority will appoint him as IRP. Are we clear with this? Now moving on to the duties of IRP. So now IRP is in the company. Before that, from the appointment date, all the powers of the board of directors will be suspended. No longer board of director can execute any powers or exercise any actions in the company. All the powers will be vested in the hands of interim resolution professional. So from the appointed date, the IRP takes over the management of the corporate debtor affairs. The powers of the board of directors or the partners are suspended and exercised by whom? Interim resolution professional. Are we clear? So since IRP has taken over the control, officers and managers must report and provide necessary documents and records to whom? To the IRP. This is the answer for a question which is management of the affairs. Are we clear? Management of the affairs. Clear everyone? Yes. Now IRP should run the affairs of corporate debtor as if it's a going concern. Clear everyone? So IRP is not here to liquidate the company. He is here to resolve the company. Yes or no? So even if board of directors powers is suspended, still IRP will continue to operate as a management, and IRP should take over the business as if it's a going concern. Are we clear? So vested with the management power similar to board of directors. That will be the power of what? Interim resolution professional. So if IRP should run the business as a going concern, what all activities he can carry out, what powers he has? He can execute all deeds, like any agreements are there, agreements can be executed. Receipts, he can execute receipts. He can execute documents in the name of corporate debtor. And the next, he can take actions whatever is specified by IBBI. So take actions as specified by the board subject to any restrictions. And all electronic records in the information utility, who can access? IRP can access to verify the any lender facts, all this. And the next, he will have the access to books of accounts, records and other documents, not only from the company but also government authorities and auditors, and responsible for compliance with all the applicable laws on behalf of the corporate debtor. Are we clear with this? So if the question says IRP to carry out the business of corporate debtor as a going concern, what all activities he can perform? Execute deeds, receipts and documents, take actions as specified by board, access electronic records from the information utility, access books of accounts, records and other documents from accountants, government authorities and auditors, and responsible for compliance with the all laws. Are we clear? Now moving on to duties of IRP. As an IRP, my primary duty is to what? Two primary duties are there. Collect all the claims. First, public announcement is made. To do what? Submit their claims. So who will collect that claims? IRP will collect that claims. After he collects the claims, he will know who are all the financial creditors. Now he will form committee of creditors. Are we clear? So collect all information relating to assets, finances, operations of corporate debtor for determining the financial position of corporate debtor, and compilation of claims received from public announcement made, and constitution, that is to form committee of creditors and monitor the assets. Since it's the duty that board of directors are not there, board of directors powers are suspended, so who will have the custody and who has to safeguard the assets of company? IRP. So monitor the assets of the corporate debtor and manage its operation until who is appointed? until the resolution professional is appointed by committee of creditors. If he wants, he can file any information to information utility. If he wants to update any facts, he can file information to information utility. He will have the control and custody of all the assets where corporate debtor has ownership rights and perform other duties as specified by the board. So if we are talking about duties, primary duty is to collect. First, he has to understand what's the financial position. Yes or no? Clear? So, collect all the information relating to assets, finances, operations of corporate debtor for determining the financial position of the corporate debtor. Second, compilation of claims received from the public announcement made. Third, constitute committee of creditors and monitor the assets of the corporate debtor and manage its affairs. Until who is appointed? Resolution professional. If necessary, he can update any file with the information utility. He will take control and custody of what assets? All the assets for which corporate debtor has ownership rights and perform other duties as specified by the board. Clear, everyone? Now we are moving on to the remaining steps of CIRP. So you might be wondering how long this chapter is. Before that, I will give you a summary or an overview. You can call whatever you want. So, just a quick CIRP overview. Are you ready? Yes? So, committing a default, that is a primary obligation, so primary step. Okay, so minimum 1 crore. Then what happens? File an application to adjudicating authority. Adjudicating authority will admit the application. On that date, what happens? Commencement of CIRP. Then what will be declared? Moratorium, appointment of IRP, public announcement. So after that, IRP will form committee of creditors. In the first meeting of committee of creditors, they will pass voting not less than 66% in favorable for the appointment of RP. That person will now be considered as resolution professional. How much voting percentage is required for appointing RP? 66%. Next, what the resolution professional will do? He will consolidate all the information of the company, financial position, what all the claims, what are the assets, and what are the liabilities. Everything will be consolidated into information memorandum. Why is he preparing information memorandum? Yes, simple here. It's not that we will consider the opinion or the resolution plan of only one person. You need to expand and consider the opinions of other persons also. There may be few financial creditors or there may be few entities who are willing to propose any resolution plan. So, if they want to submit a resolution plan, they need information. But only who has access to information? Resolution professional has the access to information. But for others to prepare a resolution plan, they need some document. That document is only called information memorandum. Whose responsibility is to prepare information memorandum? Resolution professional. So if information memorandum is prepared, what happens? All the resolution applicants. Who are resolution applicants? The persons who submit the resolution plan. Okay, so resolution applicants will prepare the resolution plan based on information memorandum. Now all the plans will be submitted to the RP, resolution professional. Resolution professional will submit the plans to whom? To the committee of creditors. Finally, who will approve? Committee of creditors, because I have already told you creditors play a significant role. That is why one of the purpose of IBC, which is not disclosed, is creditor driven solution. Here the solution is not taken by board. That is nothing, board of directors or the company. It is solution driven from the opinion of creditors. That is why COC plays a very important role. Even if resolution applicants will prepare resolution plan based on information memorandum, it will be submitted to RP. RP will submit to COC. COC can approve with 66% of voting rights. Are we clear? Understood? So, RP to present the resolution plans for the evaluation before the COC. COC will select the most appropriate resolution plan. It will pass 66% of voting and it will communicate that the plan is approved. To whom? To the RP. RP will communicate to the adjudicating authority. Clear? Now adjudicating authority believes that yes, this is as per IBC 2016, then adjudicating authority will approve the resolution plan. Are we clear? Now comes the case where the plan will be rejected. When plan can be rejected? First by COC. COC can reject, or else COC approved, adjudicating authority can reject. Yes, adjudicating authority can reject, COC can reject, or else first of all no resolution plan is submitted. No one is able to resolve it. Okay, no resolution plan is submitted. So these three situations will lead to what? Liquidation. Clear everyone? Yes. So this is the overview. So till which step we completed? Only this. We didn't see formation of COC also. Okay? No worries. In the next 20 minutes we'll complete. Okay? If you stay with me. Okay? If you sleep, even my energy will also drain. Okay? Chalo, let's see. So, first, who will form COC? Interim Resolution Professional. Now, after consolidation of all the claims received, shall form COC. Who will be part of Committee of Creditors? All financial creditors. All financial creditors. Only financial creditors are considered as members of Committee of Creditors. Clear? Only they will have the voting rights. Operational creditors will not be part of Committee of Creditors. Only in one situation, when there is no financial creditor. When there is no financial creditor, who will be part of COC? 18 largest operational creditors. If only 15 are there in total, 15 will be part of COC. Clear? Yes, understood. And one representative of workmen and one representative of the employees. Those representatives will also be part of what? COC. But is that syllabus there in your ICMAI study material? No. So even if you don't keep it in mind, it's fine. Okay. So, shall we continue? General case. Committee of Creditors shall comprise all financial creditors of corporate debtor, provided the financial creditor, first financial creditor should not be defaulter. Okay, clear? Yes. If that financial creditor is only defaulter, he will not be part of COC. You will not have a vote to participate in resolution. First resolve your own problems. Okay, that is what it says. Clear everyone? Now, if together two or more financial creditors are, corporate debtor is owing a financial debt to together two or more, that is nothing but jointly they are lending loan to they are lending money to the company. So, for their proportion of debt, they will get their voting rights. For the proportion of debt. So 10 lakhs jointly 3 members have provided a loan to the corporate debtor. Clear? So 33.33% will be the share of each financial creditor. Are we clear with this? So I am not reading the whole sentence over here. Are we clear? Next, any related party to whom corporate debtor owes a financial debt will not have the right to representation and participation or voting in the meeting of COC. Simple. Related party of the company has lent a loan and he is in the position of financial creditor. Can he be part of COC? Yes, but he will not have the right to represent, participate or vote in the meetings. Are we clear with this? So, when there is no financial creditor, COC shall be as specified. What is specification? 18 largest operational creditors, one representative of workmen. Clear? So keep that in mind, it's more than enough. Now, so let's say one person is acting, so one person, to a person, company owes financial debt as well as operational debt. So, he will be part of COC for the proportion of financial debt. Are we clear with this? Yes. So, where a person is both financial creditor as well as an operational creditor, he will be included as financial creditor to the extent of financial debt in the COC. Are we clear? So, and then he will be considered as operational creditor for the extent of operational debt. That's all. So, ultimately, the important sentence here is COC will comprise, sorry, contains items, these are people, no, will comprise all the financial creditors. If he is a defaulter, he will not be part of COC. If he is a related party, he will be, but he will not have the right to representation, participation or voting. That's all. Now comes the appointment of resolution professional. I already specified in the first COC meeting only. They will decide whether to continue IRP as RP or to replace IRP with another RP. Clear? So to continue the same person or else to replace with another person. Okay. So first COC meeting shall be held within how many days? 7 days of constitution, that is formation. Okay. So COC with a majority voting of not less than, that is a minimum of how many votes? 66%. It will resolve case 1 to continue IRP as RP. Clear? In that case, what is required? IRP's consent is required. That's all. Understood? Second, to replace IRP with another resolution professional. Again, same thing. If they want to replace, COC will propose a name. Yes, COC will propose a name. The name proposed will be communicated to adjudicating authority. Adjudicating authority will request the IBBI to verify the disciplinary proceedings or to verify the person who the proposed RP. IBBI will respond within 10 days. If no response is there within 10 days, then what happens? IRP will continue as RP. Shall I tell again? Okay. Okay, sure. Simple. If you decide COC decides IRP will continue as RP, completed, Kel Katam. What is it? IRP's consent is there, continue. Okay. So problems comes when COC wants to go beyond. COC is recommending a person, proposing that this person should be appointed in place of IRP. The proposed name will be communicated by the COC to whom? Adjudicating authority. Okay, sorry, IRP only, but IRP will communicate ultimately to whom? Adjudicating authority. Adjudicating authority will communicate to whom? IBBI. Why? IBBI will have the record, no, whether he is registered or not. That is why IBBI will verify whether this person can be appointed or not. If IBBI responds that yes, you can proceed, then the new proposed RP will be appointed as RP. Let's say IBBI has not given response for 10 days. Then by default, adjudicating authority will appoint IRP as RP. Clear? This detailed explanation is not there in your syllabus. Oh my God, you should tell this before, no ma'am. I have to give you clarity, no. I can't just give you a, yes, propose, completed. This is not the case. I have to give you details. Okay. So consent of IRP or new RP is required. So COC shall communicate about such RP to the adjudicating authority. Clear everyone? Understood? So now comes powers and duties of resolution professional. Okay. Just give me one moment. Okay. It's okay. 10% charge is there, but still we can continue. No problem. So now, who will have the responsibility to complete CIRP? Resolution professional. So, resolution professional shall conduct the entire CIRP, and of course, all the powers of IRP will now be in the hands of RP. Board of Directors powers are vested with IRP. IRP powers will now be vested with RP. So, that is why he has to manage the operations of corporate debtor during the CIRP period. Shall exercise the powers and perform duties as vested or conferred in IRP. So all the duties of IRP will now be carried by RP. Are we clear with this? So now once again, details we need. So duties of the resolution professional. Duty of resolution professional is to, for sure, the first duty, the primary duty is to prepare information memorandum. Based on that only resolution plans will be prepared. Yes or no? So duty of RP is to preserve and protect the assets of corporate debtor, including continuous business operations on going concern basis. On going concern basis of corporate debtor. Are we clear? Now, what all actions that RP wants to take to operate the business, he can take. But specifically, there is a list of activities which RP can exercise only if COC's approval is obtained. That too with 66% of voting. That is the scope of question section 28. We will see that. Keep that aside. So, he can take all or any of the actions which are within the powers of IRP, and some actions cannot be taken without the prior approval of COC. 66% of voting in favor. There is a question for that. We will discuss that question. No worries. Okay. Next. Of course, to prepare information memorandum, financial information will be collected. That's fine. Keep this aside. But of course, RP should invite other applications or other applicants to submit their resolution plans. So, invite applications for resolution process with approvals of creditors, present all resolution plans to the COC. Are we clear, everyone? Yes. Now, how will the meetings of COC be conducted? This again miscellaneous content, can be met in person or through electronic modes. To whom all you will give the notice? Members of COC and also members of suspended board of directors and the managers, that is the partners. So they will not have the right to vote. I already specified. Only the members of COC will have the right to vote. Clear? And operational creditor. Only if the amount that is due towards the operational creditor is at least, that is more than or equal to 10% of the total debt of the company. Clear? Yes. For them notice is served. Again, they will not have right to vote. They will participate in the meeting. That's all. Clear? So, if amount of their aggregate dues more than or equal to 10% of the total debt. So, to whom you will send the notice of meetings? Once again, members of COC and members of suspended board or partners and operational creditor. To whom? Which operational creditors you will send? If the dues are more than or equal to 10% of the total debt. Clear? Yes. Now comes preparation of information memorandum. What will it contain? Relevant information to prepare resolution plan. Finances, assets, liabilities, revaluations, all this content will be mentioned in the information memorandum. Clear, everyone? So, contains the relevant information to prepare the resolution plan. Shall be forwarded to all the resolution applicants. Clear? The person who are submitting resolution plan is called resolution applicant. So, of course, this contains very secret information of the company. So that's why they have to maintain confidentiality. Okay. You cannot disclose until and unless he is authorized to receive. And the next one is protection of IPR, intellectual property. If it contains details about copyrights, patents, trademarks, that should be protected and not to share the information with anyone. So, resolution applicant will submit resolution plan. To prepare resolution plan, he needs information memorandum. Who will prepare information memorandum? Resolution professional. Yes. Now, if I am giving access to information memorandum to a resolution applicant, he has to maintain confidentiality, protect intellectual property rights, not share this information to anyone. That's all. Clear, everyone? Yes. Now comes submission of resolution plan. All the resolution applicants will submit the plans to RP. RP will submit all the plans to COC and shall be considered approved only if not less than 66% of voting share approves. Then it will be communicated to adjudicating authority. Adjudicating authority, when it will give an approval, if it is satisfied that the plan is approved by COC and it is as per IBC 2016, then shall approve the plan. Are we clear? Yes. So resolution plan approved by adjudicating authority, on whom all it is binding? Every person in the company must follow corporate debtor, creditor, member and all the stakeholders. Now comes the most important topic from an MCQ point of view. Time limit for completion of CIRP. Initially 180 days. Can you request for extension of time period? Yes. COC will pass 66% of voting and that will be communicated by RP to adjudicating authority, and adjudicating authority can grant only one extension of 90 days. Extension period is 90 days. How many times you can grant 90 days? Only once. But together with any more extensions, maximum 330 days. Maximum 330 days. Clear? So time limit for completion of CIRP within 180 days from the date of admission of application. Admission, commencement of CIRP, within from that day 180 days. And committee of creditors with more than or equal to 66% of voting can apply for extension period. Then adjudicating authority can only grant one extension of 90 days. Overall time limit is 330. Clear? Understood? Yes or no? Thank you. So, you think CIRP is completed? No. I said one question, we will revise now. Page number, I found it, 116. Let's resume the session here. So, these are the activities which can be carried out by resolution professional only if he receives approval from the COC with 66% voting rights. Clear? So, what is the question? Under section 28 of the IBC 2016, the resolution professional will have to take prior approval for some cases, otherwise it will be invalid. What are those cases and what percentage of voting is required in favor of decision? So this question we can answer. What is that? 66%. So, what is the duty of resolution professional? Preserve and protect the assets of corporate debtor, ensuring continued business operation. Can take actions consistent with the power of insolvency professional. So, may invite application for resolution process with the approval of creditors and present all the resolution plans to the COC for consideration. That is what I have specified in the capsule. Okay. Now, in the following cases, resolution professional can take action only with the prior approval of committee of creditors with 66% voting in favor, failing which the action by insolvency professional will be invalid and action may be taken against insolvency professional. So, IP again you will be like, ma'am, it's RP. Some cases they will use insolvency professional, it's resolution professional. No problem. Okay. So, now what are those cases? First, to raise interim finance. So, to run the operations. In between, again, you're raising more finance. You're creating more debt. For that case, you need the approval of COC. So, raising interim finance. Any additional security is created on the company's assets. So, in company's assets, there are a lot of debts and securities are created. That is why we are in insolvency situation. Now he wants to create additional security on the company's asset. Then He has to get the approval of COC. So create any security interest over the assets of the corporate debtor. Wants to make changes of the capital structure, debt, equity, change the capital structure, and give instructions to financial institution for debit transaction, that is payment. Yes or no? Payment. Yes. So to give instructions to financial institutions maintaining accounts of the corporate debtor for any payment from the company's account. Clear? Undertake any related party transaction. That may be any transaction or a contract or arrangement. If you want to execute a contract between the company and the related party transaction, you need to get the approval of COC. So till now we have seen 5. Let's have a quick revision. Raise interim finance, create security interest, change the capital structure, give instructions to financial transaction for a debit transaction. Clear? Undertake any related party transactions and amend any constitutional documents. What are those? AOA and MOA. Amend any constitutional documents of the corporate debtor, MOA or AOA. Clear? And dispose of or permit the disposal of shares. Any shareholder who wants to dispose the shares, that is nothing but cancel the shares. Any shareholder of the corporate debtor or of their nominees, third parties, nominees. Clear? In that case, you need to get the approval of COC. Change in the management of the corporate debtor, its subsidiary. Clear? So make any changes in the management of the corporate debtor or its subsidiary. In that case also you need to get the approval of COC. And the last few you can read, you will understand. I'm not going into the details. So you can write at least 7. That's all. Okay, that's why I've not highlighted also. So yeah, you can make changes in the appointment or terms of contract of the statutory auditors or the internal auditors and invite prospective resolution applicant who fulfill certain criteria. Invitation of the resolution applicant. Okay, that's all. Are we clear? So transfer rights or financial debts or operational debts under material contracts otherwise than in the ordinary course of business. What do you mean by transfer rights? So let's say company has entered into a contract. For that contract, company is liable to make payment. What RP wants to do is, company has to make payment, that one keep it aside. Company has the right to receive from a third party. Now, he wants to transfer that right to this party. Instead of me paying, you directly pay to this person. That is called transfer of rights. That is also requires the approval of COC. Are we clear? Yes. That's all. Any changes of financial terms, for that you need the approval of COC. That's all. Okay. That is section 28. Now moving on to the capsule here. When will corporate debtor be liquidated? Case 1. No resolution plan is received within the time limit. Time limit maximum after all the extensions 330 days. No extensions, maximum 180 days. So no resolution plan is received within the time, adjudicating authority will order liquidation. Next, of course, the basics we know. COC rejects the plan, adjudicating authority rejects the plan. When COC rejects the resolution plan, or when adjudicating authority rejects the resolution plan, or when COC itself will conduct a meeting and pass 66% voting in favor and decide to liquidate. Same will be communicated to the adjudicating authority. Adjudicating authority can only pass the order of liquidation. So when COC decides to liquidate in the meeting before submission of the resolution plan with 66% of voting, and of course if they contravene the terms of the resolution plan already approved by adjudicating authority, then it will result in what? Liquidation. Clear? What are the cases? Simple cases we'll discuss first. Simple. No resolution plan is submitted within time limit. COC rejects. Adjudicating authority rejects. Contravenes the terms of the already approved resolution plan. And the last, COC itself decides to liquidate in the meeting before submission of resolution plan with 66% voting in favorable to that. Clear? Yes. Only adjudicating authority shall order liquidation by making a public announcement. Are we clear with this? So adjudicating authority will decide whether RP will continue as a liquidator or not. Who will decide? Adjudicating authority. So first, after liquidation order is passed, what is the position of the company? Even in that case, no suit or legal proceedings can be initiated by or against the company. But there is one possible way where, except with the prior approval of adjudicating authority. So with the approval of adjudicating authority, if you want, you can execute a suit against the corporate debtor. Clear? So which may be granted for proceedings initiated by liquidator. So mostly for which cases the approval will be given? The cases which are initiated by the liquidator. Why? Because the liquidator will have the primary responsibility to liquidate the company. So he need to file suits. Clear, everyone? So no suit or legal proceedings can be initiated by the company or against the company, except with the prior approval of adjudicating authority, and which may be granted for the proceedings initiated by the liquidator. To recover the dues to the company, liquidator can file suit. That approval will be given by the adjudicating authority. So resolution professional who is appointed for the CIRP becomes the liquidator unless replaced by adjudicating authority. So by default, who will be considered as liquidator? Resolution professional. Until and unless who will change? Adjudicating authority. Are we clear? Now, all the powers of BOD were transferred to IRP, IRP were transferred to RP. Now all these will be transferred to liquidator. So all the powers of BOD, KMP and partners of the corporate debtor will be vested in the hands of liquidator. Are we clear? Now, they have to give proper assistance, information, required documents to whom? To the liquidator. That is what it is. The personnel of the corporate debtor are required to cooperate with the liquidator. Clear with this? So till now in the liquidation procedure, what we have seen? No suit or legal proceedings by or against the corporate debtor can be initiated unless there is an approval of adjudicating authority. Are we clear with this? By default, who will continue as liquidator? RP, unless it is replaced by adjudicating authority. What will be the powers of liquidator? Board of directors and KMP. In case of LLP, partners. And the last, the personnel of the corporate debtor should cooperate with liquidator. Now, one by one, we will see the powers of liquidator. First of all, powers of liquidator, primary, if we have to give a summary: verification of the claims, protection of the assets of the company, and to settle the claims. He will verify, he will settle the claims, he has to protect the assets of the company, he will reevaluate the assets of the company. If he feels necessary, he can continue the business also. Not for long, just to sell off any inventory which is left out. Clear? So if liquidator believes that if company runs for another 6 months, maybe we can clear more debts, then liquidator can run the business. Clear? So let's see in detail. First, verify the claims of all creditors. You submitted the claims. In the books of accounts of the corporate debtor, is there an actual obligation to pay or not? That will be verified by whom? Liquidator. So verify the claims of all the creditors. Next, taking into custody and control of all the assets, properties, effects and actionable claim. Effects are nothing but rights to recover. Are we clear? So who will take that custody of all these properties? Liquidator. Now comes the third, evaluating the assets. He verified the claims, he took the custody, now he is evaluating the assets based on the market value. How, if I sell these, how much I can recover? He should understand. No, that is why he will evaluate the assets and properties of the corporate debtor. Next, taking measures to protect and preserve. Without assets, he can't liquidate the company. So that is why he has to take measures to preserve the value of the assets. Clear? So taking measures to protect and preserve the assets and properties. Now, in extreme cases, he can also carry on the business of the corporate debtor for beneficial liquidation only if deemed necessary. There is a lot of stock which is there. If I sell this stock, company may generate a lot of profit. With that, I can settle additional dues. Then can the liquidator run the business? Answer is yes. Clear, everyone? So till now we have seen 5. Shall we revise? Verify the claims. Take the custody. Next, evaluate the assets, and then protect and preserve the assets and carry on the business for beneficial liquidation. Understood? Now comes selling of properties. All the properties, negotiable instruments, claims, actionable claims, except to ineligible resolution applicants. So if you quickly get to the Q&A companion, is it there? I don't think it's there. Open the concept book, not capsule. There is one possible question that I will not revise, you can easily understand. Read it, okay? So, page number 133. So, if to avoid the situation of you skipping the concept later on, what you can do is, okay? Which question number it is? Huh? 12 you said, 13 you said. Page number? Okay? Yes? Any doubt? Okay, clear? Yes? What happens is the day before the examination, you will go through capsule. You might forget few concepts. That is why I'm giving reference. Okay? For other chapters, I have not given reference. Why? Because I've clarified what questions to study and what concept to study. Here only, there is a slight confusion. That's all. Okay? Now. So, ineligible resolution applicants, if you check that, you will understand. So, what do you mean by ineligible resolution applicants? These persons cannot submit resolution plans. And to these persons, you cannot sell properties or actionable claims in liquidation situation to recover money. Okay? Understood? Okay, that's all. Thank you. So, next, to settle the claims. To settle the claims, you can draw, accept, make and endorse any negotiable instruments like checks or other negotiable instruments. And the next, so if let's say a person has to pay the company, has an obligation to clear a debt of a company. He has to make the payment, but he's dead, deceased. But as a liquidator, I have the obligation to settle all the claims. So what I will obtain? Letter of administration. So letter of administration will give the right to the liquidator to recover from the estate of the deceased person. Estate means property. The person is died, yes or no? He will have some settlements. So to settle that, his properties will be sold. Whatever the money is recovered, liquidator can recover to settle the claim towards the company. Here company is not obligated to pay, company is obligated to receive. But that person is dead. That is why what the liquidator will obtain? Letter of administration. So, obtaining letter of administration for any deceased, write down there, dead. Then only you will understand. Okay? Deceased contributory, that means that person has to pay to the company and undertaking other necessary acts for obtaining payment from a contributory or their estate. Either obtaining from the legal representative or the estate, whatever is available. Clear, everyone? Understood this concept? Yes. And then seeking professional assistance or appointing professionals as deemed necessary to settle any claims or for valuation or for review. That case you can seek the assistance of the professionals. And the last will be inviting and settling the claims of creditors and claimants, the persons who have submitted the claim, and distributing proceeds in accordance with the provisions, in accordance with the order of distribution of the assets specified by the IBC 2016. You will settle the claims and distribute the assets. Are we clear? Understood the concept? Yes or no? Simple, it will start with verification of claims, taking custody, evaluating, preserving, carrying on business for additional period, selling properties except to ineligible resolution applicants, keep that in mind, and drawing, negotiating, endorsing instruments to make the payments. Next, to recover from the deceased contributory through letter of administration, and to seek professional assistance. The last is to settle the claims as per the provisions of IBC. So with this we have completed content in capsule. Content CIRP is completed. Before all it's completed. Now we have one concept, which is liquidation estate. What happened? Okay, so last question here, that's all. Liquidation estate. So what is liquidation estate? All the properties, assets which the company has ownership rights. That is liquidation estate. Why are we learning about liquidation estate? If we sell that, then only we'll get money. Yes, okay. So a liquidator shall form an estate of the assets mentioned below, which will be called the liquidation estate in relation of corporate debtor. Now we will see two different questions. The first, what assets will be part of liquidation estate, and what assets will not be part of the liquidation estate. So quickly, if you get into the Q&A companion, in the June 2023 old syllabus, this question was asked. What is that? Assets which shall not be included in the liquidation estate. So possibly a question can be asked in the December 2025 attempt. So that is why you have to prepare. Okay. So let's see this. First, generally speaking, what will be part of liquidation estate? All the assets whose ultimate owner is corporate debtor. Corporate debtor has ownership rights, even if it is not in the possession, but still has ownership right. All these assets will be part of liquidation estate. So let's see that in detail. So liquidation estate shall comprise all liquidation estate assets, which shall include the following. The first, has ownership rights, not in possession, including but not limited to encumbered assets. That means you might have given it as a pledge, or else as a security, or else as a collateral, but ultimately you are the owner. Clear? So that assets, even if it is not in the hands of company, not in the possession of company, but still company has ownership rights, that will also be part of liquidation estate. Encumbered means given as security. Clear? Yes. Next, tangible assets, movable or immovable, everything will be part of it. Plant and machinery, equipment, furniture, fittings, all these type tangible assets, whatever you learned from the basic foundation, or else intermediate also it has, all that will be part of the liquidation estate. And intangible assets, but not only limited to intellectual property rights, securities, financial instruments, insurance policies, every intangible assets which has a value. Clear? That's all. Assets subject to the determination of ownership rights by the court. So court is still, the asset is still under a litigation. It is still yet to decide whether it is an owner, whether this company is an owner or not. That will also be part of liquidation estate. Are we clear with this? Yes, simple. Ownership right, not in a possession but still has ownership rights. Tangible assets, intangible assets, and assets subject to determination of ownership by an order of court or authority. Now comes the question, which assets will not be part of liquidation estate? Simple. Ultimately, the owner is a third party. You might have it in possession. You are using it. So that can be the first assets held in the trust of a third party. So let's say company. What can be the example? company is in a position, car wash, you can say, yes, company is in the services or related to car accessories and all that. So some of the customers cars are in the possession with the company. They have held their cars with the in the trust with the company. So even if company has a possession of these cars, are these cars properties of the company? No. Clear? So assets which are owned by third party, which are in possession of corporate debtor. Who is holding them? Company. But who is the owner? Third party. Bailment contracts. Clear? Bailment contracts. So simple. Possession will be there for repair or for any other service. You will keep the product or you will keep the asset with the company. Later on, after the services are done or after the contract is ended, it will be given back to the third party. So those are called bailment contract. Next, in that contracts, that assets will not be part of the company's liquidation estate. And all sums dues to workmen, payments towards workmen, clear, and employees like provident fund, pension fund, gratuity fund, all these simultaneously. Employee will give his share, company will give his share, yes or no? That share which is having which company has that position is the, who is the owner? Employee or the workman is the owner. Clear? So that will not be part of the liquidation estate. And other contractual arrangements which does not stipulate the transfer of the title but only use. So there is an operational lease, only use is there, there is no transfer of title. So that particular asset will also be not part of liquidation estate. So let me clarify you once again. Assets owned by third party but are in possession with the corporate debtor. What can be the examples? Held in the trust of the third party, bailment contract, sum due towards the employee or workman like provident fund, pension fund, gratuity fund, and other contractual arrangement does not mention transfer of title, only mentions the use of asset. Understood? Such other assets as may be notified by central government. And I will explain B point later on. So see, personal asset of any shareholder. If personal assets are actually used by the company of a shareholder, it belongs not to the company but to the shareholder or the partner or any other director who is actually letting the company use the personal asset. And then assets of any Indian subsidiary company or foreign subsidiary, it belongs to subsidiary company, not to the holding company. So that is why that will also not be part of the liquidation estate. Now comes netting contracts. What are netting contracts? So you will be participating in future contracts or forward contracts, yes or no? So in one contract you may get a gain of 10 lakhs and in one contract you may lose 2 lakhs, yes or no? They will set off and ultimately you will receive from that particular trader only 8 lakhs you will receive. So for that netting contracts, that particular person who is entering, what he has given as a collateral? Cash. Sometimes cash will be given as collateral or securities will be given as collateral or other instruments will be given as collateral. Why did you give it as collateral? In future, if there is a need to set off or net off any loss with a profit, for that purpose you are giving it as a collateral. So that is why that will not be part of the asset. Clear everyone? Yes? So simple, don't get into deeper understanding of that. Okay, so asset in security collateral held by financial service providers. With a financial service provider, I have entered into a futures contract, deposited 10 lakhs. Clear? I have incurred a loss in another contract with the same financial service provider. Loss of 2 lakhs and the collateral of 10 lakhs. Ultimately, how much I will get? 8 lakhs. Clear? So assets in security collateral held by financial service provider and are subject to netting and set off in multilateral trading. You're not trading with one contract, you're trading with multiple contracts. Clear? So multilateral trading or clearing transactions. This will be more detailedly explained by Ravi sir. Why? Derivatives, futures, options, margins, all are discussed there only now. Okay, that's all. So simple, these are the assets which will not be part of the liquidation estate. Understood everyone? I'm telling you, ultimately if I read the sentence with you and explain it to you, you will understand for this moment. Just wait for 1 hour, you will come to reality. Okay, that is why revise it by the end of the day. Okay, psychology study, is it true or not or something, you have to revise within 24 hours, within the next week, within the next month. Then it will be permanently stored in your brain. Clear? Until and unless you perform a surgery to remove it. With this, we have completed the concept of Insolvency and Bankruptcy Board of Code 2016. Now comes the important questions. Again, don't say, ma'am, you're giving all the questions. I will not, but take the note. First, question 2, non-negotiable. For sure, you have to learn the basics. Okay, what is it? Applicability. Question 2. Question 4, simple, small answer question. Question 5. Six. 9. 10, of course. 11. What questions I did not? 1, 3. To be careful, read those also. Once. Okay, so this question you will not understand. Question 7. So if you are reading question 7, what you will do is go to concept book. Read concept 6. Then you will understand question 7. Okay? Clear? Thank you. With this, we have completed Insolvency and Bankruptcy Code. Now let's start with module 4, SEBI regulations. So here the module is divided into 3 main categories. The first we will be discussing related to initial public offer, and then we'll move on to the insider trading, and the last will be takeover code. So just to be clear here, we are going a little fast, so you have to be very attentive while you listen to the class, since it's a marathon. Clear, everyone? So first and the foremost topic that we will be discussing is initial public offer. So from now on we will refer to this as IPO. Yes or no? I think many of you are familiar with the term initial public offer. So it is nothing but the first sale of shares by the company to the public. So it is a way of raising money from the public. Yes or no? So only a public company can raise capital from general public. So this is the first time, then it will be referred to as initial public offer. So under this particular concept of initial public offer, first we will understand the meaning, which we have already done, and then we will see which classes of companies, or if we have to be specific, what is the eligibility of the issuer. So issuer is the company which is issuing the shares to raise the capital from the public. Now, what is the eligibility criteria that the issuer or the company should meet in order to go for initial public offer? So that is a concept that we will see. And the last concept in this particular category will be book building process. Meaning of book building process, criteria for the allotment, and then moving on to the end of that. That's all. We will be done with initial public offer. So shall we get started? Yes or no? So first, let's understand the meaning of initial public offer. Once again, it is nothing but the first time sale of shares by the company to the public. So it will allow a company to raise capital from public investors. So whatever the concepts, whatever the conditions that we are reading in this particular category, they are part of which set of regulations? The SEBI ICDR regulations, that is Securities Exchange Board Board of India, issue of capital and disclosure requirements regulations 2018. So it is SEBI ICDR. So once again, shall we read the full form? Securities Exchange Board of India, issue of capital and disclosure requirements regulations 2018. Clear? So we will have different sets of conditions related to the eligibility of the issuer. So let's start with the basics here. So what is the eligibility criteria that the issuer should meet if the company wants to go for initial public offer? Now, first comes the company, the promoters, the directors of that particular company should not be debarred. Should not be debarred by SEBI. Debarred related to what? Accessing the capital market. They should not be put restrictions related to accessing the capital market. This is the first condition. Second condition, the issuer, that is a company or the promoter of that company or the director of that company, they should not be either a willful defaulter. Willful defaulter is nothing but deliberately, even if they have money, they are defaulting the debt. That is willful defaulter, or a fraudulent borrower. They should not be willful defaulter or fraudulent borrower. And the next comes, if currently in that particular company, that is the issuer, if issuer has any outstanding convertible rights that are yet to be converted into equity shares in future, they should be fully converted into equity share capital. So if there are any outstanding convertible securities or any rights that will give some person to get the right of equity shares, which allow any person an option to receive equity shares of issuer, IPO is not allowed unless they are converted. Clear? So currently company is proposing to go for IPO, but company has some convertible debt instruments or else some rights that will be converted into equity shares in future. So can you go for IPO now? Answer is no. You have to get them converted into equity shares, then only you can initiate initial public offer. Are we clear? So basic three conditions are issuer, promoter, promoter group, directors or the selling shareholders of the other company are debarred by SEBI from accessing the capital market. Then issuer shall not be eligible. If debarred, shall not be eligible. If a willful defaulter or fraudulent borrower, shall not be eligible. And if there are any convertible securities not yet converted, then issuer is not eligible. Are we clear with this? The first three basic conditions. Now moving on to general conditions. Of course, if these basics are very important if the company wants to go for IPO. So what are those? First, of course, they have to get an application with any one or more recognized stock exchange, so that the particular securities will be listed in the stock exchange for easy trading. So make an application to one or more recognized stock exchanges to seek an in principle approval. What is an in principle approval? Initially, while the company proposes to list the shares, since company is going IPO for the first time, so company is actually taking the approval from the recognized stock exchanges to allow them to list so that people can participate in the IPO. Clear? When will the final approval will be given? When they subscribe and allot the securities. After allotment is completed, final approval will be given. But here, initially there is no allotment. For the first time, you are listing the shares in the recognized stock exchange. So that is why in principle approval to enter into the recognized stock exchange. So that approval is required to be obtained. Next, of course, right now all the shares are in the form of dematerialized. Yes or no? So that is why you have to get into an agreement with any depository. It may be NSDL or CDSL. Clear? So enter into an agreement with a depository for dematerialization of securities already issued in the company and right now proposed to be issued. Both the securities should be converted into dematerialized form. For that, you have to enter into an agreement with depository. Next comes all the securities which are held by the company's promoter should also be dematerialized. Clear? And then comes all the existing before the condition, the first condition, we have seen that any convertible debt instruments are there, they have to be converted into equity. Any unpaid or partly paid equity shares are there, they have to be converted into fully paid up equity shares. So all its existing partly paid up equity shares have either been fully paid up, or else if they are not paying the call money, you have to forfeit the shares. Are we clear? So once again, the 4 general conditions will revise. The first is to make an application to one or more recognized stock exchange to seek an in principle approval. Second, enter into an agreement with a depository for dematerialization of the securities already issued and proposed to be issued. Next, securities held by the promoters are to be dematerialized, and all its existing partly paid up equity shares have been either fully paid up or forfeited. Two other general conditions here is, now you are raising, assume 100 crores in the form of initial public offer. How much amount you can utilize for general running of the business, like working capital requirement or fixed capital or any business purpose? You can only utilize a maximum of 25%. The remaining 75%, what will you utilize for? That project or the expansion for which you have gone for IPO. Clear? So if you want to go for expansion, if you want to start a project, then only you will mention that as the purpose for raising money through IPO. So for that purpose, you have to use the remaining funds, but if you want to use it for the general running of the business, you can use maximum 25%. Clear? So amount for general corporate purposes must not exceed 25% of the amount raised. Clear with this? Now the last condition. So listen to me very carefully. So if let's say company is entering into a new manufacturing project, okay, so or else infrastructure project. So for that infrastructure project, let's say company needs 1,000 crores of investment. So for that project, what is the investment amount? 1,000 crores. Now, can you raise 1,000 crores from the IPO? Answer is no. What does SEBI specify the condition? If let's say your project needs 1,000 crores, first you have to make arrangement through verifiable means like banks, financial institution, other verified financial sources. You have to make at least 75% of the amount. At least 75% you have to arrange from where? Not from IPO, not from internal accruals like reserves. You have to arrange from where? External sources, that too verifiable means of sources. Then only you can go for IPO. Are we clear with this? So let's read this. Made firm arrangements of finance through verifiable means of 75% of the stated means of finance, excluding amount raised through IPO and internal accruals. Just to give an assurance to the public that banks or financial institutions or other verified sources are willing to pay us this much amount. We only need this part of the amount from the public. To give that assurance, this condition is specified by SEBI. So these are the 6 general conditions to be met before going for IPO. First is in principle approval, dematerialization, agreement and dematerialization of the promoter, fully paid up shares or forfeit the shares, and the 5th one is related to maximum 25% to be used for general corporate purposes. And the last, firm arrangements for stated means of finance should be at least 75%. Clear? And comes the 3rd set of conditions, monetary conditions. These values should be met by the issuer in order to go for initial public offer. So what are those values? First comes net tangible assets. So here, how much should be the value of net tangible assets? At least rupees 3 crores. That too in each of the preceding 3 full years. What do you mean by full year? The whole year your value should be 3 crores. It cannot fall below 3 crores. Are we clear? Not just at the end of financial year. The whole year the value should be 3 crores. So net tangible assets should be at least rupees 3 crores in each of the preceding 3 full years. Now, out of that net tangible assets, only 50%, I mean more than 50% should be in the form of, I'm really sorry, less than 50% should be in the form of monetary assets. These are debtors, receivables. Are we clear? Cash, bank balance, these are monetary assets. So out of which not more than, that is 50% or less than 50% is held in the form of monetary assets. If not, if let's say 70% are in the form of monetary assets like debtors, receivables and cash, then excess must be used for business or that project. That is nothing but for what? That upcoming project for which you are raising IPO. For that you have to use the excess money, that is more than 50%. Clear? So first condition is simple. Net tangible assets should be at least rupees 3 crores. That too in each of the preceding 3 full years. Now, out of that net tangible assets, less than or equal to 50% should only be in the form of monetary assets, like liquid assets if you have to say. Clear? But if it is more than 50%, that additional excess 50% should be used for the business or the project for which you're going for IPO. Are we clear? Now moving on to the second condition. Average operating profit should be at least 15 crores during the preceding 3 years. That is preceding 3 years average, I mean operating profit you take. Average should be at least 15 crores. Clear? Next, net worth. How much should be the net worth? At least 1 crore during the each preceding 3 full years. And the last one is, if let's say there is a change in the name, that too in the preceding year, that too in the last 1 year, the company has changed its name. What assurance you have to give? Even if the company has changed its name, still the company is able to generate at least 50% of the revenue in the last year from new names activity. From new names activity also we were able to generate how much? 50% of the revenue. So change in name in the last 1 year, then what happens? At least 50% of the revenue in the preceding year must be from new names activity. So all in all, 4 monetary conditions. The first is net tangible assets, second is average operating profit, third will be your net worth, and fourth will be revenue, though that too in the case of change in the name in the last 1 year. Clear everyone? Yes. And then moving on to a case where issuer is not able to satisfy these monetary conditions. That means, can issuer never go for IPO? Answer is no. Issuer can go for IPO in that situation as well, but which mode? Through book building process. What is book building process? I will let you know. Okay, clear everyone? So even if these 4 monetary conditions are not met, the issuer can still go for initial public offer for raising the money, but the issuer should go through book building process. And after the allotment, after the IPO is completed, how much minimum should be allotted to qualified institutional buyers? Minimum of 75%. Qualified institutional buyers are these financial institutions, mutual funds, insurance companies and other companies whose principal business is acquisition of share. That too they have to be registered with the SEBI as qualified institutional buyers. Are we clear? So for them, how much you have to allocate minimum if you're going for this book building process? 75%. Clear with this? Yes. With this, we have completed the conditions. So just we will have a quick revision of the conditions once again. First set of conditions means entities not eligible to make any public offer. So here an issuer shall not be eligible to make an initial public offer if issuer, promoter group, directors are debarred by SEBI from accessing capital market. Second, issuer or promoter or director is either willful defaulter or fraudulent borrower. Third, if there are any outstanding convertible securities or any rights which allow any person an option to receive equity shares of the issuer unless they are converted before IPO. Clear? Now moving on to general conditions. First, read it with me. Make an application to one or more recognized stock exchange for in principle approval for listing. Enter into an agreement with a depository for dematerialization of the securities already issued and proposed to be issued. And the third, securities held by the promoter should be dematerialized and all its existing paid up, partly paid up equity shares have either been fully paid up or forfeited. Two more conditions. Amount for general corporate purposes must not exceed 25% of the amount raised, and made firm arrangements of finance through verifiable means of 75% of the stated means of finance, excluding amount raised through IPO and internal accruals. Are we clear with the basic conditions? Yes or no? Next, monetary conditions. An issuer shall be eligible to make an initial public offer only if first, net tangible assets are at least rupees 3 crores in each of the preceding 3 full years, and average operating profit at least rupees 15 crores during the preceding 3 years, and net worth at least 1 crore during in each of the preceding 3 full years. And if there is a change in name in the last 1 year, at least 50% of the revenue should be generated in the preceding year must be from new names activity. If these conditions are not met, so an issue not satisfying the above monetary condition can still go for IPO through two conditions: book building process, and must allot 75% of net offer to QIBs, qualified institutional buyers. Now, so after IPO, so how much should be the minimum holding of the promoter? Minimum 20% of the post-issue capital. After IPO, whatever the capital will be, in that minimum 20% should be held in the hands of promoter. So, promoter's contribution after initial public offer should be a minimum of 20% of the post-issued share capital. Are we clear? That is minimum contribution of the promoters. Now, so just to give an assurance to the public that promoter is also a shareholder of 20% and promoter is not selling his share in the near future, it will be locked in. It cannot be transferred. For how many, what is the period here? Lock-in period, that minimum 20% will be locked in for 18 months. 18 months, it is changed, it is amended, and excess contribution, let's say he's holding 30%, the 10% excess will be locked in for a period of 1 year. Sorry, 6 months. So, if you want to write down clearly, so concept book, actually I have already clarified related to the amendment. So, minimum promoter's contribution shall be locked in for a period of 18 months. It was amended through 2021 regulations. Okay. So, and promoter's excess contribution will be a minimum. It will be locked in for a minimum period of 6 months. Here also it is amended through regulations 2021. Okay. Did you make that change? Yes. But if specifically in the question, if they ask if majority of the issue proceeds, that is the money that is raised through IPO, if it is used for capital expenditure, mostly majority will be used for capital expenditure, then minimum contribution will be 3 years and excess contribution will be 1 year. Generally, what will be the lock-in period? 18 months. That is for minimum. For excess more than 20%, 6 months. But if majority of the issue proceeds is used for capital expenditure, minimum will be 3 years and excess contribution will be 1 year. Are we clear with this? Please mention in your capsule. If you are referring to concept book, you can write down the mention there. So refer to the concept book for the amendment. Okay. So, or else you can change here. Shall we move on? Next, in the case of initial public offer, it's not just a company event. It's a family function, so that is why other parties will also be included. So who are these relatives here? Merchant bankers. So these merchant bankers will help in the initial public offer, right from recruiting the selecting the stockbrokers, SEBI intermediaries, QIBs, and evaluating what should be the price of the shares, that is for IPO. All these guidance will be provided by whom? Merchant bankers. So all the bank will be there, no, ICICI, HDFC, they will have one wing which is for capital services. They will act as a merchant banker. They should be registered with the SEBI. Clear? So it's not like some other special banks are there. So next, first person is merchant bankers. One person should be a lead merchant banker, also called as lead manager. Okay, for the purpose of initiating and smooth functioning of the IPO. So first category of persons are merchant bankers. Second will be your SEBI registered intermediaries, like your stockbrokers and underwriters. Stockbrokers are your trading apps or physical brokers that will help sell the that will help bring out the investors or public to participate in the IPO. And underwriters give assurance related to achievement of minimum subscription. Next comes syndicate members. Syndicate members will be used, they will play the role only in case of book building process. I will explain the relevance of syndicate members when I am explaining book building process. Keep that aside. Next, bankers to issue. They will have to fix a specific banker who will receive the money of application for the IPO. And then comes registrar. A separate registrar should be appointed who will keep the details of all the persons who are participating in the IPO. And the last will be the compliance officer. He will ensure the SEBI regulations and other applicable laws are followed during the initial public offer. So who are the parties involved? Merchant bankers, SEBI registered intermediaries, syndicate members, bankers to issue, registrar, and the last will be compliance officer. Are we clear with this? Now moving on to the book building process. What is a book building process? Price is not fixed. So what happens is, when they issue the prospectus, that is the offer document, so they will fix that you can purchase the shares at this amount of value. That will be the issue price. They will also fix what will be the face value, and they will also fix what will be the application money. Yes or no? So now here, in case of book building process, price will not be fixed initially. Then how will you determine the actual price of the shares? Through demand evaluation. That means they will give a range. You can bid our shares from this value to this value. So let's say the range is rupees 91 to 120. This is the range. So one of the investor will come, I will purchase 1 lakh shares at rupees 110 per share. One more person will come, I will purchase 1000 shares at rupees 120. So another investor, I will purchase 1000 shares at rupees 95. So based on the demand of the investors, so what is the highest demand, at which price there is the highest demand, that price will be fixed. Are we clear? It's not that simple. That is why they will appoint syndicate members to evaluate the correct demand and fix the price. So here you are fixing the price based on the demand that you have in the public. Are we clear with this? Price, is it fixed initially in the offer document? Answer is no. What is fixed? Price range, also called price band, is fixed. Based on the demand and bids which are received from the investors, you will fix a price. That is called book building process. Are we clear with this? So here the meaning is nothing but used to determine the price of an IPO. What kind of prospectus will be issued? Red herring prospectus, because price is not fixed initially, rather it is fixed based on the demand of the investors. Clear? So it is used to determine the price of an IPO based on the demand from the investors. So what are the features of book building process? Price is not fixed initially. Price band or range is specified. In that price band, the minimum value that you can bid is called the floor price. minimum value that you can bid is called the floor price. And what is issued? Red herring prospectus. Investors can bid within the range, and final price will be determined based on the demand of bids received. Are we clear with this? That's all. That is the meaning of book building process. The one thing that you have to keep it in mind is the price is evaluated based on the demand of the investors. It is not fixed initially. Are we clear with this? Yes. Now, everyone enjoyed Saturday weekend, huh? Night partying, Netflix and chill? No, right? Okay. So, if you do that, you will sleep in the class. That's what I'm telling. And your body will be habituated to Sunday rituals, waking up at 12 o'clock. Ma'am, not even Sunday. Every day we wake up at 12 o'clock. Huh? Okay. So let's get back to the class here. So whatever will be the final price which is fixed, and whatever will be the floor price, that is a minimum price of the range, it should be more than face value. Are we clear? It should be more than face value. And this is just a simple scenario. If the issue price is more than rupees 500, issue price, the price that you're offering the shares, then face value can be less than 10, but it can never be less than 1. Are we clear? Understood? So with this, we've completed mostly all the concepts of the IPO. We are just left out with the allocation of net offer. So what do you mean by net offer? So let's say I have proposed to raise rupees 100 crores through IPO. Okay. So successfully I have raised 100 crores, let's assume. But before I allot, so that is reserving the shares by paying the application money. But actually company will allot. Yes or no? So some of the IPOs you participate. So there is a chance for you to get an allotment out of 1,000 investors, only one person will be able to get. That is a demand right now. Why? Because everyone wants to participate in the IPO. Okay, clear? So, keeping that aside, even if you participate in the, IPO, but still there is a very less chance for you to get allotted the shares, to become the shareholder. Clear? So, now, how the company will allot the shares is based on net offer. What do you mean by net offer? Total amount will be there which is raised. Out of that, whatever is reserved for few categories of persons, that may be anchor investors or that may be for the existing shareholders, that will be reserved. Yes or no? That reserve portion subtract. Reserve portion should be subtract from the money raised. Whatever is left out, that is called net offer. That will be actually allotted to the persons who participate in the IPO without any reservations. Are we clear with this? Understood? That is the net offer. This explanation no one will ask you. Just for you to be clear, I have explained to you. That's all. Okay. So now in the normal course, under book building in the normal course, that means what is the special case, ma'am? If you recall, if you don't satisfy the monetary conditions, you have to go through book building process. That too, at least how much you have to allocate for QIBs? 75% of the net offer. That is when, due to obligation that you did not meet monetary condition, but general case only, even if you have met monetary conditions, but still you want to evaluate the price based on demand. So can you go for book building process? Answer is yes. So it's not like only if monetary conditions are not satisfied, you can go for book building. In the normal course also, it is the option of the company to select the book building process. So in the normal course, if the company goes for book building process, then minimum how much should be allocated to the retail individual investors like you and me? We are not companies, institutes. We are just retail individual investors. How much should be allocated? Minimum 35%. That is more than or equal to 35%. And minimum 15% should be allocated to non-institutional investors. Who are non-institutional investors? High net worth individuals. Individuals who have a lot of money to just spend. Yes? Richie rich, big shots. All are these called high net worth individuals. So, for the minimum, how much you have to allocate? 15%. And maximum, that is maximum. More than 50% you can't. Maximum 50% you have to allocate to qualified institutional buyers. Out of this portion, 5% minimum you have to allocate to mutual funds. Mutual fund is also a type of QIB. Out of that maximum 50%, minimum how much out of 50, not out of 100, out of 50, how much you have to allocate to the mutual funds? Minimum 5%. Are we clear with this? Now, moving on to that specific case where the monetary conditions are not met, that is why you have selected the option of book building process. Then what will be the criteria? Here, maximum 10%, not minimum. Maximum 10% to retail individual investors, maximum 15% to non-institutional investors, and minimum 75% to qualified institutional buyers. Again, out of which 5% should be allocated to mutual funds. Are we clear with this? Just don't be confused with these. Here minimum 35%, minimum 15%. What one thing that we keep in mind is, there we have already seen if monetary conditions are not met, at least 75%. That means minimum 75%. So here there is no case of minimum 10%. It should be maximum 10%. More than 10%, if you give, that 75% can't be met. That is why here maximum 10%, maximum 15%. Are we clear with this? And other than book building process, you have already determined the final price in the offer document, not red herring prospect, not book building process. Other than book building process, if you're going for IPO, minimum how much you have to allocate to the retail individual investors? Minimum 50%. Make the change, it is not 30, it is 50. You didn't notice, huh? It will look similar. It is 50%. So one concept that I want to clarify is, this is related to allotment. Let's say even if I want to allocate 35%, they did not actually pay 35%. That means that they did not subscribe for 35% amount. They only subscribe for, let's say, 20%. So can we allocate 35% even if they not subscribed? Answer is no. So the remaining portion, whatever is there which is not subscribed, can you allocate to another category? Answer is yes. Simple. So let's say all in all, individual investors, whoever are there, they have participated for around 50 lakhs. 50 lakhs percentage wise, it was just equal to 15%. So if I have an opportunity to allot them shares, will I allot them free shares of extra 20%? Answer is no. They paid for 15% only. So that's why I will allocate 15% only. The remaining portion, whatever is there, the 20%, that unsubscribed portion will be moved on to the next category. That may be non-institutional investors or QIBs, whoever is willing to participate. Are we clear with this? Yes. So that is what it is. Here, that is unsubscribed portion will be moved on the category. That is not actually in the handwritten notes. It's there in your concept if you want to even revise. Now, what is this particular limit is related to anchor investors. Who are anchor investors? They will submit their proposals to subscribe this amount of shares before the IPO opens. Are we clear? Anchor investors, they are willing to participate even before the IPO opens. That is called anchor. Those are called anchor investors. So since they have submitted before IPO opens, how much you can allocate them maximum? Up to 60% out of the portion of QIBs. Out of the portion of QIBs, up to how much percent? 60% of the allocation for QIBs may be given to anchor investors. Are we clear with this? I know these are a lot of new terms for you. Okay. So if you are unable to cope up, listen to the class. Later on, if you want, you can watch it on YouTube once again, or else revise whatever the book that you are familiar with. Okay. So with this, we have completed the concept of initial public offer. Okay. So everyone clear what we have seen? Conditions we have seen, minimum contribution of the promoters, lock-in period of the promoters, and book building process, allotment criteria of book building process. That's all. So shall we move on to the next category? Yes, insider trading. So here, Now we are referring to the regulations of insider trading, not under ICDR. The regulation set has changed. Now we are referring to SEBI Prohibition on Insider Trading Regulations 2015. So Securities Exchange Board of India Prohibition of Insider Trading Regulations 2015. Here they will actually contain what are the restrictions or prohibitions related to the concept of insider trading. Are we clear with this? Now, first let me clarify you what is the meaning of insider trading. Of course, it's a malpractice where the insiders of the company, that means persons who are associated with the company, the directors, managers, lawyers, experts, consultants, employees who are actually having a connection with the company, they might disclose the information to someone, or else they will make use of that insider information and participate in the trade so that they will get personal benefit. That is called insider trading. So if some unusual activity happens in the company because of which the price of the shares in the stock market will be affected, either it will be increased or either it will be decreased, yes or no? Now if that is the case, that might happen in future, every investor, either if he's part of the company or he's not, like a general investor, every investor should have an equal opportunity to gain profit or loss to participate in the stock market. It's not like, since I am part of the company, I am an investor, so I will utilize this information before itself, I will sell my shares because I might incur loss. This is not allowed. This is insider trading. It's completely prohibited. Are we clear? So even if the regulations and the law book specifies it is prohibited, it will happen. If you know what happens in the company, why will you be quiet? So are you portraying that honesty? Answer is completely no. Simple. Can someone stop you from talking to your friends or the family? No. Even if, what do you say, there are some legal provisions, they'll be like, did I? Oh, that was just a casual talk. Okay, so let's get back to the concept here. Insider trading is insider dealing, malpractice of selling or buying securities by the insiders of the company, inside the company, not the actual building associated with the company. Are we clear? Yes. So who will be an insider? Connected person or anyone with access to UPSI. What is UPSI? Unpublished price sensitive information. Unpublished, that means, is it made public? No, it is confidential information. Price is sensitive. If this confidential information comes out, the price of the shares in the market will be either increased or decreased. Price is sensitive. Price will be affected. That is the meaning of unpublished price sensitive information. If as an insider of the company or as a connected person or an employee or any person in the company, if I have access to this confidential information, I will become an insider. I will become an insider. But if I am trading while I am an insider, that is prohibition. Of course, you can have access to secret information. That doesn't mean you will become insider. You are committing insider trading. You will become an insider. If you actually participate in trading for your own good, then it is a fault of insider trading. Are we clear with this? So, once again, who will be considered as an insider? Connected person and anyone with the access to UPSI. Clear? Now, let's understand who is connected person. So this is very simple. Anyone who has been associated with the company in the past 6 months. So some relations may be temporary relations, like just for consultancy services or to analyze or to give projections of the financial statements. So for that case, they will come to the company, they will receive the information, they will give the analysis and will go out. But still they might have access to UPSI, yes or no? So that is why anyone who has been associated with the company in the past 6 months. What kind of association here? Frequent communication with the officers. So even if company is not taking a consulting services, but a CEO or else a CFO constantly daily communication is having with an expert or some consulting firm. So that firm or the expert will also become a insider. Clear? So because they are having a frequent communication with the officers. And contractual, like maybe a legal advisor or an advocate for a particular contract and employment relation and director, officer, employee, all these persons will be the examples of connected persons if associated in the last 6 months. Are we clear with this? Yes. And now we will move on to the concept of deemed associate persons. Even if they are not directly associated with the company, but still there is a possibility that they may involve themselves in insider trading. So deemed connected persons are, number one, relatives of connected persons. Previously, before amendment, it was immediate relative, but right now it is relative. Clear? So the relative of connected person. So example will be the spouse, parent, parent of the spouse, your in-laws, siblings, siblings of the spouse, and children, children of the spouse, and spouse of these two cases. Just read the understanding. Relations like blood relations are really confusing. Okay. Okay. Spouse means husband or wife. Sibling means brother or sister. Keep that in mind. That's all. You can easily understand. Most probably in exam they will not test you. They will just test you. They will give in the case study only they will give relative. Okay. So fine. So deemed connected persons are relatives of these connected persons and holding company, associate company, subsidiary company, and members of the board, not board of directors of the company, but board of officials and employees of any public financial institution associated with the company, or any asset reconstruction company, or stock exchanges or mutual funds that will have the securities of the issuer listed with them. Then these category of persons, board officials, employees, they will also be considered as connected persons. And banker of the company, where the transactions of the company, debit transactions, credit transactions, will be executed in the normal course of business. Banker of the company will also be considered as what? Insider. That is nothing but connected person. Are we clear with this? So once again, insider means, insider is the main definition. Insider means connected person, anyone who has UPSI. Who is a connected person? Anyone who has been associated with the company in the past 6 months. With what relation? Frequent communication with the officers, contractual or employment relation, director, officer, or employee of the company. And that allows that person's access to UPSI. Next, deemed connected persons, relative of connected persons, holding associate, subsidiary, members of board, officials, and employees of what? PFI, that is public financial institution, asset reconstruction company, stock exchange, mutual fund, and banker of company, and etc. Are we clear with this? What is the meaning of full form of UPSI? Unpublished price sensitive information, meaning information relating to company or its securities not generally available but likely to affect the price of securities. Once again, we'll read the definition. Information relating to company or its securities not generally available, likely to affect the price of securities. Clear? Examples will be the financial results of the company, dividends to be declared, changes in capital structure, debt to equity, mergers, demergers, acquisitions, changes in the position of KMP. All this will affect the price of securities. Are we clear with this? Once again, examples also like this you have to write down. In the definition itself they have given includes, not examples also. Okay, includes what? Financial results, dividends, changes in capital structure, mergers, demergers, acquisition, changes in KMP. Are we clear with this? Understood? Now, I will just give you a brief, content of the content that I've skipped in the handwritten notes, but is there in the concept book. Okay? So, generally, insider trading is completely prohibited. So, whoever has the access to unpublished price sensitive information, they have to follow 2 codes. What are those codes? Code of fair disclosure, code of conduct. What is code of fair disclosure? In which cases I can disclose the UPSI to a person for legitimate purposes. In which cases, in which purpose I can disclose, that will be mentioned where? In the code of fair disclosures. Now what will contain in code of conduct as an insider? When can I participate in trading? When can I purchase shares? When can I sell the shares? Do I have to get a trading plan? Do I have to get an approval? What amount is fixed? All that details will be there where? Code of conduct. Clear? Who will decide this? Board of directors. Board of directors of the company will frame the policies, which is code of fair disclosure, code of conduct. Conduct is nothing but behavior, when you can trade. Disclosure is nothing but when you can disclose it to others. That's all. Are we clear with this? Understood? Now moving on to the cases when how insider trading can be prevented in the company. Are we clear? So I have given you a brief summary of that. Insider trading is completely prohibited. Even if they want to trade, what is the general option available is trading plans. What do you mean by trading plan? So if today there might be an agreement of merger, yes or no? So what happens is the insider will utilize this information and he will know that in future the price will increase. So he will purchase excess shares. Yes or no? But to actually prohibit this situation and to give an option for the insider to participate in trading, that means insider can never participate in trading. Why? Because all the time there will be some confidential information in the company. Yes or no? That doesn't mean you can completely prohibit them from trading. They also need profits, no? So that is why one option available for these insiders to participate in trade is trading plan. Prepare a plan that on this date, these many shares of this class I will purchase, these many shares of this class I will sell. Whatever your plan is, frame that plan, submit to the compliance officer. Compliance officer will approve the plan and execute the plan after 120 days. Not immediately. After 120 days. Because in this 120 days, changes will be made in the company, yes or no? Or else the information will be released outside and the price will be affected. After 120 days, can you change the plan? Absolutely no. You have to follow the exact plan that you have given the approval. So that is one of the options. Are we clear? Yes. Now let's get back to the important question from this particular category of, from this particular part of SEBI, which is institutional mechanism for prevention of insider trading, or else they can ask one more way, steps taken by the company for prevention of insider trading. So to make sure that there is a proper security of UPSI and there are proper controls, what are the steps company can take? First, the chief executive officer's responsibility is to place adequate internal controls and compliance. What do you mean by internal controls and compliance? Security measures to preserve the UPSI. Only that person needs to have the access to the system, or that person needs to have access to the meetings where the discussions can go on. So that is called internal controls. Are we clear? Yes. So CEO can place internal controls and make sure the internal controls are being followed. Next comes audit committee. Audit committee's role is to review whether the internal controls are actually operating effectively or not. So audit committee shall review compliance of regulations as well as, that one I'll explain you, shall verify the adequacy and effectiveness of the internal controls, and also at least once in a year audit committee should verify whether these SEBI regulations are being followed or not. That is the responsibility of audit committee. Next comes company shall place one policy. What is that? UPSI leak policy. That means if, let's say, in the company, even if you try to put internal controls, there will still be a UPSI leak. That means the information will go to a person who originally has no access, but he has received that information. That means the UPSI has been leaked. Yes or no? In that case, how the inquiry should be conducted? Inquiry means some other external auditor or court will not come. Internally in the company only, they will inquire where the internal controls have been broken, who has these unauthorized access, to find out that UPSI inquiry policy will be, inquiry will be conducted. So formulate inquiry policy for UPSI leaks and formulate whistleblower policy. Whistleblower policy is nothing but employees, directors, if they find that there is a case of insider trading, or else if they find that there is a case of UPSI information leak, they can blow whistle and announce to everyone who is actually involved in this particular fraud. Are we clear? That is a whistleblower policy that you can fix in the company to avoid what? Insider trading. So let's give a reading once again. It has repeated twice in the past. This was my Super 50 question for December 2024 attempt. Exact question came. I can't predict December 2025. That also I did not predict exact question will come. I just gave to read, that's all. Okay, so institutional mechanism for prevention of insider trading, or steps taken by the company for prevention of insider trading. First, CEO shall put adequate internal controls and compliance. Audit committee shall review compliance of regulations at least once in a year and shall verify the adequacy and effectiveness of internal controls, and company shall formulate inquiry policy for UPSI leaks and formulate whistleblower policy. Are we clear with this? Now we will move on to the third part of SEBI regulations, which is takeover code. Takeover code is again part of a different set of regulations. What are those? Securities Exchange Board of India, substantial acquisition of shares and takeovers regulations 2011. ICDR is 2018. Prohibition on insider trading is 2015. Substantial acquisition of shares and takeovers is 2011. Clear? So now let's start with these concepts. So SEBI substantial acquisition of shares and takeover regulations 2011. It is commonly called as takeover regulation or takeover code. First of all, what do you mean by takeover? Acquisition of control by acquirer. Control on whom? Target company. What's a target company? A listed company in which the acquirer is acquiring the control. Again, the same meaning. Clear? So, first we will understand who is considered as an acquirer. Simple. Any person or entity acquiring shares or control of... Don't worry, I am also part of the group of CMA achievers. I will share this. Okay? Fine. So, now only should I share? No problem? Okay. So just now I sat there in the last bench. You did not recognize me, no? I prepared this today. Okay. Why? Because I can teach the same concept in the concept book only. But again I'll be like, concept book. So those black and white or else, at least it's colorful only, but this is more colorful. So I was able to, prepare the notes for SEBI. No problem. Okay. So, chalo. First, let's understand who is an acquirer. So, a person or entity acquiring shares or control over a target company. Next, what's a target company? Listed company whose shares are being acquired. Clear? Next comes takeover. Takeover includes acquirer to gain control over the target company. What do you mean by control here? Is there any specific percentage? No. Here, right to appoint majority of the directors or influence management or policy. Are we clear? So that's all. That will only be resulting in control. So right to appoint majority of directors or influence management or policy decisions. If you want, you open your concept book. The matter will be there. Okay. So simple. These are the meanings of target company, acquirer, takeover and control. Are we clear with this? Now, before I begin with the further concept, I would like to explain you one small meaning of open offer. What's an open offer? Acquirer is placing an offer, giving an opportunity for the shareholders of the target company to sell their shares to the acquirer. Are we clear? So here, there is no forceful takeover. You are giving them an offer. If they are willing, they will sell the shares to the acquirer. That is only called open offer. Clear? Who is placing the offer? Acquirer. Offer is given to whom? Shareholders of target company. Who will sell their shares? Shareholders of target company. To whom? Acquirer. That is only the concept of open offer. Now, situations which will trigger a mandatory public announcement of open offer. For sure, in these two situations, the particular acquirer should place an open offer. He has no other option. He has to purchase. So what is that? First, when an acquirer with the persons acting in concern, PAC is nothing but persons acting in concern. That means in association. That may be the directors or some other acquirer who is together acquiring. So don't get into the understanding of that. Persons acting in concern, together in association, they are acquiring the shares. Okay. So when an acquirer with the persons acting in concern, they are having how much voting rights in the target company? A minimum of 25%. If they have 25%, they have to place an open offer. Are we clear? Yes. And the next, they have 25% or 30% or whatever. First open offer is completed. Later on, at any financial year, in any financial year, if they are acquiring more than 5% of the voting rights, more than 5% of the voting rights in the target company, they have to place an other open offer. They have to place another open offer. So simple, when acquirer with persons acting in concern is entitled to 25% or more of voting rights in the target company, or if acquiring additional shares or voting entitled to more than 5% of the voting rights in the target company within the financial year. In a financial year, if you are acquiring more than 5%, then again you have to place a open offer. Clear? What do you mean by this? A public announcement of open offer is required to be made for acquiring at least how many shares? You should offer that I will purchase at least 26% of the shares of target company. Are we clear? So any time in these two situations of triggering of the open offer, you have to place open offer for how many shares? A minimum of 26%. Clear with this? Understood? These are the two situations which will result in an obligation to place an open offer and purchase the shares. Why? Simple. Acquirer. So till now, target company shareholders will be under the control of few majority shareholders. Yes or no? But suddenly, if some acquirer comes and acquires 25% or more, control is most likely the control is yet in future it will be shifted to whom? To that acquirer. Yes or no? So the existing shareholders should have an opportunity to exit from the control, or else they might be willing to be part of that new control or new mechanism there. That is why open offer is mandatory. Clear? So that they will have a liberty to exit from the company if they are not willing to stay under the control of that new acquirer. Clear with this? Understood? That is why SEBI regulations makes it mandatory to issue a open offer. Are we clear with this? Yes or no? Now, moving on to the post, I mean, after all this 25%, they have put a 26% of open offer, additional 5%, like that, all in all, till how much percentage the acquirer can gain control? 75. That is only the maximum permissible non-public holding. Why? Because target company is a listed company where the investors like general public should have the opportunity to participate in the securities market of that company security. That is why the 25% remaining whatever is there, it should be left for public float. What do you mean by public float? For the general public to participate in the investment. Are we clear with this? So post acquisition, that is after open offer, such acquirer together with the persons acting in concern, that post acquisition holding must not exceed maximum permissible non public shareholding, which is, what is the limit? Maximum 75%. So for maintaining the minimum public float of 25% in such target company. Are we clear? That is the concept of maximum permissible non-public shareholding. Clear with this? Now, so the above two cases we have seen is open offer due to a triggering situation, not because the acquirer voluntarily he's placing an open offer to purchase the shares. It is due to the obligation of SEBI regulations. Yes, but can an acquirer place a voluntary open offer? Yes, voluntarily, even if the acquirer is not purchasing more than 5% in a year, voluntary also he can place an open offer. So what are the conditions for voluntary open offer? Difference between triggered open offer and voluntary open offer is simple. This is because you have met with the conditions in SEBI. Okay, SEBI said if you are acquiring 25%, you have to place a open offer. More than 5%, you have to place an open offer. This is triggering situation, not voluntary situation. Voluntarily, can you place an open offer? Yes. What are the conditions? Again, basic. That person should have at least 25% of voting in what? Target company. Next, no acquisition in the past 52 weeks due to open offer obligation. Simple. Condition says if 25% met, if the 25% is met, you have to place an open offer. Not voluntary, triggered open offer only. Why? Because that is required over there. Now, after that, in any moment, if you want to place a voluntary open offer, how many weeks you have to wait? 52 weeks. Why? Because if you want to place a voluntary open offer, you cannot acquire shares through a triggered open offer in the past 52 weeks. Clear with this? Understood? And next, no share acquisition after the voluntary open offer is closed. No share acquisition during the not closed. This is the condition here. No further acquisition for 6 months post offer unless through another voluntary offer. So if you want to acquire after open offer is closed, voluntary open offer is closed, can you acquire through an agreement with a private agreement with the shareholders? Answer is no. You have to place another voluntary open offer. And the next, during open offer period, you cannot acquire shares until and unless it's through open offer. So no share acquisition during the open offer except through the open offer. That means open offer is there. Here they are trying to sell the shares. Again, other than this mode, you are trying to purchase the shares from the shareholders through a private placement. Not private placement, through a private agreement. That is also not permitted. Clear? So conditions for voluntarily placing an open offer, 25% you have to meet. Second, past 52 weeks, you cannot go for triggered open offer. And the next, during open offer period, whatever is there, if you want to purchase the shares, you can purchase only through open offer, not through any other mode. And the last is after the voluntary open offer is closed, in the next 6 months, can you acquire the shares? Yes, only through open offer. Only through open offer. So there is no purchasing the shares in the share market without open offer. Clear with this? That's all. So read it yourself once again. You will understand easily. Okay. So next comes withdrawal of the open offer. In which situation you can withdraw the, or you have to withdraw the open offer? The first, statutory approvals are denied. That may be the approvals of SEBI, or that may be the approvals of CCI or any other government department or statute. And the next, acquirer, natural person dies. He is no longer there to acquire shares. That is why. And the next, conditions in the acquisition agreement are unmet. There may be few conditions, terms and conditions. So if they are not met by the target company or by the acquirer, then they cannot proceed with the open offer. And SEBI approved reason. If SEBI specifies that since these conditions are not met, SEBI has approved the withdrawal, then you can withdraw the open offer. So the four cases where you can withdraw the open offer is statutory approvals denied, acquirer who is a natural person dies, conditions in the acquisition agreement are unmet, and SEBI approved reasons. Now comes open offer is placed. Yes or no? Now, if open offer is placed, I will be tendering my shares. What do you mean by tendering shares? Selling the shares. In return, what the acquirer should pay me? He may the consideration may be in the form of cash, or else he can transfer listed shares of the acquirer if acquirer is a company. Clear? Listed shares of the acquirer, or else listed secured debt instruments instead of equity shares, debt instruments, or else convertible debt securities, which will give an option to avail equity shares after conversion. So what can be the mode of payment? Cash, listed shares, listed secured debt instruments, and convertible debt securities. Are we clear with this? Now, important concept from an MCQ point of view. What is this account called? Escrow account. Why are you preparing this? Why are you maintaining or opening this account? To provide a sense of security to the shareholders of the target company that we placed an open offer. How am I giving the assurance that I have this much amount of money to pay you? You will open a separate account where you will deposit the equivalent amount and give them an assurance that we have money ready. If you tender your shares, we will immediately pay you. That is the purpose of escrow account. Are we clear with this? So, escrow account is to be opened when? At least 2 working days prior to detailed public statement. Before you make a public statement related to open offer placement, then before 2 days you have to open what? Escrow account. What will be the form of escrow account? You can deposit cash, you can give bank guarantee, or you can deposit freely traded equity shares or other securities. Clear with this? Now comes process of open offer. Everyone, please, I need your 100% attention. Otherwise, you will not understand the timeline. Okay, so what is the open offer process? How will the process go on? First step, make a public announcement. You have to make a public announcement that here an acquirer is now making an open offer and the target company shareholders can participate and sell their shares. This is a public announcement that you make. Yes. Now, within 5 days of that public announcement, you will send a draft letter of open offer details to whom? To the SEBI as well as recognized stock exchange. Are we clear with this? So within 5 days of making the public announcement, you are sending the draft letter of the open offer to SEBI and the recognized stock exchange. Next, after you send the letter, you have to wait for the response of SEBI. Are we clear? Oh, okay. So, wait for the response of SEBI. Now, after you receive the response of SEBI, within the next 7 days after receipt of the response of SEBI, you will actually open offer document will be given to whom? To the shareholders of the target company. Are we clear? Now, keep that in mind. Wait for a minute. So, if SEBI is not giving any response, then how many days you have to wait to go for the further step? 15 days. Are we clear? After the expiry of 15 days, within the next 7 days, you will submit the open offer document. That is, send individual open offer document to all the shareholders of the target company. Are we clear? But how will you know the target company shareholders? List should be sent to whom? To the acquirer. When the list will be sent, I will help you understand that. First, we will understand tendering period. What is tendering period? Tendering period is a 10-day period. 10-day period. This is the actual period where the shares can be sold. Only this 10 days only. After that or before that, you cannot tender your shares in the target of the target company to the acquirer. So, when will the tendering period begin? After you will receive the SEBI response. Yes. After the SEBI response, within the next 12 days, the tendering period will begin. Or else, no response is received from the SEBI. After expiry of 15 days, after the expiry of the next 12 days, the tendering period will begin. Are we clear with this? But actually, 10 days before tendering period, 10 days before tendering period, what is this date called? Identified date. What is the purpose of this identified date? You will identify the list of target company shareholders to whom the open offer document has to be sent. Clear? So, what will be the identified days? 10th day prior to the tendering period, on which it will help you to determine the list of the target company shareholders. What will be the tendering period? 10 days. So after the tendering period is closed, how many days will be left to fulfill the payment? 10 days. Time for completion of payment. After the payment is complete, open offer period. And so from the date of public announcement to the completion of open offer, this whole thing is called offer period. This whole thing is called offer period. Clear? So these 10 days are called tendering period. Before 10 days of starting the tendering period, what will be the date? Identified date. Within how many days of SEBI's response you have to send the letter to target company shareholder? 7 days. Within the next how many days tendering period will start? 12 days. Sit carefully, have some tea, and get back to your peaceful senses, and then read this once again. Timeline is clear. I am clear. Since you are learning it for the first time, you have to read it once again. Are we clear with this? Yes? That's all. With this, I have completed the concept of SEBI. Okay? One answer is there that you have to learn it by yourself. Obligations of acquirer, obligations of target company. During open offer, what are the obligations and what are the obligations which has to be followed by target company, and what are the obligations which are followed by acquirer? Clear? Yes? So that is not there in your Q&A companion. You have to refer to what? Concept book. So that is why write this down. Yes, June 2025 as well as December 2025 MQP, both the cases it is asked. That is why it's not there in my Q&A companion. My book is released before June. Okay, I can't predict question paper now. Okay, so concept to be, concept number is there? Page? (11) and 12, no? (11) and 12, page 161 and 162. Okay, so if it's better you write down the question also. Obligations of target company and obligations of acquirer. Okay, with this we have completed the concept of SEBI. Now it's time for important questions. Page 138. Question 1. Question 5. Eight and 9. Question 6 also. Just a simple meaning of UPSI. If you have time, book building process. Yeah, make the correction. I did change. Okay, clear? Yes, here also. In this case, they have given as immediate relative. It is very clear that it is amended. I have proof for that. Okay, but it is not clarified in the supplementary, or else the clarification released by ICMAI. But no worries, we have one source available. In December 2025 MQP set 2, they only gave question, they didn't give answer. In that one question is connected person. If they give answer immediately, I'll notify. I mean, for now you read relative only. If they say immediate relative, then you have to change. Okay, whatever is there in the concept book, that only you read, because it is amended. Okay, if they are not considering amendment in the MQP, then you have to get back to this immediate relative concept. Okay, so wait for my, I will wait for the answer there, you wait for my reply. Okay, so done. With this, we have completed SEBI regulations. So now let's revise Module 6, Foreign Exchange Management Act 1999. So here in this particular marathon, I am only going to discuss few concepts about the introduction related to FEMA, and then I will be discussing the foreign direct investment, the meaning, entry routes, as well as sectoral caps and prohibited sectors and permitted investments, and then LRS also, meaning prohibited remittances, permissible remittances. That's all. So ECB is not there in your handwritten notes and will not be discussed in the class. Okay, so first, this particular category of concepts will contain the applicability of FEMA, definitions of FEMA, and current account transactions, capital account transactions. So this is nothing but from section 1 to section 6. So shall we start? Yes. So first we will start with the discussion of section 1. Section 1 contains the short title. The title of the act is simple: the Foreign Exchange Management Act 1999. It extends to whole of India, and specifically it is also applicable to branches, offices, agencies. They are located where? Outside India. But who is controlling them and who is owning them? It is a person resident in India. And the next, any violation. They have violated the terms of FEMA, but where is the violation committed? Outside India. But who is committing the violation? The person to whom FEMA applies. Clear? So this is the specific applicability of the FEMA. And next comes commencement. It came into force on 1st of June 2000. So once again we'll revise the applicability. Extends to whole of India. It is also applicable to branches, offices, agencies located outside India, owned and controlled by a person resident in India. And any violation committed outside India but by a person to whom FEMA applies. Moving on to section 2, which contains the definition. The first definition is person. So it is not important from an examination point of view, but generally in our whatever you studied in the other subjects, that will only be present here also. Person includes individual, HUF, company, firm, AOP, BOI, AJP, and agency, office, branch owned and controlled by such person. Clear? Next, moving on to the most important definition: person resident in India and person resident outside India. So please pay attention. It's a flow chart. If you listen to the class, then only you'll understand the flow chart. Who created this? Me. That's why I will explain you how the flow works. Okay, clear? So first condition which has to be met, this is related to individuals. Okay, so first, a person residing in India more than, not equal to or more than, like we have seen in the resident director, it is more than 182 days during the preceding financial year. So what is the primary condition which has to be satisfied? Stay in India in the preceding financial year is more than 182 days. So the answer for this question can be either yes, the stay is more than 182 days, or no. Let's say the scenario is yes, the stay is more than 182 days. Now you have to check whether that person who is staying more than 182 days in that particular financial year, did he go out of India or he stayed outside India. So has gone out India or stays outside India. For this question, yes, he is staying 180 days in the previous year. Did he go out of India? Answer is yes. Now check for what purpose he went outside India. So if it is for employment, if it is for business, if it is for vocation like a profession, or if it is for any other purpose which will indicate that he is going to stay there for a longer period, that is indicating his intention to stay for an uncertain period. So simple, his stay in the previous year is more than 182 days. Did he go out of India? Answer is yes. For these three purposes, yes, then he is not considered as person resident in India because he is going permanently. Simple. Because he is going out permanently, he will not get the status of resident. So now moving on to the next scenario. So he does go out of India not for these three purposes. Temporary stay, then he will be considered as person resident in India. He does not go outside India. So he will be a person resident in India. Now comes the second scenario where the stay in the previous financial year was not more than 182 days. He did not stay for 180 days. Clear. Now check whether he is coming to India. Consider this as a foreigner who was not in India. Okay, now he is coming to India. Now, if he comes to India and stays in India for these three purposes, yes, for these three purposes, then he will be considered as what? Person resident in India. Not for these purposes, for temporary stay is coming to India, then he is person resident outside India. He does not come to India. So, he will be a person resident outside India. Shall we read the flow again? Yes, so a person residing in India more than 182 days during the preceding financial year. Yes, he has gone out of India or stays outside India. Yes, for these three purposes, yes, then he will be considered as person resident outside India. Clear? Next, moving on to this case where he goes out of India but not for these three purposes. That means temporary stay, he will come back. That is why he is considered as person resident in India. He does not go outside India. No. Then he will be considered as person resident in India. Next, his stay is not more than 182 days. Does he come to India? Yes. For these three purposes, yes, then he will be considered as person resident in India. Not for these three purposes, then person resident outside India. Does not stay in India, then person resident outside India. Are we clear with this? Yes or no? Okay. Now, moving on to the second category. Any person or a body corporate registered or incorporated in India. Company incorporated in India will be considered as a person resident in India. Clear? Next, office, agency, branch. Location, India. But who is owning and controlling? Person resident outside India. Clear? Then that particular branch will be considered as a PRI. Person resident in India. This is located outside India, but who is controlling? Person resident in India. Then that particular office, branch or agency will be considered as a person resident in India. Are we clear? Yes or no? Once again, to write this in a actual format, which page number will you refer? Go to the concept book. 175, I'll open. Yes. Okay. So, okay, this is the content that you revise once again. Okay. Pay attention and then you revise it, then you will understand easily once again. Okay. So just write this down here. Page 175, concept 7, point K. Okay, so did you write it down? Now, moving on to the next definition, foreign exchange. What do you mean by foreign exchange? Foreign currency for sure, and all the deposits, balances, credits that you are maintaining in which form? In the form of a foreign currency. That will be considered as a foreign exchange. And all the instruments that you draw in INR. You are paying INR and you are receiving the check. But ultimately, how you will withdraw that? In foreign currency. That will also be considered as a foreign exchange. And a person resident outside India is drawing the check, but he is availing that in the form of INR. That will also be considered as a foreign exchange. So let's revise this quickly. Means foreign currency and includes deposits, credits, balances payable in foreign currency. FCY is foreign currency. Next, drafts, travelers checks, letters of credits, bills of exchange expressed initially drawn in what? INR, payable in foreign currency, or drawn by person resident outside India but payable in INR. Are we clear with this? Now, various different types of person resident outside India who can make investment and they have to be registered with the SEBI is first, person making FDI, foreign direct investment. Of course, foreign direct investment is made by whom? Indian resident? Foreign person. So that is nothing but person resident outside India makes the foreign direct investment. Next comes foreign institutional investor. Institutions located outside India whose main business is acquisition of securities. Like you have QIBs, no? Thereby those kinds of institutes like mutual funds as well as these insurance companies located outside India, but they want to participate in the stock market in India, then they have to get registered as foreign institutional investors. Next comes foreign portfolio investors. Individuals located outside India, that is person resident outside India, individuals or institutions together, if they want to participate in the stock market in India, then they have to get registered as foreign portfolio investor. And the last is foreign venture capital investor. A person resident outside India making investment in startup companies of India, that person should be registered as foreign venture capital investor. So 4 different investors: person making foreign direct investment, foreign institutional investor, foreign portfolio investor, foreign venture capital investor. Next comes, please pay attention because 2 times this will be repeated. In the next upcoming concepts, this will be repeated once again. So that is why pay attention. Investment in repatriation basis. I am a person resident outside India. I purchase shares in Indian company. Whatever the dividend that I receive, whatever the capital appreciation that I receive, if I take that money back to my home country, that is I am residing outside India, back to my home country, that is what? Investment in repatriation basis. Whatever the income, sale proceeds that you generate from the asset in India, can you take back to your home country? Answer is yes. That is considered as investment in repatriation basis. But if you make investment in non-repatriation basis, income that is generated, sale proceeds, every money that you get from that particular asset should be utilized in India. It can't go outside India. Clear with this? Is it an option? No. Under FDI protocols, they will mention in this particular type of sector, you can make investment only on non-repatriation basis or only on repatriation basis. So that is why, to understand that, I have explained this. Clear with this? So let's read the sentence here. A non-resident, that is a person resident outside India, is making investment in Indian company or Indian assets. What we will receive in return? Income, capital appreciation or sale proceeds. Now, if it is repatriation basis, then it can be taken back to their home country without any restriction. But if it is non-repatriation basis, it cannot be utilized outside India. Then who will use that? You can reinvest in India, or else your family members will use. The persons who are located in India. That's all. Are we clear with this concept? Now, moving on to the next definition, person of Indian origin. So, this particular person is a citizen of any country. He is not citizen of India. He is not a citizen of India. I am not referring to residential status here. I am referring to citizenship. He is not a citizen of India. He is a citizen of any country other than Bangladesh and Pakistan. These two particular countries will not get the status of PIO. Okay, so citizens of any country other than Bangladesh and Pakistan. How will they get the status of person of Indian origin? If anytime they have held an Indian passport. So what happens is, initially when they were young, they will go out of India with Indian passport. After they stay for 10 years or more in US, they will get the citizenship of US. They have to sacrifice the citizenship of Indian citizenship. Yes or no? That means previously they, at one point of time, they have held Indian passport. So now can they get the status of person of Indian origin? Answer is yes. Next, their parents or grandparents were citizens of India. Clear? Next, spouse, the wife or the husband, they are Indian citizens. Then that particular other spouse will get the status of person of Indian origin. So actually, we are reading the meaning of person of Indian origin, but from the concepts that we will see, we will not come across the word PIO, we will come across the word OCI. What is the full form of OCI? Overseas Citizen of India. Same meaning. He is a citizen outside India, but he is of person of Indian origin, but his status will be called OCI. Clear? That means he will have a lifetime visa to India. He can stay in India anytime. How much time he wants, he can stay in India, but he will not get the citizenship. He can't participate in elections. Okay? So mostly rights will be like NRI only, non-resident Indian. Are we clear with this? Simple. We are learning the meaning of what? Person of Indian origin. But actually, is there a status of PIO? No. There is a status of overseas citizen of India. Who will get the overseas citizenship here? Person of Indian origin. Are we clear? From now on, we will come across two terms, NRI and OCI. We will not come across person of Indian origin. But who will get the status of OCI? Person of Indian origin. Are we clear with this? Now, moving on to last two definitions. With this, we will be completing with the definitions. First, foreign security. That means a company which is incorporated outside India. In that company, you are subscribing for the security. That is, it is initially expressed in which currency? Foreign currency. But you are redeeming that, taking that back, or you are getting the money in form of INR. So, redemption or returns are in the form of INR and expressed in foreign currency. It will be considered as foreign security for the purpose of FEMA. Clear? So, under FEMA, foreign security means expressed in foreign currency, but redemption or returns in INR. Now comes foreign currency convertible bonds. Who issues foreign currency convertible bonds? Indian company. To whom? Person resident outside India. These are convertible debt instruments. Convertible bonds are debt instruments only now. Yes or no? Okay. So, debt instruments issued by Indian company to person of Indian origin. So, simple. Except in the form of depository receipts or FCCBs or through getting registered as foreign institutional investor or foreign portfolio investor, until and unless these are the modes available, a person resident outside India cannot participate directly in the Indian stock market. They can't. They can buy foreign currency convertible bonds, or they can buy depository receipts, or they can invest in the form of FDI, or as a foreign portfolio investor, or as a foreign institutional investor. So that is why for Indian companies to attract the foreign investors, what is an option available? To issue foreign currency convertible bonds. Are we clear with this? They will be available in foreign stock exchanges to trade. Okay, so foreign currency convertible bonds, debt instruments issued by Indian companies to person resident outside India, issued in FCY. Return payable is also in FCY. Why? Because they are located outside India. If we give them INR, what will they use for? That is why returns are also payable in foreign currency. Clear with this? Now comes another important definition. A question was also asked, authorized person. There are three different authorized persons. First, authorized dealer. All these are banks, SBI, ICICI, HDFC, Bank of Baroda. There are many banks. They will act as what? Authorized dealers. That means any receipt, any payment that is going from person resident in India to a person resident outside India. That means it's going outside India or coming from outside India. It should happen through a medium. What is that medium? Authorized dealer. Are we clear? So whatever you send money to your friends or else your parents or else some person who is sending money to the parents in India, it should happen through which channel? Authorized dealer. Clear with this? So authorized person, three different persons. Authorized dealers are banks which will deal with foreign currency transactions. Money changer, their responsibility is simple. You give foreign currency, they will convert and give INR. Or else you give INR, they will convert and give foreign currency. Just to convert. That is the responsibility of money changer. And comes offshore banking units. These are banks specifically located in special economic zones to facilitate export transactions for those companies located in special economic zones, SEZ areas. Clear? Offshore means banks located, not located outside India, in India only, where SEZs. Clear with this? So, three categories: authorized dealer, money changer, offshore banking unit. Are we clear with this? So, most probably, if you have to remember a definition, for sure, if you ask me, in worst case scenario, you have to remember authorized person and person resident in India. Okay? So, shall we move on to section 3? Yes? So, in the past attempt, section 3 and section 4 together for 7 marks they have asked. Okay, so let's see the section 3. So what is the title of section 3? Restriction in dealing with foreign exchange. Whatever the definition of foreign exchange we have seen. If as a person resident in India, I want to deal, or any case, I want to send money, or I want to receive, or I want to participate in imports, exports, whatever it is, if I have to deal, then you have to follow the section 3. So I will just give you a overall review here. Any transaction, it should happen through authorized person. Dealing, payment, receipt, financial transactions, all these should happen through what medium? Authorized person. That's all. So, let's look into this. First restriction is deal in or transfer any foreign exchange or foreign security to any person not being an authorized person, then it is restricted. If it is an authorized person, permitted. Next, make any payment to any person resident outside India in any manner otherwise through an authorized person. If you are making through an authorized person, it is permitted. Otherwise, it is restricted. Next, receive money from person resident outside India in any manner otherwise through an authorized person. Next, the last one, you are entering into a financial transaction where in India, but for what purpose? Acquisition, consideration or creation of an asset outside India. So if you want to purchase an asset outside India, what is the proper way? File an application with the authorized dealer bank. They will grant loans if it is permitted, or else you can take the money, whatever the loan which is, whatever the money that you have currently, that money you will utilize, you will execute the capital account transaction through authorized dealer. But this can't happen in this way. What is this way? You go to an Indian company, you go to an Indian bank, you ask for a loan. What loan? Just for Indian businesses, you are asking for loan, you are entering into a financial transaction. But for what purpose you are utilizing this money? To purchase an asset outside India. Can you do that? Answer is no. So you enter into financial transaction like a loan agreement in India. But for what? Purchase of an asset outside India. It is restricted. It should happen through authorized dealer bank. Are we clear with this? So first is to deal in or transfer, second make payment, third receipt money, and fourth is enter into a financial transaction for acquisition, consideration or creation. Are we clear with this? We are done with section 3. Moving on to section 4. Restriction in holding foreign exchange. Now I am not only referring to foreign security, but also assets which are located outside India. Okay, so general restriction is simple. No Indian resident is allowed to acquire, hold, possess, own, transfer foreign exchange, that is we have seen the definition, foreign security or immovable property located in India, unless it will fall under which category? The following 4 categories. The first, he was a foreign citizen. He's a foreign citizen. So when he was living outside India, he has actually acquired that property. Can he hold even if he's a resident right now? Answer is yes. So property held where it is located? Outside India. Who is holding? Foreign citizens. Right now his status is resident in India, but citizenship is foreign citizen. Clear? So yes, it is permitted. Next, property acquired by a person on or before 8th July 1947, partition during the independence. Okay, so and can you hold the property located outside India? Answer is yes, but it should be acquired when? Before 8th July or on 8th July 1947. That too you have to disclose that to the RBI and hold only with the permission of RBI. Now, these two persons, this foreign citizen who is a resident in India, person who acquired on or before 8th July, if they are giving these properties as a gift or inheriting them to their sons or children or grandchildren, then can the children, grandchildren or the person who is receiving the gift hold them? Answer is yes. So, property acquired by way of gift or inheritance from persons referred. Clear with this? Yes. And the last, property purchased of which funds? RFC, resident foreign currency. Let's say you were working outside India, let's say in US you are working, so you have worked for 5 years and then you came back to India. Right now you are permanently residing in India. So in that 5 years you might have earned a lot of money in foreign currency. Yes or no? If you are a person who is rational, you will not convert the dollars immediately, because the dollar value will be increasing day by day. Yes or no? So what you will do? You will open a resident foreign currency account in India and deposit those foreign currency in that account. Can you use the fund in that account to purchase a property outside India? Answer is yes. So property purchased out of what funds? Resident foreign currency account. Are we clear with this? So this will not be in the form of INR. Funds will be in the form of foreign currency. Clear with this? So these 4 categories of persons can hold, acquire, own, possess, transfer foreign exchange, foreign security or immovable property located outside India. Are we clear with this? Now, I am not revising as I was revising the other chapters many a times. Revise it yourself, you will understand. Okay, so together section 3 and section 4 was asked combinedly for 7 marks. They might in this December 2025 also. Okay, so next, current account transaction. What are current account transactions? Any transactions which are not affecting the assets and liabilities of a person. Interest payments, sale of goods, purchase of services, rendering services, these day-to-day payments, fulfillment of rent requirement, all these are nothing but current account transactions. So meaning involves payment for goods and services, interest payments, remittances for your family members, you are remitting for education, you are remitting for foreign trips, you are remitting. All these transactions are called current account transactions. So everyday transactions that do not affect the assets and liabilities of the person or the country. Are we clear with this? Now moving on to foreign exchange management current account transaction rules 2000. This rule specifies 3 different schedules for current account transaction classification. Why are they classifying? Based on which are permitted, which are prohibited. Okay, so first schedule, completely prohibited. You can never engage in these transactions as a person resident in India. So not allowed at any circumstance. What is it? You cannot spend or you cannot receive money from outside India for what? Lottery winnings, horse racings, proscribed magazines. Proscribed magazines means banned magazines, banned magazines with illegal content and all. Okay, now moving on to schedule 2. It is restricted, that means it is permitted, but what? Requirement of RBI's approval. So that is why it's restricted. It is restricted to what? Approval of RBI. Are we clear? So examples are cultural tours for the promotion, advertisement in foreign print media. These will be the examples for the schedule 2 current account transactions for which the RBI's approval is required. Next comes schedule 3, freely permitted. No approvals are required, freely permitted, but there is an upper limit. Example, the third unit that we will discuss, which is liberalized remittance scheme. What is liberalized remittance scheme? This will give a liberty or a freedom to spend 250,000 US dollars for individuals only. Individuals only for one financial year. So if you have $250,000, you can spend freely. So what I am trying to communicate here is schedule 3 will have list of transaction. Restrictions are not there, prohibitions are not there, but for how much amount you can spend? 250,000 US dollars. Are we clear with this? No. Dollars value is set as a limit. That means you should only spend in US. That is not the case. Convert it into any foreign currency. Clear? So if you want to go to Korea to experience that K-drama actual, then convert into won. Okay, so 3 schedules. Schedule 1 completely prohibited. Schedule 2 requires the approval of RBI. Schedule 3 have an upper limit on the amount of foreign exchange that can be used. Are we clear with this? So let's say unfortunately they were not able to identify a transaction in these 3 schedules. Is it permitted or prohibited? Freely permitted, no limits. Are we clear? So transaction not listed above, permitted without any limits. Clear? So if they ask about current account transaction rules, then write down schedule 1, schedule 2 and schedule 3. If they ask about the current account transaction meaning, write this content and refer to the Q&A companion for the actual current account transaction. Only 4 will be there. No worries. Okay? Those are also like interest payment and remittances. Okay? Now moving on to last section, which is capital account transaction. The quite opposite to current account transaction. Here if it will affect the assets and liabilities. Purchase of foreign securities, purchase of properties located outside India, all these will be categorized as capital account transactions. So involves changes in ownership of assets and liabilities, like investments you're making, taking a loan, or else transfer of ownership of the assets physically located outside India. So all these will be considered as capital account transaction. Clear? Now general permission. Any person can engage in capital account transaction. So if they have INR, they want to purchase a property outside India with INR, buy foreign currency, and you can purchase that capital, whatever, you can execute the capital account transaction. So any person can buy or sell foreign exchange from an authorized person for capital account transaction. Who has the right to put restrictions on the capital account transaction? RBI, with the help of central government, decides which capital account transaction shall be allowed, restricted, and set limits for the amount of foreign exchange. Clear? For 2 cases, RBI cannot set limits. First, depreciation of the asset and loan repayment. Already you have taken a loan. To repay that loan, RBI cannot place any restrictions. For the asset which is located outside India, it is depreciated, then you want to restore the value for that. You want to account in your books. Can RBI put restrictions for that? Answer is no. So RBI cannot impose restrictions on foreign exchange for loan repayment and depreciation of asset. Other cases, RBI, with the help of central government, will decide which capital account transaction shall be allowed, restricted, and limits for the amount of foreign exchange. So once again, we'll revise the general meaning. Any person can buy or sell foreign exchange from authorized person for capital account transactions. Are we clear? Now the last two concepts of the unit 1, possession and retention of the foreign exchange. So as a person resident in India who is an authorized person, he can hold foreign currency as per the limit set by RBI. So how much amount of foreign currency he can hold for executing the transactions, that will be, the limits will be specified by RBI. A normal person resident in India who is not an authorized person, for coins there is no restriction. You can have a bag full of coins, huh? Yes, answer is okay. So currency up to a limit notified by RBI. And next comes temporary residents. They have no limit on the amount of foreign exchange they can hold, but while they are coming into India, in the customs of the airport or the seaport, they have to declare that this is the amount that I am holding in the form of foreign currency. Clear with this? So temporary residents can hold foreign currency without any restrictions, but it should be acquired while residing outside India, and it should be declared to customs. That's all. So authorized persons can hold foreign currency within the limits specified by RBI. Normal person resident in India, coins, no restriction. Currency up to a limit notified by RBI. Now comes forms of business. It can be two forms. You can incorporate a company under the Companies Act 2013 or respective law, or else you can set up offices. You're not incorporating here, you're just setting up offices. So first, incorporate a company. You can get registered with the Companies Act 2013. It can be in the form of joint venture with another Indian company or a wholly owned subsidiary of a foreign entity. Clear? Next, setting up offices. What kind of offices? Liaison office. That is nothing but a communication channel. Let's say there is a prospective big client in India, but you don't have any offices located in India. For that particular communication with the clients, what you can do, you can set up a communication office which is called liaison office. And the next, branch office for your business activities. And project office, for a specific project, for completion of a specific project, you can set up offices. That will be called as a project office. In these three cases, you are not incorporating a company, you are just setting up temporary offices. Clear with this? That's all. Now moving on to the next unit, foreign direct investment. So in order to understand the provisions of foreign direct investment, you need to check mainly two documents: FDI policy and master directions released by RBI on foreign direct investments. So which department will release the FDI policy? Department for Promotion of Industry and Internal Trade. So it is Department for Promotion of Industry and Internal Trade. Are we clear? So it is under the Ministry of Commerce and Industry. So FDI policy, who will issue? Department for Promotion of Industry and Internal Trade under the Ministry of Commerce and Industry. And if you are referring to ICMAI study material, there's a small error. It will be mentioned as international trade. It is not international trade. The department name is internal trade. Okay, so now what is the meaning of FDI? Who is making foreign direct investment? Person resident outside India. He is investing in the business in India for control, for significant influence. It can be in the form of establishing a new entity, or you are acquiring the stake, or that is nothing but share in the existing company, or else you are entering into a joint venture or a merger or acquisition. These can be the forms of foreign direct investment. So one simple sentence is an investment made in Indian company in India, in the investment in the business by a person resident outside India. Clear with this? Now, if we have to specifically value the limits after which it will be considered as FDI, then you have to refer the master directions released by RBI. So directions for a particular matter, it will be released. No, these are master directions specifically for a whole concept set of directions will be released. That is why these are called master directions. So first, what will be the definition of foreign direct investment? First and the foremost thing, any amount of investment a person resident outside India makes in an unlisted Indian company. company, any amount, it will result in foreign direct investment. Next, you have to invest at least 10% of equity capital on fully diluted basis. That is in case of listed company. What do you mean by fully diluted basis? I will just give you a quick explanation for that. Simple. What all the company has: equity shares, convertible debt instruments, and convertible preference shares. Now what the company should do after receiving foreign investment, this calculation should be done after receiving foreign investment. All these convertible rights or convertible instruments should be converted into equity shares. Add the equity shares also, you will get a value, no? In that value, how much should be the amount of foreign investment? At least 10%. Clear with this? Also called as post-issue equity capital on fully diluted basis. It should amount to at least 10%. Are we clear with this? Yes. So initially he has invested 10%. Due to capital structure changes or additional issue of shares, the 10% value has decreased later on. Does that result in you will lose the status of FDI? Answer is no. So FDI status is maintained even if the investment falls below 10% later on. Are we clear with this? Meaning of FDI: investment in unlisted Indian company, any amount. Investment in listed company, at least 10% of the equity share capital on fully diluted basis. Okay, let's continue. So this is the meaning of foreign direct investment. So now if we move on to the meaning of foreign portfolio investment, investment which is made by person resident outside India. Here it is less than 10%. If it is at least, that is equal to or more than 10%, it will be qualified as foreign direct investment. If it is less than 10%, it is foreign portfolio investment. Are we clear? And also less than 10% in each series of capital instruments based on the dividend payment, based on the tenure and conversion period and all that, series will differ. So in each series of capital instruments, how much should be your investment? Less than 10%. Then it will result in foreign portfolio investment. But here specifically we are referring to listed Indian company. Why? Because foreign portfolio investor will be registered with whom? SEBI. Can participate where? Indian stock exchanges. What company shares will be listed? Listed company shares. That is why. Are we clear with this? So these are the definitions of foreign direct investment and foreign portfolio investment as per master directions. Are we clear with this? Now moving on to the two important questions of FDI. In FDI, prohibited sectors, permitted investments. So prohibited sectors we will see quickly. The first one, a person resident outside India cannot invest in these sectors, either it may be an unlisted Indian company or listed company. In these sectors they cannot invest. Clear with this? So first, lottery business. It may be a private lottery business or a public lottery business or an online lottery business. They cannot invest in lottery business. They cannot invest in gambling and betting and also casinos. Clear? And the next, they cannot invest in chit funds, but two different types of persons resident outside India can invest: non-resident Indian or overseas citizen of India. That too in what basis? Non-repatriation basis. That means returns. Can it be taken back to their home country? No. Clear? Next comes the fourth one, Nidhi companies. Next, real estate business. They cannot engage in the business of selling and purchasing the property for making profit. So real estate business is prohibited. Construction of farmhouses is also prohibited. Clear? Next comes trading in TDRs. What are TDRs? Transferable development rights. To develop more buildings or to develop more floors or to develop buildings in a land, that is called development right. If you are selling it to some person and you're purchasing from the other person, that is called trading in transferable development rights. Are we clear? Right to construct. in a land, that is called development right. So if you don't want to utilize that, some person wants, you will sell the development right to the other person. Are we clear? So can a person resident outside India involve in these trading in development rights? No. Clear? Next, you cannot invest in manufacturing of cigarettes or tobacco products, and you cannot invest in sectors which are not open for private investment only. It's not open for private investment in India. How can you open them for foreign investment? Clear? So, activities or sectors not open for private sector investment. Examples, atomic energy and railway operations. So, all in all, these are 4 prohibited sectors, actual sectors. Shall we revise quickly? Gambling, lottery business, gambling, betting, casinos, chit funds. Who can invest in chit funds? Non-resident, NRI, OCI, on non-repatriation basis, they can invest. Clear? Next, Nidhi companies, real estate business and construction of farmhouses, trading in TDRs, transferable development rights, and manufacturing of cigars, cigarettes, tobacco products. And 8, activities and sectors not open for private sector investment. 2 sectors are atomic energy and railway operations, and these are specific investments. We are not talking about sectors. Any investment made by persons, that is citizens or entities incorporated from Bangladesh or Pakistan, they have to get approval from government, then only they can make investment. Next, citizens or entities from, specifically from Pakistan, they can never invest. They can't even get approval. They can never invest in defense, space, atomic energy, and the all 8 prohibited sectors. They can never invest. But other sectors, if they want to invest, they can get a prior approval of prior government approval. Are we clear with this? That's all. Now moving on to entry routes. What are entry routes? Before this entry routes and sectoral caps, I want to show you the actual FDI policy which was released by the Department for Promotion of Industry and Internal Trade. The latest FDI policy was released on October 15th, 2020. So, what does this FDI policy contain here? First, of course, the content that we've already studied, which is prohibited sectors. Just give me 1 minute. Yes, see, chapter 5 has prohibited sectors. That's whatever we have seen in the syllabus, in the handwritten notes. We have already revised this. Now, moving on to entry routes. There are, just 1 minute. Yes, so I was discussing related to the entry routes and sectoral cap. So in the FDI policy, it will be clearly mentioned with the sector in these like boxes. See, look into this. So here they have given the heading as agriculture and animal husbandry, and together what all the activities which will come under here they have listed, and the entry route they have mentioned is automatic. That means no approval is required. So you can directly invest. So what is sectoral cap? That is limit of investment that can be made in this sector, maximum 100%. So likewise here also for plantation, automatic route and sector cap is mentioned, and I will give you other examples also. So in this particular petroleum refining, if you observe, the cap is mentioned as 49% only. Route is mentioned as automatic. So here if you observe, in this particular defense industry, cap is 100%, but only 74% you can make through automatic route, and the remaining it should be gone through government approval route. So that is how, that is the meaning of sectoral caps, and that is the meaning of entry routes. Are we clear? Yes or no? Now these all you don't need to remember. Just remember the meaning of sectoral caps and meaning of entry routes. Now get back to the handwritten notes, you will understand. So entry routes are automatic route, and the second one is government approval route. Automatic route, the person resident outside India do not require the approval of any person. That is, not require the approval of government or RBI. They can make the investment. They have to make sure it is up to the sectoral cap. Next, government approval route. Investments under this route require the approval of government. Clear, everyone? Next, what is the meaning of sectoral cap? Maximum foreign investment allowed in that sector or activity in India. That is what we have seen in the example. In the FDI policy, maximum 74%, maximum 49%, maximum 100%. So, are we clear with this? Understood? I have given you a practical example. Okay. Next, now we'll move on to the last question of FDI. We have seen prohibited sectors. Now let's look into the permitted investments. So first, a person resident outside India is permitted to purchase, sell, subscribe capital instruments of what company? Indian company, any person. Now moving on to the next permitted investment is a person resident outside India can purchase and sell capital instruments of listed company if it is a foreign portfolio investor, and by NRI and OCI on repatriation basis. That means whatever the returns that they get from the listed company capital instruments, can they take back to their home country? Yes. Clear? Now moving on to the fourth one. As a person resident outside India, specifically NRI and OCI, they can invest in units of mutual funds, real estate investment trusts, infrastructure investment trusts, and alternate investment funds. All these are in your concept book under the heading investment vehicle. Okay, so look into this, you will understand. So NRI and OCI on non-repatriation basis. So they can purchase these securities, they can make capital contribution to partnership firms, proprietorship firms and LLPs. Next, moving on to the last few, permitted to, a person resident outside India is permitted to purchase and securities other than capital instruments, bonds as well as commercial papers, money market instruments. All these are securities other than capital instruments. Next comes, a person resident outside India can make investment in LLP, investment in investment vehicles. All these three are investment vehicles, and investment by foreign venture capital investor. Foreign venture capital investor registered with the SEBI for the purpose of investment in startup companies in India. That is also allowed. Now, I need your attention. Here I am going to explain you the meaning of depository receipts. What are ADRs? What are GDRs? If you have a doubt till now, this will be clarified with this concept. So, pay attention. Now, first, we will understand what are American depository receipts and global depository receipts. So first and the foremost thing here, what is the motive here? Indian company is attracting foreign investors. Indian company is attracting whom? Foreign investors. So here, Indian company is permitted to issue or transfer eligible instruments like capital instruments, eligible instruments, to whom they will transfer, to whom? To a foreign depository. In India we have NSDL and CDSL. In that particular country, whatever the foreign depository is, the Indian company will transfer these instruments to that foreign depository. Now this foreign depository will give that instruments a form of depository receipts. These can be American depository receipts or global depository receipts. Now, so easily a person resident outside India can purchase these ADRs or GDRs where? In foreign stock exchange. Clear? They don't need to get registered with the SEBI to come to India and purchase the assets, nothing of that sort. Simply they can access the capital market or foreign stock exchange, and they can invest in ADRs and GDRs. Are we clear? So ultimately what they are holding? Instruments of Indian company. The same opposite is for foreign companies to attract Indian investors. What these Indian investors can do? They can participate in Indian stock exchanges and they can purchase Indian depository receipts. Ultimately, what are the assets we are purchasing? Instruments of a foreign company. Clear? So, foreign companies permitted to issue and transfer eligible instruments to Indian depository. This Indian depository will issue Indian depository receipts where Indian investors can purchase and sell in the recognized stock exchange. Clear with this? Here foreign companies attracting Indian investor. Here Indian companies attracting foreign investors. Clear with this? Understood? In Indian stock exchanges, what will be available? IDRs. In foreign stock exchanges, what will be available? ADRs and GDRs. So this is also permitted under the FDI scheme. Clear with this? So total in 10 we have seen. First, permitted to purchase, sell, subscribe capital instruments of an Indian company. By FPI, he can purchase and sell capital instruments of a listed Indian company. NRI and OCI also can purchase and sell listed Indian company capital instruments, but on repatriation basis. And person resident outside India, specifically NRI and OCI, are permitted to purchase units of mutual funds and investment vehicles. Units. Okay, next, capital contribution to partnership firms, proprietorship firms and LLPs. Next, permitted to invest in other than capital instruments, LLP, investment vehicle by foreign venture capital investors. So here we have seen ideas, and here we have seen the meaning of the GDRs and ADRs. Now we are moving on to the last unit. Please pay attention. In the next 15 minutes I will complete FEMA. Okay, so LRS, full form, please revise it with me. Liberalized remittance scheme. Liberalized remittance scheme. It is available to whom? All resident individuals. FDI is available to a person resident outside India to come and invest in Indian business. But here it is available for a person resident in India, that too individual, to spend their money outside India freely without any approvals. So all resident individuals including minors can remit up to 2,50,000 US dollars. That too, the limit is applicable for 1 financial year. Clear everyone? Now for what purpose they can spend this amount? For any permitted current account transactions, permitted capital account transactions. What are the permitted current account transactions? Schedule 3. Schedule 2 also, approval of RBI is required. It is not freely permitted. Here it is freely permitted scheme. That is why Schedule 3 current account transactions. Are we clear with this? Repeat this with me once again. All resident individuals, including minors, can remit up to 2,50,000 US dollars in a financial year for permissible current and capital account transactions. Since it's available only for individuals, it is not available for corporates, firms, HUFs and trusts. Clear? And it is introduced on 4th of February 2004 with an initial limit of 25,000 US dollars. But right now demand, our cost of living has increased. Yes or no? That is why it's 2,50,000 US dollars. Are we clear with this? Now, let's see the first question which can be asked from this particular unit, which is prohibited remittances. Okay, so prohibited remittances, that means for these purposes a resident cannot spend money, cannot spend 2,50,000 US dollars. Clear? So first, Schedule 1 and Schedule 2, because Schedule 3 is freely permitted. Schedule 1 is prohibited. Schedule 2 needs the approval of RBI. That is why it will not fall under the LRS scheme. Clear? So first, prohibited remittances, Schedule 1, and Schedule 2, current account transactions. Second, for margins or margin calls to overseas exchanges, if you have a grasp of the derivatives, what happens is you will deposit a margin. Yes or no? Now based on the loss and profit that you gain, the margin might fall below and you want to redeposit the margin. Yes or no? For that purpose you cannot spend money. To overseas exchanger, if an Indian financial service provider is helping you enter into the derivative contract, can you deposit margin with the Indian trader or the Indian Indian exchange? Answer is yes. But for overseas exchange, can you enter into such contracts? No. So for margins or margin calls to overseas exchanges, if in India there is a financial service provider or a forex dealer, with him can we enter into this margin contracts, derivative contracts, option contracts? Yes. Can you deposit margin? Yes. But with an overseas exchanger, it is not permitted. Next, purchase of FCCBs. FCCBs are issued for whom? Person resident outside India. expressed in what? FCY. Returns in what? FCY. But then why resident is purchasing? So that is why it is not allowed. So purchase of foreign currency convertible bonds in overseas secondary market. In outside India, you are trying to purchase from a person, so that is also prohibited. Next, trading in foreign exchange. You will trade in foreign exchange to get the profit of the differentiating currency value over the time. Yes or no? That you can trade in India, but not overseas, not outside India. Again, same. You cannot enter into these exchange contracts outside India. So trading in foreign exchange abroad is prohibited. Clear? Next, capital account remittances to non-cooperative territories or countries identified by FATF, Financial Action Task Force. Write down the full form there. Financial Action Task Force. If you are studying with the concept book, I will not ask you to, but you might depend solely on capsule. That is why I am asking you to write down the full form. So first, let me clarify you what are non-cooperative countries or territories. Yes, if you go to the Financial Action Task Force website and go to black and grey list countries. Okay, so blacklist countries are high risk jurisdictions which do not cooperate with any restrictions. That may be for money laundering or terrorist financing or proliferation. For all these cases, these do not cooperate, and there is a high risk that these crimes will be committed. So what are these list countries here? North Korea, Iran and Myanmar. These are countries considered as non-cooperative countries and territories. And there are few grey list countries. That means there is a possibility. They cooperate for some extent, but there is a possibility of crimes. So all these Iran, Middle East countries, African countries, if you observe here, Virgin Islands, UK is there, Kenya is there, Bulgaria is there, Algeria is there. So Latin American countries also will be included here, where the restrictions are not that stringent. Clear? So now I hope you understood the meaning of non-cooperative countries and territories. Clear? So if you are trying to remit for capital account remittances, that is for investment, purchase of asset, purchase of securities to those countries, it is not permitted, prohibited. Next, remittances to individuals or entities. They have been specified by RBI that they pose terrorism risk. They might be involved in terrorist activities. They will specify few lists. So for those entities and persons, you cannot send money. Clear with this? Yes. So there are 6 prohibited remittances. First is Schedule 1, Schedule 2, current account transaction. Second, margin or margin calls, overseas exchange. Next, purchase of FCCBs in overseas secondary market and trading in foreign exchange abroad. Capital account remittances to non-cooperative countries or territories identified by Financial Action Task Force, and remittances to individuals or entities posing terrorism risks advised by RBI. Next comes the last question. Permissible uses of LRS, the $250,000 in a financial year. For what purpose you can use that money as a resident individual? First, so you only tell me, if you have $250,000, what will you do? Private visits to any country. Yes or no? So except for Nepal and Bhutan, you can't utilize the $250,000. But for other countries, for private visits to that country, you can use. And studies abroad, this rarely we do. Okay. Next, gifts or donations. This also we want. We'll gift ourselves. Okay. And expenses for medical treatment abroad. Going abroad for employment. You want to get rid of everyone. You want to go for employment. Wonderful. Going abroad for employment and immigration, permanently settling in the other country. Next, maintenance of close relatives abroad. We are not able to maintain ourselves. We are maintaining close relatives also. Okay, maintenance of close relatives abroad, for that you can use. Or travel for business, conferences, training, medical expenses, or you are trying to pay for an attendant who is going with the patient. For that also you can use the $250,000. And for any other current account transaction which is not defined under FEMA. Are we clear with this? Yes, understood. That's all. Just a quick revision once again. Private visits to any country, studies abroad, gifts or donation, medical treatment, employment, immigration, maintenance of close relatives, travel for business, conference, training, medical expenses, attendant to patient going abroad, and other current account transactions not defined under FEMA. With this, we have completed Foreign Exchange Management Act 1999. Open your Q&A companion. So I will give you a list of questions. ECB, I'm not going to discuss. Just read the difference between FERA and FEMA. Once you read, you will understand. FERA is regulative, Foreign Exchange Regulation Act 1973. More strict regulations, easily they will not facilitate. It's a criminal law. Even if you commit a single violation, it may lead to a serious repercussions. And quite opposite is Foreign Exchange Management Act 1999. Okay, just give a liberal reading, you will understand. So question 1, question 3, 8, 10, 11 and 12. Okay, so if you really feel FEMA is easy for you, once you give this reading. Just the meaning and examples of current account transactions, that's all. And this is a very short answer. Authorized dealer, money changer, offshore banking unit. In case in day before the examination, if you are not opening capsule, that's why I'm telling. Okay, 3 different entities. That's all. Okay, so primarily what questions I told? 1, 3, 8, 10 and 10, 11, 12. Okay, that's all. Now let's start with the specific legal provisions related to MSME sector. So here there are 3 main parts of the content that we will be discussing. First is the most important, meaning of enterprise, classification of micro, small and medium enterprises, and then we will move on to the about MSME as well as section 9, section 10, measures taken by central government. That is what, and the last will be the various schemes which are introduced by the central government for the promotion and development of MSME. Okay. So yes, first, micro, small and medium enterprises. Here, first we will understand a concept of the importance of micro, small and medium enterprises in the Indian economy and the contribution of MSME towards the Indian economy. Okay. So, in the name itself, we understood that these are not large organizations, rather relatively less volume of transactions as well as the units. Yes or no? So here, micro, small and medium enterprises, even if they prima facie we will see them as a small association, but still they contribute an n number of times higher than the large organizations. Why? Because this is one of the fastest growing sector in India. And the next, second largest employer after agriculture. Okay, so it contributes to industrialization, that is actually a equitable distribution of development, regional development, and also generates more employment in the rural areas, and also upbrings the Indian heritage related to handicrafts, khadi industries and all that. So let's get started with the Introduction. One of the fastest growing sectors in India, creates employment at a lower cost. Here, if you want to start a business that is MSME, you don't need a vast infrastructure with a lot of investment. You can do it at least with a smaller infrastructure. That too, most probably MSMEs recruit women at their home only, they will manufacture the product. So here what you are doing, lower cost, but you are creating employment. Clear? And helps in industrialization, building more industries, more manufacturing units, ensures balanced regional development. Here the development is not only restricted to urban areas but also backward regions as well as rural areas, and ultimately contributing to the economic development in India, improve the standard of living of many employees which are receiving the employment through MSMEs, and support large industries as a auxiliary unit. So what do you mean by auxiliary units? For large scale industries, you are actually involved in production of the final products. You are supporting them with these raw materials. Are we clear? So like any cloths or tools or nuts or some other like pipes or some other small raw materials, if you want to deliver, that can also be delivered through MSME as a support to large industries. That is why they are considered as auxiliary units, support for the large industries. So if there is a question in the examination which quotes, write down the contribution of MSME to Indian economy, you have to start with this and then write down the values. What are the values? It is a second largest employer after agriculture. Clear? And how many employees? This was 2021 nexus. Right now it's more than 11 crores, but you have to write down this value only. There's no concept of amendment here. Nexus based on that. Okay. So with 8 crore employees. How many employees? 8 crore employees. Contribution towards exports 40%. Contribution towards industrial production 45%. Contribution towards gross domestic product 37%. And towards service sector 31%. So once again we'll revise: 40% exports, 45% industrial production, 37% GDP, 31% service sector. And we have to be proud of the two national heritages, that is Khadi and village industries. Are we clear? So mention this point also in that particular question. So the question here is MSME and their contribution towards Indian economy. Are we clear with this? Now we will get into the meaning of enterprise. What is the meaning of enterprise? Simple. Entity engaged in the production of goods or providing or rendering services. Simple. Any entity engaged in the manufacturing or production of goods or providing or rendering services. Are we clear? But in order to qualify itself as a micro or a small or a medium enterprises, two values should be satisfied. One is investment in plant and machinery and equipment, and the next one is turnover. Are we clear? So shall we see the values? The values are amended, and it is also clarified in the supplementary. You don't need to worry about this. Okay, these are amended and these are updated in your capsule also. Okay, so let's get started. Micro. Investment in plant and machinery or equipment, it should be less than or equal to 2.5 crores. Same value for small, less than or equal to 25 crores. Same value for medium, less than or equal to 125 crores. Both the conditions should be satisfied. Keep that in mind. Both investment in plant and machinery or equipment and annual turnover, both should be satisfied. Clear? Now let's look into the annual turnover of micro. Less than or equal to 10 crores. Small, less than or equal to 100 crores. Medium, less than or equal to 500 crores. Are we clear with this? Understood everyone? Yes or no? So this to this is multiplied by 4. Keep that in mind. Okay. So simple. Investment in plant and machinery for micro. Maximum 2.5 crores. I'm asking that. Okay, so you have to write down. You can't just write down 2.5 crores. That is wrong. Again, you will tell me why marks are not given. Okay, it is less than or equal to 2.5. That is maximum 2.5. And annual turnover 10 crores. Maximum 10 crores. Investment in plant and machinery for small, maximum 25 crores. And turnover maximum 100 crores. And here for medium plant and machinery maximum 125 and annual turnover maximum 500 crores. Are we clear with this? So while you are actually writing down the answer in the examination, what you have to picturize in your mind? This chart. Okay? Yes? If you recall this chart, automatically what happens? Any value if you want, you can choose that. Whatever it is, even if they ask MCQ point of view also. Okay? So now, two exceptions here. In investment in plant and machinery equipment, you should not include the value of land and you should not include the value of furnitures and fittings. You should exclude. Next, while calculating annual turnover, you cannot include the value of exports. Clear with this? We are done with the most important concept of MSME. Enterprise meaning any entity engaged in the manufacture or production of goods or providing or rendering services, which meets the following criteria. What are the two criteria? Investment in plant and machinery or equipment and annual turnover. For micro, 2.5 and 10 crores. Maximum values I'm referring to. Clear? And for small, investment in plant and machinery, 25. Annual turnover, 100. And for medium, investment in plant and machinery, 125. Annual turnover, 500. Clear? That's all. Now we will move on to understanding about MSMED Act 2006. Title simple: Micro, Small, Medium Enterprises Development Act 2006. Which ministry I am referring to? When I am referring to central government, Ministry of Micro, Small and Medium Enterprises. And there are two boards. One is the advisory board and two authorities, advisory board and advisory committee. I will differentiate between their responsibilities. No worry, when I am referring to advisory board, what am I referring to? National Board for MSME. National Board for Micro, Small and Medium Enterprises. Advisory committee is constituted by CG. What central government? Ministry of MSME. So, primary responsibility. Primarily, which part of the government is responsible? State government. Clear? So state government is primarily responsible for the promotion and development, but central government will support state government. How? By initiating schemes related to credits, subsidiaries, promotions, loans. All these schemes will be introduced by whom? Central government. But actual implementation and as well as direct promotion, whose responsibility it is? State government. So read it with me. State government has the primary responsible for promotion and development of MSME. Central government supports the state government with nodal agencies through various initiatives and schemes. Now suppose there is a scheme of secured business loan. Who introduced that scheme? Central government. But who is actually implementing the scheme? Wait. Nodal agency. That is SEBI, Small Industries Development Bank of India. So SEBI as well as central government, they are supporting whom? State government. Are we clear? Nodal agency is nothing but central government will come up with a scheme, but who will actually monitor and implement the scheme? That nodal agency. Primary responsibility will be there. But the whole MSME promotion and development will be in the hands of state government. Clear everyone? Yes, any disputes, registration, closure of MSME, all that will be taken care by state government. Clear? Now moving on to advisory board. So is advisory board is established under the MSMED Act only by whom? Central government. Head office is located in Delhi. Now comes functions. What will be the functions of the National Board for MSME? First comes, it will examine, okay, MSMEs, what problems they are facing. Okay, what are the factors which will help them affect the promotion as well as the development? So the examine and review factors affecting the promotion and development of MSME. Next, impact of policies. So they have understood what factors will affect the promotion. Based on that, it has given recommendation to central government. Central government might come up with policies or initiatives. It will also examine and review whether those policies are having an impact or not. Clear? So two things will be examined and reviewed. What are those? Factors affecting the promotion and development of MSME, impact of policies in programs initiated by central government, and also provide recommendations. Here that national board is examining. Based on that, it will provide recommendations to the central government. Clear? Advise the central government on the use of MSMED fund. Budget will be released for MSME development. There will be a certain amount that is called MSME fund. Yes or no? That fund for what initiative, for what scheme you have to utilize? Who will advise? Advisory board. Clear with this? So this is a answer for a question. Describe the functions of national board for MSME. Are we clear? That is what you have to write down. Or else if they say advisory board, this will only be the answer. Now comes advisory committee. Specifically, central government will give a power to advisory committee on what matters you have to provide advice. Just I will give a classic example. Previously, values will be different for the enterprise, yes or no? Yes or no? Now, which committee has given advice to increase those values? Advisory committee. Are we clear? So, that is one of the roles of advisory committee. So, advise the CG, SG and also the board on matters given under MSMED. In the MSMED Act, clearly it will be mentioned on what matters advisory committee will have the power to advise. Ultimately, who will implement? Central government. Are we clear with this? Understood? So, these are the 4 authorities that you have to keep it in mind. State government, primary responsibility. Central government supports state government with nodal agencies by introducing initiatives and schemes. Then comes National Board for MSME, also called as Advisory Board. It will examine and review factors affecting the promotion and development of MSME and impact of policies introduced by central government and provide recommendations on the above. And the last is advise the central government on use of the MSME fund. That's all. And moving on to the advisory committee, it will give advice to CG, SG, board on matters specified under MSMED Act 2006. Are we clear till now? Now, moving on to the most important question. It is section 9, section 10 combined together, and is also one more question. What is that? Measures taken by central government for the promotion and development of MSME. Possibly, okay? So, it can be asked like this, or it can be asked like, describe the measures which are taken under section 9 and section 10 of the MSMED Act 2006. So, let's see. Now, on what matters central government will come up with initiatives or schemes? First, direct facilitation, promotion. So, how can be the promotion and facilitation? Simple. One scheme is there. Single window registration, Udyam registration portal. So how government is helping them? Easy registration. Yes or no? If registration will be easy, they will get benefits and they can start their business. So that is how, through various initiatives, central government will help facilitate the promotion and development. And the next, enhancing competitiveness. So providing subsidies for any new technology, or else training programs for the employment, or else training for the management related to enterprise resource planning and technology. Through there is a digital MSME scheme also. Clear? So likewise, what you are creating a competing enterprise in the industry. So that is how it will enhance itself in the competitive world. So enhancing competitiveness. And the next, skill development in employees, management and entrepreneurs. Conducting skill development and training programs. And the next, provisioning technological upgradation. So helping them through subsidiaries or through credit linked subsidies. What do you mean by credit linked subsidies? Bank will provide loan for the purchase of technology. Let's say the technology equipment or whatever is there is, it's rupees 10 lakhs. For that, bank will provide a subsidy of 2 lakhs. You don't need to pay back 2 lakhs. You don't need to pay back 10 lakhs. You only need to pay back 8 lakhs because it is credit linked subsidy. Directly government is not offering you 2 lakhs. What is it doing? Bank will grant a loan. but in that you only pay such amount. That is called credit linked subsidy. Clear? So provisioning, technological upgradation, marketing assistance, and infrastructure. What do you mean by infrastructure? So it can help establish a warehouse for, let's say, 10 to 12 MSMEs in one location. One warehouse is built by the government. So is it provisioning infrastructure facility for all these MSMEs together? Answer is yes, that will also be part of the scheme. Next, cluster development to strengthen backward and forward linkages. What do you mean by backward and forward linkages? Creating a business relation between MSMEs and other manufacturing units, and between MSMEs and their supplier. What is backward integration? Creating a relation between MSMEs and the persons who supply raw materials to the MSMEs. And what is forward integration? Creating a relation between MSMEs and the MSMEs who are supplying products or raw materials to the other entities. So that is called cluster development and creating backward and forward integration. Clear with this? Connection, so that business will grow. That's all. Okay, so in the last, section 10, ensure smooth credit facilities, like offering guarantee or providing any moratorium period for 12 months. What is moratorium period? In IBC, we have seen moratorium is temporary suspension of legal actions. Yes or no? But here, moratorium period means you don't need to pay principal or interest. That is based on the scheme. Some schemes will provide a liberty that you don't need to pay interest also. But some schemes will charge interest, but they will not charge principal for a moratorium period. Are we clear? So you don't need to repay back immediately. That is how you ensure after some time, if you give MSMEs time to grow, they will repay back after moratorium period. So that is called, that is one of the type of credit facility which is extended by the central government. Are we clear? So let's revise it very quickly. First, these are the measures which are considered for initiating schemes. So these measures you consider. Based on this, you create and come up with schemes. That is what is the content here. Okay. So section 9. Facilitating the promotion and development of MSME, enhancing competitiveness, skill development in employees, management and entrepreneurs. Next, provisioning technological upgradation, marketing assistance and infrastructure facilities, cluster development to strengthen backward and forward linkages. And section 10 is ensure smooth credit facilities. Are we clear? So, if a question comes, write down the measures, write down all these. Don't specify section 9, section 10. Clear? Yes, one more example that I want to give is marketing assistance is simple. So, central government or state government or other government organizations, NGOs, they will create melas, fairs, so that they will give a free stall for them to display their products and market their products. That is called marketing assistance. Are we clear? That's all. Now, central government will dedicate a fund that is called the MSME fund. For what purpose the fund will be utilized? For all these measures. Clear? Yes, that's all. So dedicated fund, also called as the MSME fund. So into this fund, what will be credited? Grants received by the central government. So credited with grants provided by central government, and it will be used for what? Above measures. And who is the administrator? CG is the administrator. That means CG will administer the release of the funds and is responsible for coordination and timely utilization and release of the funds. Are we clear with this? That's all. Now, one important concept. So after enterprises, this is the second important. Keep measures also. This is a very important question. Delayed payments to MSMEs. Okay. So everyone, you have to pay concentration with me for the next 10 minutes. You can easily deviate and misunderstand the provision. That is what I'm telling you. Please listen carefully. After that, if you want, you can write down. So delayed payments to MSME. So here, MSME has sold goods or rendered services to a buyer. Clear? Now, here comes the responsibility of the buyer to repay the MSMEs on time. Otherwise, there will be an interest charged, which is 3 times the bank rate notified by RBI. Right now, today the bank rate is 5.75 percentage. Based on that day's bank rate, the interest rate will be decided. Okay, keep that aside. No need to remember. Okay, what will be the penalty? What will be the punishment? 3 times the interest rate as per the bank rate notified by RBI. It is compounded monthly. If you have learned time value of money or else investment decisions in your SFM, you know what is compounded monthly. What is it? Instead of 1 year as N, you will take 12 months. Monthly you will compound. Monthly the interest will be added to the principal and the interest will be charged on that consolidated amount. Yes or no? That's all. Okay. So once again we'll have a quick revision here. Compound interest with monthly res at 3 times the bank rate notified by RBI. Now, is the interest paid due to delayed payments allowed as deduction? Answer is no. Clear with this? Now we will see what is the time limit. Okay, so first, buyer has the responsibility to make payment. First, if there is an agreement on or before the date agreed, he has to make payment by when? On or before the date of agreement. Are we clear? But MSMED Act specifically says that the date agreed cannot exceed 45 days from the day of acceptance. Above one more day. What is day of acceptance? Actual delivery of goods or services. Are we clear with this? So generally, if date is agreed, what can be the maximum day that you can agree? 45 days from the day of acceptance. Clear? Date is not agreed. Are we clear? Date is not agreed. Then you have to make payment before appointed date. Now one more thing that you have to learn. What is it? Appointed date. What is appointed date? It will fall after expiry of 15 days from the day of acceptance. So day of acceptance is day of actual delivery of goods or services. What is appointed date? The day following immediately after the expiry of 15 days from the day of acceptance. So if you want to agree, you will have 45 days. If you are not agreeing, maximum how many days? 15 days. But now comes the question, from which date actually the interest will start to be charged? In case agreed, after the date following the date agreed. Date agreed will not be counted for the purpose of calculating interest. But in case of appointed date, the interest will start being calculated from the appointed date. Why? You have to make the payment before appointed date. Are we clear? Only 15 days will be available for you to make payment. 15th day will be last. After that, the 16th day is called the appointed date. From the appointed date, the interest will be charged. Clear with this? Once again, we'll revise. So, buyer shall make payment on or before first the date agreed. Clear? So, cannot exceed 45 days from the day of acceptance. Whatever you agree 30 days, you agree 20 days, whatever it was. Maximum how many days can you agree? 45 days. Now, when is the interest payable from? Interest is payable from the date immediately following the date agreed. Are we clear? You will not start counting from the date agreed, following the date agreed. Next, if there is no agreement, you have to make payment before appointed date. Are we clear? So interest will be payable from the appointed date. Understood everyone? Yes or no? Once again, sit quietly by yourself. You will easily understand. There's nothing too much complicated here. Okay. So with this, we have completed delayed payments to MSMEs. Now, moving on to the next content, MSME facilitation centers. Two major duties of facilitation centers: resolution of disputes related to delayed payments and closure of MSME, winding up, closure of MSME. So, MSME facilitation centers help resolve disputes, especially related to delayed payments for only micro and small. Okay, and assist with the smooth closure of MSMEs. And who will have that power? I already told you, in the ground level, state government will be primarily responsible. So, state government has the power to make rules for their functioning. Clear with this? So, till now, if you have a quick recall, we have studied the meaning of MSME sector, importance in the Indian economy, contribution in the Indian economy, enterprise definition, value, and two conditions in which will be excluded in the investment and annual turnover. And about MSMED Act, we have seen the functions of board and the role of advisory committee and measures for the promotion. That is nothing but section 9 and section 10. For these two sections utilization, the MSME fund will be utilized. Who will administer that fund? CG. Clear? Now, delayed payments to MSME. So, any supplier, that is any MSME supplier, supplies any goods or services to the buyer, then buyer shall make payment on or before date agreed. Date agreed condition is cannot exceed 45 days. From what date? Day of acceptance. What is the meaning of appointed date? Day following immediately after expiry of 15 days from the day of acceptance. Okay, so I have been teaching for the past 2 years, so my terminology will go in flow. You just heard, so even if you're not able to cope up, don't worry, once again you read. Okay, that's all. Okay, now that's all. And if there is no agreement, you have to make payment before the appointed date. That's all. Clear? So what will be the interest charged? Compound interest with monthly rests at a rate 3 times the bank rate notified by RBI. Is it allowed as deduction? No. MSME Facilitation Center, two major rules: resolve the disputes related to delayed payments and assist with the smooth closure of MSME. Now, who will make the rules for their functioning? State government. If I go to other page, I am discussing some other topic. Okay, so now we have arrived at the last concept, various schemes actually implemented by central government. Comes the first scheme, single window registration. There is an online portal which is called Udyam registration portal at the central government level. Which authority is providing that facilitation? Champions Control Room. At state government level, what are the two associations here? Development Institutes and District Industries Center. Both these will help the MSMEs to get registered as early as possible using the Udyam registration portal. Are we clear? So at central government level, under Ministry, Champions Control Room. Under State Government, Development Institutes and District Industries Center. So, this will provide a single point registration through what portal? Udyam registration portal. Next comes the second scheme. Full form will be asked in the MCQ. NSIC, National Small Industries Corporation. Once again, National Small Industries Corporation. It is established in the year 1955. Previously that was for small industries. Right now it has the duty to promote and develop the MSME. So whatever the schemes that central government will come up with related to raw material procurement, easily coming into a cluster, or else an integration with the supplier, raw material procurement, or else marketing of the product through melas or other promotion, advertisement, giving credit rating, technological acquisition. For these matters, which authority acts as a nodal agency? I am already telling you, nodal agency is implementing agency. NSIC, why did we study the full form? Okay, so National Small Industries Corporation. Clear? So what is the purpose? To promote and foster the growth of micro and small enterprise in the country. I gave example SEBI as nodal agency. Not only one agency is there. There are a lot of nodal agencies. In this case, it is NSIC. Are we clear? So provides various support services to micro and small, that's all, micro and small enterprises. Like what are the services? Raw material procurement, product marketing, credit rating and technology acquisition. Clear with this? Which year it is established? Thank you. Thank you. Next scheme is digital MSME. Here, the government is aiming to promote what kind of technology related to information like enterprise resource planning, accounting, as well as GST filings, and also related to communication. Clear? So, information and communication technology adoption in the MSME sector. Right now, each and every small corporation, small business also has a website. Why? Because customers are not willing to come out outside of the home. Anything should be done in that device, yes or no? So that is why that support of making them learn the technology is under digital MSME. Clear? So aimed at promoting information and communication technology adoption in the MSME sector. So teaching them analytics business, like business intelligence, teaching them how to analyze, and teaching them IoT and cloud computing, e-commerce platforms. Clear? So, and the next one, if you have to write down the actual services in the exam, you have to write down ERP, enterprise resource planning. All the services information will be stored in a centralized system, that is only called enterprise resource planning. And accounting, like Tally or whatever it is, Zoho Books is there right now, popular. So whatever training is provided, that. And regulatory compliance including GST. Next, moving on to emergency credit line guarantee scheme, specifically to overcome COVID-19 crisis. This is introduced. So that is why right now it is not in practice. Okay, it is extended till which date? 31st March 2023. That's all. Okay, so even if that is the case, what is it actually delivering here? 100% guarantee. So 100% guarantee is provided by whom? Central government. Clear? But loans are given by banks or NBFCs. To whom? To stressed MSME units. What do you mean by stressed? You are under stress. Why? Due to pressure, due to COVID-19, the financial crisis, that's all. Okay, so aims to provide 100% guarantee coverage to banks and NBFCs, and to extend emergency credit facilities to MSME. Emergency, to meeting the fixed cost requirements for emergency situations during COVID-19, this scheme was brought, and with a moratorium period of 12 months. For 12 months, you don't need to repay back. Clear? Yes? So that is the details related to emergency credit line guarantee scheme. Are we clear with this? That's all. Okay. Now moving on to your favorite SEBI came. Okay. So this is the scheme name is SBL scheme. Secured business loan, which is offered to MSMEs. So here secured business loan for MSMEs, but actually who is providing, which agency is providing? Small Industries Development Bank of India. It is also called as a primary financial institution for MSME. Clear? And what are the features of this SBL scheme? Faster dispensation without any extensive loan process, faster dispensation of credit. Maximum amount, quantum is nothing but amount, is 10 crores. Maximum repayment period 10 years, and including moratorium period. Are we clear with this? That's all. So here the scheme name is Secured Business Loan for MSMEs. Who is providing? SEBI. SEBI is also called Primary Financial Institution for MSMEs. Here, what are the features of the scheme? Faster dispensation of credit. Maximum amount? Maximum repayment period? Does it include moratorium? Now, moving on to the next scheme. Prime Minister Employment Generation Program. Does this mean central government is offering free jobs? No. It is facilitating the MSME promotion, facilitating new MSMEs to be established. Instead of giving a direct employment, if you help the industries to set up, automatically they will only generate employment. Yes or no? That's all. The scheme is credit linked subsidy scheme. So what happens here is this business, when it wants to expand or when it wants to incorporate, it needs investment. So if you are taking investment, some of the investment I will consider it as a security. You don't need to repay back full. That is only called credit linked subsidy. I've given you the example beginning only. Clear? So credit linked subsidy scheme to promote generation of employment opportunities through the establishment of micro enterprises, especially in rural as well as urban areas. Are we clear with this? Simple. If you help micro enterprise to set up, automatically employment will be generated. How are you helping here? Investment. Investment will be obtained by the MSME. For that you are trying to provide subsidy. Clear? No actual amount will be given. That's all. Now the next, MSME Samadan portal. I need answer why my payment is delayed for that case. Okay, so MSME Samadan portal specifically for delayed payment monitoring system. Are we clear? For what purpose MSME ministry has created this online platform? So that whatever the complaints are there, you can directly file it in the online platform. They will be diverted to the MSME facilitation centers, because I've already specified facilitation centers will only resolve the disputes related to delayed payments. Okay, so online platform created by the Ministry of MSME to help micro and small enterprises file the complaints regarding delayed payments. So cases are sent to whom? Micro and small enterprises facilitation council of that concerned state or union territory, so that they will resolve the disputes. Are we clear with this? Understood? Whenever I specify micro and small enterprises, medium enterprises will not have the option to avail the scheme. I'm telling you. Clear? So next, moving on to procurement preference policy. What do you mean by procurement preference policy? To participate in government tenders, or if there is any project related to infrastructure or related to some other manufacturing unit, first preference to build that project should be given to whom? MSME. That is only called procurement preference policies. Some of the government tenders will be specifically reserved for women MSMEs to encourage them. Clear? So to promote the growth of MSMEs and increase their participation in government tenders and ensure they receive fair opportunities. Usually tenders will be given to the highest players, yes or no, highest bidders. But here you are reserving few tenders only for the case of MSMEs, so that you are giving them a fair opportunity to prove themselves. And the next features will be certain goods for, let's say government wants to procure some furniture or some raw materials or some tools for the construction. So preference should be given to whom first? MSME suppliers. So certain goods are reserved to be purchased only from MSMEs. Special preferences are given to MSMEs owned by women. You will have reservations in the education field now. Reservation in business opportunities. That's all. Are we clear? With this, we have completed micro, small and medium enterprises. So we have learnt what about the Indian economy contribution of the MSME. Enterprise, limits of enterprise. Once again you revise them. Measures, and that is nothing but section 9, section 10. We have seen related to dedicated fund, MSME facilitation center, delayed payments, and directly the schemes. Yes or no? In the schemes, what all schemes did we come across? Single window registration. What is the portal name? At central level, what is the institute? Champions Control Room. At state government, Development Institutes and District Industries Center. Second scheme that we have seen, NSIC, to promote, that is foster the growth, raw material, procurement, credit, rating, marketing, assistance. Are we clear? Now, and then we have, what's the full form of NSIC? Established in the year? Thank you. Next, employment guarantee scheme, Prime Minister employment guarantee scheme, that is credit linked subsidy scheme. And then we have seen related to secured business loan provided by SEBI, primary institution for MSME. Clear? And then emergency credit line guarantee scheme extended till 31st March 2023. That's all. I think Did we miss anything? Yeah, digital MSME. So ERP, accounting, as well as regulatory compliance, including GST. The technology, the word that you have to use is promote information and communication technology. And then MSME Samadan portal for delayed payment monitoring system, specifically for micro and small enterprises, where the cases will be diverted to micro and small enterprises facilitation council of the concerned state or union territory. And procurement preference policy, preference will be given to MSMEs. That's all. Okay, so let's open the Q&A companion and we'll understand the list of questions. In your Q&A companion, I would request you to please make the change. Page number 176. Okay, so first question, of course, you have to prepare because that is related to the amended values. क्या हुआ? Oh, what is not applicable? చేశాను కదా. Oh, that's why I'm asking you to please make the change. No, starting only I told no, please make the change. Okay, and one thing that I want to say is, so if micro moves to the category of small, small moves to the category of medium, medium moves out of the scope of MSME, will it receive benefits? Yes, non-tax benefits it will receive for 3 years, but tax benefits immediately it will not, immediately they will be suspended. So if any MSME moves to a higher category or out of the scope of MSME, it continues to receive non-tax benefits for 3 years from the date of transition. Are we clear? So this was actually asked in the June 2025 MCQ. I will revise in bullet MCQ, no worries. Okay, so first question, did you make change? Okay, second, content. For what content will you write down for this question? Capsule. Do you have page number for that? Page 219. Sorry. From morning, mind's working, no? Subconscious mind will not allow to work properly. Both paragraphs you have to write down. Okay? First page you have seen, no? What are the 2 paragraphs? Both the contents you have to write down. Again you will say, what paragraphs, ma'am? This and this content and this content. Clear? Ma'am, should we write this also? Yes. So first and second question. Fourth question. Additional question 1. All are there, that's why. Okay, so in my sincere opinion, ye bhi padho ji. Okay, if you, I'm telling you, no, if you revise capsule, all these will be revised. There's no specific, only one point is not revised in the capsule, this one. Okay, so that's all. We are done with the MSME. Now moving on to the module 10, laws and regulations related to cyber security and data privacy. So there are 3 major parts in this particular module. One is related to the Income Tax Act 2000, and second is related to the different types of cyber crimes, and third is related to business intelligence. Yes. Okay, so first we will start about the IT Act 2000. So previously, when there was no IT Act 2000, all the documents, filings and official and the law, regulations, rules, everything used to be in the physical form. Everything needs to be done in the physical form, that you have to go to a bank, you have to go to the income tax department, send post or telegram. So that used to be the case before IT Act 2000. After IT Act 2000, all the electronic filings, electronic transfer, electronic these legislations, official gazettes, everything has gained a legal recognition. So if you make a payment online, if you file a document online, or if you apply for a loan online, or if there is a rule notification circular released online in the official gazette, everything has a legal binding. So which act will give it legal recognition? The Information Technology Act 2000. Are we clear? Yes. So it is providing legal recognition to electronic transfers, electronic transactions, electronic filings and official gazettes which are electronically published. So that is the purpose of Information Technology Act 2000. Are we clear? Just a very quick glance. So before IT Act, this used to be the picturization of life, and after IT Act, this is the picturization of life. Now for 5 rupees chocolate also, what do you do? UPI. Okay, so we barely have cash, yes or no? Now, but 1 month do an experiment of paying only with cash. You will save a lot of money. Okay, so let's get started. What is the title of the act? The Information Technology Act 2000, and came into force on 17th October 2000. So it came into force on 17th October 2000. What are the objectives of IT Act? A scope of a 3.5 mark question being asked from this particular concept. Objectives of IT Act 2000. First, provide legal recognition to electronic transaction by recognizing what? So if you are going for electronic filings of documents, how will you sign? Digital signature. So it is also recognizing digital signature, whether it is used by public or government officials or for publication of rules or gazette notifications. How am I knowing the amendments to the Companies Act? Through gazette notifications. Are we clear? Are they legally applicable or not? Answer is yes, because IT Act provides legal recognition for the publication of rules and gazette notifications. What is official gazette? All your acts, notification, rules, amendments will be published in that website. That is only official gazette of India. Are we clear, everyone? Yes. So what is the first objective of IT Act? Provide legal recognition to all electronic transaction by recognizing digital signatures. Now it is used, whether it is used by public, government officials, as well as publication of rules and gazette notifications. Clear, everyone? Second, facilitate electronic filing of documents and subsequent amendment to other acts. Previously, all the other acts suggest cash payments, or they suggest that you have to send a post to the secretary of MCA. But right now, if you file electronically using MCA portal, it is actually fulfilling the condition there. So that is why subsequent amendments to other acts. That is also one of the objective of IT Act. And the last is to set up licensing and monitoring of the controlling authorities. Who will issue digital signatures? Certifying authority. Who will control certifying authority? Controller of certifying authority. Are we clear? So here it is also one of the objective is to set up licensing and monitoring certifying authority. Are we clear? One of the popular certifying authority is your e-mudra. You also have V-sign and all that. Are we clear? So simple. you will go to that particular certifying authority website and you will apply for digital signature certificate. But for that they need to obtain license to operate as certifying authority. From where they will obtain license? From controller of certifying authority. Are we clear? So we will see the hierarchy once again, no worries. Now when I am referring to central government, okay, just a quick revision. Objectives of IT Act: provide legal recognition to all electronic transaction by recognizing digital signatures, whether used by public, government officials, publication of rules, gazette notification. Facilitate electronic filing of documents, subsequent amendments to other acts, and to set up licensing and monitoring of certifying authority. And when I am referring to central government under the Information Technology Act 2000, what is the ministry I am referring to? Ministry of Electronics and Information Technology, MITI. Ministry of Electronics and Information Technology. Now this central government wing has constituted what? Controller of certifying authority. Now controller of certifying authority has the power to recognize, license, supervise and regulate the certifying authority. Ultimately who will issue certificate? Who will issue signatures? Certifying authority shall issue digital signature certificate. Understood the flow? Central government constituted CCA, Controller of Certifying Authority. Controller of Certifying Authority will give license to Certifying Authority. Certifying Authority will issue digital signature certificate. Are we clear, everyone? Now, if there is any disputes, that means related to licensing of certifying authority or related to any crimes which are committed under the Information Technology Act. Now, what are the forum which is available for us? Forum is nothing but like a judicial person. The judicial person under this particular IT Act 2000 is adjudicating officer, who is again appointed by central government. So they will issue orders related to a penalty or whether it's right or wrong. And next, controller of certifying authority. If there is any disputes related to certifying authority licensing, who will deal with that? Controller of certifying authority. Any other crimes under the IT Act will be dealt by adjudicating officer. Are we clear? Now, if any person is not satisfied with the ultimate order issued by adjudicating officer or CCA, can they appeal? Answer is yes. They can appeal within 45 days to the appellate tribunal. Previously the appellate tribunal was under the IT Act, it was Cyber Regulations Appellate Tribunal. Now it is replaced by the Telecom Disputes and Settlements Appellate Tribunal. Are we clear? So it is Telecom Dispute Settlement and Appellate Tribunal. So simple, in your exam if they ask you, simply write down Appellate Tribunal. If you are specifically asked, then write down telecom disputes. Are we clear? Yes. So once again, so orders are, the disputes will be settled and the orders will be given by the adjudicating officer and the controller of certifying authority. If any person is not satisfied with the order of adjudicating officer or certifying controller of certifying authority, they can appeal to appellate tribunal within how many days? 45 days of the receipt of order of adjudicating officer or controller of certifying authority. Are we clear? Now, you are not even satisfied with the order of appellate tribunal. Then what is the remedy available? You can file an appeal to High Court. Within how many days? 60 days of the order of appellate tribunal. Clear? There is a dispute solved by adjudicating officer. Order is issued. The person is not satisfied. He will appeal within the next 45 days to appellate tribunal. Appellate tribunal also has given order. He is not satisfied with that order. Then he will file an appeal to High Court. Within how many days? 60 days. Are we clear? Now, moving to the next concept, data protection laws. A question arises, is there a separate data protection law in India? No. So they did not recognize that we need privacy. So that's why they didn't bring out a separate act. But there are provisions specified under the IT Act 2000. 43A and 72A. These are the two sections which are added to the Information Technology Act. These are data protection laws. So look into this. What is the meaning of data protection law? Your sensitive information like your photos, your videos, your mobile number, credit card information, UPI ID, as well as your other details that you upload in social media or websites, your address, all this. In shopping websites, you will give your address. Yes or no? You will give your credit card information. You will register your UPI ID, or else in Instagram you will upload your videos, photos. You will give personal information. You will have your chats. All these are personal information. This needs to be protected. That is ensured by what? Data protection law. So set of privacy laws, policies and procedures that aim to minimize intrusion into one's privacy. What is intrusion? Breaking into one's privacy. You can't, because there is a wall. What is that wall? Data protection law. Clear? Yes. So what is the meaning of data protection law? Set of privacy laws, policies and procedures that aim to minimize intrusion into one's privacy. Clear, everyone? Now, why is the reason that we need data protection law? Because all the entities, body corporates and individuals, as well as applications, websites, they are collecting and storing persons' sensitive personal data. What can be the example of sensitive personal data? Passwords, credit card information, debit card information, your biometric data, or else your DNA, your mental health condition. Doctors will have their separate code. They can never disclose the mental health condition of a patient. Have you ever gone to therapy? To a psychiatrist? If you have ever gone to that, they will have a code that they can never disclose your mental state to any person, not even their colleagues. If it is proved that they have shared, their license will be cancelled. That strictly data protection laws will be there. Are we clear? Yes. So now, what is the meaning of sensitive personal data here? Relates to a person. That means if you have a sensitive personal data, you can easily identify the person to whom it belongs to. That is only called sensitive personal data. So if it reveals your identity, that is your sensitive personal data. So meaning relates to a person who can be identified from the information or data. So simple. Why do we need data protection law? Because right now in the modern 21st century, every entity, body, corporate, application and individuals are collecting and storing sensitive personal data. This needs privacy. That is why you need data protection law. Are we clear, everyone? Yes. Now moving on to data protection laws in India. First and the foremost, no separate data protection law is there in India. Are we clear? Now, initially it's not present in IT Act also. IT Act 2000, when they were bringing out, they did not assume that we need data protection. They thought that our data can be used by anyone. But later on they realized that there is a concept of privacy. I don't know when our parents will realize. Okay, so data protection laws in India, initially it was not present in IT Act and there is no separate data protection law. But later on, through IT Act Amendment 2008, IT Amendment Act 2008, they added two sections. What are the two sections? Section 43A and Section 72A. And they also brought a separate set of rules. Everyone ready to read the title? Information Technology Security, Reasonable Security Practices and Procedures and Sensitive Personal Data or Information Rules 2011. And even the Constitution of India realized in the year 2017 that we need privacy. That is why they added right to privacy. Okay, so right to privacy. So if your parents at any time they ask what is privacy, there is a fundamental right, there is right to privacy. Then she will throw cheppal. Okay, so what else? What are you talking to me? Next. So three things are inserted. First is they have inserted two sections through Information Technology Amendment Act 2008. Yes or no? What are the two section numbers? 43A, 72A. And comes the second, what they have introduced set of rules, reasonable security practices and procedures, and sensitive personal data or information. Clear? Rules year very important, 2011. Clear? Amendment year 2008. Even if you don't remember this, remember this 2011 for sure. They will ask an MCQ when the rules of IT Act has been introduced. Clear? And right to privacy, fundamental right, was established on 24th August 2017 by Supreme Court. Are we clear, everyone? Now we will understand what is the section 43A and section 72A. Are you ready? Yes? 1 minute. Yes. Section 43A. So, any person or a body corporate who collects the sensitive personal data, what they have to ensure? Reasonable security is there. There is a website who is collecting customers' name, email ID, mobile number, and address. What is the primary responsibility of that particular website or the body corporate? It should maintain proper reasonable security. If it is negligent, it did not, that firewalls, whatever is will be there, no, it did not install enough firewalls or security practices, it did not follow, then what can be the repercussions? Damages. Are we clear? So, whenever a corporate body possesses any sensitive personal data, then is negligent in maintaining reasonable security. It did not maintain reasonable security. It is negligent, due to which someone has suffered loss. My data is lost. Some person who has taken my credit card information, he gained. Wrongful loss, wrongful gain which is caused. Why? They are negligent. They are not maintaining enough security practices. Are we clear? So then what will be the repercussion as per 43A? The body corporate shall be liable to pay damages. Simple. Here, that body corporate is not stealing the information and selling to a third party. What it is doing? It is negligent in maintaining reasonable security. That is why there is no penalty or imprisonment. What is it? Since you are negligent, we will recover damages from you. That's all. But 72A says that if as a customer, I am disclosing sensitive personal data to a body corporate. So, if I am disclosing sensitive personal data to a body corporate, is there a contract of trust which is created? Yes or no? I have a trust in the body corporate that it will secure my information and it will not misutilize my information. But if that body corporate breaks this trust and discloses to a third party for its own personal gain, then 72A will be attracted. That is nothing but breach of trust. Are we clear? Breach of trust. So, punishment for disclosure of information in breach of a lawful contract. What will be the punishment over here? Previously, it was imprisonment up to 3 years or fine maximum 25 lakhs. Right now, it is just fine 25 lakhs. Are we clear? I think previously it was 5 lakhs. Right now, what is important is amendment. Only penalty, that is maximum rupees 25 lakhs. Understood? Yes? Yeah, I'll give you 3 seconds to make correction. This was the amendment to the Information Technology Act 2000. In section 72A, in the marginal heading, instead of punishment, you have to use the word penalty. And for the words punished with an imprisonment for a term which may extend to 3 years or with the fine which may extend to 5 lakhs. What is substituted? The liability, the person is liable to penalty which may extend to rupees 25 lakhs. That's all. So there is no imprisonment. Are we clear? So when this was introduced, so we will, when we have to check penalties or when we have to check amendments, we will check the specific act, no? You have to check amendments like this also. Consolidatedly for Jan Vishwas, they will make some amendments. 2023, 11th August 2023. So of course it is applicable for 2025 attempt. Okay. So did you make the correction? Yes. Now, so we are done with section 43A and 72A. 43A says that body corporate is collecting sensitive personal data, then maintain reasonable security. If you are negligent, due to which someone is suffering a wrongful loss or a wrongful gain, then that particular body corporate is liable to pay damages. 72A, punishment. Instead, so we have to correct that also. It is penalty. That is what the amendment says. Please excuse me. For now, I'll use my cursive writing. I can't in split. So, penalty for disclosure of information. So, what is a penalty? Maximum, liable to a penalty of maximum rupees 25 lakhs. Clear everyone? Now comes the summary of the rules. What is the title? Information Technology, Reasonable Security Practices and Procedures and Sensitive Personal Data or Information Rules 2011. So this particular information rules are applicable to all the body corporates and individuals in India. Any person who is engaged in using sensitive personal data, they have to follow these rules. So to give a brief, this rule specifies that every body corporate which is collecting sensitive personal data must have privacy policy. So what you will do is, you install WhatsApp. You don't know what is privacy policy also. Agree. Yes. You will install Instagram. Accept. Allow camera access. Allow. Allow microphone access. Allow. Location access. Allow. You don't even know why they are using for. But there is a data policy, there is a privacy policy in the Instagram website or in the body corporate website of any company of what data they are collecting, why are they collecting, for what purpose they are collecting. Is there an option to change your data? If you have any queries related to the information being disclosed to some other person, contact information, support information will also be disclosed in the privacy policy. Are we clear? That was made mandatory by which law? By the rules 2011. Are we clear everyone? So they will ask an MCQ. It is applicable to all body corporates and individuals in India. Are we clear? So, body corporates that collect sensitive personal data must have privacy policy, and it should be easily accessible where? Go to the website of any body corporate or any association. You can easily find their data policy. That is nothing but their privacy policy. And what should privacy policy contain? What kind of personal information is being collected? What you are collecting? Why you are collecting, and what security practices you have taken to keep it safe. Oh, seriously? Since how long? Just now? Until it has shifted back? So I was talking about the rules. Sure. Okay, this comes an issue. Yeah, let's continue. So, 1 minute. Fine, chalo. So, information technology, reasonable security practices and procedures, and sensitive personal data or information rules 2011. Now you see the books. Yes, it is applicable to all the body corporates and individuals in India. It's not coming at all. Yeah, sure. So, what does this, particular rule specify mainly? That every body corporate which is collecting sensitive personal data must have a privacy policy. Yes or no? Now, we have seen the examples. I will not explain them again. Okay? It should be easily accessible on the website. And what details that privacy policy should contain? What data you are collecting, why you are collecting, and what security practices you have taken to keep it safe. Clear? That's all. And also one more thing. It has made mandatory some data collection guidelines also. What is data collection guidelines? So if you need access to any data of that customer, first you need to ask consent. That is what apps will do, no? Allow permission or not. So what is the particular body corporate doing? It's asking for your consent. So you have to obtain the consent. You have to use only for lawful purpose, and if customer relation has ended, no longer you should have access to the particular information. So all these are data collection guidelines, very general, you can write down. Clear? That data collection guidelines also were made mandatory by these rules 2011. Clear? We are done with the first unit. Okay, so in the first unit, important questions from an examination point of view are 43A and 72A. They may ask you about what is data protection law. Are we clear? Yes. So let's continue. Cyber crimes. What is the meaning of a cyber crime? Any crime which is committed where the source of committing the crime is internet or a computer or a software, and the target is also a computer, internet or software. Simple. Previously, if you want to commit a crime, you need a weapon. What weapon will you use? Some weapon which is made of metal and blood will come out. Yes or no? So, here, what is the weapon which is used? Computer. Network. Yes or no? So, the meaning is criminal activities where computers or networks are used as tools, targets and places of criminal activity. So, whenever a question comes related to cybercrime, you have to write this meaning first. Okay? Shall we revise once again? So, criminal activities where computers or networks are used as tools, targets, places of criminal activity. Yes or no? Now, what to whom all this criminal, these cyber crimes can act as a threat? To the government, to persons, to body corporates. That is to individuals and to business. Clear? Next, two unique features of cyber crimes. First, no geographical boundaries. It's not like I have to stay in the same city, that target is there. No. Anywhere from the world you can hack his system. Anywhere from the world you can steal his data if you want. Yes or no? So there is no geographical boundaries. An anonymous perpetrator. You don't know who is hacking your system also. You don't know who installed virus. Yes or no? So that is what it is. Unique feature, no geographical boundaries, anonymous. Anonymous means we don't know who it is. Anonymous perpetrator. So this person we don't know, he is wearing a black mask. He can be anywhere from the world. Understood? So the meaning of cybercrime is criminal activities performed using computers or networks as tools, targets, place of criminal activity. It will cause threat to the government, businesses, individuals. Two unique features, no geographical boundaries and anonymous perpetrators. Are we clear? There are three major categories of cybercrimes. Cybercrime against persons, against property, against government. So I will just quickly revise each and every cyber crime. I mean, I will give you a meaning of that, but the actual meaning you have to refer from the question and answer. I mean, meaning I will discuss. Sentence from the question and answer companion. Okay, it's clear. So cyber stalking, so constantly watching someone and creating a fear to them, that is cyber stalking. So you will constantly stalk your ex, yes or no? Where is that person going, to whom they are meeting, why did that person upload a picture with this person, is he trying to make me jealous? So what you're trying to do? Stalking. So if you are creating threat to the other person, then it's a cyber crime. If you're stalking silently, nothing happens. Okay, so of course we do it on daily basis. So cyber stalking, that is an offense. Second, obscenity. So posting any obscene images or videos on the website, specifically child pornography, that is the meaning of obscenity. Next, defamation. So trying to lower the dignity of a person or a body corporate using the network, that is defamation. Next, hacking, breaking into a system, not breaking actually, so having an unauthorized access to a system where you're trying to steal the data or you're altering the data. That is, altering means, if I have to use the correct word specific for this, it's called tampering. Are we clear? What is tampering? Changing, altering the data. So that is the meaning of hacking. What is cracking? Breaking into systems. Breaking the systems and unlocking the passwords, unlocking the keys, that is called cracking. Why you go for cracking? Again same, stealing information or altering the data. And the next is spoofing. Imitating to be some other person. You will receive a mail from with a name as a bank. You will think that bank is asking the OTP, but some person is trying to spoof you. Are we clear? So they are using a name of some other person and pretending to be someone else. That is called spoofing. Are we clear? Next comes carding. Stealing credit card information or debit card information or using fake credit cards to steal the money. That is called carding. Next comes fraud. You take the information and you will demand for money. So trying to manipulate them for the case of money and threatening them, that is called fraud. And the next is threat. Giving a threat using networks for stealing money once again. Are we clear? Different names, but the ultimate motive is money. Yes or no? So shall we revise quickly? You have to write down the exact side headings. Yes, follow the ing. Stalking, hacking, cracking, carding, spoofing. Most of the cyber crimes are completed. So once again, cyber stalking, obscenity, defamation, hacking, cracking, spoofing, carding, fraud, threat. Are we clear? These are cyber crimes against persons. Are we clear? Now moving on to cyber crimes against property. Property means important files, or else systems, or else intangible assets like IPRs, patents, or else trademarks, secrets. So there you are trying to steal that or you are trying to alter that. That is only called cyber crimes against property. Are we clear? What can be the cyber crimes here? IPR violation, intellectual property right violation. So if you use any song of a movie or some music producer for making a reel or for making a YouTube short, and the YouTube short is of 3 minutes video, you will immediately receive a copyright violation notice. For 1 minute you can use, they have allowed. More than 1 minute you can't. Some of the music is reserved. That is what? Copyright violation. If you continuously do it for 3 or more times, your channel will be deleted. Understood? Yes. So IPR violation is nothing but you are having an unauthorized use of their copyrights or patents or some intangible assets. That is IPR violation. Next comes squatting. Are we clear? So here what you are doing with the squatting? Using similar domain name. So when we go shop in Amazon, what is the website that we search for? Amazon.in. That is the actual website. But some websites, some of the users or hackers, what they will do is they will create websites with the same domain name, amazonshopping.in. Does it look like a real website for you? Of course, for some people. Yes or no? But we are very intelligent. No one can trick us. Yes or no? But in few cases, they are trying to use the same domain names. So that what happens? Customers will be diverted to that particular website and it will lead to a loss for the original body corporate. Are we clear? So that is called squatting. And the next is vandalism. What is vandalism? It is similar to hacking. But what you are trying to do, you are specifically targeting someone. That is called vandalism. So deliberately you are targeting a property or else a body corporate and stealing their information. That is called vandalism. Are we clear? Now moving on to hacking. Here also you are stealing the information or tampering, but there is no targeted individual or a body corporate. Are we clear? Next comes virus. So a hacker is not sitting and hacking your system. He is simply releasing a program into your system or else your mobile phone, and the program will do all that tampering or stealing or destruction of data. That is only the difference between hacking and virus. And the last one is trespass. What is trespass? Accessing someone's system or else a property without authorization. Here you are not stealing, you are not destroying, you are not tampering, but you are accessing. That is called trespass. Are we clear, everyone? Yes. So these are cyber crimes against property. Next, cyber crimes against government. Here you are targeting what? National security. So hacking into the electricity of that city, that system, into that system you are hacking and you are creating a blackout situation. Is it causing a harm to national security? Are the people scared? Answer is yes. So you are hacking into all the traffic announcements and you are giving a threat to the public. What is that? Cyber crimes against government. Clear? So what can be the possible case? Terrorism, planning attacks using systems, and warfare. That is nothing but creating blackout situations and creating tension to the national security. And traditional warfare, how it used to be? You will train a spy and that spy will go and act as a person who is giving information. Yes or no? But right now, what is a warfare? You will create a software or you will appoint a hacker. Yes or no? And the next is piracy. So simple. What is piracy here? You are selling pirated copies of software to government officials or to their employees. So what happens if they purchase that pirated software? They will install that in that systems which has confidential information. Will that be actually stolen by that person who is targeting? Answer is yes. Are we clear? And the next is unauthorized information. Hacking or unauthorized access to the systems of government officials. Trying to steal defense secrets and all that. That is again cyber crimes against government. Side headings are important, meanings are similar. Once you give a reading of the meanings in the concept book or else Q&A companion, you will understand. Are we clear? Yes. So let's have a very quick revision. Cyber crimes against government, terrorism, warfare, piracy, unauthorized information. Against property, IPR violation, squatting, vandalism, hacking, virus, trespass. Against persons, cyber stalking, obscenity, defamation, hacking, spoofing, carding, fraud, threat. Are we clear, everyone? Yes. Now moving on to the next unit, business intelligence. So one more potential question that may be asked is, wait. In cyber crimes only, some cyber crimes are actually coming under, they fall under IT Act. To deal with the punishment and prosecution, they fall under IT Act. Some will fall under IPC and special laws, Indian Penal Code and special laws. There are two different categories. So cyber crimes under IT Act and cyber crimes under IPC. Are we clear? Read them, you will understand very simply. The tampering, confidentiality, all these will be there in the concept, in the Q&A companion only you will have, okay? But I will give you a one small tip to remember cyber crimes under IPC. It will have email in it. Email abuse, email spoofing, threatening messages by email, Are we clear? All these, if there is an email, that means it will fall under IPC, Indian Penal Code. Are we clear? Tampering, breach of confidentiality, fake signatures, all this will fall under IT Act 2000. Are we clear? That's all. So just give a reading, you'll understand. And the tip that I say, keep that in mind. Okay? Email means it will fall under IPC. Okay? Now moving on to the last segment of the module, business intelligence. What is business intelligence? Simple. It's a technological process where business will have raw data, yes or no? What is data? Customer information, facts, figures, sale value, and related to inventory, all this is data. You are trying to transform this data into useful information by cleaning the data, analyzing what trends are there, what are the important aspects that I have to keep it in mind, and then you are taking a decision. This process is only called business intelligence. Are we clear? Yes. So technology driven process that helps organization analyze data and provide actionable insights for decision making. Once again, technology driven process that helps organization analyze data and provide actionable insights for decision making. Clear everyone? That is the meaning of business intelligence. That is why it is called business intelligence. How well you take a decision for the business. It is not based on guesses anymore. It's based on data. Are we clear? Now, let's see the process of business intelligence. A very, very predicted question for the December 2025 attempt. It's repeated many a times. So let's see the process of business intelligence. It starts with the first step. Data collection. Without data, what can you analyze? So that is why the first step is data collection and storage. So if it's a large scale organization, you will store it in data warehouses. If it's a small scale organization, they will store in data marts. Are we clear? Yes. Why do you need data warehouses? To store, of course. Why are you storing? For analyzing. It's not like give me a data of 5 days sales, I can predict the future. Can I? I need years and years of data to actually estimate and forecast. Yes or no? That is why you need to store all the data in a warehouse, not physical warehouse. Okay, fine. So first step is data collection and storage. So both historical and real-time data is collected and stored in data warehouses and data marts. Then comes, you have your data. What will you do? Prepare it for analysis. That is nothing but you will consolidate data from different departments, different products. All the data will be consolidated and it will be cleansed. What do you mean by cleansed? Any errors, duplications, missing values, if they are there, making that corrected. That is only called cleaning the data. Understood everyone? So in the second step, which is data preparation, what do you perform? Consolidation and cleaning. So raw data from different sources is consolidated, cleansed, so that accurate information is available for analysis. You can't give wrong information for analysis, no. It will give you wrong analysis. That is why you need to clean the data. If there are any duplications, errors in the values, missing values are there, correct them and then introduce that to the analysis. Are we clear? Revise it once again with me. Raw data from different sources is consolidated and cleansed. So, accurate information is available for analysis. Moving on to third step, actual analysis. Where software like Microsoft Power BI, ClickView, Tabula, these sources are used. These tools are used to perform the analysis. Clear? So, prepared data is analyzed using analytical querying. What is analytical querying? Which product has the highest sales? Which duration of the day has the highest sales? Which branch is performing the least? So which branch is performing the highest loss? What you are doing here? You are querying and finding out the analysis. Are we clear? That is called analytical querying. Understood? Yes or no? 3 steps: data collection and storage. And the second step, data preparation. Third, data analysis. What is the important word that you have to write down? Analytical querying. And moving on to the last. Next step, distribution. So what happens is, based on which department I am giving analysis, key performance indicators will change. If I am giving the analysis to a top executive like a CEO or CFO, what information I will give? What are the key performance indicators for them? Profit margin, revenue. That's all. Yes or no? But if I am giving the data to a marketing department, I will give the data key performance indicators, responses to your campaigning, customers from your marketing program. That will be your key performance indicator. Yes or no? And for sales department, the total sale value and the total number of units will be the key performance indicator. To understand what is their performance, the value that you use is nothing but key performance indicator. Are we clear? Yes. So based on the department, KPIs will be decided and it will be distributed to that relevant group of people. So that is only the step of distribution. So key performance indicators and other analytical findings are distributed to business users. Then comes the last, decision making. If you know what is the analysis, you will take an appropriate decision for the business. It can be, number 1, strategic decision, that is a long-term decision. Number 2, tactical decision, that is a short-term immediate decision to change something in the business. Are we clear? Yes. So quick revision: data collection and storage, data preparation, data analysis, distribution, and the last one, decision making. So if you want to highlight the important words here, I'll just give you a, yes, data warehouses, data mart, real-time data, historical data. Next, consolidated and cleansed. Here, analytical querying. Here, key performance indicators. Here, information is gathered to influence the data. Information gather also not required, but strategic and tactical decisions. Clear? Shall we move on? Last 2 concepts of this unit: benefits of business intelligence. Simple. If you analyze and know actually what's happening in the company, what will be the benefits? I'm going very fast here. I'm not here to teach each and every meaning. And specifically, it's not a BDA class. That is business data analytics. Okay. So, speed up and improve decision making. Quick decisions, optimize internal business process. If you know what are the problems, you can solve. Next, increase operational efficiency. You can reduce the situation of stock out, increase operational efficiency, spot business problems, identify what are the emerging businesses and market trends. Based on that, you can introduce your new products or business and drive higher sales and new revenue. Develop stronger business strategies and then gain a competitive advantage, competitive edge, whatever you want to write down. Are we clear? Quick revision: speed up and improve decision making, optimize internal business process, increase operational efficiency, spot business problems, identify emerging business issues and market trends, and then drive higher sales and new revenue, develop stronger business strategies, and the last, competitive edge. Now, moving on to the last is types of business intelligence. Based on what will be the outcome, there are different types of business intelligence. The first one, ad hoc analysis. The important word that you have to write down. So, what I have given is, these are keywords. I'm not giving you the meaning. Keywords that you have to mention. Okay. So, I will explain you. So, ad hoc analysis, temporary analysis, that is nothing but for temporarily this 1 week sales, what is the analysis? Or for this particular customers group, what is the review? So if I am going for temporary and a short term analysis, then I will choose ad hoc analysis. Clear? Next comes mobile BI. In the smartphone only I have BI application to analyze, that is called mobile BI. And then comes online analytical processing, OLAP. Revise once again. We will read the full form. OLAP, online analytical processing. Here you are trying to analyze one type of data in multiple dimensions. What do you mean by multiple dimensions? If there is sales, I will analyze by region, by time, by customer group, by location, by city. Multiple dimensions I am verifying what? A single data. That is done by OLAP, online analytical processing. Clear? And then comes real time BI. As soon as a customer signs up, purchases a product, immediately that will be sent to the analysis and it will analyze. That is called real time BI. Are we clear? And moving on to operational intelligence. This is also similar to real time BI, where your Uber drivers, Ola, Swiggy, all partners, what they are using? Operational intelligence. As soon as there is a traffic in a route, the system will automatically notify them to divert to another route. What is it? Operational intelligence. Are we clear? So not only in case of that, even in manufacturing units for frontline workers, as soon as a new order is issued, they will be updated so that they will start packing. They will prepare it for dispatch. So operational intelligence delivers information to frontline workers based on real time only. Real-time data only. Next comes open source BI. You don't need a software engineer or data analyst to perform. You will use a version, like a free version or a community version of a Tabula or Microsoft Power BI. It will be free for some degree of analysis. For advanced analysis, you have to go for subscription. Now, till now what you have seen? Ad hoc analysis, temporary basis, OLAP, multiple dimensions, mobile BI, BI apps on smartphone, real-time BI, analyzed as it's created. Operational intelligence delivers information to frontline workers. Open source BI, OSBI, MCQ is already there, full form of OSBI, open source intelligence. Next, it can be free of charge or subscription based. Next, embedded BI, another MCQ which was asked in the main paper. In the business application where you run the business, in the application itself you will have the business intelligence. So popular example is YouTube Studio. So I will upload a video. After one day I will go into the same app. I will not go into some other software. In the same app I will go. It will give me the analysis. From where are your users? How many female? How many male? And which age category are your highest viewers? What are the watch time? Every analysis will be given. What is it? Embedded BI. In the business application only there is BI. Clear? And comes the last few. Collaborative BI. So data will be gathered into one system. And in that system, marketing department can come and analyze, finance department can come and analyze, sales department come and analyze. So it is like collaborative BI. Are we clear? So combination of BI application and collaboration tools. And then comes location intelligence. If you are trying to analyze the data based on the geographical region or location, that is called location intelligence. So most probably what happens is they will not ask you list of types of BI. Extreme cases they might. But what can be the actual cases? They will give you the meaning of that BI, and in the options they will give you what type of BI it is. Okay? So ad hoc analysis, OLAP, online analytical processing, real-time BI, operational BI, mobile BI, and open source BI, embedded BI, collaborative BI, location intelligence. Are we clear? That's all. So business intelligence has three main questions. Process of BI, benefits, types, cyber crimes, against persons, against property, against government. And the next is under IT Act, under IPC and special laws. And in the first segment that is related to about IT Act, 43A, 72A. Okay, so or else they can ask related to information technology rules, 2011. That's all. We have completed the concept of module 10, cyber security. Open the Q&A companion. Question 1, 3, 4, 5, 6 and 8. Eighth question. Sixth. 5 actually I created myself. Why? Because there was no question giving the cybercrimes under IT Act. So that's why I created. Okay. So you refer once again. So just a quick revision. So if it is under IPC or special laws, I highlighted email also. Threatening messages by email, defamatory messages by email, email spoofing, email abuse. Webjacking. What is webjacking? What is hijacking? Take the control of the plane. Yes or no? Here they are taking the control of website. Bogus website is nothing but like shell companies. There is no actual business going on there. Okay, so bogus website, forgery of the electronic records, all these will fall under IPC and special laws. Tampering, hacking, obscenity, unauthorized access, that is nothing but trespass, breach of confidentiality, false digital signature certificates, that will fall under Information Technology Act 2000. Okay, so one question in the MQB December 2024 as well as MQB December 2023 and study material, they have given this question: major categories of cyber crimes against person, against property and against government. Read the meaning and make sure you use the red words. Okay, so just to be careful, you will be like, ma'am, you're giving all the questions to read. Read question 2 also. Okay, so instead of reading FEMA, you can read this now. FEMA 42 pages. This is 8 pages. Okay, done. So now let's begin prevention of money laundering. So module 11, this is the last economic law. Here we are going to study about the process of money laundering and the relevant punishments for the offense of money laundering, and we will also look into the procedure of investigation. And then one last concept which is not there in the handwritten notes but important from an examination point of view is the reporting obligations, obligations of the reporting entity. Okay, that particular concept we will revise using the concept book, and the remaining all handwritten notes we can revise. Okay, so shall we get started? Yes or no? Yes, there is no option no. Okay. Had a heavy lunch? Nice full meals, huh? You had biryani? Oh my god. Yes. Okay. So let's see the contents that we are going to discuss under PMLA. So first we will understand the meaning of money laundering and the process of money laundering. Process of money laundering is the most repeated and the most important question from this particular unit. So if you pay attention for the 10 marks, most probably the same question can be asked in the December 2025 attempt as well. So yes, last benchers, nicely lying down on the bench. Welcoming the sleep. Okay, so and then we will discuss about PMLA 2002, and then we will move on to the offenses. Offenses are also important. What are the 3 different offenses and what will be the punishment for that? We will look into that. And then obligations of reporting entity and authorities under PMLA. That is nothing but the procedure of investigation. So shall we start, everyone? So first let's understand the meaning of money laundering. So what is laundry? You're washing your dirty clothes to make them white. Yes or no? That is what the ad says, but it'll never become white. Okay. So here also, right now we are not washing clothes. We are washing what? Money, not washing machine. Okay, so here we are trying to convert dirty money into legitimate money. That is why it is named as money laundering. If you look into the picturization of the process, so there is a crime committed. So I'm not teaching you how to commit money laundering. Okay, so just a disclaimer, if you will of course learn. So the crime is committed, whatever the crime is, so it is an illegal activity. Through that you will get money, yes or no? So of course that money will not be considered as a legal money. It is an illegal money or black money or dirty money, yes or no? Now you have taken a risk and committed crime, so it should be an option for you to use the money for your luxury, yes or no? That is why what you will do, now you will start with the process of money laundering, and then you will convert that into a legitimate money. That is only called the process of money laundering. I am just discussing the meaning, I am not yet discussing the process. Are we clear? So what is the so this is a very, very important sentence. For every question you have to write this down related to the money laundering. What is the process? Process of conversion of proceeds of crime. The money that you generate by committing a crime is called proceeds of crime. The dirty money, to make it appear as legitimate money. Are we clear? So how this money laundering is actually conducted? So first, you will get a lump sum amount, yes or no? Of course, it will not be 10 rupees or 100 rupees. You will not commit crime for that. Okay, so it will be in crores or lakhs, depending on the severity of the crime, yes or no? Now you will receive a lump sum amount. So take that lump sum amount and deposit with a bank. Next day morning, you will wake up in a jail. Yes or no? That is why what you have to do? You have to split the amount into smaller sums. That is what the launderer will do. The first is to divide the large sum into smaller sums and then deposit in various different bank accounts, or else you will purchase different negotiable instruments with that money. Are we clear? So simple, you are expanding your deposit horizon. So after that, what you will do? The second step, layering. You will convert into different currencies. You will transfer into different currencies, different types of bank account, different countries you will transfer to countries where there are lesser or less stricter money laundering provisions, like some African countries or some Middle Eastern countries where the provisions are not that strict. There you will transfer. So what you are doing here, multiple conversions and multiple transferring to different accounts. Afterwards, at the end, it will land into your legal legitimate account. That is how you conduct a money laundering. Are we clear? So, of course, I will tell you what will be the punishment also if you get caught. So, understood the procedure? Yes, money laundering. Okay. So, simple. You committed a crime. You will get the proceeds of crime, but see, they are dirty money. Can you use that directly? Answer is no. So, you have to wash that, whatever it is. Whatever powder you use. Okay, next, legitimate money. Washing machine, no. Okay, you have to pay attention. So legitimate money. So now we will see the actual procedure. That is just a picturization. This is actually content that you have to write down when a question is being asked from the process of money laundering. So the first step is, you have to remember the step side headings, because they will ask an MCQ. What's the first step? Placement. That means you are introducing the proceeds of crime into the financial system by depositing smaller sums into multiple accounts and purchasing financial instruments. After that, what you will do? Layering, series of continuous conversions and transfers. What you're doing in the second step here? Taking the proceeds of crime as far as possible from the crime scene. Are we clear? Understood? And the last step is integration. You're mixing that black money in with the legally earned money so that you're not getting caught. Are we clear, everyone? So let's read the sentences. Sentences are very important. You have to by heart. You understood the concept. You can commit crime now, but you have to write down, okay, to pass. So placement, what are you doing first here? Large sum is divided into smaller sums. So illegal funds are introduced into the financial system by breaking up large sums, large amounts of cash into smaller and less noticeable. So as per your own capacity, you are receiving 1 lakh per annum as your salary. Suddenly for 1 month, 3 times you're depositing 10 lakhs. Is it noticeable or not? Answer is yes. So you're depositing 20,000, 30,000, 10,000. Is it noticeable? Answer is no, because it is as per your capacity earning. Yes or no? So here illegal funds are introduced into the financial system. How? By breaking up large amounts of cash into smaller and less noticeable sums. What will you do here? These smaller sums are then deposited into multiple bank accounts used to purchase financial instruments, which are subsequently deposited into one or more accounts at different locations. This is the first step in the process of money laundering. Now moving on to the second step. Here what you're trying to do, you are trying to move the funds through a series of continuous conversions or transfers across multiple accounts. You will convert into different currencies. You will transfer into different accounts in different countries. Clear? Why are you doing this? What is the purpose? This is done to hide the funds origin. The origination should be hidden and distance them from their criminal source. Are we clear with this second step? And moving on, what is the step name? Layering. Okay, you are not sleeping. So third step, integration. So here what you are doing, funds now enter the legitimate economy mixed with the legally earned money. See how with attitude he's sitting in the chair full of cash. Okay, so now what you will do, if whatever money laundering you did, will you store the amount in cash in your home? Any person can come. Yes or no? Your maid also can come across that cash. So that is why now these funds are invested in real estate, business venture and luxury assets. So your dream will now come true. Private jet, Porsche, yes, whatever the car that you want. Okay, now to enjoy the money without fear of detection. Are we clear, everyone? Shall we revise all the steps once again? Side headings. First is placement. Second, third, placement. What you're doing, introducing the funds into financial system by breaking large amounts of sum into smaller, less noticeable sums. Are we clear? Then what you're doing, depositing into one or more bank accounts or purchasing financial instruments. And the second step is layering. Yes or no? Okay. So what you're doing here, moves the funds through series of continuous conversions or transfers. What's the purpose? To hide the origin of fund and to distance them from the criminal source. Last is layering, no? Integration. So you are mixing the money with the legitimate money. Yes or no? Funds enter the legitimate economy mixed with the legally earned money. Now what you will do with these funds? Invest in real estate, business venture, luxury assets to enjoy the money without the fear of detection. Are we clear with this? Yes? Now one question is completed. Now we'll move on to the concept about PMLA 2002. Now we just understood what is money laundering. Now we will understand what is the significance of PMLA 2002. So what's the title? The Prevention of Money Laundering Act 2002. Okay, clear? So it came into force on 1st July 2005 with the rules. Even if the act title says 2002, it came into force with the rules on 1st July 2005. Clear? How many chapters? MCQ will be asked. MCQ will be asked. Remember, how many chapters? 10 chapters and 75 sections and one schedule. That one schedule will have the list of offences. Are we clear? So that one schedule will have the list of offences. Now, just a quick revision about the PMLA, the Prevention of Money Laundering Act 2002. Came into force with the rules on 1st July 2005. How many sections? 75. How many chapters? How many schedules? Okay, very good. Now comes the objective of the act. In the name itself, the object is there. Prevention of money laundering. Yes or no? So what is the first objective? Prevent and control money laundering. And whatever the real estate luxury asset that you purchase, you have to, what is the objective of PMLA? Confiscate, that is take the custody of the assets and seize the attached property. Are we clear? And to deal with any other issue connected with money laundering in India. That is the objective of PMLA. Quick revision. What are the three objectives? Prevent and control money laundering. Second, to confiscate and seize the attached property. Third, to deal with any other issue connected with money laundering. Yes. Now, let's look into the actual meaning of the word offense under PMLA 2002. So what will be considered as an offense? So any person directly himself is involved or he is giving directions to an agent, whatever it is, directly or indirectly, attempts, he tries, he gets caught in the first step only. Okay, unlucky fellow. So attempts to or is actually involved in the process. What kind of process here? Concealment, number one, that is hiding the funds. Concealment, or else you have the possession, that means you have the possession of the funds. And acquisition, you are trying to acquire the funds or you are trying to acquire the property using the funds or claiming as untainted property. It's clearly visible that for your capacity you can't purchase a private jet, but you are telling that this is my hard earned money. That is what? Claiming as untainted property, but that is purchased through illegal funds. Are we clear? So what is the sentence here? Once again repeat it with me. Whosoever directly or indirectly attempts to or is actually involved in any process connected with the proceeds of crime. What you are trying to do with the money that you earned from the crime? Concealment, possession, acquisition, use, claiming as untainted property. Then what is that person? Shall be guilty of offense of money laundering. Any step you are involved in, you are considered as guilty of offense of money laundering. Shall we repeat the sentence once again? Are you ready? Persons who are sleeping? Yes, it seems. Okay, chalo. Whosoever directly or indirectly attempts to or is actually involved in the process connected with the proceeds of crime, that is concealment, possession, acquisition, use, claiming as untainted property, shall be guilty of offense of money laundering. Clear, everyone? Now, based on the predicate offense, so where will you get black money? When you commit a crime. Yes or no? That crime is called predicate offense. Why? This is previous to the money laundering. If you have to commit money laundering, you have to commit that crime. That is why it is called predicate offense. Are we clear? There are three different categories of predicate offenses. Part A, Part B, Part C. Where they are part of? That one schedule. One schedule has how many parts? 3 parts. Part A, Part B, Part C. Now Part A has 29 different paragraphs. Each paragraph is an act. I will give you an example over here. The first 3 paragraphs are Narcotic Drugs and Psychotropic Substances Act 1985. So your drugs, cocaine, heroin, all this will be consist under this particular act. And Explosive Substances Act 1908 and Unlawful Activities Prevention Act 1961. Likewise, how many acts are there under Part A? 29. Anywhere did you see 28? 29, it's changed. It is 29 paragraphs. Okay, clear? Now comes the Part B offenses. What are the Part B offenses? These are offenses under the Customs Act 1962, and that too only if the value is rupees 1 crore or more. Are we clear? So, and value involved in more than or equal to rupees 1 crore. It is the Customs Act 1962. Offenses committed under Customs Act 1962. And also one more condition is the value should be rupees 1 crore or more. Then it will be covered under Part B offenses. And comes Part C offenses. All the offenses which involves people of different countries. That is trans-border crimes. Are we clear? Crime committed outside and it is received in India, or else it's committed in India and the money is transferred outside. Whatever it is trans-border crimes. Are we clear with this? Part A, Part B and Part C. Now, what are these offenses called? Because they are part of Schedule That is why it's called scheduled offenses. Simple. So these are called scheduled offenses, and one more word is predicate offenses. Why is it called predicate offense? Because it is prerequisite for initiating investigation. Yes or no? When you know there is a crime committed, then only you will understand that there might be money laundering involved, or else you found someone that is involved in the money laundering, then you will understand what is the prior act, so that you can actually decide how much is the penalty or how much is the imprisonment period. Are we clear? Based on the predicate offense. Understood everyone? Yes. Now let's see the punishment. For any offense, part A, part B, part C, what will be the punishment over here? Imprisonment and fine, and also confiscation of property. Whatever the property that you purchased using the black money, that will also be taken into custody. Are we clear? So what are the punishments? Imprisonment, fine, and confiscation of property made out of proceeds of crime. Clear everyone? Now, imprisonment, what will be? All the cases minimum 3 years, maximum 7 years. But specifically part A, paragraph 2. Part A, paragraph 2. What is that? Narcotics and Psychotropic Substances Act 1985. If you commit offense under this act, your maximum imprisonment period will not be 7 years, it will be 10 years. Are we clear with this? Yes. Indian Penal Code will also be involved under part A. Clear? Yes? Okay. Let me just quickly... What happened? Yeah, if you want to write that down, you can write down 29 paragraphs and the Customs Act 1962. Have you written? Yes? So which paragraph am I referring to if it is a 10 years imprisonment? Paragraph 2. What is the act name? Narcotics and Psychotropic Substances Act, year 1985. Customs Act year is 1962. Clear? How many paragraphs in part A? 29 paragraph. Part C, what are the offenses? Trans-border crimes. Are we clear? In which case, in general case, what will be the minimum imprisonment period? Minimum 3 years, maximum 7 years. Clear? That's all. So this will be your content if they ask you about the what is the meaning, what is the offense of money laundering, and discuss the types of offenses and the punishment thereof. Are we clear? So 2 major important questions are completed. We have learned what is money laundering, the process of money laundering, about the PMLA, objectives of PMLA, meaning of offense, types of offenses, and punishment. Have you written down whatever the books you are using in? Yes? Now, we will move on to the hierarchy of the authorities. So, first and the foremost thing, you only tell me basic common sense. In order to catch a person who is committing a money laundering, who can actually involve himself? Banks, reporting authority, because they will only find out if something is suspicious. Yes or no? Are you sleeping? Okay. So hierarchy of the authority. The first party involved is reporting entity. Reporting entities are your banks and financial institution who will accept the deposits, who are involved in the transactions of money. Clear? They will only be able to find out if there is any suspicious transactions, and they will report it to the next authority, that is the Financial Intelligence Unit. FIUIND. IND means India. FIU full form. They'll ask an MCQ. Financial Intelligence Unit. Are we clear? So, banks, financial institutions, and other intermediaries report suspicious financial transactions to the next authority, which is Financial Intelligence Unit. Are we clear? So, this is actually set up by the Government of India in the month of November 2004, specifically for receiving, processing, analyzing, and disseminating. That is, disseminating means transferring the information to the next level. Are we clear? So you receive from the reporting authority, analyze whether it is actually a suspicious transaction or not, and then you will share the information to the next authority. What is the duty? Whose duty it is that? Financial Intelligence Unit. So read the sentence with me once again. Central National Agency responsible for receiving, processing, analyzing and disseminating information related to suspect financial transactions. To whom? To the ED, Enforcement Directorate. So we will come across Enforcement Directorate in CMA Final Law Paper 13 only in two modules, FEMA and PMLA. To enforce the whole provisions of FEMA and to act as a prosecution authority, the responsibility is in the hands of ED. But here under PMLA, the responsibility of ED is just investigation. It cannot prosecute. That means it cannot take trials and impose the penalty or issue any imprisonment. It can only investigate and then send the information to the adjudicating authority and to the special court. That's all. So the responsibility of Enforcement Directorate under PMLA 2002 is just to investigate. Are we clear? So these particular suspicious financial transaction information will be shared by FIU to Enforcement Directorate. Enforcement Directorate, responsible for the enforcement of FEMA 1999 and certain provisions under PMLA. That is only investigation under PMLA and the whole enforcement of FEMA. Are we clear? So all these criminal activities whichever are there, that will be investigated by CBI. All these financial crimes, investment frauds, all these will be investigated by ED. Are we clear? That is why under money laundering, ED plays an important role. Now, moving on to the next, Enforcement Directorate. PMLA empowers Enforcement Directorate officers to investigate money laundering cases and attach related properties. That means they are investigating. In the investigation, they have found out that these are the properties which are purchased through the proceeds of crime. They will attach the property. Who will confirm that actually the property is involved with the black money? Adjudicating authority. Who will confirm? Adjudicating authority. So then comes adjudicating authority. Central government appoints to exercise the power under this act. What is the power? Decide whether the properties attached by ED are actually involved in money laundering or not. So you have to carefully understand. Banks, if they find out a suspicious financial transaction, report to FIU. FIU will verify and then report to Enforcement Directorate. Enforcement Directorate will investigate the case and whatever the properties it has found out, it will attach. Who will confirm the attachment? Adjudicating authority. Are we clear? Who will appoint or who will constitute adjudicating authority here? Central government. Now, moving on to the next case. If you are not satisfied with the order of adjudicating authority related to a property which is attached, adjudicating authority says that this is purchased through black money. You say that no, this is my legally earned money. If you want to appeal, you can appeal with the appellate tribunal. Are we clear? So, established again by the central government to hear the appeals against the orders of adjudicating authority. Are we clear? And then moving on to the final authority, special courts. If any person has the authority to order this many years of imprisonment or a fine or confiscation order, who will do that? Special court. Special designated courts. All the information which is investigated by ED, properties attached by adjudicating authority, that will be shared to the special courts. Final prosecution will be done by the special courts. Clear everyone? So central government will designate special courts in consultation with the Chief Justice of High Courts. He will help you select the courts which are designated for the purpose of PMLA cases, and any offense under the act is prosecuted before the special court having jurisdiction over the area. Whatever the area or state or a region that you have committed the crime, that particular special court in that area will give the prosecution. Are we clear everyone? Understood? So just a quick revision of the hierarchy: reporting entity, financial intelligence unit, and Enforcement Directorate, and adjudicating authority, appellate tribunal, special courts. Also can be called as special designated courts. Are we clear with this everyone? Yes or no? Okay, done. So with this, we are left out with the last concept that is in your concept book. If you please open, I will just quickly revise. It's just 27 minutes. Okay, and I can see your faces, literally. Yes, ma'am. Completed. So we can start at 6 o'clock and complete by 2 o'clock. Then I have to start by 4 o'clock from my home. Not possible. Okay, so shall we discuss? So there are two categories of obligations of reporting entity. One is under PMLA Act 2002. One is under PMLA Rules 2005. Ma'am, what should we write down if they ask obligations of reporting entity? If it is that vague, write down under PMLA Act. They will be clear, no worries. If they ask, write down the obligations of reporting entity under the PMLA 2002. This is the content that you have to write down. If they ask reporting obligations of reporting entity under the PMLA Rules 2005, then the last content. Shall we continue? Yes? Okay. Now, reporting entities are your banking institutes, your banking company, your financial institutions and financial intermediaries. Yes or no? Now, what is the obligation here? Every reporting entity will have the obligation to report any suspicious financial transactions. While you are entering into a relation with a client, that may be a deposit or that may be an advance, that may be opening a savings account or whatever it is. What you have to do first? Verify the identity of the client. That is what you do. KYC, know your customer. Yes or no? Before you enter into any transaction with the bank, what it does the identity evaluation. That is only called know your customer. So you have to maintain the record of what is the client relation, what is the identity of the client, and also the identity of the beneficiaries, the person who might be receiving interest. Are we clear? Yes. So let's see point wise. So every reporting entity have to maintain a record of all transactions covered as per nature and value. What is the nature? It may be a deposit or it may be a advance or whatever the nature is, and the type of transaction, including the value. And the second, now whatever the suspicious financial transactions are there, that has to be reported by the reporting entity to. We have seen that in the hierarchy, my dear students. Financial Intelligence Unit, specifically to whom? Director of FYU, within such time as may be prescribed. Are we clear? Relating to such transactions. Now, whenever you enter into a transaction, what is your obligation? They shall verify the identity of its clients and shall identify the beneficial owner, if any, of such clients. Are we clear? Now, you have to maintain a record of documents which will give an evidence of the identity of the clients and beneficial owner, as well as the account files, the nature of transactions and all. For how long? For a period of 5 years from the date of entering into a client relation. Now, the client relation has ended. You have withdrawn the amount. You no longer have a relation with the bank or the financial institution. Does that mean you can stop maintaining the records of the client? Answer is no. Here, they shall maintain the same for a period of 5 years after the business relationship between a client and the reporting entity has ended or the account has been closed, whichever is later. Are we clear with this? Simple. What does PMLA 2002 specify related to the obligations? Maintain a record. Are we clear? Report any suspicious financial transaction to Director of FYU. And then verify the identity of the clients and the beneficial owner. And the fourth point, what is it? You maintain a record which is evidencing the identity of the clients, beneficial owner, as well as the account file for a period of 5 years from the date of client relationship. Yes or no? And then after the end of client relationship, you have to maintain for another period of 5 years. That is what is the obligations under PMLA 2002. Are we clear? Now, a quick revision of the small content. STR, Suspicious Transaction Report. These are the reports that you submit to the Director of Financial Intelligence Unit. How will you determine whether the transaction is a suspicious financial transaction or not? Case 1, it involves any normal suspicion. Based on your income, based on your occupation, whether the transaction is suspicion or not, the reporting entity will easily identify. Right now, every reporting entity, every banking institution or a company will be using AI or models. Models means not your Instagram models. Machine learning models. They will that models or that machine learning or the AI will easily identify whether there is any suspicion. It will tag it as a red flag. You will have red flags in your relationship now. Yes. Okay. So here red flags in transactions. Okay. Gives rise to reasonable suspicion. Involves any unusual and unjustified complexity. Suddenly this person who is earning just 50,000 per month, he is depositing continuously the whole month 5 times 5 lakh rupees. Is it complex? Is it unusual? Answer is yes. Then that you will tag it as suspicious financial transaction and have no economic rational or bona fide purpose. That means if you verify the client and ask the source from where you got that money, he has no strong reason. Are we clear? That is nothing but no economic rational or bona fide means legal purpose. Are we clear with this? These are the 3 situations that will help you understand whether it is a suspicious financial transaction or not. Understood? Yes or no? Now moving on to the last concept, obligations of reporting entity under PMLA rules 2005. Now here we will have the limits of the values. Are we clear? So as per the PMLA rules, maintenance of records rules 2005, every reporting entity shall maintain a record of the transactions. What kind of transaction? Number 1, all cash transaction. What is the amount of cash transaction? More than 10 lakhs in rupees or else equivalent foreign currency, whatever it is. Are we clear? It is deposited in rupees or it is deposited any foreign currency, but it should be equal to rupees 10 lakhs. Are we clear, everyone? So that cash transaction you will consider and report it to the Director of Financial Intelligence Unit, who will report that principal officer of reporting entity. Now second, series of integrated. In 1 month, all the transactions, they are individually below 10 lakhs. But aggregate is more than 10 lakhs. That will also be considered as a suspicious transaction. I'm telling you, if I read the sentences, if I repeat the sentences, I am already qualified. Yes, what you have to do? Repeat it with me. Okay? Chalo. First one. All the cash transactions of the value more than rupees 10 lakhs or its equivalent foreign currency. Clear? Second, all series of integrally connected cash transactions within 1 month. Individually, each below rupees 10 lakhs, but aggregating to over rupees 10 lakhs in that month, equivalent to foreign currency. Are we clear, everyone? So if you have your concept books with you, strike this sentence off. Okay, so because that is the same repeated sentence, not that important. Now next, all cash transactions, that is all receipts by non-profit organization, NPO, section 8 companies or non-profit organizations, they are receiving how much? More than rupees 10 lakhs then or else equal foreign currency, then that particular transaction will also be reported. Now comes transactions involving forged or counterfeit currency. What is counterfeit currency? Fake money. Are we clear? You have your own printer, you will print 500 notes. Okay, that is what? Counterfeit currency. Oh, so all cash transactions involving forged or counterfeit currency or forged documents or securities used to facilitate a transaction, that will also be reported. And the next, any suspicious transactions made in cash. Next, all cross-border wire transfer. Does not include an actual wire. Okay, wire is nothing but online transfer. Are we clear? So if you watched any movies like Hollywood movies, you will know what is a wire transaction. Okay, it's a online transaction. Are we clear? So that may be money sent from India to any other country or from some other country to India, whatever it is. Cross-border wire transaction. How much money? More than rupees 5 lakhs. Are we clear? And the last one, purchase or sale by any person of immovable property valued at rupees 50 lakhs or more, that is registered by the reporting entity. Are we clear? So total 7 transactions are there. 2 are cash transactions. First is all cash transactions more than 10 lakhs. Second transaction of cash is all cash transactions involving forged or counterfeit currency. Remember the spelling of counterfeit currency. You will write something. You will write country currency again. Counterfeit currency. Okay, or forged documents to facilitate the transaction. Now, and then we have integrated transaction. each below rupees 10 lakhs, aggregating over rupees 10 lakhs. Are we clear? Now the specific kind of transactions are receipts by non-profit organizations. How much? More than rupees 10 lakhs. And cross-border wire transactions more than rupees 5 lakhs. Immovable property rupees 50 lakhs or more. Are we clear? These are the transactions which has to be reported by reporting entity. Who will report that? Designate a principal officer who shall furnish the information in respect of the above transactions to the Director of Financial Intelligence Unit. By what? That is what we have studied before. Prescribed information within such time. What is that such time over here? By the 15th day of the succeeding month. So monthly you will report. So the transactions, auspicious transactions of November, you will report by 15th day of December. Are we clear? Yes. So here these are important from an MCQ point of view. Who will report to whom? Principal officer of reporting entity to the Director of Financial Intelligence Unit. By what time? 15th day of the succeeding month. Are we clear? Now every entity, that is every reporting entity, will identify the client's status and identity and authenticity. So how will you identify? Through know your customer process. Now within 10 days of the commencement of the account based relation with the customer, file the electronic data to central KYC. So you identify the clients. Within the next 10 days, you upload the KYC to the central registry of KYC, where all the clients' data from different reporting entities will be stored. What is that? Central KYC registry. It is formed in the year 2015 to keep centralized data. So if you want to verify the clients, you can go to the central KYC registry and you can verify the client's identity. Are we clear with this? What is digital KYC process? For UPI, automatic UPI payments you will have no in GPay or PhonePe. They will do digital KYC process. You will open your video, you will show your PAN card. That is only digital KYC process using online facility. So the process of accepting, verifying and authenticating and certifying of KYC records, which is online and secure. So from this, what you have to take into consideration from an MCQ point of view is, now within 10 days of the client relation, you will file that data to central KYC registry. 10 days, you have to keep it in mind. That is only important from an MCQ point of view. That's all. Are we clear with this, everyone? Yes. So you may face a little difficulty by remembering all the 7, but once you sit down, peacefully you revise, you will remember. Are we clear? Yes. Understood? If it is reporting obligations under PMLA 2002, no value will come. 5 years, you have to maintain the identity of the clients. That's all. That is the only provision that you have to write down. Are we clear? Yes? Thank you. We are done with PMLA 2002. So moving on to the important questions. Page 185. Of course, question number 1 is important. Process of money laundering. June 2023, past paper. June 2024, past question paper, as well as MQP December 2024. Oh, wow. Thank you. Yes. MQP December 2025 also same question asked. But if it is asked in the MQP of that attempt, it won't come in the actual attempt. That's actually a trend, but ICMAI can trick us. So that is why what you will do? Along with this. So, okay. Sure. Both the questions we can discuss. I mean, here they are there separately. No problem. Okay. So, question 1 will be important that you have to revise. So, I'm telling you, my dear students. Okay. So, you will work very hard, learn, you will write down, wonderful. But if you don't use these red highlighted words, I'm telling you, out of 7 marks, they will give you 1.5 marks. I have seen certified copies. Literally, even I was with a question that why he has given 0.5. Everything was right. Was the English or the grammar bad? No, absolutely fine. But still, if you use your own words, that person is being brutal, 0.5, 1 mark, that's all. Some person decided to sue also. He asked me, I was like, no, there is no remedy available. Seriously, he did ask me. He gave me the certified copy and asked me, ma'am, what is the remedy? I have a friend who is a lawyer. I was like, no, 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 you can't go that far. You will not get any remedy. See, understood? Please, if I highlight something in red, I am not wasting my ink, or else I am not wasting my own time, or I am not trying to make this colorful. Important from an examination point of view. Are we clear? Yes, what are the important words here? Introduces illegal funds to the financial system, deposited into bank accounts. Okay, clear? And funds through series of continuous conversions across multiple accounts to hide the funds origin and enter the legitimate economy. Invest these funds into real estate and business ventures. Are we clear? And then comes question 2. Offences of money laundering listed in different schedules under the PMLA 2002. Okay? This one thing, change it. It's 29 paragraphs. Okay? In my opinion, there are only 5 questions. Read everything. Okay? Question 4. 5 is a very small question. So, what they can do is they can ask a 3.5 mark question like 7A, 1 and 2. So if they want, they can ask a small question. So that is why I'm telling you. Okay? Revise. It will not take. So this suspicious financial transaction and reporting entity are the only one you have to look into Q&A. And the other you can revise through capsule. Capsule also has the same words. No worries. Okay? Clear? And if possible, it was not asked in the examination till now, but still, okay, I understood what I did. Question 2. It has objectives, it has authorities, it has process, it has offense. It's better to read only question 2. Okay. MQB December 2023. Okay. So, just to cut down the number of questions, that's all. It has process, it has offenses, it has different types of offenses also. Okay? That's all. I think you got a clarity. Okay? So, offenses, process, reporting obligations, and just give a one reading. In the capsule itself, you give a reading, procedure of investigation, hierarchy. Okay? Clear? That's all. We have successfully completed PMLA 2002.